may see strong orders in the fourth quarter of 2025, so a positive take there. And then we roll in the Airbus news that weighed on the ADRs, of course, in the States, but a lot has been rectified over the weekend. That Airbus A320 story that we've talked a lot about, the impact on airlines in focus, but also interesting research from JP Morgan on airlines, Guy.
Okay, here we go. Monday morning session. Why are we seeing risk off? I don't know. There's a whole multitude of factors in the mix, but how is it going to represent in Europe? Let's find out. The FTSE 100, as you've already indicated, is expected to do better than most here. The reason for that is that you've got copper up, you've got iron ore up, you've got oil up. Commodities are moving higher. Now, take that to the next logical step, which is that an inflationary impulse that we need to watch out for, which is an interesting story when it comes to what central banks are going to do. The central bank story is represented as well. What's happening with the Fed, the Bank of Japan, what's happening in Australia. Stock 600 is down by 0.3%. The CAC is down by nearly 0.6%. The IBEX has been the big outperformer this year, is down over 0.3%. So it's going to be interesting to see what the story is when it comes to the CAC. Is that Airbus? What's happening with Airbus? It's a big heavyweight stock in that market. We'll wait for the DAX to get going. We'll wait for the Swiss to get going as well. We'll talk about those markets in just a moment. But maybe actually the CAC isn't down as much as we thought, and maybe the FTSE is down a little more than we thought. We're down by 0.3%, but maybe I'm picking here in terms of what the details we're seeing coming through on the market. So let's break it down. Stocks and sectors. Anna, what are we watching?
Yes, let's have a deeper dive then into some of these metrics this morning, shall we? The first point to make is, from a sector perspective, only one sector is going higher, and it doesn't even appear on that board you've got in front of you there. But personal consumer discretionary grocery stores, that sector is going higher. So Reckitt Benckiser, Greggs, actually, which is interesting. There's a lot of chatter in the weekend press around Greggs and the potential for corporate activity there. So those are going higher. That is the only sector, though. And to the downside, the worst performer is industrial goods and services. Delving into the detail there, it does look to be a little bit of weakness in defence once again. So Rent Group down by 3.5%. Thales down by 2.6%. Saab, Leonardo, Babcock, BAE, Airbus, all a little bit weaker. Airbus, with other news flow in mind, also down by 1.6%. Interesting that Basic Resources perhaps is not doing better on the back of expectations around stimulus in China. That was something that lifted Chinese stocks, but doesn't seem to be lifting the Basic Resources story this morning. And we did see higher copper prices overnight. ArcelorMittal is higher, so some of those mining stocks or metals names are a little bit higher, but it's not as standout as you might have thought it could be.
It's a down market, and you've got, so Reckitt's the best performing on the FTSE 100 this morning, so the defensive nature of that end of the market coming to the fore this morning. So people are looking maybe somewhere to hide. Unilever's also up, Diageo's also up, Imperial Brands is also up, but Shell is the second biggest points gainer on the FTSE 100. It's not up by much in percentage terms, but it is in points. Glencore's also tracking a little bit higher. Endeavour Mining, Fresnillo, also higher. So you look at the kind of the top 10 on the FTSE 100, it is the defensive names and a few grocers in there. Tesco is actually rising. On the downside of the FTSE, it's Rolls, BAE, that are leading the losses in points terms. So defence sector down, defensives are up.
Yes, there we go. The two uses of the defence word this morning, very important. Let us get a market perspective then, as we are in the last month of the year, 1st of December now. Dan Kemp joins us, Chief Research and Investment Officer over at Morningstar. Dan, nice to have you with us. So I guess it's not too early now to talk about preparing for 2026. It's not very far away, is it? And we've got just 1 month ahead of us. So how are you thinking about 2026 when you look at the way that we started trading in December? A little bit nervous, it seems.
Well, exactly. Exactly. And as you say, it's the end of the year. There are fewer people around. There's tons of stories going on, and everyone loves a Christmas story. And the danger is that at this time of year, we become very focused on the short term. So as we look ahead into 26, then what do we see? Well, we see that prices are pretty high. We see that the opportunities aren't at the top level of the market anymore because of some of the concentration issues we've seen. Really, it's all about digging more deeply and not making predictions. The danger at this time of year is there are so many predictions, and of course predictions are the mother of surprise. The more predictions we make, the more surprised we are. The more surprised we are, the more mistakes we make. And so as we go into 2026, we have to be prepared for a wide range of possible outcomes.
Okay, so we're prepared for a wide range of possible outcomes, many of which might feature AI, I suppose. So let's delve into that one a little bit. I mean, we've seen the Mag 7 clearly have benefited, but then there's a bit of oscillation around the Mag 7 and which exactly are going to be benefiting. NVIDIA maybe struggling a little bit of late, but still that theme lives on very strongly in the United States and broadens out into Europe as well and takes in the energy sector and construction and everything else. So what will the AI theme look like in 2026, do you think?
Well, that's right. Not only the US, so we're used to that concentration in the Magnificent Seven, we're used to the growth of NVIDIA, but then as you expand out even into the emerging markets, so you look at TSMC, it's 9% of the emerging market index. So we're seeing this concentration everywhere around the world. And what does that mean for an investor? Well, you have to be careful that you haven't got too much exposure, or that where you're looking for diversification, you're not just buying into the theme elsewhere. And so outside the Magnificent Seven, we're seeing good value in smaller companies, which are not so driven by the AI story. We're seeing differentiation, as you say, within the Magnificent Seven. Some stocks look better prepared for what's ahead in 26 than others. Some look better value. But overall, it's looking away from those areas. Some of the areas you mentioned this morning in the UK, some defensives there, looking really attractive. And that's where investors need to be trying to balance their portfolios as we head into the new year.
How important is it that the Fed cuts rates next year for equities to keep going higher?
Well, that's what seems to be priced in, Guy, as you know. So we're pricing in 75 to 100 basis points of rate cuts next year as a market. That leaves a lot of room for disappointment. When you're expecting rates cut next week and next year, if that's already in the price, then there's potentially a lot of downside. So I would say for investors, don't anchor on just that good news upside. It's likely to be challenged over the next few months.
But that's what keeping this, the lesson from November was that the relationship between stocks and the Fed very, very high at the moment. So you're suggesting maybe that we don't get 75 or 100. If we get 50 next year, do equity markets go higher?
What I'm saying is don't rely on it, and so you have to work out what's in the price, and therefore what are the other possible outcomes. And a lower rate cut mean that prices are going to be challenged, but you can still see some value.
Do you think that the small caps, the industrials, are going to be enough to get stocks higher next year if the Fed doesn't deliver and everything's in the price with AI? Is it going to be enough? Is it a zero-sum game? Or if the Fed doesn't deliver and AI doesn't deliver or doesn't kind of match its expectations, do markets go down on that?
Well, here's the really interesting thing. As you say, when you think about markets, we're used now to focusing on the largest market cap names because they've been driving everything. Whereas what we're seeing is value further down. So you could have a situation next year where overall indexes don't do so well if some of those things disappoint, but actually investors have opportunities for gains further down the market cap scale, outside the most fashionable areas in other parts of the world.
Is that what happens, though? Like, in my experience, that's not what happens. When you see the big caps selling off and you see markets tumbling, if you were to see that, everything goes down. So are you talking about a relative trade or an absolute trade? If the big caps go down, do the small caps just go down less, or do they actually go up?
Well, again, a really interesting point, Guy. And we've been conditioned over the last few years to focus on those large caps. They fall, everything else falls. If you go back to another similar market, the Nifty 50 market, I appreciate it's going back a long way, but there wasn't one catalyst that drove all of those Nifty 50 stocks to be taken out into the woodshed and shot. It was one at a time. Things went wrong, valuations collapsed, and people found value elsewhere. So you could have a much more interesting market in 26, where stocks that have been left behind, markets have been left behind, do better.
Right. And Dan, thinking about other themes then, as we look ahead to next year, we've talked a bit on this programme already about the dollar and the extent of the dollar decline we saw this year, which was actually quite material in terms of which stock markets then delivered and which currency you're in has a bearing on what your conclusions are about what did well in 2025. So do you expect dollar weakness to continue to be a theme in 2026, or actually have we run that one already?
Yeah, well, I think there's more room left to go in the dollar because it's still overvalued. So, of course, what we saw, as you say, and in particular in April, when people started generating these narratives around a change in the global world order, a change in the position of the dollar, a change in the US in the overall trading system, and that seemed to be the catalyst that drove the dollar lower. Well, a lot of those things look a little bit fanciful and a little bit early, but although the dollar's come down a long way and that has impacted the way people are thinking about returns, actually the dollar still looks expensive against most currencies. And so when you have that downward trend from an expensive asset, then that's where you could well see further weakness in the year ahead.
So it looks expensive, so it could still be a theme. Dollar weakness could still be a theme in 2026.
Right. Yeah, people need to be careful not to rely on the dollar in 26.
Don't want to put money in the US if the dollar's going down.
Well, you can put it in and hedge it, but
it needs to hedge it, yeah.
But if you're putting money in and hedging it, then you have to be aware of that interest rate differential. So where you're coming from makes a big difference.
So you think Europe is going to be better? Is AI going to be more important in my portfolio, or is the dollar going to be more important for my portfolio? The S&P is up by 4% this year in euro terms. European markets have done much better. Europe has no AI, virtually no AI.
Yeah. Well, I would say that's the glory of diversification, Guy. That you can have that exposure to the US large tech stocks, but don't have it as the focus of your portfolio at a point where there's a lot of good news baked in. Where when we look in other parts of the world, as you say, continental Europe, the UK, some of the emerging markets as well, we're seeing good value there, good opportunities for investors.
It's great to see you, Dan. Thanks for stopping by to see us. We really appreciate it. Dan Kemp, Chief Research and Investment Officer, joining us from Morningstar. Quick look at the Core 6 to figure out what is happening. This is the kind of centre of gravity here in Europe, and what we are watching is a market that's diverging a little bit. I have to say, some of the grocers are having a good day today. We're definitely more defensively biased, though I do notice that Nestle is a little softer this morning. Novo Nordisk is down as well. Luxury stocks are holding their ground. Defence stocks are weaker. Chips are up, which is fascinating. So that note from JP Morgan maybe is having, was it JP Morgan?
Yes, it was JP Morgan, yes.
It's having a big impact maybe on ASML.
Yeah.
But we start this morning, as we should most Monday mornings, maybe with a bacon sandwich. Over to you.
Or a mince pie.
Yes, nice. Or a sausage roll. So Greggs is up this morning after an activist investor called the management timid and asked them to cut millions of pounds in cost unless they want to be taken over. So the activist investor has urged the company to cut those costs if they don't want to be bought, and therefore we are up this morning at 2.7% for Greggs. Moving on to Airbus, which is seeing a little bit of weakness this morning after the disruption over the weekend with the software update on the A320 aircraft requiring an urgent fix. It's something that was fixed fairly quickly, limiting the disruption, but some experts are saying that this means this software update was not rolled out with maybe the appropriate safeguards, and therefore we are down 2.5% for Airbus this morning. We are also down across defense as well this morning after US and Ukrainian negotiators said that they had productive discussions about a potential peace deal, and there's not been any final breakthrough yet, but the news of that progress on that front is really weighing down on those shares this morning. We've got Rheinmetall down 2.7% in particular, and finally EasyJet is also seeing a little bit of weakness after being downgraded by JP Morgan because of weaker pricing and higher costs. On the flip side, Lufthansa was upgraded to a neutral rating because of the dynamics in the long-haul division being a bit more favorable. And so we have two different stories in that airline space this morning.
Okay, Chloe, thank you very much. Yeah, those JP Morgan notes on the aviation sector and on the tech sector having a bit of an impact this morning, so we'll certainly keep an eye on that. And with aviation in mind, coming up on the programme, more than 6,000 Airbus A320 jets have required a software fix after some planes were grounded over the weekend. Most of that fix is now done. What's the lingering impact? What happens next? More on this coming up. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back. You're watching the opening trade. The opening trade is behind us. This is what we're looking at in terms of the numbers. We are trading and we are down. As you can see here in Europe, the FTSE 100 is outperforming a little bit, but sentiment around the world is quite negative. Japanese stocks hit hard overnight. We're into Europe, we're being hit hard. Bitcoin's down pretty sharply. US futures are down pretty sharply. In terms of what we're seeing in the mix here in Europe, aviation's quite a strong theme this morning, which I always welcome on a Monday morning. It was quite the weekend for, I have to say, the Bloomberg aviation team, aerospace team. There was a lot going on, and most of it centered around this stock, Airbus, down by 2.15 this morning. This after we got the announcement relating to the need for a software update, in some cases a hardware update, but mostly a software update relating to the A320 family. There are a lot of A320s out there. I think that probably is one of the takeaways of this weekend. Anyway, the European aircraft manufacturer says, quote, the vast majority of its roughly 6,000 320s, remember it's 19s, 20s, 21s, 21 LRs, XLRs, all out there, have been modified. Bloomberg's managing editor for space and aviation, Benedict Hamill, joining us now with more. Betty, let's start off with, we know there was a fault and there was a need for a fix. How easy was it for airlines to get this done? And do we have a problem this Monday morning?
Well, it does seem like it went fairly smoothly and easily. So this announcement came out late on Friday evening, and it really caught everybody off guard, myself included. And Airbus saying about 6,000 aircraft, as you said, that's out of more than 11,000, would require this software update. Essentially not an update, but a revision to the previous version. What they found was that the current version being used there could be some interference with the flight controls under the condition of intense solar radiation. So rather a strange sort of confluence of occurrences, but that was it. And then over the weekend, the airlines really raced to get that software fix in, and we heard from everyone from New Zealand to India to Latin America doing this, and doing it swiftly, so it seems, because this morning we got an update from Airbus saying that, as you said, the very vast majority of these planes are now fixed, fewer than 100 still requiring an update. You know, investors looking at this seem a little bit troubled, but not massively spooked. The stock is down a little bit, but it really feels like overall the company and airlines and travelers, as an extension, managed to dodge major catastrophe here.
Yeah, Benny, good morning. So we were wondering earlier on in the programme if this is the end of a story or if there's something else about cosmic radiation, solar radiation, that we need to wonder about, the impact it's having on software during flight.
I mean, software is susceptible to this, and the higher you fly or the higher you are, the more you are exposed to these small particles that whiz around the air, to simplify it somewhat. And obviously aircraft manufacturers try to sort of minimize that by having robust software, as much redundancy built into that software as they can. There was an occurrence a month ago with a JetBlue aircraft where there was sort of a freak input from the computer without the pilot really taking any action. And that was really the sort of patient zero that led to what we heard over the weekend. If anything, it gives you a sense of just how complex software is on an aircraft today, but also just how seriously the industry takes this whenever there is a scare, rather, you know, ground thousands of aircraft than sort of risk flying and then having something catastrophic happen.
I spoke a moment ago. 6,000 out of a fleet of 11,000, not just a fleet of 6,000. This is a huge number of aircraft, Benny, that are being affected by this. This is a huge fleet that is affected by this. Yet Airbus seems to, as you say, manage this reasonably quickly. Therefore, my next question is, does this impact what is going on at Airbus in Toulouse, in Hamburg, and all the other kind of final assembly lines that they have? Are we going to be able to hit targets by year end? Obviously, there's usually a race to hit targets by year end. What do we know about how this impacts kind of day-to-day operations at Airbus?
I mean, it's too soon to say at this point. I would have said, if this had dragged out into the week and the month, probably the answer would be yes, this will have an impact on their targets. This is a crucial month for Airbus, and they always manage to miraculously build huge amounts of planes in the last couple of weeks, and they have some ways to go. The target is for 820 planes to be delivered throughout the year, and as I said, they have some ways to go, but they think they can make it. Now, if engineers, if management had suddenly found themselves dealing with this sort of cosmic interference, that would have changed the game. But given that they've come out of this fairly swiftly, or actually very swiftly, and have managed to really sidestep the issue, I would bet that this is sort of a ghost in the machine, as you want, and really that it's over by and large, and that they are now able to focus on the day-to-day operations again, which in no small part is that target that they have for the end of the year.
Benny, thanks very much. Bloomberg's Benedict Camel joining us there from Berlin with aviation in mind and the Airbus story in particular. Now, that was a busy topic of conversation and busy for the Bloomberg team over the weekend. Black Friday in retail was also a busy theme. According to both Adobe and MasterCard data, sales on Black Friday rose from a year earlier, a sign that consumers are continuing to spend despite persistent economic concerns. Joining us now for more, Bloomberg opinion columnist Andrea Felsted, who has been focused on Black Friday and Cyber Monday, but also much else beyond. Andrea, good morning. So what can we take away from the shopping bonanza that has been Black Friday and today's, you know, happy Cyber Monday to you?
Well, we're only getting the early indications. It does look like they're up from everybody. Now, I think the interesting thing will be what people bought. What we saw with Prime Day is that consumers used the discounting bonanza to stock up on the things they needed. This is a bit different. Obviously, it's coming into the holiday gifting period. But even so, it will be interesting to see whether people treated themselves or they use this to buy the things they need, but at cheaper prices.
Some quite cheap dog food out there, I'm just going to say that.
That falls into the, I assume that's in the things you need rather than the gifting category.
Could be both. AI was really interesting. So for the first time, I have to say, talking to people about this, people used AI. it seems like this is the first time I've actually seen people going, right, where's the cheapest deal? And using AI maybe to find it. Is that the difference this time round?
Exactly. It seems like they used AI search or even AI chatbots to try to find the best deals. And this is interesting for retailers because, you know, as long as time, they've been trying to appeal to people buying things, and now they have to appeal to agents buying things or choosing things. So that's going to create a big shift in how they market, how they get things to search.
Yeah, absolutely. I mean, and that's also really interesting from a macro perspective, isn't it? What it does to inflation, because it was, you know, the advent of Amazon and all of the other large marketplaces online that was credited with driving down inflation as part of the Great Moderation, partly one of the stories. Right, let's turn to things that are not, well, I don't know if they're falling in price, but they're certainly not cheap in price, Andrea. Let's turn to your new article out this morning, which is all about Gen Z putting Cartier on their shopping list instead of a Rolex. So talk to us about detail.
Okay, so we've seen this move in the watch market. It's being led by Cartier, but it is much broader. So for the past at least 10 years, watches have been supersizing. They've been getting bigger, chunkier, 36 millimeters and upwards. And what we've seen is, particularly among younger people, they're looking for smaller, gold, often rectangular, which fits in with Cartier, on a leather strap with a vintage feel, smaller size for women, but also for men. So this is really upending the watch market as we've known it for like the past 10 years.
So who, Jaeger-LeCoultre, presumably?
Yeah, Jaeger-LeCoultre, I think, will be the next one. GQ said the reverso could be the It watch of 25.
It's a very pretty watch.
And they've introduced a more basic model. I mean, a watch like this isn't basic, but a more, and it's around, if I remember rightly, around £5,000, which isn't bad for a very nice watch.
Okay, so we're not all about the sports watch right now, Andrea. Okay,
so that's a big shift.
You can know too much, is my thinking.
No. This is good stuff.
I'm a big fan.
It's going to be, it's, as you say, is this just cyclical?
I think there's an element of cyclicality, definitely.
Yeah.
You know, we've had this trend to sports watches. We've got this much more elegant vintage feel.
Yeah.
There is definitely a cyclicality. The other really interesting thing to watch is this has been led by Gen Z. Gen Z are under pressure from inflation, competition for sort of entry-level professional jobs. In the US, student loan repayments. There's a lot of fears that they're already starting to pull back in things like eating out. Is this going to carry on? If it does, then Cartier is very exposed because it definitely is the It watch of the moment.
And if you can't buy a house, maybe buy a watch. Andrea, thank you very much. Andrea Felsted from Bloomberg Opinion. Let me just tell you about a couple of lines that dropped really interesting from Masayoshi Son over at SoftBank, saying he didn't want to sell a single NVIDIA share. They needed the money to invest more in AI. So it wasn't necessarily a vote against AI or against NVIDIA when we saw SoftBank selling their stock.
In a moment, we'll come back to defence stocks. We're going to come back to the Russia-Ukraine story. We'll do all that in just a moment. This is Bloomberg.
I just wondered if any of you had a perspective of the reason to, put some of that capital into women's sports.
It's going to create you the fastest return. You will have so much success. If you look at the growth metrics of women's football, selfishly, in this country at the moment, it's phenomenal. We are the fastest growing sport on the planet. Our participation is up in this country. The interest that is around women's football is at a real moment, to your point, we're at a real moment in time to be able to capitalise on it. And if I was an investor looking to come into football in this country at the moment, I'd certainly be considering women's, because I don't have to invest an astronomical amount to become the best in the world. to really be put on the global stage, to be winning Champions League. Whereas if I wanted to do that in men's football in Europe, that's going to cost me a lot of money.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romain Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome back. This is the opening trade. 30 minutes into today's session. And, Guy, we've got a picture of negativity across most of these markets. Although, is it recovering a little bit at the margin? I mean, the DAX is firmly in the red, down by 0.7%. A little bit of negativity around the defence space. That could be weighing on that particular market. The CAC 40 also down by 0.5%. But all morning, we've been discussing how we are seeing weakness in US futures, weakness in Bitcoin, a lot of movement in Japanese assets. There's quite a lot going on for the 1st of December, and not entirely clear what is driving the risk-off tone. Interesting to see, though, that we saw US futures paring those losses just a little bit around the time we got those Masayoshi Son lines around Nvidia. So we'll see whether that has any legs and that develops further. But just off those lows on US futures, but Europe still firmly in the red, apart from the London market, Guy, where we're increasingly seeing some upside from basic resources. Okay, let's talk about the details and figure out what is happening. Unsurprisingly, the mix is reasonably balanced in favour of those stocks that are moving lower. 439 versus 149 up this morning, so the mix kind of tells you something. The volume number is actually quite weak this morning, which also tells you something, which I think is quite interesting in terms of what we are seeing. How convinced are the markets by these moves? Are investors by these moves? Is everybody playing? Is everybody out there? Are we playing with a full set of trading desks this morning? Let's talk about the leaders and the laggards. ASML, this is JP Morgan note that Anna flagged a little bit earlier on. It's clearly having an impact because actually Nasdaq futures have been lower, but ASML has been higher, up by 2.6% this morning. Elsewhere, it's a much more defensive bias in terms of the markets, in terms of the stocks that are being bid. Unilever is up by 0.4%. Reckitt's up by 1.81%. So you're seeing that defensive story, that staple story, having a much better day of things. On the downside, let's look at some laggards. Airbus is off a little bit, despite the fact that actually the software fix appears to have done relatively easily. It is a huge fleet out there. 11,000, Benedict Campbell tells us, of the A320 family. So any issue with that aircraft is going to have a big impact. And we're seeing that maybe reflected in the stock this morning, down by 2.4%. But it's not a huge move. Think about what happened with Boeing in terms of some of the issues that it's faced recently. Rheinmetall, defence stocks are definitely on the back foot this morning, down by 2.6%. And Essilor, losing a key executive related to its push into smart glasses. That is having an impact on that stock. That stock down by 1.4%, Anna. Let's talk about some of the other stories we are keeping an eye on this morning, Guy. And cryptocurrencies are falling sharply this morning as Bitcoin slid as much as 6% to below $86,000 in early trading. The crypto market is on shaky ground, it seems, after a weeks-long sell-off that began when some $19 billion in levered bets were wiped out in early October. Traders are bracing for further pain amid concerns over meager inflows into Bitcoin exchange-traded funds and the absence of dip buying. US President Donald Trump says he has decided on his pick for the next Fed chair, who he expects to deliver interest rate cuts. Sources have told Bloomberg that Trump's chief economic advisor, that's Kevin Hassett, is seen as the likely choice to succeed current Fed chief Jerome Powell. Trump has frequently hit out at Jerome Powell, of course, for not lowering interest rates. And onto the Bank of Japan, BOJ Governor Ueda sent the clearest hint yet that his board might increase interest rates soon, highlighting the possibility of a move at the BOJ's December meeting. And we just want to note that in the last hour, during our coverage of the BOJ, we incorrectly showed a graphic saying that Ueda sends hints at a chance of a December rate cut. That graphic should have said Ueda sends hint at a chance of December rate hike. So, of course, we regret that error. And so just wanted to put that record straight. Guy.
Yes, and there's a lot of talk about cuts at the moment. The Fed obviously firmly in focus on that story. We'll come back to that in just a moment. Let's talk about maybe why European defence stocks are a little lower this morning. US and Ukrainian negotiators said they have held productive talks on a potential peace framework, but have not achieved a breakthrough yet. The US Secretary of State, Marco Rubio, spoke with reporters after meeting with Ukraine's National Security and Defence Council Secretary. Take a listen to what he had to say.
It's not just about the terms that ends fighting. It's about also the terms that set up Ukraine for long-term prosperity. I thought we started laying the groundwork for that, most certainly in Geneva. I think we continued that work in our communications throughout the week. I think we built on that again today, but there's more work to be done. This is delicate, it's complicated, there are a lot of moving parts, and obviously there's another party involved here that'll have to be a part of the equation, and that'll continue later this week when Mr. Witkoff travels to Moscow.
Okay, let's get an update on where we sit this Monday morning on this story. Bloomberg's chief Europe correspondent, Oliver Crook, joins us now from Brussels. So, Ollie, give us the latest. Where do things stand this Monday morning?
So after those talks that we had in Florida yesterday with the Ukrainian delegation and headed by Marco Rubio, Secretary of State, of course, Steve Witkoff, the ambassador to Russia, the special ambassador, also in those discussions, who is expected to head to Russia a little bit later this week. The fact of the matter is, after that 28-point plan, which we got in sort of full detail, these negotiations have gone underground, and there haven't been many leaks about where they are in terms of the living document. We understand that now, obviously, that transition from a 28-point plan to a 19-point plan, but we don't know how much progress has been made on some of the stickiest issues, whether it's territorial concessions, whether it's those security guarantees. These are things that are being talked about behind closed doors, and we don't really know how much progress has been made by the United States. Marco Rubio says that progress is being made, still a lot of work to be done. As we know, the Ukrainians need to be very constructive in any of the messaging that they have about the meetings with the United States, but we will have an indication potentially of how much progress has been made when we get a clear idea of when Witkoff goes to Russia. And in the interim, there are obviously going to be some important moments of diplomacy. Today, Volodymyr Zelensky will be in Paris meeting with Emmanuel Macron. As we speak right now, European defense ministers are speaking in Brussels. On Wednesday, we have a NATO meeting. Marco Rubio will come over to Europe. I think that is a pretty key meeting to watch because, as we know, the Europeans have been sidelined in many of these discussions. It's going to be an opportunity for foreign ministers to speak with the United States and potentially get to a sort of unified voice. Because remember, that initial 28-point plan had a lot of rules, not just for how Ukrainians should operate after the war ends, but how the European defense structure should look, and also sort of rules within NATO. These are important points that these NATO allies will need to get to the United States to try to get their voice heard within that framework. So those are the sort of key developments we're looking for going into the week. That being said, guys, something that I think is pretty interesting is that we expect the Kremlin, we expect Vladimir Putin to go to India for a visit on the 4th and the 5th of this month. Does that sound like something that the president of the Russian Federation would be doing if you're in crunch talks and are about to get a deal over the line?
So Europe really trying, Ollie, to maintain its seat at the table or cling on to that seat at the table in these conversations. And we've got a lot to look ahead to today and into this week. An EU defence ministers meeting in Brussels. Zelensky meets Macron in Paris early this week. I mean, what is the focus for these conversations now?
Yeah, I mean, I don't know, Anna, that they even do have a seat at the table. I think they're trying to gain that seat at the table for the very first time in these discussions. And frankly, if you look at the last sort of few days, you know, they're probably maybe further from a seat at the table than they were, you know, a week ago in terms of the constructive attitude that they've had towards Ukraine. For example, where was Viktor Orban this weekend? He was in Moscow. He was hanging out with Vladimir Putin. They were discussing sort of oil and gas security for Hungary. But again, that sends a very sort of poor signal from the European side. We've had some commentary from other European European leaders about Orban's presence there. But of course, the other main issue, and this is something that, again, we've been talking about for really months and months on end, is about the Russian assets and that reparations loan that the Europeans want to put up. Over the last few days, we've heard once again from the Belgians, and this really stands or falls by whether or not the Belgians are willing to move on these assets, saying that basically this may not be the moment. We have not really been fully reassured in terms of what can be done with these Russian assets. And frankly, at this stage, it might actually harm the peace process. So in terms of tangible, palpable things that the Europeans can do to advance the conversation, in the last few days, you have not seen any evidence of that. And for the Ukrainian defense minister, who is in Brussels today, or who will be at least attending those meetings, potentially virtually, maybe the only thing he's going to get from the Europeans is what he's got a lot of so far, which are reassuring words.
Ollie, thanks very much. Our chief Europe correspondent, Oliver Crook, joining us there from Brussels for more on the European defence story. Don't miss our exclusive interviews with the CEOs of Hensoldt and Rheinmetall, those taking place in the coming weeks. So there's plenty more conversations here on Bloomberg TV around the defence sector. Let's continue to focus on that sector. This morning, we're seeing quite a lot of weakness coming through in some of the defence names. As you see there, despite some deals being announced by the likes of Saab, we've got weakness coming through in Rheinmetall, Hensoldt, Renk and BAE Systems. Joining us now, Simon Hussain, Defence and Aerospace Equity Analyst at Alpha Value. Simon, nice to have you with us. So today, this Monday, we're seeing reflected in some of the pricing of these defence stocks, progress perhaps being made over the weekend, or at least these talks have not fallen apart. What is the working assumption for those in the defence community about whether this plan that originated with the US and Russia, whether it turns into a deal for peace? Is that the assumption that you're now making?
So I feel like the markets are trying to price in the peace uncertainty. So we are heading more and more towards a peace framework agreement that would be closer to the Russian side than the Ukrainian side. So our assumption is that at Alpha Value is that the peace might not actually be guaranteed, as the current peace framework is reportedly more favorable to Russia than to Ukraine, and I think it's something that might be unacceptable for European countries politically, as this peace framework between US and Russia would involve territorial concession, limits on Ukraine's military, as well as potential sanction relief for Russia.
Okay, so not acceptable to many in Europe, Simon, not acceptable to Ukraine, perhaps, and that's why these conversations have been ongoing, of course. What say does Europe have here? What seat at the table can Europe expect to have?
So that's a very tough question, actually. It seems like Europe is really behind in terms of the talks. Everything that is happening now is between Washington and Moscow. So Europe really has to put some pressure to make sure it has a seat at the peace table. And I think it's crucial for Europe to have a say in these meetings. So this is the reason why we have seen so much meetings. President Zelensky is meeting with President Macron today. We have this Brussels meeting, so we see that Europe is really trying to have a seat at the peace table.
So if there was a peace deal signed tomorrow, would that have any impact on European defence spending? There seems to be this expectation that there would be, judging by share prices, but would there be any impact at all?
I think that there might be impact, especially on war-ready name. By war-ready name, I mean those that supplies weapon and ammunition, because we feel like most of these names have re-rated because of the war in Ukraine. So that might undermine the long-term demand for weapon and ammunition, at least on paper. But the modernization story remains intact. So everything that is related to electronic warfare, cybersecurity, control and command, air defense will stay important. So I think we might, instead of see a complete decline in all the European defense stocks, we might see a rotation within the sector from weapon and ammunition suppliers to more electronic warfare names.
There is this story that's beginning to emerge, and I think Chris Bryant's written about it this morning on Bloomberg, talking about the fact that some defense names are making really big margins at the moment, and governments may start to become concerned about this, and there could be some sort of attempt at clawback to maybe reprice, particularly ammunition, and kind of some of the more commodity end of the market where there are significant shortages at the moment. Do you think that's a possibility, that governments might push back against the pricing and the amount of money that names like Rheinmetall have the potential to make over the next few years?
I really think that is a that this is a possibility. This is the reason why there's so much pressure on names like Rheinmetall. I think that government won't let public spending pay for this kind of high profit. So for Rheinmetall, for instance, we're talking about a 30% margin in weapon and ammunition, which is very huge. So I believe that this is a risk. Yes.
This is a risk. So we're expecting to see some kind of. So what does that mean in terms of the margins that we should expect this sector to make, Simon?
So I do not think that this will change the margin on electronic warfare, cyber security, command and control system, as I mentioned earlier. I think those are high value added projects. So it will be difficult to put a cap on profit for those kind of projects. But I do think that for weapon and ammunition, which are way more simple, we might see some downward pressure on margin. And the key question is also what happens after the ammunition cycle ends. So, of course, if the war in Ukraine ends, it means that we will have to replenish European country stockpile of weapon and ammunition. But what happens next? And this is a key question.
Okay. Yep, the race is certainly on to refill some of those bunkers. Simon, just a quick question before you go. You cover Airbus as well. What did you make of what has happened over the weekend? Does it change your outlook on Airbus? It looks like the software patch has largely been delivered to most customers fairly quickly for the 6,000 or so 320s that needed it. Does it change your outlook in any way on the company?
I don't think it's changed my outlook at all, because the company made a lot of rollback fixed really quickly. So the issue is almost over now. Most airlines have completed the rollback fix. I think it's actually more a buy the dip opportunity than a change in the equity story. We might still see some compensation arrangement between airlines and Airbus, but I don't think it will be material, as the fix was really quick, actually.
Simon, thank you very much indeed. Simon Hussein joining us, Defence and Aerospace Equity Analyst, joining us from Alpha Value, not Alphaville, FT. Alpha Value, wrong company. Okay, let's talk a little bit about what's happening in the metal space, which is having a material impact on what's happening with the London market this morning. Copper and silver prices are being watched very, very carefully. Supply shortages certainly a factor. It's interesting, Bitcoin's going down, but the metals aren't. We'll talk about all of that next. This is Bloomberg.
Now, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurant opened. He asked me to come to open the restaurant in New York. And beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know what he doing. Because I never watched the movies, you know, I was traveling the business. But of course, after, you know, people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's, for me, and a great partner. He understands to my concept. He supports me 100%. But he's a very smart people. Sometimes, so strange idea, but it's good idea. So, example, Nobu Hotels, idea come from him. He said, hey, Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start Nobu Hotels in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question. I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Welcome back to the opening trade at 8:49 here in London. So we've been trading for around 49 minutes on these European equity markets, and we're still negative. We've pared the losses a little bit, though. Certainly the London market has had moments in the green. It's back down in the red right now, as in particular basic resources are getting a lift. And that takes us nicely on to our next story. There are big moves in metals today. Copper has advanced to a record high on the London Metals Exchange on fears the global market is heading for a supply crunch. Bloomberg's Martin Ritchie from our metals and mining team joins us now. So let's talk about copper first off, shall we, Martin? Thank you so much for joining us. What is behind this copper crunch? We seem to have talked quite a few times this year about concerns around supply on the copper side. Is that still the dominant theme?
Yeah, that's right. We've not just been talking about copper supply this year, but for a number of years. And it looks like some of these concerns are starting to sort of come to a head in the market. I was at a big copper conference here in Shanghai last week, and a lot of talk, a lot of discussion about what's going to happen next year. Mine supply has taken a hit this year. There's not really enough to go around for all the big new smelters around the world. And then at the same time, you've got this pool of metal into the US because there's still the expectation that President Trump will put tariffs on refined copper next year. And the idea there is that there will be not enough metal left for the rest of the world. So what we had last week was the head of our Mercuria, Kostas Bintas, who's a very well-known copper trader and a bullish copper trader, sort of coming out again and saying, you know, this is going to be a huge trade. Copper is going much higher next year. So that's the kind of cocktail of things that are pushing prices up to a record this week.
So supply is a factor for copper. Is it also a factor for silver?
Yeah, that's right. And again, this sort of has a sort of US tariff story or backdrop here. Back in October, there was a rush of silver into the US because of a big squeeze on the COMEX silver market. Again, that was related to sort of expectations of tariffs, but also sort of short supply in the rest of the world. And we're just going to see in the aftermath of that, there's not a lot of metal in warehouses in China. So you've seen some supplies come out of there. It's just a sort of very stretched global market outside of the US, and that makes it vulnerable to kind of price spikes, the likes of which we've seen in the past couple of days.
Martin, thanks for the update. Certainly one of the key areas of the market to watch this morning. Martin Ritchie joining us out of Shanghai and what's happening with the metals. Let's talk about what we are going to watch for the rest of the week. It's been a busy start to the week, so let's carry on with what we are going to be looking at. EU defence ministers are meeting in Brussels today. Apparently people are still spending. I'm told it's Cyber Monday. Isn't everything kind of cyber these days? Anyway, it's Monday, therefore it is Cyber Monday. The BOE publishing its results of its bank capital stress test. I think that's Tuesday. We've also got the critical number Tuesday, Euro area November CPI. Macron's in China for the full state visit Wednesday. NATO foreign ministers are also meeting. Claims data Thursday as well out of the United States. And we've also got Friday, the Russia-India summit. We've got delayed September US payroll and PCE inflation data as well. How many blanks are those data going to fill in? What kind of a week are we set up for? It's been a bumpy start, so let's find out how we're feeling this Monday morning. Senior EMEA equity strategist Michael Seeker joins us now. Morning, Michael. A bumpy start today. Kind of, is Santa coming? Is the rally going to sort of carry on, or are we going to get used to choppiness in December, which we don't normally see?
Well, that's true, Guy. You see, I think a lot of the consensus is very optimistic. Whether it's next year or whether it's December, there's a lot of optimism out there. The positioning globally has been trimmed drastically during the volatility episode we just had, and so the buyback are restarting. The Fed is supposed to cut. So generally speaking, there's a very positive sentiment into December. So it's kind of surprising that we see some choppiness, but I think that's also because as everyone gets very positive, the bar is higher.
Right, and it's not putting strategists off, the fact that the bar is higher. You've been writing this morning about RBC strategists. They see a 14% gain for the S&P 500 over the next 12 months. Is this kind of typical, Michael? Is this what we're starting to see in people's outlooks for 2026? Stocks higher?
Yes, that's exactly what we're seeing. Everyone is really bullish about next year. Everyone believes the Max 7 and all the AI capex is going to keep going. Is going to keep driving the market higher, keep driving EPS higher. Not just in the US, we're seeing that for all regions. It's double-digit EPS growth for every single region next year, much higher in emerging markets than the rest of the world, actually. But the US will still be among the leaders. Europe will have double digits. It's very positive, and you got to be thinking a lot of it has to go really right for it to happen. So that's a risk to the market.
Europe's outperformed this year, though. It's outperformed, and it's had the euro or a weaker dollar.
Yeah.
Is that expected to carry on? Could Europe outperform again next year, and how currency dependent is that?
Well, it's very possible. The dollar isn't expected to rise much next year. Actually, a lot of the forecasts are
down.
Yes. Why? Because the Fed is going to cut rates. That's the expectations, and so the monetary policy is going to converge, like U.S. Europe. So there's no reason for the dollar to go up on that side. Now Europe can outperform if the drivers of this year either keep going, or if we have a proper rotation into the laggards of last year, like all the large caps in Europe, the quality trade that's been lagging the market. This could take over from banks and defense, which are the two major thematics that have driven European performance this year.
Maybe they will be looking for ways to prove that AI is delivering productivity gains already, and that might be one way that they try, at least attempt to catch up. Thank you, Michael. Thank you for joining us. Michael Masika from Bloomberg, of course, with latest thoughts on stocks. European stocks then, Guy, on the back foot, but US futures pairing those losses.
A little bit. Anyway, it looks like it's going to be a bumpy start to the week. This is Bloomberg.
world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
President Trump says he's decided who will be the next chair of the Federal Reserve, but will not announce it just yet. He's expected to name his nominee before Christmas. Cryptocurrencies fall sharply in a risk-off start to December. Bitcoin falling below $86,000 at one point. Plus, the U.S. Special Envoy Steve Witkoff heads to Russia, while Ukraine's President Zelensky is due to arrive in Paris as talks advance on the U.S.-led peace plan. So good morning, everyone. Happy Monday. There is quite a lot going on, certainly in the markets, but also elsewhere in geopolitics. Look, global stocks and bonds starting December under pressure due to a renewed sell-off in cryptocurrencies, but also hawkish comments from the Bank of Japan. We're looking at silver. We don't do that every day, so it does give you a good indication of some of the quirky things we're looking at. It's also very clear that investors are pretty cautious to add risk ahead of some upcoming U.S. data and macro events, with the market then hesitating ahead of the upcoming macro data and then the possible Santa rally, the Christmas rally. Let's take a look at the European markets map. Again, if you look at some of the hawkish comments from the Bank of Japan, that's also weighing on sentiment across the board. And you see the FTSE is practically unchanged, and you see the DAX, the CAC, and the FTSE maybe under a little bit of pressure. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, President Trump says he has decided on his pick for the next Fed chair, who he expects to deliver interest rate cuts. Now, sources have told Bloomberg that Trump's chief economic advisor, Kevin Hassett, is seen as the likely choice to succeed the current Fed chief, Jay Powell.
Fed chair, are you any closer on that right now?
I know who I'm going to pick. Yeah.
Oh, tell me, Kevin Hassett.
I'm not telling you.
Wildly exciting. Now, traders still betting on a rate cut by the Fed in December, but the month is beginning with a risk-off mood ahead of quite a lot of U.S. economic data this week. So let's discuss all of this with Sam Linton-Brown, head of global macro strategy at BNP Paribas Markets 360, Bloomberg's Markets Today co-editor Marina Konyama, and our Daybreak editor Mark Perrier. It's exciting. It's Monday. We have news. We don't know the news, but we know there's a pick and it's been made. Mark, what do we know about the next Fed chair?
Well, everyone is certainly excited about who it's going to be, with Trump saying yesterday he's made his choice. And we've reported that, Kevin Hassett is seen as a likely successor to Jerome Powell. But again, it's very much a wait-and-see game until the decision is actually made.
Yeah, I mean, is there a chance that he doesn't get confirmed? So this is a tricky with being a Fed chair, is that you have to be maybe loyal to this president if you want the job, but then you have to be 100% independent, otherwise you don't get confirmed.
There's always a chance he may not be confirmed, but obviously, as we've reported, he does share the views of lower rates, the need for lower rates, which the president obviously is very much in favor of. But again, it's a tough balancing act, and it remains to be seen if he'll be chosen.
Sam, your thoughts? First of all, Fed cut in December, and good morning.
Good morning.
We're getting straight to it this Monday morning.
Yeah, Fed cut in December. We think Powell wants to cut, and we think he has the votes. The key point, though, and I think this very much interacts with the debate around the next Fed chair, is we think that takes policy to a neutral level. So our estimate of where neutral rates in the US is much higher than where the Fed thinks it is. So we'd be a little bit more cautious on the degree to which they cut after this.
Yeah, because the situation gets a lot more complicated.
Once the Fed brings policy to where they no longer see it as restrictive for the economy, what we expect to see is that the data recovers. Right. So thus far, the market's been a bit concerned about the soft patch we're seeing in the US economy at the moment. We think that primarily reflects a delayed impact from the trade uncertainty earlier this year. But then as we go into next year, we'll see some of a recovery. If that's associated as well with an expectation that Fed policy is now in a pretty good place, it means we only expect the Fed to cut rates once more in March.
So, Sam, I mean, overall, you think that basically what we have now is policy that's much more accommodative than perceived?
Or less restrictive than perceived.
Less restrictive. What are you looking at, Marina?
Well, actually, you were just talking about the Fed, and I think what's quite interesting, as we are expecting to, have that confirmed, who will be the new Fed chair, as you said, there's that expectation now that there will be a rate cut in December. But I think what Sam was saying about actually that and taking it perhaps to a neutral policy rate is quite interesting if we're looking at what the market is pricing in now. So whilst we have recently had an increase in those bets for a December cut, there's not a huge amount of change this morning. But what we are seeing is looking ahead into next year, actually a slight pairing of those bets now. So that I think that very much ties in with what Sam was saying. And of course, we have an enormous amount of economic data coming in the next few days and this week from the US. And so I think that will also give us a better picture of actually where the economy is and perhaps, where that need is for Fed policy, beyond the actual political impetus.
Sam, I mean, I guess the point is how much of it will be on data or how much of it is on actually who becomes the next, Fed president?
The market, to some extent, has interpreted it, the latest news flow around Hassett, as discounting more cuts in the second half of 2026 and also in 2027. So the market is interpreting the news flow as consistent with a few more rate cuts. I think what's key, though, is what happens with the economy. So if what we see heading into next year is that right now is a soft patch on growth, next year we're growing in line with trend, but inflation is actually quite sticky, perhaps more around 3%. It's going to be quite difficult, we'd argue, for significantly more rate cuts.
Mark, how much do we know about what Kevin Hassett thinks, on inflation, on growth, and actually what the Fed should do?
He is, as we've reported, he sides with lower interest rates, but obviously he has to be very careful. He has to remain objective and project that. He's been, especially yesterday, he appeared on Face the Nation, very balanced in his way of speaking, but obviously noting that Americans would love lower car payments. Who wouldn't, right? So, it's a balancing act going into this.
Do you see some more risks to inflation towards the middle of next year?
Yes. Is the easy answer. Yes, we do. I think there's a few elements to this. The first is if one believes, as we do, that the US economy is going to be growing in line with trend next year, that implies the current soft patch in data is just a soft patch. The downside risks the market's nervous about in the labor market don't eventually materialize. The second element is monetary policy. So if one believes that monetary policy is less restrictive now than the Fed, because neutral rates are higher than the Fed says they are, and one believes that the Fed are easing a little bit more dovish than they otherwise would to take out some of the political pressure take out some of the heat from Washington, then it means that you create an upside risk to inflation because monetary policy becomes too accommodative given how the economy is actually doing.
Merwin, I mean, when you look at the markets globally, they've latched on so much, and actually the Fed expectations that maybe they've let to one side some of these still inflation risks out there, but also some of the debt concerns.
Yeah, I mean, I think that's certainly possible because there has been this sort of politicization of everything, and we are still expecting a lot of data, as we've already said. And I think we have to remember as well, when we're looking at the broader market, if we're looking across equities as well, I mean, today we're seeing this huge, risk-off sentiment returning. This isn't new. We've seen this coming back with sort of increasing frequency, over the last few weeks, and there does seem to be some concern there. And I think ultimately what the Fed does is also going to play into that, because if there isn't the amount of dovishness that perhaps has been expected, that poses another risk for that equity rally as well.
In terms of, Mark, of when Kevin has it, I mean, are we expecting a kind of imminent... I mean, we have the decision, or so the president says that he has a decision, but when are we going to find out?
I'm not exactly sure, actually, if we've reported on that, if there's a decision coming up. But with Trump, these things can move quite rapidly. But I suspect that, we will probably have a clear indication as the holidays approach.
And then when does Chair Powell actually leave? I mean, he's still a Fed governor, which he hasn't said that he'll fully, leave that
In
post.
the course of next year.
So in the course...
Yes.
What else are we looking at? I mean, I know we spent a lot of time talking about the UK budget last week, which was, it got a lot of people, or certainly it wasn't seen as fair by a lot of people, is how I would put it. 6 days afterwards, what's your take?
Bearish currency. We think that the rally in the pound that we had before the budget was a short squeeze, but the medium-term picture, we think, for the pound is not a good one. There's two elements to it. One is political uncertainty. The market needs to price a bit of a political tail that is a downside risk for the pound. And the second is Bank of England. We think the market should price lower terminal policy rates from the Bank of England. Right now, the market's only expecting 2 more cuts. We think it's likely we'll get those 2 cuts December and then early next year, but that then the risk into 2027 is they cut rates twice more. For bonds, the picture's quite different, though. We actually like duration in the UK compared to some of the other markets, which I believe is quite out of consensus. The element here is that lower terminal rates should support fixed income, and supply in the UK, we expect next year to fall perhaps as much as 50 billion, which is a lot for the UK. It's about 20%. Yeah. So you have lower terminal Bank of England expectations accompanied with lower supply. It can support UK duration on a cross market, for example, against Germany, who we think are going to be doing massive fiscal, more than the market expects next year.
So where'd you buy into? Are you buying bonds?
We'd buy bonds 10-year versus Germany, and we'd receive the front end of the UK curve as well.
What's the markets telling us about the UK today, Molina?
Well, today things are not looking great on the equities front, although actually the FTSE 100 is doing better than other European stocks, which is often the case when there's a kind of broader risk-off mood. But looking at the pound, I think, to Sam's point, we have seen some weakness. We're falling again a bit closer towards $1.32. And that does seem to me to imply that there's just a lack of enthusiasm from the budget. There's no real sort of upward driver, and that is, we're seeing the pound the worst performing, G10 currency today. So there's that, and then also in the gilt market, yields are actually a bit higher across the curve, but that is also in line with what's happening in the rest of Europe. But I think, longer term, we did see the 30-year yield coming down quite a lot after the budget, and I think that does definitely play into the messaging of the budget, which was, okay, they've sort of shored up the fiscal balance sheet for the government, but there's not really a huge amount of growth that's being built in there. So there's not a lot for the currency. There is that stability that the gilt market wanted to see. And I think that with today's sort of morning reaction put aside, that is what we're seeing starting to come through in the markets. But there is a lot of uncertainty because it's quite a sort of niggly budget to properly digest.
Yeah, and I think the Prime Minister's also speaking a little bit later on, so we'll see what Keir Starmer has to say about that. Look, I keep on hearing ECB officials saying, interest rates are fine where they are. It doesn't give us a great kind of indication of where they think they will go. And it's also things move all the time. So for me, it's a rather odd statement saying rates are where they need to be now.
I see what you mean. We agree, though. Rates are in a good place right now. The key point, though, I'd make is we think the next move from the ECB will be a hike, not a cut. That's quite different to market pricing. Now, the hike
Okay, everybody sit down.
the hike isn't going to come quickly. We think it's a 2027 story. But the key here I'd make is European growth next year can surprise materially on the upside. The market's expecting growth of about 1%. We think it will be 1.5%. And the key driver here is German fiscal expectations. The market still remains very skeptical that we're going to see the amount of fiscal delivered, that the fiscal is going to be delivered on time, and that it's going to be effective when it is delivered. We think some of those concerns are fair, but overall the picture is more positive than perceived. So stronger German growth can drive stronger European growth, and in turn an ECB hike.
Okay, that is definitely like an outlier call. I want to ask about AI valuations in a second, but Bitcoin, is it just a risk move, or is there something fundamentally worrying Bitcoin believers?
Well, we have seen it drop about 5% this morning, and that is filtering through to all major tokens. So there's definitely a risk-off move this morning, and that is something we often see particularly amplified in cryptocurrencies. They do really sort of move as a risk asset. I think the fact we'll be watching what happens in tech, particularly the US markets. Obviously, we had a very sort of slow Friday after things are closed on Thanksgiving Thursday, so it's perhaps a little bit too early to completely read into the trends there, because there has been an unusual amount of volume. But I think there is that real risk-off mood, and there's just been such a sort of long tailwind into it that there is some risk there to probably be unwound. But it really probably depends on what happens with the Fed, as we've been saying, in terms of whether there's that impetus for more of a sort of rally into the year end, whether we see that Santa rally in equities. And I think Bitcoin's all part of that picture at the moment.
I imagine AI is left, right, and center of that rally or not. Your take on AI valuations?
I think into the end of the year, it makes sense that we see some of the most consensus and popular positions pare back. We saw that in October with gold. We've seen that in November with tech/AI-linked names. Our view is that heading into next year, the theme is very much still, it's a buying opportunity. So our view is that the sell-off we've seen is first and foremost a reflection of positioning. Our metrics, our quantitative proprietary metrics we run at BNP Paribas, suggest now that the position is actually quite clean. The market is not re-risked despite the bounce in prices. And so we think there's plenty of scope for a year-end rally.
Okay, wonderful. Thank you all for joining us. Sam Linton-Brown from BNP Paribas Markets 360, Bloomberg's Marina Konyam, and Mark Perrier. Coming up, airlines scramble to avoid disruption to travel schedules as they urgently update software on their Airbus A320 jets. We'll have more on that next. And this is Bloomberg.
A multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season. Take
take a look at how we're faring when it comes to Asian markets.
We had a great Treasury auction, interest rates went down. And so I think that the American people could expect President Trump to pick somebody who's going to help them, have cheaper car loans and easier access to mortgages at lower rates. And that's what we saw in the market response.
Kevin Hassett, speaking to CBS, faced the nation on Sunday with the White House economic director now seemingly in line to be President Trump's choice to replace Jay Powell as Fed chair. Now, global airlines are beginning to report that they've completed an Airbus software update that grounded flights on the weekend. This morning, the French aircraft manufacturer says a, quote, vast majority of its roughly 6,000 A320 jets have been modified. Well, we're joined by Bloomberg's managing editor for space and aviation, Benedict Kamel. Benny, thank you. What's been the impact of Airbus's largest recall?
So the impact appears to have been fairly limited, and that's actually quite fortunate, because when this announcement came on Friday night, it did look like this could turn into a real sort of cosmic storm. The announcement from Airbus being that about 6,000 of its A320 family aircraft would need a software revision, essentially reverting to an older version of software in the cockpit, because they had found that there was some sort of radiation interference that made the current software unsafe to use. So over the weekend, a mad scramble from Airbus, but also obviously airline customers around the world, trying to sort of address this fix. And as you said, we heard this morning from Airbus that the very vast majority of these planes, so almost 6,000, have indeed now been upgraded. Only fewer than 100 still need the fix. So it does seem like they have a good handle on the issue. The stock is down a smidge. I do think people are a little bit spooked by what happened there. But given the scale of this, it seems like they really managed to get a handle on it fairly swiftly.
What triggered the need for this urgent software update?
So that part was left a little bit opaque. Airbus initially came out with a release on Friday night saying that there had been a recent incident whereby this solar radiation had impacted flight controls. We then had to sort of backtrace what that incident might have been, and we learned that there was an incident in late October involving a JetBlue aircraft where there was a sudden sort of downward pitch of the plane because of computer inputs that the pilot couldn't control. Nobody was seriously hurt in that incident, but it was obviously something that spooked the pilot, led to a diversion of the plane, and ultimately led to where we ended up over the weekend, which was the software needs to be changed, needs to go back to a previous version, and hopefully that will have fixed the problem.
This fault, Benny, comes as Airbus tries to meet ambitious delivery targets. So what are the implications for the company?
Well, given the speed at which they've managed to address the issue, it seems like there won't be any lasting impact. Had this dragged out, should we say, into the week or even into the latter part of the month, that would have been a very different conversation. But right now, it seems like they can essentially move on from this scare over the weekend and really focus on what they need to do, which is build planes. And they still have quite a few to make. They have an ambitious target for the end of the year, which is 820 aircraft deliveries, and they're still some ways off from making that. So really the focus has to be on that. And had this software issue turned into a longer lasting problem for them, that would certainly have diverted management and also engineering resources, and that could have potentially jeopardized that goal. But as I said, given how swiftly they got a handle on it and how few planes still need the upgrade, it seems like this cosmic storm, as it were, has blown over.
Benny, thank you so much. Benny Kamel there with the very latest, of course, on Airbus. Now, oil trading higher today after OPEC Plus confirmed it will stick with plans to pause production hikes during the first quarter of 2026. Traders also factoring in geopolitical uncertainty stemming from U.S. President Trump saying Venezuelan airspace should be considered closed. Now, for more, let's bring in Bloomberg's EMEA News Director, Will Kennedy. Will, as always, thank you so much for joining us. So what's behind OPEC's decision to pause output?
Good morning, Francine. Well, we expected this. They'd signal it a month earlier, that after a year of gently putting more oil into the market to make sure that they could maintain their market share, the risks of a continued prolonged oversupply in 2026 meant that they should probably pause production increases, and that's what they reaffirmed in their latest monthly meeting yesterday. I don't think it changes the big picture hugely, which is that most people still expect a significant supply overhang next year, but prices have actually held up reasonably well in the last few days, partly because of OPEC, but partly because of broader geopolitical risks.
Well, what has been the impact of President Trump saying that basically Venezuela's airspace is closed, and then downplaying those comments?
Yes, I think this is a long-running thing that people got their eye on tensions in Venezuela. Has been a very big oil exporting nation. Its oil industry is a shadow of its former self, but it still exports almost 1 million barrels of oil a day. And a conflict there or regime change there would throw those exports into jeopardy. The other geopolitical situation that people are watching is actually in the Black Sea, where Ukraine appears to have done two things in recent days. One, attack a pair of tankers linked to Russia's Shadow Fleet in the Black Sea, but they've also successfully struck the loading terminal for the BTC pipeline, which brings all of Kazakhstan's oil to the Black Sea, and it looks like there may be some long-term damage there. So you put all of these situations together, and geopolitical tensions globally are counterbalancing that big picture of oversupply that I described earlier.
Well, talk to me about copper and silver. We looked at silver futures for the first time in ages on right at the top of the show. So what's pushing them higher?
Yep, both at records this morning. Copper is a very interesting one, obviously a vital material to the global economy, where people have been painting quite a bullish picture for a long time now. We've got a strong demand picture overall, driven by the use of copper in electrification and everything from grids to data centers to electric cars. At the same time, we've seen several mining companies say that their production is not going to be as strong as expected, and so you've got that supply-demand balance looking quite bullish. But people are also very focused on tariffs in the US. There haven't been tariffs on copper yet, but they're still looking at it, and prices in the US are higher than the rest of the world, so that's sucking in a lot of copper, giving less copper for consumers in places like China.
Well, worst case scenario, could we actually see a supply crunch? I mean, do we have enough of this stuff?
Well, we will we will have as much as we have, and the economy will work. I mean, people are bullish about this. We had the head of copper trading at Mercuria, one of the world's best-known copper traders, saying that this is a once in a generation opportunity to trade copper higher because of all these factors. But as always, the cure for a boom is a boom, and that people will find ways to use less copper, to substitute copper, to do things a different way. But well, you can use you can recycle. You can recycle. There's huge amounts of copper to recycle. You can use aluminium instead in some instances. There are other things you can do. But yes, I think that the consensus is that this is a pretty bullish outlook for this metal, and hence the record this morning.
Well, thank you so much, as ever, Will Kennedy there, Bloomberg's EMEA news director. Now, cryptocurrencies falling sharply, bringing fresh momentum to a wide-ranging sell-off that appeared to have settled. The crypto market is on shaky ground after a weeks-long sell-off that began when some $19 billion in levered bets were wiped out in early October, just days after Bitcoin set an all-time high of 126,251. Coming up, Ukraine's president calls for a fair and lasting peace as talks on the U.S.-led peace plan advance. We'll have the details next, and this is Bloomberg.
Alex Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in London, and these are your top stories. President Trump says he's decided who will be the next chair of the Federal Reserve, but will not announce it just yet. He's expected to name his nominee before Christmas. Cryptocurrencies fall sharply in a risk-off start to December, Bitcoin falling below $86,000 at one point. Plus, a U.S. Special Envoy, Steve Witkoff, is set to meet with Putin on Tuesday. That's according to state media, while Ukraine's president Zelensky is due to arrive in Paris as talks advance on the U.S.-led peace plan. So let's stick with that story and the ongoing negotiations to end the war in Ukraine. At the weekend, there were talks between the U.S. and Ukrainian negotiators which were described as productive. But the U.S. Secretary of State Marco Rubio says there was no breakthrough.
It's not just about the terms that ends fighting. It's about also the terms that set up Ukraine for long-term prosperity. I thought we started laying the groundwork for that, most certainly in Geneva. I think we continued that work in our communications throughout the week. I think we built on that again today, but there's more work to be done. This is delicate, it's complicated, there are a lot of moving parts, and obviously there's another party involved here that'll have to be a part of the equation, and that'll continue later this week when Mr. Witkoff travels to Moscow.
Now, for more on this, Bloomberg's chief Europe correspondent, Oliver Crook, joins us from Brussels. Ollie, good morning. So what's the latest from these U.S.-Ukrainian talks?
Yeah, Francine, after this sort of firing shot was fired a week and a half ago when we got that 28-point plan out of Washington, D.C., and then it was now redacted and changed into that 19-point plan after those Geneva talks, that further negotiations took place yesterday in Florida, led by Secretary of State Marco Rubio and the Ukrainian delegation, failing to break through to the sort of final text of what this arrangement could look like. And we have to say that ever since that 28-point plan exploded very publicly on the public stage, those conversations have gone very much underground. So it's very hard to get a reading right now to see if they have bridged those pretty large differences that there were between the Ukrainian conception, the American conception, and the Russian conception of what a peace proposal could look like. We're still dealing with a lot of the thorniest issues, whether it's territorial concessions, whether it's a question of security guarantees. These are still sort of major questions, and we don't know how much progress has been made. That being said, the focus this week follows swiftly onto diplomacy. Today, Volodymyr Zelensky, president of Ukraine, will be in Paris to meet with Emmanuel Macron possible. We understand Steve Witkoff could leave as early as today to go to Russia to have those talks, as you were saying, Francine, tomorrow with Vladimir Putin. And then we have Marco Rubio, who's coming to Brussels a little later this week for a meeting of NATO foreign ministers here in Brussels, hopefully for the Europeans to get their voice heard in what they want to see in terms of the defense architecture going forward in any kind of arrangement between the Ukrainians and the Russians, because of course this also includes the Europeans. That being said, Francine, we're also expecting Vladimir Putin to go to India a little bit later this week. So does that sound like somebody who believes that there is a moment of crunch talks to really get a deal over the line over the next couple of days? Perhaps not, but those are the state of play as we enter this week, which will be sort of a very rich one in terms of diplomacy over the next few days.
Yeah, Ollie, looking at all the flags behind you, it's also the EU defense ministers meeting in Brussels. What can we expect from that?
Yeah, that's right. They've just filed in. They're having their meeting today. A number of different European defense ministers. There were a few comments coming in, really basically repeating the things we've heard from them from the very beginning, saying that there will be no decision about Ukraine without Ukraine, that the European voice also needs to be heard. But as we know, Francine, there's been a lot of difficulty getting that European voice heard because they've sort of failed to act on some of the many issues that they actually are able to act on. For one thing, there are those frozen Russian assets. Over the last few days, there has been no progress in that particular regard. In fact, the Belgians, who really hold the key to unlocking that 140 billion euros worth of assets that the Russians have being held in Belgium here, that reparations loans that would be held against that, they have dug in saying that basically this may not be the time to touch those assets. This may not be the time for that conversation because it may derail peace talks. You add to that the fact that Viktor Orban spent his weekend in Moscow alongside Vladimir Putin to discuss oil and gas, again, sending a fairly negative signal from the Europeans here who have failed to sort of get to the negotiating table through any sort of activity of their own, but again, saying sort of those reassuring remarks. We do expect the Ukrainian defense minister to also attend this meeting, so we'll see what they have to say in a couple hours' time when they break up.
Ollie, thanks so much. Our chief Europe correspondent, Oliver Crook. Now, for more on this, we're joined by Timothy Ash, senior EM sovereign strategist at RBC Blue Bay Asset Management, and Stephanie Baker, Bloomberg's senior writer and also the author of Punishing Putin. Stephanie, let's start with you. I mean, this goes really to the very heart of what your book is about. It's trying to find an economic arrangement that suits everyone in all of this. What do we know about these Ukrainian peace talks? Are we close?
We don't know that much of the detail from the talks yesterday, but I think what is emerging are four key sticking points here. One is the issue of territory, whether or not Ukraine will give up territory that Russia has not been able to conquer militarily. There's the issue of Ukraine's possible NATO membership, the kind of language around that, whether or not that is ruled out as a possibility. Sovereign frozen Russian assets and the fate of those, as well as any kind of security guarantees provided by European countries for Ukraine in the case of a deal. And I think that the two sides are very far apart on those issues. Putin last week gave a very bellicose speech, actually, vowing to fight until the last Ukrainian soldier dies. So I don't think he has given up his maximalist goals here. At the same time, Ukraine is in a weakened position because of this corruption scandal that has ensnared several individuals in Zelensky's orbit, although not Zelensky himself. And I think that is putting them under intense pressure to do a deal.
Tim, what do you think Vladimir Putin is ready to give up on now, if anything?
Well, look, as Stephanie mentioned, I mean, Putin's still got his maximalist goal. He wants a bad peace deal for Ukraine, right? He wants a deal that makes Ukraine not sustainable. Putin wants the whole of Ukraine. I mean, I think that's absolutely crystal clear. He wants strategic control of the country. I think he would accept a deal that he thought, was not sustainable for Ukrainian context. And I think a deal imposed on Zelensky without adequate security guarantees, whether, if there's some de facto loss of territory, but without really very strong security guarantees, I mean, Ukraine would not really have a very strong future in that scenario, right? There'd be a risk of political and social instability. The country's economic outlook would be pretty dismal. There wouldn't be any foreign investment into the country. So again, Ukraine would kind of struggle economically. All those migrants wouldn't come back. Maybe many people further would leave. And that's exactly what Putin wants. So he's kind of playing a game here, I think, with the American negotiators to to make sure, he enforces a poisoned chalice on Zelensky, if anything.
Yeah. But so, Tim, how likely is Ukraine to concede these territories? And actually, does Volodymyr Zelensky actually have a choice?
I think it's impossible that Zelensky will accept de jure the legal loss of any territory. Ukraine's territorial integrity is enshrined in the constitution. I cannot imagine a scenario where the Ukrainian Rada would vote for the legal loss of territory. De facto, accepting the front lines where they are, I think Ukrainians could accept that. They think that perhaps in the future there'll be negotiations about the long-term status. But key, as I mentioned, if even de facto Ukraine accepts the loss of the territory, is the rest of the country has to be secure enough that it has a future and it can progress. And I think that's related to security assurances. If it's not NATO, there should be State of Israel-style security assurances that Ukraine will be given the types of military kit to be able to defend itself. I think EU accession, a firm anchor of EU accession, is really, really important in terms of Ukraine's economic development. And I think the 28-point plan, it wasn't very strong in there. It was almost that there's a potential for Ukraine to be in the EU. I think Ukrainians want something firmer than a date. And then, as mentioned by Stephanie, in terms of the immobilized Russian assets, Ukraine has suffered $1 trillion damage. Who's going to pay for recovery and reconstruction? $330 billion of CBR assets would help. They would help anchor that recovery and reconstruction. So, they're the kind of issues that are at hand in these negotiations. And I don't think Zelensky will give way unless he feels pretty sure about, those three items, essentially.
Yeah. Stephanie, this feels like a bad deal for Ukraine unless there are security guarantees and maybe some of the money that Tim is talking about. Why is the U.S. pushing this on Ukraine?
I think Trump wants a deal, and he doesn't care terribly whether or not it's a bad deal for Ukraine or whether it sticks for the long haul. There's a lot of money at stake here, and I think that's one of the key parts of the negotiation that we don't really have much visibility into. But the proposed 28-point plan included the idea of using some of those frozen Russian assets to rebuild Ukraine, but the profits going back to the U.S. And I think that's one driving force behind that kind of a deal. I think Putin is, potentially leaving his options open opportunistically. Perhaps he might see doing a deal on his own terms might be advantageous, especially if it involves sanctions relief, because the sanctions on Russian oil are hurting, and that pressure will only mount as time goes on. But the idea of handing over territory in Europe to the aggressor is monumental. I think Tim was right. I think that's going to be impossible for the Ukrainians to accept, for any Ukrainian politician to accept, because I don't think there's support for that within Ukraine.
So then what happens? And I know one thing that I keep on hearing quite a lot of people talking about, a possible regime change in Ukraine because of the scandal. You've always said it's impossible to organize elections in an active war.
Well, this is the other point that the Ukrainians are pushing back on. Putin wants elections to be held within 100 days in Ukraine. Ukraine says that's unrealistic. There's a war going on. Even if there is a ceasefire that's agreed relatively soon, it would take an enormous amount of time and effort to organize elections. How do you organize elections and votes on the front line? What happens to those contested territories? And it would, of course, be subjected to massive Russian interference, as we've seen with Russian interference with elections across Europe. I think that there would be a double-down Russian effort to try to ensure that Zelensky does not get reelected. So it would be very hard to ensure free and fair elections. It would take months to organize.
Tim, I know the crucial component that's missing from this is Europe, who's still trying to get involved. We know that President Zelensky is meeting with Macron in France today. What's their role in this, in supporting the reconstruction of Ukraine?
Well, just to add to what Stephanie already said, the Helsinki Final Act from 1975, European countries, including the former Soviet Union, agreed not to change each other's borders by force, and the borders as were at the end of the Second World War would remain in place. And I think for Europe, with so many territorial issues between countries, I mean, it's a disaster for Europe if as part of this deal, Ukraine's borders are changed. I mean, but you're right. I mean, Europe is desperately trying to get its place in this negotiation to support Ukraine. I mean, to simplify things, I think after J.D. Vance's appearance at the Munich Security Conference in February, it was crystal clear to Europe that the US backstop for Europe is not there. And actually their security is massively under threat because they see there's this existential threat from Russia. The Europeans don't believe that Putin will stop in Ukraine. They think he has malign intentions towards Europe. And actually, the key to Europe's defense is two things. One, it's Ukraine holding out as long as possible so Europe can build its autonomous defense capability separate from the Americans. And secondly, that the Americans continue to sell weapons to Europe and Ukraine so they can hold out. Europe needs to be a bit clever. It has agency. It's going to be a huge purchase of US weapons. It should let the Americans know that, if the Americans want Europe to be an ally in terms of the long-term hegemonic battle with China, the Europeans need to say, well, China is existential threat to you. It's your number one national security threat. It's not ours. Russia is. Help us sort Russia out. Help us secure our security. And then we will be good future allies to you in whatever you're thinking on China. And we need to bang that line pretty aggressively. And as already mentioned on the immobilized Russian assets, we've messed around for 3.5 years. I mean, people like me have been arguing this should have been done. And we're now in this desperate situation where Ukraine runs out of money next year. There's a huge financing gap. The IMF suggested $140 billion of shortfall to their program to 29. The Europeans have argued in the broader funding envelope for Ukraine, which is military and defense, it's 140 billion euros for the period 26 and 27. Unless we use immobilized Russian assets, where is the money going to come from? It will come from European taxpayers or Ukraine fails. If Ukraine is not funded, it loses the war. That's an absolute disaster for Europe. You think of Ukraine probably will collapse, failed state, millions of Ukrainians moving west, Russia on our border, massive increase in defense spending, probably going to go from $2 to $5 to $1 trillion of extra defense spending. So Europe's in a real mess about this. But what it does know, it has to support Ukraine to buy time for Europe to get its act together. It has to somehow work with the Americans to continue to get those arms supplies.
Tim, so many questions that we'll try and answer over the course of the next couple of weeks. Tim Ash, Senior EM Sovereign Strategist at RBC Blue Bay Asset Management, our very own senior writer, Stephanie Baker. Now to some other stories making news today. And Switzerland has voted to reject a 50% inheritance tax on super-rich residents after wealthy entrepreneurs threatened to leave the country. The left-wing Young Socialist group launched the proposal as a way of raising funds to fight climate change. But the plan ran into staunch opposition from the government and all parties aside from the left. Now, Chinese car makers lost ground in Europe in October, slipping back from the record market share they captured a month earlier across the region. In the hybrid categories, where manufacturers like BYD have been on a tear, their share as a group fell around 3 percentage points to 12.6% from September's peak. That's according to researcher Dataforce. Now, new EV registrations, a core category for Chinese brands, declined to 11.8% to 12.6%. And the Apollo chief executive said last week that people have lost their minds and become hysterical about private credit, dismissing the idea it could pose a systemic risk. Paul Davies from Bloomberg Opinion says the story is a bit more complicated and the hysteria will get very real in the near future. Well, luckily enough, we have Paul joining me in the studio today. It's almost as if we planned it. Paul, thank you so much for being with us. So the Apollo chief executive really downplaying some of the risks. Are they just talking their own book? What are you seeing?
I mean, I think they're on the defensive in a lot of ways. And it's not just Mark Rowan of Apollo. We had the co-CEO of Blue Owl Capital saying similar things, the week before as well, about how most investors were really quite delusional about the risks involved in private credit. I mean, I think there's a confluence of things going on here. One of it is when we talk about private credit, historically what we've mostly meant is direct lending to kind of mid-market companies, which are smaller companies, which is, speculative grade or junk rated a lot of it, and that increasingly became basically a private version of LBO financing. We know this is kind of riskier debt. Defaults there have been very low, but they are starting to climb. And also the more important thing is what we call selective defaults, which is where companies move their debt to payment in kind. Well, they stop paying over cash, or they just kind of extend duration without offering investors any sort of compensation. These things are starting to climb a lot more as well, and they're not as high as they were last year, but they're getting closer to the range that they were in 2020. And what people like Mark Rowan especially is talking about is he's trying to kind of draw us away from that, because what they do is a lot more investment grade stuff, which is meant to be debt that is well designed to suit the regulatory capital requirements of their insurance companies.
But so when you look at the outlook for example, for repayment problems or even bankruptcies, what do they look like? Do they accelerate into next year?
It's definitely going to get worse next year. So Goldman Sachs Asset Management, in a report about 2026 of last week, I think, we're talking about how there's sort of 15% of these companies in the US who are unable to cover their interest payments from their operating profits, which is EBITDA. So that is not a good place to be in. These companies are kind of on the edge of stress. They're having to do things like move to payment in kind, and interest rates will help there a little bit, but it's not going to solve all those problems. So some of these companies are going to hit a sort of a reckoning. And KBRA, one of the ratings agencies, or not agencies, companies we call them nowadays, also warned last week that they have a record number of companies that they monitor in this space who are, the lowest rating possible, CCC-, which means your kind of next step default, unless you have some kind of cash injection to help you recover, or your business to improve significantly.
Paul, there's a lot to get through. Thank you so much for joining us. Paul Davies, with a fabulous, opinion piece that he also wrote today. Paul Davies, our Bloomberg Opinion. Now, coming up, signs of consumer resilience as Black Friday sales rise in the U.S. We'll dig into that next, and this is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg. Well, cryptocurrencies falling sharply, with Bitcoin sliding as much as 6% after a weeks-long sell-off. Anna Herrera, Bloomberg senior crypto editor, joins us now. So, Anna, thank you for joining us. What's behind the fall?
So, as usual, we've been saying for the last week, what's different in this crypto crash is that there doesn't seem to be like a very clear sign of why prices are falling. Before, we had all these big collapses, whereas now it tends to be following more the general macro environment and what other more riskier assets do. For example, today, we saw Asian stocks are falling off of what's happening in Japan, and there seems to be a parallel with crypto now.
So does it continue on this downward spiral?
It's hard to say. We thought last week that maybe we'd hit sort of the ceiling now, the bottom, rather the floor rather than the ceiling, but you never know. It's a new day. What tends to happen sometimes is we see when the U.S. day opens that there's another sort of slide again. So I guess we have to watch. And investors are also looking at the Fed, see what's going to happen there. So it's turned into a kind of a regular sort of risk asset, less fun than it was before, I guess.
And very quickly, is there a psychological level?
I think the last was below 82%, 82,000. I think was the last. So I guess if it falls beyond that and then 70, then maybe it'll keep falling. And as you know, with crypto, the exchanges have these auto liquidations. So when there's a big pronounced crash, it goes even more.
Anna, thank you so much, as ever, Bloomberg senior crypto editor Anna Herrera. Now, Cyber Monday, talking about psychology, is underway after sales climbed on Black Friday, a sign that consumers are also continuing to spend despite economic concerns. Now, for more, we're joined by Bloomberg opinion columnist Andrea Felsted. Andrea, how did we spend on Black Friday? A lot.
Yes, it's up. Things like electronics, clothing, toys. The headlines do look like it's up, but you've got to take inflation into account, so the volume of goods bought won't be quite as spectacular as the headline numbers. It'll be also interesting to dig a bit deeper into what people actually bought. Now, in Prime Day in July, I know that's a different time of year, coming up to back to school, now we're into the holidays. What we saw was that people bought things they needed, so they stocked up on things like household essentials, back to school products. That's different to sort of treating yourself. The consumer is very focused on value, so they're looking to get the best deals on the things they buy all the time rather than spoiling themselves.
Andrea, turning out to your piece today, which is a great read, what makes you think Gen Z will put on a Cartier in their basket instead of a Rolex?
They just seem to love the brand. And, Cartier has done a really good job in targeting them. Remember a decade ago when all the girls were stacking their love bracelets, we had pictures of the Kardashians in these bracelets that were very difficult to get off. Cartier really saw that, and they leaned into that with really effective marketing, effective ambassadors. Timothée Chalamet wearing a smaller watch than is typical for a man. That has all gone into this zeitgeist of smaller, often gold, often rectangular watches, which plays exactly into Cartier's strength.
I love that, which also means a lower price point, given the price of gold is going up.
Exactly, right. Although the other thing that Richemont have been very good at, not just in the watches, but across the jewellery brands, is ensuring there are some entry-level prices. And, you can buy a mini steel panthère for about £3,500. That's the same as many handbags. So this is why jewellery, and in this case, these watches, have outperformed leather goods, where price rises have been astronomical. And consumers are saying, is this bag really worth it?
Andrea, what's the role of AI, playing in this consumer spending?
Well, we are seeing consumers use AI-enabled search to try and get the best deal. We've also seen some evidence they're actually using AI agents to buy, and that creates a new sort of question for retailers and brands, because for forever they've been targeting people in their advertising and search. Now they've got to target these agents. So I should think by next Black Friday there'll be a lot of thinking in how do we show up in these searches.
Andrea, thank you so much. Andrea Felsted there from Bloomberg Opinion. Now, just a redhead, which means it's big news, crossing the Bloomberg terminal. China's Vanke, the distressed builder that surprised markets last week when it proposed an unspecified delay in paying a local bond, has now asked holders to wait a year to be made whole as it faces mounting liquidity pressure amid waning state support. Now, the president of Shopify is on Bloomberg Tech at 4:30 p.m. London time. Great person to speak to on this Cyber Monday. Now, up next, Bloomberg Brief, the full roundup of the main stories today, including Donald Trump saying he's finally made his decision on a replacement for Jay Powell. This is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Now, you've written that younger people today are not as happy as their parents were. That's in part because of social media and things like that makes people isolated.
So it's a complicated thing, but there's basically a climate and weather problem that we find, and I don't mean that literally. The climate of happiness is all about faith and philosophy in life, about family life, about friendship, and about seeing your life as a calling, your work as a calling that is meaningful and serves other people. And all of those have been in decline. That's the climate of happiness has been ticking down since about 1990. Then the weather, the hurricanes in happiness have been really threefold. Number one was the advent of social media and screens in everybody's lives in 2008, 2009, 2010, which has just raised absolute havoc in the brains of everybody under 35 years old. That's what my new mini book is about. It's about how we use our brains differently, and it's vacating the parts of our brain that we need to assess questions of meaning. The second is polarization, where baby boomers have tried to conscript young adults into their culture war, particularly on campuses. You should feel aggrieved. You're a victim. Everybody's trying to ruin the world. You need to be angry and afraid. And last but not least, of course, is what happened with the really misbegotten reaction to the coronavirus epidemic, which is to send everybody home. Make sure that people don't interact socially, and that was catastrophic for happiness.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Decided. President Trump says he's picked his nominee to succeed Fed Chair Jerome Powell and expects that nominee will deliver rate cuts. Risk pullback, uncertainties around the next Fed chief, a crypto slump, and a raft of data coming before the end of the year, all keeping investors nervous at the start of December. And U.S. and Ukrainian negotiators say they had productive talks for a peace deal. Special Envoy Steve Witkoff heads to Russia this week. So let's take a look at this market, because it does appear that we are headed into December with fragile sentiment. We did eke out a gain for the S&P 500 of 0.1% in November. Not so for the Nasdaq 100, though. That was down 1.6 for the month. So obviously a lot more fragility around AI, around cryptocurrencies, and everything tech-related. And we're seeing that again today, with the S&P futures pointing to a decline of 0.6%, more than that for Nasdaq 100 and Russell 2000. Of course, this next Fed chief, will it be Kevin Hassett? Will it be somebody else? And what happens next week at the Fed meeting? These are all questions swirling in the market's mind. The bond universe, as you can see, haven't moved too much. We're up 3 basis points there on the 30-year yield, up a little bit on the 10-year yield, and the same for the 2-year yield. So just a little bit of money coming out of treasuries. It's coming out of a lot of asset classes. Let's take a look at commodities as well, because if you look at Bitcoin, we're back down to 86,000. Now, we traded well above 90,000 for much of last week, so that is clearly a lot of volatility in Bitcoin. Crude is putting on a couple of percentage points after OPEC Plus said it wasn't going to add back in production. And as you can see, Dr. Copper there, not too much movement to start this trading week. So we're going to answer some of those questions throughout the next hour. But first, let's get to some individual stock movers. And for that, we'll go to London and Chloe Melly.
Good morning, Bonnie. We are seeing some weakness across those crypto-exposed stocks today as the Bitcoin prices continue to slide. So this latest drop is due to China's central bank saying on Saturday that the risks of speculation and hype surrounding virtual currencies were coming back, and therefore that it would have to crack down on some of those illegal activities that come from that. And therefore we are seeing weakness across the board there with Coinbase, Mara, Strategy and Bitmine, all of them down in pre-market trading. Moving on to Canadian Solar, which is a solar panel manufacturer, which is also on the move this morning, but it is up after saying that it would be transferring its Chinese assets to Canadian ownership to avoid that growing scrutiny of Chinese imports into the US. And finally, Disney is also up this morning after Zootopia 2. It had a really strong debut in China. This was the second biggest ever opening for a foreign film in China, and really confirms that this will be a key market going forward for Disney, and we are up 0.6% this morning.
So a little green on the screen. Chloe, thank you so much. That is Chloe Melly there in London. And coming up this hour, we're going to catch up with Kathy Jones of Charles Schwab on the market risks around the changes at the Fed next year. But first, let's look at the market moves as we kick off December. Stock futures lower after the S&P 500 did eke out a 7th consecutive monthly gain in November. Bloomberg's Morwenna Coniam joins us now. Morwenna, we're definitely looking very fragile. A lot of questions still to be answered in the month of December. Is it possible that we could still have a Santa Claus rally just on technicals?
Well, as you say, we did see the S&P, ending up in the green at the end of November, but that wasn't the case for the Nasdaq. And I think a lot of this uncertainty that has been driving equities lower, in recent weeks and months has been due to that concern over AI. And so far that does seem to be continuing into December. We've got futures pointing lower this morning and following sell-off across Europe and Asia as well. So we are looking at a very risk-off mood as we start December. However, we've seen before that sometimes we get a bit of a rebound, particularly if there's any catalysts coming from the tech sector, just to sort of revive that sentiment. We also do, of course, have the likelihood of a Fed rate cut this month, and that could be really crucial for supporting equities into the end of the year. We've also got a lot of US data coming out, which could support the case for a rate cut further. I think that will be critical, especially if once we do know who the Fed chair is, whether that then gives us any indication of actually what we should be expecting into next year, and therefore what equity markets are reacting to in terms of what's priced in there.
You would think if it's going to be a dovish Fed share next year that perhaps equities would rally, but is there a concern here that a dovish Fed share might add to inflation?
Yes, absolutely. And I think it depends whether, a dovish move from the Fed is actually based on economic need, or whether it's political pressure there as well. Because if it turns out that actually, where things are isn't quite as weak as perhaps the Fed rate is implying, then that could lead to, rate cuts that actually are inflationary. And that could then have, further problems down the line, and we could see a pullback in that progress for the Fed, further into the year, and that could weigh negatively on equities.
Morwenna, thank you so much. That is Morwenna Coniam there for us. Over the weekend in Florida, U.S. and Ukraine continued talks on a peace deal.
It's not just about the terms that ends fighting. It's about also the terms that set up Ukraine for long-term prosperity. I thought we started laying the groundwork for that, most certainly in Geneva. I think we continued that work in our communications throughout the week. I think we built on that again today, but there's more work to be done. This is delicate, it's complicated, there are a lot of moving parts, and obviously there's another party involved here that'll have to be a part of the equation, and that'll continue later this week when Mr. Woodcock travels to Moscow.
Well, joining us now is Bloomberg's Oliver Crook. Marco Rubio sounding optimistic there. Oliver, what is the latest?
Yeah, that's right. We're getting progress, they say, in these negotiations that were held over the weekend in Florida by the Ukrainian delegation and headed by the U.S. side, Marco Rubio from the Secretary of State of the United States, saying that the progress has been made, but giving very little detail in terms of where they are in terms of bridging some of the biggest issues that still exist in this 19-point proposal. We understand that that is now the framework they are working from, that 19-point sort of living document after that 28-point proposal from a week and a half ago, which really shocked the diplomatic community here in Europe, seen as very favorable towards the Russian. But the truth of the matter is, at this stage, it is very hard to know what progress they've made, on some of the stickiest issues, whether it's territorial concessions, security guarantees going forward. So the focus this week will squarely be on diplomacy. Today, Volodymyr Zelensky, president of Ukraine, will be in Paris with Emmanuel Macron. We have European defense ministers assembled right here in Brussels, right behind me, having their meetings. And then on Wednesday, Marco Rubio actually flies here to Brussels to talk to NATO foreign ministers. We understand that Steve Witkoff will make his way over to Russia. We understand that those meetings could be held in the afternoon of Tuesday, tomorrow, with Vladimir Putin. That being said, Putin is still planning a visit to India this week. Does that sound like a leader of a nation that is going to potentially be in crunch talk to end a war? We are not terribly sure about that. Potentially, that is something that he's trying to put out as something that maybe we're not that close to getting a deal from the Russian perspective.
Exactly. I have to ask you how Macron can help if the U.S. is perhaps a little bit more in Russia's camp at the moment?
Well, I think that's the difficulty, is that Emmanuel Macron has been a great supporter of Ukraine. He's been very sort of positive in terms of the rhetoric, but as you know, he's so weak at home in terms of what he can deliver domestically, to say nothing of the fact that the main issue and the way that the Europeans can support Ukraine the most is by touching these Russian assets that are currently being held in Belgium. That the reparation loan of 140 billion euros worth of assets that could potentially be set up as a loan to the Ukrainians. Over the last few days, we've heard from the Belgian side of this. They're the ones that really hold the keys here. They say that they are really not ready to make that move. And in fact, the fact that there are peace negotiations would potentially, from their perspective, say that actually we should hold off on those things. And with that, on top of it, you have Viktor Orban spending this weekend in Moscow alongside Vladimir Putin, trying to secure oil and gas. That, again, is sending a fairly negative signal from the European side. One positive silver lining, one piece of news we just got from the Dutch defense minister: they committed €250 million to the Pearl program. That's weapons for Ukraine. So at least some concrete progress here from the Europeans delivering for the Ukrainians.
Oliver, thank you so much. We'll hear more from you on that defense ministers meeting today. Later on, that is Bloomberg Chief European Correspondent Oliver Crook. And in Washington, President Trump makes his Fed chair pick.
Are you Fed chair, or are you any closer on that right now?
I know who I'm going to pick. Yeah.
Oh, tell us.
Kevin Hassett.
I'm not telling you.
Joining us now is Bloomberg's Suzanne Lynch. Suzanne, this is going to be a huge reveal. You know, markets and poly markets all think it's going to be Kevin Hassett. Do we know any more? Is it likely to be Kevin Hassett?
Well, all we heard from the president there yesterday was that he has indeed made his pick, but he is still keeping his cards close to his chest on this. But yes, Fonnie, as you're saying there, we've reported here, Bloomberg, and of course elsewhere in the markets, etc., that people now believe that Kevin Hassett is best placed to succeed Jerome Powell as chair of the Federal Reserve. Now, Hassett himself was on the morning news round in the US on Sunday, and himself was playing his cards close to his chest, not confirming that he had been tapped for this, but also saying that it was a positive sign that the markets had reacted positively to the fact that Donald Trump had made his decision. So read into that what you will, but yes, expecting that it may well be Kevin Hassett.
Elsewhere, Suzanne, I want to ask you about geopolitics, because Trump has been downplaying the threat over Venezuelan airspace. So he sort of put out on Truth Social that everybody should avoid Venezuelan airspace, that it was effectively closed from a U.S. perspective. What more do we know about his plans for Venezuela, or what might happen next?
Yeah, again, Donald Trump was playing down this language he used over the weekend about Venezuelan airspace being closed, which really caused jitters across the region, particularly obviously in Venezuela. He told reporters last night not to read too much into this effectively. I mean, what's interesting here is the reports that he had this phone call with Maduro. You know, what happened in that phone call, what was discussed, we don't know yet. But what we do know is that there's been a lot of U.S. activity in that area. Obviously, that build-up in those waters near Venezuela. And I think the intentions of the United States are not just worrying Venezuela, but interestingly also causing some concern within Trump's own party. Some Republicans on the Hill, for example, you know, looking for answers, I think, about what's next in terms of Donald Trump's intentions in this area. But so far, we don't know the content of that phone call. We don't know exactly what is on the mind of Donald Trump. Mixed messages, I think it's fair to say, over the weekend from the president on this issue.
And just briefly, Suzanne, there's a lot going on internationally with the president at the moment. You know, he's been a little bit involved in the Honduras elections as well. And obviously, Ukraine is a big sticking point at the moment. What more do we know about, you know, NATO countries and how they're preparing for potentially, you know, defending the continent without the US?
Yeah, look, this is a key week for Ukraine, as we were hearing there from Oliver. You know, EU ministers are meeting today. We also have NATO minister of foreign ministers supposed to be meeting in Brussels on Wednesday. Will Marco Rubio, for example, the Secretary of State, attend that? I think that will be significant. See, does he, don't he? The reality for Europe is, at the moment, these talks between Witkoff and the Russians, the Europeans are not at the table for that. In the meantime, they are trying to keep up that diplomacy, those links with Ukraine, to make sure that the Ukrainian and the European perspective are front and centre in any talk. So, for example, we're seeing President Zelensky visiting Emmanuel Macron today. He's then going on to Ireland. So we're seeing this continued diplomacy and interaction and engagement between the Ukrainian side and European partners as this parallel discussion, if you like, is happening between the United States and Russia.
Amazing, Suzanne. Thank you for bringing us up to speed this Monday morning. That is Bloomberg's Suzanne Lynch. Now, two other top stories trending on the terminal this morning. Bank of Japan Governor Kazuo Ueda sent the clearest hint yet that the BOJ board might raise interest rates soon. Traders see about a 76% chance of a hike this month, with likelihood rising to around 94% for a move by January. Japanese government bonds slumped, with the two-year yield rising to its highest level since 2008. The BOJ meets December 19th. UK Prime Minister Keir Starmer plans to give a speech today defending Chancellor Rachel Reeves's £26 billion tax hiking budget. According to early excerpts provided by 10 Downing Street, Starmer will say that the budget reduced cost of living pressures and ensured economic stability. Italy's Borromeo family is listing a company that manages real estate sites, including a group of islands on Lake Maggiore. They are aiming to turn the area into a tourism and business hub to rival nearby Lake Como. The proceeds from the listings will be used to develop the area. It will debut trading on the Paris and Milan exchanges. Coming up, Airbus says most of its A320 jets have received software fixes after a weekend disruption. More on that next. This is Bloomberg.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Here's Bloomberg Brief. I'm Bonnie Quinn in New York. Global airlines are beginning to report they've completed an Airbus software update that grounded more than half the global fleet over the weekend. The French plane maker says that the, quote, vast majority of its roughly 6,000 A320 jets have been modified. Bloomberg's managing editor for space and aviation, Benedict Camel, joins us now for more. Benny, it's a little concerning when a whole fleet needs to be very quickly and suddenly upgraded. What was the event that triggered the need for this software update?
So we got this announcement late on Friday evening. It was really a surprise to anyone, myself included, that this urgent software upgrade, in fact a revision to the previous version, was required. The story behind that is that there was an incident about a month ago whereby an aircraft that was traveling to the US suffered sort of an anomaly during flight. It pitched down without the pilot making any inputs, and then the engineers looked at this afterwards and realized that there had been some sort of solar ray infection, shall we say, of the system, and that the software had not responded correctly. So now the Airbus company and airlines are required to make this fix, and they did so over the weekend, a really frantic sort of rush to go back to the previous software version. Regulators said that this had to happen before the next regular flight of the plane. So 6,000 aircraft, that's more than the global fleet of this family in operation, required this upgrade over the weekend, and this morning we heard that the vast majority had in fact succeeded. Only about 100 planes left, so really a small number, and Airbus really avoiding a mass disruption here.
Do we know what might have happened if this hadn't come to light? I mean, it's a little bit not great for trust building, right? If a fault that's been there all along suddenly comes to light.
Yes, you're absolutely right, and there's lots of questions remaining, which might also explain why the stock is down somewhat today. Investors, I imagine, are a little bit spooked by this, as is the flying public. You never want software on an aircraft that doesn't respond in the way you want it to. Obviously, some people will be reminded of the cases on the Boeing 737 MAX aircraft a couple of years ago. Obviously, far more dramatic and ultimately catastrophic events there that led to 2 crashes, and Airbus being doubly careful here, very cautious, saying let's do these upgrades or these revisions to make sure that we have the redundancy and the safety built into the system. So really, in some ways, if you want to look at it positively, it speaks to sort of the caution in the industry that when there is something that doesn't look quite right, take a break, slow everything down, take the aircraft out of the system, and potentially face long delays, but you're doing so in order to get the system back up and running and rebuild the safety mechanisms. That's what happened over the weekend, and luckily for everyone involved, the fix seemed to be, by and large, fairly swift.
Yeah, but as you say, you know, it only came to light after something happened on a flying aircraft, right? It didn't come to light on the ground. So you have to ask yourself, does it mean anything for delivery targets? Does it have any implications for the company? And also for Boeing. Does Boeing potentially have to look into this problem too?
I mean, on Airbus itself, I would have said that if this had dragged on longer into the week or even into the year, the rest of the year, this could have had real implications for Airbus, because obviously it binds management attention, it binds engineering resources, so that could have potentially diverted the focus away from the all-crucial target, which is delivering aircraft, building aircraft, getting them out of the door. Airbus has an ambitious goal for this year, and they still had some ways to go on this. So with this crisis seemingly now averted, they can refocus on that. What it means for Boeing is less clear. Obviously, again, a company that's become very cautious in the last couple of years after these 2 accidents. And this is a company that is very slow now in the way, and very meticulous, slow in a positive way, very meticulous in the way that it builds its aircraft, and really a reminder that planes these days are complex interplay between hardware and software. And if there is something in the software that doesn't respond right, the industry generally likes to slow down, and Airbus is reminded that it's not just Boeing that can have these issues. It's a good reminder this is something that can happen to both aircraft manufacturers, and Airbus probably got a real scare of this last week when they came out with this announcement.
Well, as you say, thankfully it was discovered and now appears to be pretty fixed. Benedict Camel, thank you so much for joining. Coming up, top consultancies are freezing starting salaries as AI continues to disrupt the industry. More on that and a look at what else is making headlines in your front page news. That's next. This is Bloomberg.
Climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Time now for your front page news. First up, the New York Times leading with Honduras elections. Two conservative candidates virtually tied, far ahead of the governing left wing. A Trump-endorsed candidate, Nastria Asfura, is virtually tied with sportscaster Salvador Nasrallah. If Asfura wins, it'll signal a victory for President Trump. For months, the right-wing candidates have been drumming up fears about Honduras becoming the next Venezuela. Next up, on the Washington Post, President Trump says he has, quote, great confidence Defense Secretary Pete Hegseth did not give a spoken order to kill two remaining crew members on a U.S.-targeted boat in the Caribbean Sea in September. The Post reports that a special ops commander ordered a second strike to comply with a spoken order from Hegseth to, quote, kill everyone. Trump says he believes Hegseth's account of the attack 100%. And finally, the Financial Times saying top consultancies have frozen starting salaries for a third consecutive year as AI reshapes the industry. The FT cites a report that compensation packages for MBA graduates at McKinsey, BCG, Bain could be between $270,000 and $285,000. The three firms declined to comment. This is Bloomberg.
Number one, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurants opened. He asked me to come to open the restaurant in New York. And beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know. What he doing? Because I never watched the movies. You know, I was traveling the business. But of course, after, you know, people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's for me, and a great partner. He understands to my concept. He supports me 100%. But he's a very smart people. Sometimes so strange idea, but it's good idea. So, example, Nobu Hotels idea come from him. He said, "Hey Nobu, so we have a lot of new restaurants coming in somebody's hotel." For him, doesn't make any sense. Then we start Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
It is 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Decided. President Trump says he's picked his nominee to succeed Fed Chair Jerome Powell and expects that nominee will deliver rate cuts. Risk pullback. Uncertainties around the next Fed chief, a crypto slump, a raft of data coming before year-end, all keeping investors nervous at the start of December. And U.S. and Ukrainian negotiators say they have had productive talks for a peace deal. Special Envoy Steve Witkoff heads to Russia this week. Let's take a look at markets now, because futures are pulling back this Monday morning, although we're off our lows of the session. We did manage to eke out 0.1% of a gain for the month of November for the S&P, but we were down 1.6% for the Nasdaq 100. Sentiment clearly fragile, particularly around AI, crypto, and other tech areas. Ed Giordani, though, saying the S&P 500 still on track to hit 7,000 by year-end in a Santa Claus rally, giving productivity gains, healthy earnings, and more Fed cuts in store. And now it looks like we're soon going to get the reveal of the new Fed chair nominee. Now that has maybe the longer end slightly higher in terms of the yield curve, with the 10-year yield back up to close to 404 and the 30-year back up to close to 470. We'll see, though. We'll see how the market reacts once we do get an actual name. Let's take a look at some commodities, because we are seeing crude oil at almost 2%. OPEC Plus not going to add more production back online. Copper not really moving. Bitcoin down, though, 5% once again, having traded above 90,000 for some of last week. So let's get to some individual movers now on this Monday morning, December 1st. And Chloe Melly. Chloe.
Good morning, Bonnie. We are seeing red across the board this morning for those crypto-related stocks, because the Bitcoin prices continue to slide. So this latest drop in prices is related to China's central bank saying on Saturday that the hype and speculation around virtual currencies was resurfacing, and therefore it would have to ramp up that crackdown on illegal activities related to that. And therefore we are seeing that weakness across the board there. Moving on to Canadian Solar, which is the solar panel manufacturer. It said that it would be transferring assets, Chinese assets, to Canadian ownership to avoid a growing scrutiny of Chinese imports into the U.S. and safeguard those sales into the U.S. And we're up massively this morning, 18%. And finally, Moderna is seeing a little bit of weakness this morning after a federal judge rejected Moderna's move to dismiss a lawsuit that had accused it of infringing 3 patents related to vaccine delivery technology. And this was related to its COVID-19 vaccine, and therefore we are down more than 3% for Moderna this morning.
All right, we'll keep an eye on those stocks and all that's moving today. Chloe, thank you so much. Chloe Melly there in London. Treasuries steady heading into the new month as investors await next week's Fed decision and the reveal for the new leader at the central bank, or the nominee at least. So what lies in store under a potentially more dovish Fed chair? And will the current FOMC take future potential moves into account in deciding near-term policy? Let's ask Kathy Jones, Chief Fixed Income Strategist at Charles Schwab. Kathy, just on that question, we have an FOMC meeting next week. If we have a name before that meeting, does it change the outcome of that meeting?
Yeah, I'm not sure it changes the outcome, but it might change perception around where we're headed in terms of Fed policy. So presumably whoever is appointed is going to be someone who's going to advocate for more rate cuts, as the president has already indicated. And that could make investors nervous no matter what happens, because it could imply a willingness to tolerate more inflation, and that would probably steepen the yield curve. So I'll be curious to see how the committee deals with this in the statement, or how Fed Chair Powell might deal with it if the name is revealed ahead of time.
You know, we're looking at a December rate cut. Markets are almost fully pricing that in now. Are you sort of in that camp? And what happens then to the 2 to 3 more rate cuts that you see next year?
Yeah, I'm surprised at some of the comments that have come out recently. And I think with Williams, Daly, and presumably perhaps Powell this week, talking about the need for rate cuts, it looks like December is more likely than we had previously thought. You know, at this stage of the game, inflation's still hovering around 3%. The unemployment rate is roughly 4.5%, which is pretty low and fairly stable at this stage of the game. So the case for rate cuts isn't particularly strong. It's in anticipation of a weakening labor market or continued weakness in the labor market. And one could argue that that's more structural than cyclical and won't be addressed by rate cuts. So I'm a little surprised at the dovish tilt, particularly without data. But that being said, if we get a cut in December, that probably means we skip January and we look later in the year for maybe 1 or 2 more rate cuts. But again, without that drop in inflation, it's going to be very difficult for the Fed to justify a lot more rate cuts without igniting inflation expectations.
And yet, there's part of me that thinks that there will be a justification found if that's what the president wants, perhaps, or if that's what Kevin Hassett himself wants, if he becomes the Fed chair, if it is him, if he gets through the process, the confirmation process. I mean, there's a lot of ifs. But what would that portend for the middle of next year onwards? I mean, if we're already at or close to what was now seen as the terminal rate, does that change the terminal rate? Do we suddenly have a new one on our hands?
Well, it's possible. We'll have to look at the summary of economic projections. And remember, this is a committee, so it's not just who's Fed chair that matters. But I will say, and there's going to be some, you know, the annual rotation, there'll be some changes, so it's a little hard to handicap at this stage of the game. But I think if they push the terminal rate even lower in the projections and forecast or project a lot more rate cuts, I think we just steepen the yield curve and we get inflation expectations lifting long-term yields. So it's a little bit of a precarious position to be in, because you can advocate for rate cuts, but without the economic weakness or declining inflation, all you get is a steeper yield curve. And that runs counter to what the administration has said they want, which is lower long-term rates, not short-term rates.
Kathy, on the labor market, do you expect a significant ramp up in, you know, the rate of jobless next year?
No, we don't. What we're seeing is the continuation of this kind of stable at what they are, no hire, no fire is the expression everyone's using, a relatively stable unemployment rate. And the reason is that we're shrinking the size of the labor force. So you don't need a lot of job growth in order to maintain the unemployment rate at relatively stable levels. So given the policies on immigration, it looks like we're moving to a structurally lower labor market size, and participation has actually been pretty good. So we could just be in this environment for a longer period of time. And that would indicate, again, not as much need for the Fed to ease, because you can ease policy, but if you don't have the workers in the workforce to take any new jobs. Stimulating economic activity would probably just inflate asset prices more, and it might not actually bring the unemployment rate down.
So, Kathy, that doesn't seem too nefarious, right? If we're in this no hire, no fire environment and, you know, we have a dovish Fed, but they're keeping their eye on inflation and so on, you know, what is next for the economy? Because we are going to get productivity gains, it looks like. That's what most people say. Earnings are going to remain healthy. The consumer seems to be holding in there. And if we're not going to get a ramp up in unemployment, is everything hunky-dory next year?
Well, that would be a bold prediction, Bonnie, to say everything's hunky-dory next year. I do think we get a solid growth rate, and that might actually be one of the problems that keeps inflation elevated instead of coming down. And I think that's the big risk. I think there's two big risks. One is this two-tiered economy. So you've got people in the higher income area that are doing just fine. Their asset prices are up, their income's keeping pace with inflation, they're able to spend. And then you have the rest of the world where, although incomes are increasing, they're not keeping up with the sort of average cost of living. Things like transportation, insurance, services are all going up at a faster rate than wages for people at the lower end of the income scale. So you get this divergence where the economy can grow, but you get a good portion of the population just not keeping pace. So you get inflation, but you get more distressed consumers at the lower end. So hunky-dory probably doesn't describe it properly. Probably more volatility with potential inflation is how I would describe it.
All right, that is much better. Thank you so much, Kathy Jones of Charles Schwab. Thanks for joining us this morning. Now to other top stories trending on the terminal this morning. New York City will likely have a slick commute tomorrow, Tuesday, while the rest of the Northeast gets a dollop of snow from a storm rising up from the U.S. Gulf Coast. The storm will likely spark travel delays across the region and put more pressure on the U.S. air traffic system, with planes needing to be de-iced and runways kept clear as high winds sweep across the region. UK Prime Minister Keir Starmer is speaking right now, defending Chancellor Rachel Reeves's £26 billion tax hiking budget. Starmer says that the budget reduced cost of living pressures and ensured economic stability. The budget has been poorly received by voters, with criticism that it hiked spending on welfare while increasing taxes on working people. Bank of Japan Governor Kazuo Ueda sent the clearest hint yet that the BOJ board might raise interest rates soon. Traders see about a 76% chance of a hike this month, with the likelihood rising to around 94% for a move by January. Japanese government bonds slumped, with the two-year yield rising to its highest since 2008. The BOJ meets December 19th. Coming up, Ukraine peace talks continue. Secretary of State Marco Rubio says there's still work to be done. More on that next. This is Bloomberg.
Coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, it's just actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Fed chair, are you any closer on that right now?
I know who I'm going to pick. Yeah.
Oh, tell me Kevin Hassett.
I'm not telling you.
President Trump teasing about his pick for the next Fed chair after he signaled he wants someone who will more forcefully pursue rate cuts. Bloomberg's Jonathan Tamari joins us now from Washington. Jonathan, the consensus seems to be around Kevin Hassett. Is it a done deal that it's likely to be Kevin Hassett now, and would he get nominated easily?
So it's certainly pointing in that direction. The caveat, as always, President Trump, is that we know he's someone who is not averse to changing his mind at the last minute, to throwing a curveball at the entire country. So we don't know until the announcement is actually made, but things are certainly pointing in that direction. We've seen generally President Trump's nominees get a favorable response from the Senate. Kevin Hassett, someone who's been around a long time, a lot of senators know him. I will say there's been a little bit more independence from Republicans in Congress lately, but I don't think this will be the issue where they probably draw a line. I think if it's Hassett, he probably does get confirmed with Republican support.
Okay, and how long would that process take, Jonathan?
It could take a little while. You know, we know that the nomination is due sometime this month, so we're within weeks, but exactly how long it would take afterwards, I would expect the Senate would move quickly early next year, but they're probably, you know, they're scheduled to be out through the last 2 weeks of this year, so it certainly wouldn't happen until January at the soonest.
Okay, so we might get a name, and we'd have to wait for that process. Elsewhere, obviously, Ukraine talks are continuing. The U.S. is saying that, you know, there's productive talks going on, but at the same time, the special envoy, Steve Witkoff, is going to Russia, and it does seem like the U.S. is still more in Russia's court on all of this.
Yeah, but this is also, again, like we just talked about on the Fed front, a very fluid process. You know, the president had set a deadline of this past Thursday for Ukraine to agree to this deal, and that deadline was quickly moved. It came and went. We don't know. Russia was in favor of the original draft. We don't know if they'll be in favor of these revisions. So it's still something that is an ongoing negotiation. It's not clear how much closer we are toward an agreement than we were a few weeks ago. It's just maybe the talks have stepped up, but we're waiting. The Russia's response this week could be very telling about whether we're actually closer to a deal or if this is just more of the same.
Yeah, absolutely. This Venezuelan airspace business, Jonathan, do you think it escalates or de-escalates? The president was downplaying the threat, but he did put out on social media that everybody should avoid Venezuelan airspace, that it was effectively closed.
Yeah, and I mean, it seems to be the theme of everything we're talking about. The president, he zigs and zags and he veers, and his policies can change from one day to the next. We know he loves to apply maximum pressure. You know, at the same time as making that threat, he said he spoke to Venezuelan President Maduro this week. So it's unclear exactly where it's all going. I think President Trump likes it that way. And so I think this will be something that could change, you know, not just on a week-to-week basis, but on a day-to-day basis, exactly what his posture is.
Jonathan, thank you so much for all of that context. That is Jonathan Tamari there of Bloomberg Government. Turning to commodities now, because silver is extending a record-breaking rally. Tight supply in obviously expectations for a Fed rate cut. helping there. For more, let's bring in Bloomberg's Jack Ryan. Silver just took off, Jack, and it hasn't stopped. And, you know, obviously it has its uses, but why such a huge rally for this particular metal?
Well, I think it's probably for similar reasons why gold has had, I mean, the best year since 1979. Silver's done even better. I mean, it's almost doubled at this point, year to date. More recently, I think the kind of growing expectation of a Fed cut in December helped silver, lower rates help precious metals generally. So it's got support on the back of that. And also you have this dynamic particular to silver, which is quite a lot of tightness in the main spot market in London. So earlier this year, lots of metal went to the United States because people were worried about tariffs. They wanted to get their metal there so that it wouldn't be subject to import tariffs. There's still a tariff risk hanging over silver. There's still it's been designated a critical mineral, and there's still a Section 232 report hanging over that. And so for that reason, the London market has loosened somewhat because of the big premium, but there hasn't been enough metal coming into the market. And so that creates more volatility and more possibilities for extreme price moves like we've seen in the last few days.
And of course, as you say, some moved to London, but that also then took it away from other exchanges, right, in Asia and in other places. So, you know, how does the gap get filled?
That's right, yes. The stockpiles that we can see in China, they're down to some of the lows they've been in years. And then we also have this just kind of general background issue where we're heading into our 5th year of supply deficits. We don't mine enough to meet the demand. And silver, unlike gold, a good chunk of silver's demand is for industrial purposes, photovoltaics, electronics, that kind of stuff. So demand has grown and we haven't mined enough to meet that. And so we're pulling on existing supplies. There still is a lot of silver out there, but I think the thing which is preventing the market from kind of resolving itself and this tightness from resolving itself is that threat of tariffs, which leaves you with this kind of thin layer of silver in London that's being traded. And then again leads you to massive price moves when you get an inflow of demand like we've seen in the last week or so.
Absolutely, and I just want to point out that copper also hit a record. Jack, thank you so much. That is Bloomberg's Jack Ryan. Turning to the consumer, American shoppers spending more this holiday season with Black Friday sales rising from a year ago. Joining us now is Andrea Felsted, Bloomberg opinion columnist. So we had more spent, Andrea, but was that because of inflation or because consumers were feeling rich?
I think it was more to do with inflation. It was more to do with probably stocking up on essential items. Consumers are very focused on deals. So if there is any opportunity to buy on deal, they will take that. The discounts weren't quite as extensive as last year, particularly in those areas hit by tariffs. So we've had a bit of a standoff, which is why sales are up, but probably when you account for inflation, the volume of goods sold won't be as spectacular as some of the increases.
Exactly. So it's hard to know whether it's, you know, actually a good sign or whether it portends something else. Now, you've also written about Cartier this morning. What does it tell us about the watch market?
Well, Cartier has done a fantastic job in appealing to Gen Z customers with marketing, with the ambassadors, with social media, and Gen Z customers are responding. And it's part of a broader move across the watch industry. For the last decade, watches have been supersizing, but younger consumers are looking for smaller, often gold timepieces with a vintage feel, and Cartier's been at the forefront of that.
Yeah, it's fascinating. Where are they getting the money? I mean, is this a very particular slice of that demographic? Because we're reading that people 25 and under aren't getting jobs in the US, at least.
Exactly. It seems to be where they are spending, they're choosing jewellery and they're choosing watches. We've got to go back to what's happened in the luxury market. Now, leather goods, particularly handbags, have gone up incredibly over the past 5 years. So an entry-level Cartier Panthère in steel is around £3,500. Now, that's not far away from some handbags. So younger people, when they are looking to treat themselves, they're looking for jewellery, they're looking for watches because they seem better value for money than handbags.
And I guess they're delighted by the prospect of not having to dig for their phone every time they want to know the time. It's a fantastic column and very entertaining. Andrea, thank you so much. That is Bloomberg opinion columnist Andrea Felsted. Coming up, we're going to get you set up for your trading week. The 1st of December, we have a host of economic data on deck. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Bonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Now, a look at what's ahead for the week. We do get ISM manufacturing data coming out at 10 a.m. Eastern. ADP employment data coming out on Wednesday. And we wrap up the week with September PCE numbers and personal income and spending on Friday. We do have Jerome Powell speaking tonight as well in Stanford. Now, the blackout period has started, so he shouldn't say anything about monetary policy, but you bet we'll all be watching. Let's take a look at some pre-market movers. So obviously, crypto-exposed stocks are dropping once again today as Bitcoin tumbles. Remember, we spent some of last week above $90,000 a coin. We're back around 86,000. Moderna extending its decline as a federal judge says the drug maker must face the Northwestern patent suit over the COVID vaccine. And Canadian Solar, well, that's up 16%. It's transferring assets of its Chinese unit to Canadian ownership to safeguard sales into the U.S., and that's cheering investors this morning. Let's take a look at the macro environment because we have NASDAQ 100 futures pointed to a pretty severe drop at the open. The 10-year yield back up to 404, and crude off its highs, but no more production, says OPEC Plus, coming back online, and that is giving it a bid.
such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety, and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
The fulcrum of this market has been big tech.
We are still in the early stage of this AI investment or AI arms race.
We actually see going into 2026 a very optimistic scenario playing out.
The air is coming out of the bubble rather than the bubble bursting.
To call this a bubble, it's wrong.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome to Bloomberg Surveillance. The last month of the year, futures dipping after the longest string of monthly gains on the S&P 500 going back to 2021, although ongoing worries about the dominance of big tech. Kicking off the holiday shopping season with some positive signals from the U.S. consumer, despite confidence falling to a 7-month low. And President Trump moving closer to choosing a new Fed chair. Kevin Hassett taking the pole position, a wink, wink, nod, nod. Kevin Hassett talking about how the market seems like it's happy. Getting a sense, maybe we'll get an announcement soon.
Right. Kevin Hassett over the weekend talking about what we saw in the market response to what he called the Bloomberg report. A rumor was that the market was happy as he described the fact that the president is closer to making a new announcement, that there will be a new Fed chair come next year. We heard from the president overnight as he made his way from Palm Beach back to Washington, D.C., was he said, I know who I'm going to pick, and we'll be announcing it. This is what he told me, though, 2 weeks ago when I was in the Oval Office with him. Yeah, I have an idea of who I'm going to pick. I know who I'm going to pick already. The interviews are going to be starting soon. The Treasury Secretary says we will likely get a name before Christmas. So once we get that interest rate decision, potentially we'll get a name. Or if we really want to see fireworks, potentially we get a pick before the Fed meets.
Regardless, the market is taking this as a likely December rate cut, and that's what matters. Dovish Fed, and that's the reason why people seem to be cheering. That's why people were cheering last week. That's why you saw a risk reversal back to a positive after a pretty dismal first couple of weeks. The interesting thing is, this would be jobs week. We would be getting jobs data come Friday. We're not. So we don't have a sense of whether the underlying economy actually warrants a Fed rate cut that everyone's baking in for next month.
A data-dependent Fed, this puts them in a really difficult position. But when you hear from Fed officials, especially heard from John Williams, and that is really talking about this trend and this idea, and there does seem to be now at some point a bias towards the labor market, you immediately saw the market really start to shift. What's going to be more challenging, what a lot of analysts are talking about, is this division on the Fed on where neutral is. So what sets them up for 2026? Do we get more cuts, or do some individuals think we are at neutral and they should just stay the course and leave interest rates on hold? At the same time, the president's going to potentially be putting someone in that want to see further reductions.
And it really is about vibes and feelings, because right now it's not about hard data. In the week ahead, we should be getting non-farm payrolls, we should be getting JOLTS data, we should be getting all of this other anecdotal senses of what exactly is going on with the consumer. Instead, we're getting ISM manufacturing later today at 10 a.m., which could give you some sense. Later this week, we do get ISM services as well as the ADP payrolls report. Thursday, we get initial jobless claims plus challenger jobs cut. That actually might end up being something that is market moving. And Friday, we get September data regarding core PCE spending and income. Nonetheless, people really looking at what's going to happen with Black Friday. Right now in markets, you can see a little bit of a dip after the 7th straight monthly gain of the S&P 500. Right now, S&P futures lower by about 0.6%, a bigger underperformance from the NASDAQ with those ongoing AI-related fears. 10-year yields just up incrementally higher. A focus right now on Japan and a Bank of Japan rate hike. 10-year yields 4.04%. Coming up this hour, Alistair Pinder of HSBC with stocks sitting near all-time high as Robert Konigsberg of Gramercy Funds as the U.S. ramps up pressure on Venezuela, and Sonia Martin of DZ Bank as President Trump says he has made his pick for the next Fed chair. We begin this hour with stocks lower as investors wait a crucial week of data. Alistair Pinder and the team at HSBC setting their 2026 S&P 500 target at 7,500, writing, AI has carried equity markets throughout 2025. We believe it will drive both equities and credit in 2026, though in different ways. Alistair joins us now after a refreshing Thanksgiving break that all of us cannot relate to. But I am curious from your perspective going forward, how come you think that AI is going to resurrect that kind of lead higher given some of the concerns that we've seen recently?
Well, I think if you look at the performance of the market this year, it's been driven by the AI infrastructure and, the AI enablers story. Going into next year, I think the big narrative for markets is how companies are going to adopt AI, and that's going to drive earnings. And so there's loads of data showing this. Some of the ones that we like to look is the Ramp AI Index shows 45% of companies are adopting AI. One of the things that we've been doing a lot on is, well, what is the actual tangible cost savings from this? And so far, we think that there can be basically 1% of cost cuts going into next year. That's $130 billion. We think that can basically be saved going into 2026. And there's this amazing narrative going on right now in the market where revenue's increasing, you've got 9% growth. Actually, at the same time, companies are cutting back on labor. And so if you look at the warm data from the S&P 500 companies, it's been shooting higher. But this is nothing, absolutely nothing to do with them warning about the economy. Actually, their corporate guidance, earnings revisions are, close to all-time highs. So this almost, for me, feels like a Goldilocks scenario going with the, the AI narrative going into next year. And my final thing, if you have a little bit of labor weakness as a result of AI, then going back to your conversation about the Fed, might that not keep the Fed a little bit more dovish? And that, I think, again, can help support the equity market rally going into next year.
Goldilocks for the equity market, maybe not the economy, which is a sort of key distinction here. I do wonder, so this is an argument for AI being dominant, but that means the rest of the 493 outperforming, playing catch-up with the Magnificent Seven. Is that correct?
Correct. And again, one of the biggest things that we've seen over the last couple of years is that actually the performance of the Mag 7 has not been driven by valuations. It's all been by earnings growth. And now what we're seeing is going from 30 to 40% year on year into next year, probably being in high teens, and the rest of the market actually catching up with that. And so this will be one of the first years, really since 2021, where earnings growth between the Mag 7 and the 493 are going to be somewhat equal. And so I do see much more scope for, outperformance for the rest of the market.
What for you will be the telltale sign that actually adoption is underway significantly in some of these industries?
Well, I mean, to be honest, I already think that we see that. I mean, if you look at the data from some of the consumer stocks that are basically saying that we're using AI and becoming much more productive in terms of, targeted ad sales and whatever else, a number of companies on their earnings calls are discussing about how they're adopting AI and actually, again, replacing that, labor or freezing labor as a result of the higher productivity. To me, we're already seeing it from companies in the earnings calls. Now, you have to talk about the equity market and the economy. What's very interesting is that for the broad economy, I don't think we are seeing much productivity increase. It's really the large cap stocks. And so again, where does this AI productivity come from? It comes from companies with huge amount of employees that need to reduce it. If you're a small company and you have 10 employees, you're not going to really replace that with AI. But if you've got hundreds of thousands of employees, actually that's where the cost benefit comes from.
You mentioned that this means maybe the Fed then has to be dovish, but how could a Fed interest rate cut cycle solve the problem of AI?
In terms of, I mean, it doesn't really solve the problem of AI at all.
AI labor layoffs.
Yeah, exactly. I mean, it doesn't solve this really, but it does reduce some of the pressure on the labor market in the near term, right? In terms of reducing, credit costs, reducing interest rates, reducing some of that burden on the low-income consumer. And of course, it is the low-income consumer in particular which has been hardest hit by higher interest rates, given that they have more of their debt in sort of floating rate debt products like, auto loans, credit card loans, rather than mortgages.
At this point, it sounds like everyone's banking on stimulus coming from the fiscal side with potentially $2,000 checks or whatever else comes from the tax refunds that we get in January. We're expecting monetary stimulus when it comes to Fed rate cuts, possible use of the balance sheet. I just wonder if this makes the U.S. a less attractive place on a sort of currency-adjusted basis for equities based on some of what we're expecting to see on the fiscal side.
Totally. I totally agree with that. And actually, one of the things that I think the market is missing a little bit is it's not just stimulus that's coming out from the U.S. Actually, China's just done a $1.4 trillion debt swap. Germany is coming in with $150 billion stimulus next year. Japan is teeing up $110 billion stimulus next year. So actually what you could see is that you get a huge global wave of stimulus. As you mentioned, actually the dollar starts to weaken and the rest of the world starts to look very attractive, particularly because valuations are at a 30-40% discount. Even on the AI plays. You go to Asia, you got an AI discount there. In Europe, less so. But you still got places like Germany, which are seeing 14-15% earnings growth and at a valuation of 14 to 15 times earnings. To me, that seems quite attractive at this point.
So what equity markets do you like? Germany and Asia plus the United States?
So we are overweight emerging markets. That includes Asia, LATAM. That's all due to huge decreases in cost of equity and interest rate cuts. But yeah, Europe, Germany also stand out as our key overweights. And the US we're neutral on. And a part of that really is because if I was going to get my AI kind of tech play, I'd actually rather do it with emerging markets rather than the US at this point. Again, just from that valuation perspective.
Lisa mentioned what's coming out of Washington in terms of the fiscal stimulus. How are you thinking about the potential tariff impact, whether it's the United States or globally, because we're still waiting on the Supreme Court decision on the president's signature tariff?
Yeah, I think that is one of the aspects that worries me the most going into next year. So, the three risks, obviously, AI bubble and, the Fed being more hawkish, and we kind of discussed that. The tariff one, I just don't think we've discussed it enough. I think everyone thinks that we've moved past tariffs and that's never going to come to bite. I do think there's been a lot of stocking up on inventory, and I do think we're starting to see incremental signs of inflation actually come through. We haven't had a lot of inflation data, and I suspect actually when we get it, what we're going to find is that actually, particularly on the good side, there's been a lot of pushing up there. And so I do wonder whether that starts to eat a little bit into margins, but this is where I could say AI comes to save the day. Because on the one hand, if you're a company and you're facing higher costs, actually, I think the big incentive as a company right now is, okay, why don't we adopt AI and try and reduce cost savings that way? And so much like COVID was like one of the biggest forces of innovation and adoption for companies, I actually wonder whether tariffs is one of the biggest forces of adoption of AI this year and next year, because it forces people to become more productive.
Does it make you nervous if nobody else is bearish?
I talk to people that are bearish. I think you can speak to...
Are they enacting their bearish beliefs, or they just sort of feel negative?
I think there's two things. I think the sell side, including myself, is quite bullish. I think when I speak to investors, they're clearly a little bit worried about this. I think there's definitely, every room that I walk into, it is, are we in an AI bubble? That is the number one concern. And then again, actually, this conversation about the impact on labor and, will the consumer roll over more aggressively next year is probably the second biggest concern for for investors at this point. So, do I think everyone's bullish? No. I think there's actually a huge amount of money on the sidelines. And one of the things that I think is, again, really important here is that there's $3.5 trillion of cash sitting in time deposits. Just retail investors, cash, $3.5 trillion. And as the Fed cuts interest rates, that's going to unlock a lot of that cash, which can go into the equity market still. So I still think there's a lot more buying opportunities and money to go into the equity markets here.
Alistair Pinder, thank you so much for being with us. That's Alistair Pinder of HSBC. We had been tracking Airbus earlier this morning on news over the weekend that a majority of its A320 jets received modification. Reuters currently saying that Airbus faces new quality problems on dozens of A320 jets, and you are seeing, Anne-Marie, a real shift lower in Airbus futures, down 7.3% as people wonder, what else are we missing?
Well, yeah, exactly. We had earlier this morning that the vast majority of these jets were impacted by a software glitch. Now, Reuters is saying there's a new quality problem on dozens of them. This is going to weigh on the stock like we saw with Boeing.
And demanded, quote, unrestricted respect for its airspace. President Donald Trump says he has decided on his pick for the next Federal Reserve chair, and he's made it clear he expects his nominee to cut interest rates. Sources telling us here at Bloomberg, Trump's chief economic advisor, Kevin Hassett, is seen as the likely choice to succeed current Fed chief Jerome Powell. This all, of course, according to people familiar with the matter. U.S. consumers staying strong. MasterCard says Black Friday sales rose compared to a year ago. Sales, excluding autos, increased more than 4% on the day after Thanksgiving. Online sales dropped compared to last year, with many shoppers saying deals were more muted compared with last year. And that is your Bloomberg Brief. Lisa.
Thank you so much, Bonnie. Up next, escalating tensions with Venezuela.
We consider Venezuela to be not a very friendly country. They sent millions of people, really, and probably a number in excess of that.
Does your warning mean that an airstrike is imminent, or should we not read it that way?
Don't read anything into it.
Robert Koenigsberger of Gramercy Funds Management joining us next to make the sense of this from an investor's standpoint. This is Bloomberg Surveillance. Good morning.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Kicking off the official start to the year with a little bit of softness, although we did grind higher for a 7th straight month in the S&P 500, right now dipping about 0.6% on the S&P. NASDAQ underperforming yet again after seeing a break in a 7-month rising streak, last month falling just by a bit. The Mag 7 still leading the declines, down by 0.7%. The Russell 2000 also lower. Key to watch some of the anecdotal data coming out this week, given the fact that we do not get non-farm payrolls on Friday. A big bet, though, going on in the bond space of a Fed put, some sort of reprieve. The idea of a Fed rate cut in December has gone up to almost 85% from some 25% just a few weeks ago. And right now you are seeing a little bit of a lift, but still contained yields pretty much across the board. 30-year yields, though, inflecting higher by about 4 basis points, 4.7% rounded up. And the euro-dollar, interesting. A question of whether we are seeing the reignition of dollar weakness, euro strength on the expectation for an easy policy from monetary side as well as fiscal side. Under surveillance this morning, geopolitics very much in focus, escalating tensions with Venezuela.
We consider Venezuela to be not a very friendly country. They sent millions of people, really, and probably a number in excess of that. And a lot of those people shouldn't be in our country, from jails, from gangs, from drug dealers, from all of the people that came into our country, shouldn't have been in our country, causing a lot of problems.
Does your warning
and drugs.
Does your warning mean that an airstrike is imminent, or should we not read it that way?
Don't read anything into it.
Here's the latest. President Trump confirming he held a call with Venezuelan President Nicolas Maduro as questions mount over recent U.S. airstrikes in the Caribbean. Joining us now is Bloomberg's Mika Solner for more. Mika, I just want to start with what we understand about what's going on and where we stand with respect to potential action from the U.S. against Venezuela.
Absolutely. The Trump administration has been extremely aggressive in its posturing towards Venezuela, blaming it on targeting their narcotics operation. As we just saw, the president has been very vague on exactly what his plans are in that region, but there's been a lot of questions raised by members of Capitol Hill, Republican members as well, in terms of the legal actions that the administration has taken and what the next steps could prompt.
I do wonder, Mika, do we have a sense of what that strike was over on offshore of Venezuela? It was in the Caribbean. Big questions now swirling in Congress about the legality of it. What's the latest on that front?
Yeah, there are a number of top Republicans on Capitol Hill, from the top Republican on the Senate Armed Services Committee, Roger Wicker, to many prominent House Republicans that have, asked about the legality of the most recent strikes. But this has been ongoing, and these are questions, and the administration has been very tight-lipped on this, even in their discussions with lawmakers and those in their allies, and have kept it, very secretive in terms of what exactly their plans are.
Mika Solner of Bloomberg, thank you so much for that. Robert Konigsberger, founder of Gramercy Funds Management, a global leader in emerging markets, writing, "It is so hard to imagine that the art of the deal leads to something short of Maduro ceding power. The path to de-escalation has become quite narrow." Robert joins us now. Robert, thank you so much for being with us. How are you understanding this from an investment standpoint about what U.S. involvement with Venezuela looks like now and what it will look like, say, 6 months from now?
Sure. Good morning. I think you need to break it down into a couple pieces, which is one, is there going to be regime change? What's the motivation of regime change? Then if there is regime change, what does that look like? And then ultimately, what does, what's the environment look like in Venezuela post? So from where we stand today, I mean, I believe, we at Gramercy believe the motivation is less about democracy and the stolen election from 2024 and more about narco-terrorism and quite frankly, taking back the Americas. There was the Monroe Doctrine, then there was the Trump, the Roosevelt corollary, and now we've got the Trump corollary. So this is bigger than just a stolen election last year. And I think the way that this narrative has played out will play well with MAGA. And I think that was always a concern. I don't think MAGA cares about democracy in Venezuela. They do care about 8 million Venezuelans who have immigrated, a great deal that have come to the U.S., security, what have you. So then, we believe this is more than just regime change. We believe that Trump and Rubio have, bigger aspirations in mind. This isn't just about, a show of force in the Caribbean and then move on. But then to your question of regime change, and, we at Gramercy spend a lot of time thinking about what might regime change look like. There's capital R regime change, which I think many would like to see, which is, the Maduro regime leave, the Chavistas leave, and Machado and her people come in, capital R regime change. That may be difficult. We may see something more like smaller regime change, where it's some sort of government transition where the Chavistas and the opposition still collaborate towards new elections.
What do you think the timeline for all of this is?
I mean, it's so difficult to say, but, as you saw in Eastern Europe when the wall fell, so to speak, regime change takes longer than you think it's going to take, and then it happens faster than you thought it would happen. So, there's a lot of metal in the Caribbean right now. Would be surprised if we're in the same position at the end of the first quarter. Be surprised to see this status quo at Easter. But it's really hard to tell.
You talked about narco-terrorism. You talk about immigration. For the Trump administration, is this also about China and its encroaching on U.S., what the U.S. would probably view as its sphere of influence in South America writ large?
Absolutely. I mean, I think, the evolution of globalization is back towards regionalization and, as you say, spheres of influence. And, I referred to the Monroe Doctrine, and that was about, the Americas for America, if you will. And then the Roosevelt corollary went further and said, we will intervene militarily in Latin America to protect ourselves. So I think what the Trump administration is focused on is just what you said, which is getting the Chinese and their influence out of the Americas, getting the Russians and their influence out of the Americas, and going back to a world of spheres of influence where, maybe we'll be less focused on their region and more focused on our region. And who knows what the deal was in Alaska between Putin and President Trump as it related to Ukraine versus the Americas. But, Russia's been pretty darn quiet. China's been pretty darn quiet.
Robert, does this make you want to invest more in Latin America or less?
In Latin America, I mean, I think as, there's a lot of different opportunities in Latin America. I mean, for us, we've been more focused on private credit rather than public credit. But I think, as many have started to realize, emerging markets isn't necessarily more risky than developed markets. And we're seeing plenty of opportunities within Latin America. I mean, Venezuela's, there's very few ways to express interest in Venezuela. I mean, most of it's through the external debt at the moment, which is, I think, up 3 times since the bottom.
You said something there that I think a lot of people are going to find interesting, which is that you think that emerging markets might not be more risky than developed ones right now. It's something people have been flirting with. Are there dynamics in the developing world that you're seeing take hold in places like the United States or Europe that you find concerning and that you think that emerging markets in some ways is almost a reprieve from?
Sure. I mean, I grew up when we had 2 worlds. We had developing markets and we had emerging markets. I think today we have developing markets, emerging markets, and submerging markets. And it's the developing markets that are moving right to the submerging markets. And the things that we saw in the 80s and 90s that concerned the world about emerging markets, we're seeing about developed markets. Quite frankly, large debts, large deficits, and what have you. The emerging markets never had the flexibility to not adjust, to when COVID happened and what have you. And their fiscal houses are generally in order. Now, of course, emerging markets is a really big label. It's not a homogeneous asset class, nor is developed markets, but we're quite constructive on EM.
Gramercy Funds Management founder Robert Königsberger, thank you so much for being with us as we do parse through what's happening. I do wonder, Anne-Marie, from your perspective, how much some of the latest developing news around Venezuela, around that strike on the boat offshore of that nation, seems to be potentially having ramifications in Washington, D.C.
Well, I think a lot of senators want to get to the bottom of is actually what was ordered by the defense secretary after this really scathing report from the Washington Post about the strike and the subsequent secondary strike that existed when it seemed like 2 individuals were still alive and they had a secondary strike. When it comes to Venezuela, I recently caught up with Mike Wirth. He talked about being there for the long term and rebuilding that economy. When you hear from Robert, it does seem like that's where they are as well, and that this administration certainly wants to see a huge change in that country.
Yeah, rebuilding potentially some of the Latin American potential allies, as well as rebuilding the infrastructure around energy, potentially for artificial intelligence. Coming up, Ian Harnett of Absolute Strategy Research on the controversies facing investors in 2026. This is Bloomberg.
Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
The new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
After the 7th straight monthly gain for the S&P 500 this morning, taking a little heat off that, we did see a monthly loss for the NASDAQ for the first time going back to March, 1.4% decline. We are seeing that decline extended, which really is notable given the fact that people are wondering whether this is a rotation or whether this is a bubble that is starting to burst. And the Russell 2000 futures down almost 1%. But the real question on the consumer, yes, they're spending, but is it enough? And is it enough for the bond space, 2s, 10s, and 30s? Is there a question of how far the Fed can cut, about how aggressive they will be as President Trump talks about choosing a new Fed pick? We now have more than an 85% chance of a Fed rate cut come this month. Right now, 3.5% on the 2-year, just up about 4 basis points on the 30-year to 4.7%. And you believe that in the currency space, what you get is a weaker dollar as people expect an easier Fed and potentially deteriorating economic data. Euro at least rising. Maybe it's just a reprieve after a lot of negativity around Europe. 116 right now. 3 hours away from the cash open. Here are your morning movers with Yahaira on it. Yahaira.
Hi, Lisa. As you mentioned, we're seeing a real risk-off mood to the market this morning as we start the weekend. It's showing up in Bitcoin, falling as much as 6% earlier to below $86,000, though we have recovered some of that since then. And most of that having to do with the risk aversion we're seeing in markets, but also China's central bank saying it plans to clamp down on cryptocurrencies, and that is hitting stocks like Coinbase, MicroStrategy down 4%, and Bitmine down 6%. Meanwhile, over in Europe, we are seeing Airbus shares falling more than 8% now in the pre-market on a Reuters report that the plane maker has run into quality issues with fuselage panels on dozens of A320 jets. Remember, those are the same jets that suffered a software glitch last week that affected 6,000 planes, though that has now been fixed. But this is all coming as Airbus races to meet tough delivery targets it's set for this year. And we end on Canadian Solar. Those shares are moving to the upside by 11% in the pre-market after it said it's moving control of its Chinese factories to Canada in an effort to avoid U.S. tariffs and also keep it on the good side of U.S. regulators as it wants to continue selling into the U.S. market at a time when we know Washington is clamping down on clean energy imports from China, an area that, of course, China dominates. Lisa.
Thank you so much, Yahaira. On our radar this morning, U.S. and Ukrainian negotiators saying they had a productive discussion about a framework for a peace deal this weekend down in Mar-a-Lago. Secretary of State Marco Rubio saying there's more work to be done. As Special Envoy Steve Witkoff heads to Russia today. Meanwhile, U.S. consumers demonstrating their resilience as the holiday shopping season kicks off. Black Friday sales increasing over 4% from a year ago, despite economic concerns. Today is Cyber Monday. Tomorrow is... I don't know.
They're all blending together.
Ticket Tuesday.
So many people are buying their Black Friday sales online. So I feel like Black Friday, Cyber Monday is all merging together, which is why I find it almost shocking that consumers spent a record $11.8 billion online on Black Friday online, when basically you're going to have the same deals potentially on Monday. I just want all the emails to stop. I feel like it is just spam overload from the retailers. I understand it's percentage off, but okay.
I think they're all personalized. Or Anne-Marie, please come in. We know what you like. Here's all of the list of things.
And then it's, guess what? We're giving you another 24 hours. We see that in your cart. Okay, I left the cart as it was. I'm not buying it.
Well, but this to me actually does highlight, is this a sign of strength or is this a sign of weakness? We're talking about this as a resilient consumer. At the same time, who's buying? What are they buying? How much are they waiting to buy for the deals, not necessarily buying earlier? And how much is this on an inflation-adjusted basis, not nearly as good as it looks? And I know that it sounds like Debbie Downer, but this is kind of the tea leaves that people are looking for in the absence of that holistic data that we normally get out of the Bureau of Labor Statistics.
Absolutely. I think you nailed it. This isn't inflation adjusted. So it almost feels like maybe it's flat from where we were last year. And if you look at what the Fed Beige Book talked about, it's the lower end consumer that is really struggling. How much of this 11.8 that's being spent is actually just from the higher end cohorts we're going to go out and spend anyway?
This has really been the underpinning a lot of the change in tone that we've been hearing around the U.S. consumer and the U.S. economy, which is the reason why there is such a focus on the Federal Reserve. President Donald Trump finalizing his choice, supposedly, for the next Fed chair. All signs pointing to his chief economic advisor, Kevin Hassett, as a likely candidate to succeed Jerome Powell, which definitely has been fueling the upside in markets. In markets, optimism around AI showing signs of slowing as concerns linger over valuations and spending plans. Global stocks falling in November for the first time in 8 months. Ian Harnett of Absolute Strategy Research writing, America is in a race to dominate AI. We see this as part of a broader objective to boost productivity, keeping the U.S. as one of the world's richest economies. Ian joins us now, and I think that the most controversial question to you is, will it work? Is the U.S. still a bastion of returns and safety?
Well, I think, what we're looking at is an environment where President Trump is determined to win the midterms. They're going to work whatever they can do to avoid recession. I think, our chief rates economist, Ebra Harby, wrote a great piece about Kevin Hassett. Looking at his voting profile, that potentially would lead to Fed rates being 75 basis points lower than they might have been otherwise.
This is the reason,
And so, that's one of the things that we're starting from. Definitely recovery rather than recession, I think, Lisa.
This is the reason why a lot of people are expecting an easier monetary policy. The reason why you're seeing that baked into Fed funds futures, as well as the sort of optimistic tone for the forgotten 493. Do you think that that is the right way of looking at this? That either one way or another, the rest of the universe, the equal-weighted universe, is going to outperform?
Yeah, we're certainly expecting that broadening out. We're seeing that in some of the data. But the real question that investors have to answer for 2026 is, this is a really unusual balance. Really strong earnings growth and expectations of rate cuts. That isn't going to survive probably the whole of the year. So is it going to be the growth in the earnings coming down, or is it going to be those rate expectations starting to get raised, even with a more dovish Fed chair, should we say?
Well, you think that AI CapEx endgame is coming? And you think there are signs of a bubble burst?
Yeah, absolutely. AI is a bubble, and so let's in terms of AI stocks, and that is going to be the problem. But why does it stop? And I think the thing that we see is that the end of bubbles typically comes because cash flows start to get strained. And that can be the cash flows of the producers themselves. And we're starting to see that cash flow headroom coming down. Our quant team have done some great work. But where we're going to see that is that it won't be CapEx that gets cut first. It'll actually be buybacks. So watch out for those. But historically, when bubbles burst, it tends to be that the people buying the goods, the services, they run out of cash. And that's going to be the thing. So, yeah, AI can be a structural story, but are those banks really cyclical rather than structural?
Has it all been exacerbated by the fact that we see a lot of circular financing in this space?
This is a very classic bubble experience. So we're seeing all the classic signs. We're getting exponential share prices. The companies are using those share prices to buy each other. They're buying each other's goods. They're doing it on vendor financing. That circularity that you're talking about. And then this CapEx blowout as the cost of capital comes down for these AI companies. Everybody tries to crowd into that space. That accelerates the build out. But the trouble is the CapEx goes on like that. And if your sales just start to tail off, then the margins get hit. That's when the challenge is going to come for this market, and that's when we get more of a more of a shock.
And this is coming at a moment where ChatGPT is turning 3. This is a reason why a lot of people are wondering, is on its birthday, happy birthday, good luck trying to survive for the next 3 years. There's this question of how much debt's been built out with data centers tied to ChatGPT, to OpenAI, incurring $100 billion of debt in that period. At what point can you see the overall market and U.S. economy continue to grind higher if you do have a busting of the AI bubble in a significant way?
I think at that point you'll be looking for those interest rates to coming down. But historically, when interest rates come down because things go wrong, that's bad news for equities. And that's the point where you could start to see the change. And that's probably going to be later in the year rather than earlier in the year. But actually the biggest risk that we see for AI is that energy component. America has decided to use fossil fuel, hydrocarbon energy, and that's going to be expensive. Much more expensive than renewables that China is using. And it's also, there's something called the food, water, energy nexus. If you want to have more energy for AI, that's going to cost you something in terms of water, which is going to cost you something in food. Do you want a faster search engine, or do you want to still get your food on your plate? Those are the kind of decisions that we're going to see starting to come to the fore as we see more of these issues raised, I think, Lisa.
I think it's a great question. At this point, I think some people, after spending all the time on the phone, might choose their phones. I am curious, though, from your perspective, going forward, if this is the landscape, do you think that the chance of a negative return on the S&P 500 or the NASDAQ next year and a more negative economic outlook in the United States looks more likely? Because that seems to be what you're describing.
I think when we go into 2027, then it gets much more cloudy. You have to take that decision about higher rates or lower earnings. The big thing that we can see is that short term, these markets are being driven by momentum, they're being driven by liquidity, they're being driven by algorithmic trading. Longer term, what we know is that valuations matter. And so we just published a report recently about the lost decade for investors. If you are really investing for the long run, your long run earning equity returns are probably about 3% over the next decade. That means you're going to get most of your returns from income, not from growth here. And that is going to be the biggest challenge for investors. So recognize this is a trading market, a momentum market, and AI is a big part of that. Investing for the long run, that's a difficult game. Let's go back to 2000. It was the digital age. We're living that digital age today. The big players today are the big players that they were there. Microsoft, Oracle, Apple. All of those companies lost between 65 and 97% of their value, their peak value, and took between 5 and 13 years to regain that value. Digital was the structural story. AI is a structural story, but there's the right price to pay for everything in the equity market.
Can we put two of your thoughts together, that the Trump administration is not going to want to see a recession before the midterm elections, and this idea that you think the AI story is starting to fade?
Yeah.
How does the Trump administration make sure that the AI story does not fade before the midterm elections, given how much of the equity market is propped up by it?
So I think you've got two levers that you can, or a couple of levers that they can operate through. First of all, Secretary Bessent made it very clear that he's very, very keen to keep rates as low as they possibly can. So whether that's the new Fed chair, whether it's using stablecoin to try and inflate demand for bills or redistribute the demand for bills, then that will be one mechanism. What they have to do is to reinflate assets across the economy. The household sector needs to take on leverage. The corporate sector needs to be encouraged to take on leverage. That's the way you get the debt back under control. So what does that mean? They're going to be pumping the housing market. They're going to be trying to unlock. There's $36 trillion of positive equity in housing that can't be accessed at the current time. Assumable mortgages, something like that. Some kind of innovation, privatization of Fannie and Freddie. Those are the kind of things I think we'll see open up. The other thing is crypto. They will continue this willingness to lend against crypto, to keep the economy going, and however they manage that, then we'll see. Almost a slip of the tongue there.
Ian Harnett of Absolute Strategy Research, thank you so much. Really wonderful to hear about what you expect next year. It is crystal ball season, and we've been getting a lot of them. And there's a lot of positivity because one way or another, there will be a fiscal bazooka or there will be a monetary bazooka or potentially even both.
And potentially even more so if we have a Kevin Hassett as Fed chair. What's interesting, though, of course, you have to remember it is a deliberative body. And because many people view him as tethered to this administration and the president, they might be more willing to come out against against him because they are concerned that he is just purely politically motivated.
Does it make the other potential members more hawkish? Right now, let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Vonnie Quinn. Vonnie.
Lisa, thank you. Now, the latest on the investigation into the National Guard shooting in Washington, D.C. Homeland Security Secretary Kristi Noem says authorities believe the 29-year-old suspect was radicalized in this country. He's facing a first-degree murder charge in the death of the 20-year-old West Virginia Guard member Sarah Beckstrom. The data center that supports the CME Group derivatives exchange says it has bolstered its backup cooling capacity after overheating sparked a 10-hour outage on Friday that roiled world markets. Cyrus One owns the facility about 50 miles from Chicago. It says stable and secure operations have been restored, with additional redundancy now added to the cooling systems. A rally in the metals market to start the month. Silver is trading at a record as traders place speculative bets on the precious metal given ongoing supply tightness and rising expectations for a U.S. interest rate cut. And copper touching a record high on the LME on fears the global market is heading for a supply crunch. And that is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. Up next, President Trump making his pick.
Well, if you can use that chair, are you any closer on that right now?
I know who I'm going to pick. Yeah.
Oh, tell us. Kevin Hassett.
I'm not telling you. We'll be announcing it. Thank you very much, everybody.
So now the question is, when? When are they going to be announcing it? Sonia Martin of DZ Bank joins next. Maybe to answer that question, probably not. This is Bloomberg Surveillance.
The key issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. And Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is The Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
was a question, will the S&P 500 manage to eke out a seventh straight gain? It did. On the last day, it was down 0.4%, and it climbed above it for that seventh consecutive gain, going back for the first time since 2021. We're losing some of that steam, down 0.6%, although the underperformance continues to be in the NASDAQ. Right now, you are seeing a bit of euro strength, dollar weakness, a real question about potential data that isn't coming out just yet from the United States. It's supposed to be Jobs Friday. It is not, but we do get ISM manufacturing and services and ADP payrolls, which people are going to be parsing through. And you do see yields just marginally higher, up 3 basis points on the front end to the mid end and back end. 10-year yields 4.04%. Under surveillance this morning, President Trump making his pick.
Are you picking a new Fed chair, or are you any closer on that right now?
I know who I'm going to pick. Yeah.
Ooh, tell me, Kevin Hassett.
I'm not telling you. We'll be announcing it. Thank you very much, everybody.
Here's the latest. We're getting closer to finding out who will replace Fed Chair Jay Powell, maybe. Sources telling us here at Bloomberg that National Economic Council Director Kevin Hassett is the front runner. Joining us now is Sonia Martin of DZ Bank. Sonia, thank you so much for being with us. I'd love your reaction to both the price action in response to Kevin Hassett as a potential Fed chair, as well as just more broadly, this understanding in U.S. markets of Fed rate cuts that seem imminent.
Yes, I mean, we've seen quite a lot of volatility in rate expectations with the view to the Fed. I mean, the market had initially priced in a lot of rate cuts throughout the coming year. Then there was a lot of pricing out. Then during the shutdown, I think people got somewhat overly optimistic, I think, on the prospects for the U.S. And now they're back in the game with more rate cuts. And that's partially, I think, because of some of the weaker data we've had, but also speculation mounting that it's going to be Kevin Hassett who will become the next Fed chair. Trump hasn't said when he will announce. Suspicions are or speculation is he'll announce before Christmas. He'll probably use a political opportune time to do so. But Kevin Hassett is, of course, considered to be very close to Trump and therefore a monetary policy dove. And that is exacerbating rate cut speculation, and that's what is putting some pressure on the dollar right now.
So, yeah, I wonder how much you expect that to continue into 2026. The first half of 2025 was marked by this belief that there would be overstimulation, a suppression of yields, a potential loss of Fed independence, and this would lead to a depreciation of the dollar. You saw the gold trade really pick up. Second half, completely different, flipped on its head. Do you expect 2026 to mirror what we've seen so far in 2025?
Well, maybe not as extreme. I think we've sort of gotten used to Trump a bit more, and we're not as surprised maybe at the way that he conducts policy as we were earlier this year. So I think the amplitudes of market move might be a little bit smaller. But generally speaking, I do expect the dollar to have some downside next year. For one, I think the U.S. economy is not as strong as people have recently come to believe, and there is the Fed issue. And for me, I cannot emphasize enough how important it is to me what happens with Lisa Cook. The Supreme Court will make a decision on that early next year, and I think it's really crucial to see what happens there, because if Lisa Cook does get removed from the Fed board for a potential crime that she may or may not have committed 20 years ago, I think that sets a dangerous precedent, and I think the whole issue of Fed independence is definitely going to come back on the table next year. Yes.
Sonia, the market, though, is not acting like there is an issue of Fed independence. So do you think that actually, whether or not it's Lisa Cook leaving the board or not, do you think that is actually going to be such an issue? Because the market seems to shrug this off and moved right along.
Well, maybe especially because the market is sort of shrugging it off, I think it may be more of an issue. I mean, we know what happens in these situations. People kind of, gloss over these things, but then they can make a major comeback depending on the news flow. And I do think that issue will come back and resurface. I mean, I'm not saying that we are predicting that the Fed independence is going to become seriously endangered, but I think the whole issue will be a source of volatility next year, and therefore will time and again put pressure on the dollar. And I think maybe the market right now is focusing on other things and maybe not paying quite as much attention to this particular issue as it should.
Well, if the Trump administration decides to put Kevin Hassett as the chair of the Federal Reserve, will it embolden other members to be more hawkish?
Yeah, I heard you mention this earlier. It's an interesting take. I think that, the general market view is often that if the Fed is led by a very dovish president, then that's going to result in a generally dovish council, which I think we can all hope that you're right, and that's not going to happen. That in fact, in a way, we have seen this recently. We have seen that Fed members have been I think, quite honest in their views on the US, and there's not been as dovish maybe as generally feared. So I think there is ideally that scenario where Fed members will feel emboldened to distance themselves from Kevin Hassett if he does become chair. But it will be a tricky time. There's a few new people on this board, so it's going to be a bit of a big shuffle, and there'll be a new dynamic.
It's really fun to play the parlor game of the Fed. We'll keep playing it. But Sonia, there's a larger story here, which is more broadly around the world, developed markets are incurring more debt. They're seeing higher yields. There's a real question of how much that can really reverse next year based on just the overall demographic of an aging population and the debt load at play. Do you see a broader depreciation, devaluation of developed market currencies more broadly? And maybe not only with respect to gold outperforming, but potentially emerging market currencies as well, also doing better than they have traditionally just because of a dynamic that seems to be flipped a bit on its head?
Well, we're actually, when you look at the emerging market currencies, we're actually somewhat negative for the next year. A lot of these countries have serious issues to contend with. And obviously there is, the debt levels, as you mentioned, but also economic issues. Some of these countries have been very hard hit by the whole tariff situation. So I think in general, we're not that optimistic. Also, I think because the high level of uncertainty in the market in general that we are going to carry over into 2026, that is also going to be a factor weighing on these currencies. So I don't think there's going to be a huge upside, broadly speaking. There'll be exceptions, of course, but I think broadly speaking, we're looking at more downside for these currencies.
So is this basically a loss of some credibility in fiat currency right now that you're seeing expressed through gold, that you will see continue to be expressed through gold in 2026?
Yes, absolutely. And we're looking at our gold forecast is still quite optimistic. We're looking for gold to continue to rally into next year as demand from central banks, but also from retail investors remains strong in this area of uncertainty. And as you said, that also reflects negatively on the riskier currencies in general. So I think, that's a risk-off situation that's going to linger throughout next year. And to be honest, probably the next few years, given that Donald Trump is going to remain in office for a while longer.
Sonia Martin of DZ Bank, thank you so much. And we are seeing gold getting a lift. Bloomberg Commodity Index in general has been absolutely flying so far this year. It's right now at the highest level going back to January of 2023. You have a lot of commodities. We were talking about copper earlier, seeing its real boom. Gold has certainly been leading, and a real question here about potential algos that are getting involved. But it seems like the physical world is getting its comeuppance and has been getting its comeuppance, frankly, since the pandemic.
And silver as well. We're seeing silver and copper, which actually are more interesting sometimes than gold because they have real life use cases, not just a store of asset the way you see central banks come out and buy gold, especially if they're concerned about maybe U.S. sanctions or secondary sanctions from the United States when it relates to Russia or China. So yeah, commodities on a tear. And when you think about the AI story, as we just had this hour, all that energy use is going to be needed, and commodities are going to be needed from when it comes to the AI data center rollout.
Yeah, and how does this really play into inflation? We will be getting core PCE talking about inflation on Friday. Unfortunately, it will be from September, so I'm not sure how forward-looking it is going to be. Coming up next, we're going to be speaking with Republican Senator Bill Cassidy about cost of living concerns as you do see the prices of commodities pick up. Mark Lehman of Citizens Commercial Bank on AI concerns. Claudio Irigoyen of Bank of America. And Amanda Lynham of BlackRock. You're watching Bloomberg Surveillance. Good morning.
coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
There's more reasons to be cautious than bullish right now.
The consumer remains the bus driver.
The market's really telling you that December we're not likely to see a cut.
Ultimately, the market's going to tell the Fed what to do.
The odds of that rate cut have increased.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. To start off the month of December, the 12th month of the year, futures lower with traders coming off 7 straight months of gains on the S&P 500. Tech continuing its streak of underperformance this morning after actually having a loss last month for the first time going back to earlier this March. Right now, all eyes still squarely on the consumer as Black Friday morphs into Cyber Monday with early signs suggesting that Americans are still spending despite waning sentiment. And President Trump has made his decision regarding his pick to be the next Fed chair, and he'll fill us in at some point. Anne-Marie, hasn't he been talking about this for a while?
He's been talking about this for months. They have been talking about it for months. Remember, I spoke to the Treasury Secretary months ago, and he said we'll have a decision by the fall, an announcement. Now it's potential we'll have a decision, an announcement before Christmas at the very end of the year. You see the president's face light up, though, every single time he is asked about this. He loves to talk about monetary policy, and he loves to have this Game of Thrones type atmosphere when it comes to picking who is going to be the next Fed chair. Right now, our reporting is that in the pole position is Kevin Hassett, who right now is the president's chief economist. So lots of questions about actually how much of a political puppet this individual might be, or actually can he at some point put some distance between him and the White House?
At the core of the Fed discussion really is the consumer and spending power and cost of living concerns that have permeated every single poll and every single sentiment survey that we have seen heading out there. This week's going to be interesting because we do not get the non-farm payrolls report as we normally would get on Friday. We do, however, get ISM manufacturing later today. We get ISM services on Wednesday. We do, of course, also get some earnings coming out. We get ADP payrolls numbers as well as core PCE data on Friday and income and spending, although that is from September. So a real question here heading out of what this will really reveal. Right now in markets, you are seeing a bit of a dip in the S&P and the NASDAQ as people look ahead to potential disappointments in the AI space and a real question of what else can ignite some sort of risk on rally. You are seeing yields marginally higher, yield curve steepening, a question there of how much this is pricing in some sort of easy monetary policy in the short term, 4.04% on the 10-year, and crude up about 1.3% as OPEC Plus pauses potentially some of its output increases. Coming up this hour, we really do want to get right to this. Louisiana Senator Bill Cassidy, as consumers hit a record spend despite economic uncertainty. Mark Lehman of Citizens Commercial Bank with stocks sliding into the final trading month of the year, and Claudio Irigoyen of Bank of America Securities as President Trump teases his Fed chair pick. We begin this hour with strong start to the unofficial holiday shopping season, even as affordability concerns grow.
Online sales were up almost 10%. In-store sales were up 4%. It was really a blockbuster weekend after Thanksgiving. And so I think that the folks who were saying, wow, maybe people are going to be anxious about, going back and getting presents for the kids and so on, they've been disproven this weekend. And I think the reason is that incomes are up this year.
Shoppers spent billions on Black Friday and could break Cyber Monday records today. Louisiana Senator Bill Cassidy joins us now for more. Senator Cassidy, thank you so much for being here. Can you square this idea of incredible spending and the ongoing American consumer continuing to uphold the underlying economy and this real feeling that cost of living is becoming unsustainable?
Well, there's obviously segments within our society, and there's a group of people who are still managing to do well. There's another group of people who are really hurting. Now, they may have the money to go out and buy their children a gift for Christmas. On the other hand, there is an increasing cost of insurance, whether it's health, property and casualty, or flood insurance, as well as the increasing cost of groceries. They have extra money, but up here, but there's a lot of folks down here who are hurting.
This is the reason why a lot of people are expecting, even though we are seeing profits at companies continue to increase, they're expecting the Fed to cut rates to respond to that K-shaped economy or the mass of people who really aren't feeling the gains. And I'm just wondering how much you're prepared to step in, that you think that it's government's job on the fiscal side to really support that lower tier of consumers that are really feeling the pain.
I would argue that in the tax cut for working families, or the one big beautiful bill, we attempted to do that. We did it both by no tax on overtime, no tax on tips, for seniors eliminating the tax that most would pay on their Social Security, but also putting in some pro-business efforts that would encourage business to reshore, to build out their manufacturing. Lastly, I will say, there's a lot of money taking place on infrastructure right now, and that infrastructure creates jobs. AI cannot swing a hammer. And so AI is not swinging a hammer. Those folks are being employed. I would say that there is a business strategy to help those folks who are in the kind of struggling area of the economy.
Senator, there's one area when it comes to affordability that actually might become a lot more expensive next year if Congress does not act, and that's the enhanced premiums when it comes to the Affordable Care Act. You have a hearing this week regarding this. Do you think we can get to a decision before the deadline?
Yeah, I think we can. I have a plan, but it's one that other Republicans have proposed some form of. And we take that enhanced premium tax credit, and instead of giving it to insurance companies, where they take 20% for profit and overhead, we give 100% to the patient in the form of a deposit within a health savings account. This allows her not to buy the more expensive silver plan, but to also get a cheaper plan called the bronze plan. Now, did I say it's cheaper? It's cheaper. And so we're helping her on her affordability. By the way, the money in her health savings account also gives her first dollar coverage for her child's trip to the ER. You know, I practiced for 20 years as a doctor caring for the uninsured and the poorly insured. I learned that if you give power to the patient, you can lower healthcare costs. So we're giving power to the patient, not profit to the insurance company.
Will Democrats come on board with this plan? It doesn't seem like they're interested in this. They want, at minimum, an extension for a year or two of the extended premiums.
So think about it. We would actually be, if you will, in one sense, extending the enhanced premium tax credit. But instead of giving 100% to insurance companies, they take 20% for profit and overhead. We're giving 100% to the patient. So you're getting an extension.
But the pool shrinks, that money. So
no,
those that are on the higher
why would it
end,
shrink? It does not shrink.
Well, for the insurers, are they going to have to pay more? Or are you going to have to say you're on, say, the premium plan? Or is your plan going to be even more expensive because it's not being subsidized by those on the lower end?
No. Again, going back to this, if you got this amount of money, and currently under the current plan, you give 100% to insurance companies, and they take 20% for overhead and profit. Instead, you give 100% to patients in terms of deposits within a health savings account. First, you're lowering their deductible, and because you have lowered their deductible, they can take a cheaper bronze plan. Now, normally you don't because your deductible is higher. We just lowered their deductible. They're getting a cheaper bronze plan. By the way, when you give power to the patient, she gets the health care she chooses to have that she knows she needs, as opposed to the health care the insurance company permits her to have. A lot of wins in here for the patient. Who would not be for that, whether you're a Republican or a Democrat?
Do you think that this is enough to prevent the government from shutting down again in January when this comes back up?
Absolutely. Why? Because we've actually addressed affordability on the exchanges. I would argue we also begin to address the overall increase in healthcare cost. When you give that woman, and women make all the decisions in healthcare, when you give her the power of the purse, and you say, listen, if you go here, you save money. If you go there, you don't. Everybody begins to lower their cost to where they can attract our business.
You know, you said something earlier that I think is really important. You said that businesses have a role in creating jobs and creating a better landscape for the lower quartiles and deciles of the U.S. economy and the U.S. earners.
I just wonder what policies you think need to be implemented to do that, because right now it doesn't seem to be working.
Are you talking about in terms of overall business
Overall
development?
business, yes.
Yeah, so I think that the tax policy that we've put in, and frankly with President Trump's tariffs, there's an incentive for people to begin to reshore, certainly nearshore. And so when you reshore, you're going to create jobs. Now that doesn't happen like that. Think how long you need to put together your financing stack. But that's going to happen. And so as it happens, we'll see that kind of upswing in jobs for construction, for service, all those jobs that are related to that reshoring of manufacturing activity. And that'll cause a general boom. So that is a sustainable strategy to create prosperity for folks.
A lot of people are saying that the reason why companies haven't created more jobs is because they're using artificial intelligence for efficiencies. And you're seeing that in terms of Amazon coming out and saying they're laying people off because of some of the efficiencies they're getting from algorithmic learning. I'm just wondering, from a legislation standpoint, what you think that the government's role is in trying to make sure that people aren't left behind in this transition, given that a lot of these new programs can take on roles previously done by humans.
I'm a technical optimist. If you've got something that's going to increase the productivity of our nation, we'll increase tax revenue not by increasing rates, but by increasing the overall growth of the economy. When you increase that overall growth of the economy and you have more money, we've got like trillions of dollars of backlog in infrastructure. Let's just focus once more there. If you begin to invest that money in infrastructure, AI does not swing a hammer. You're going to create a lot of jobs for folks who right now are struggling to get better jobs. By the way, we're also building out our oil and gas industry, our energy industry. That creates a heck of a lot of jobs. And so everybody looks at the negative, oh, we're going to downside. We need to look at the positive. That will just shift investment to a more productive area of the economy. As we grow at the expense of other nations, or maybe we all grow together, we'll create that employment.
Lisa started out this conversation talking about affordability. Americans are still struggling. You're also looking at trying to address healthcare affordability by actually having this health savings account proposal. The president talked about $2,000 tariff checks. You're on the finance committee. You lead the health committee. Do you think that that is a good way to address affordability right now, putting money directly into consumers' pockets?
So I'd like to see what the president's going to propose. We do know that the debt and deficit eventually takes money out of our pockets. And so we absolutely know that. So the question is it better to pay down our nation's debt? And as you pay down our nation's debt, then it makes it easier to lower interest rates, for the Fed to lower interest rates, which then lowers a mortgage payment, which then maybe lower other forms of credit. As you do that, you make life more affordable that way. The other thing you have to worry about is if you give everybody a $2,000 check, does that bump up inflation, and therefore the Fed is inhibited on lowering their rates? So it can't be taken in kind of isolation. It has to be taken in context of everything we can do to benefit that person sitting at home struggling a little bit.
It sounds like you would be a no then on the $2,000
no, it
checks.
Sounds like I'm going to investigate so that I know.
Okay, while you investigate, there's also potentially going to be another big Senate, first a hearing and then a vote when it comes to the president's Fed pick. Right now, the front runner is his Council on Economic Advisors chair, Kevin Hassett. Do you think you would say yes to him being the Fed chair?
I've been impressed with Kevin. This is the second time around serving in Trump's administration. I think he's done a good job. Of course, I reserve judgment until we actually begin to look at him as Fed chair. We are having this problem of inflation, which just is a little bit sticky, and yet we want to decrease rates. How are you going to navigate that? But I'm certainly predisposed to support him.
Are you worried about Fed independence?
Fed independence is critical. You just have to have it. But I also think that Kevin would step up and be as aware of the importance of Fed independence as anybody.
Louisiana Senator, thank you so much for being with us. Louisiana Senator Bill Cassidy here in the New York studio. Very much cost of living on the docket, especially given how much health care has dominated the conversation and potentially, Anne-Marie, could be the reason why the government could shut down yet again.
Right. There's this going to be the debate. It's happening all of December. The senator is going to be leading a hearing on it. What do you do in the sense that you have these enhanced Obamacare credits that are going to be ending? And for Democrats, this is really important for them to have this fight because this is what the entire shutdown, longest shutdown history, was based around.
Yeah, right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Vonnie Quinn. Vonnie.
Lisa, thank you. Goldman Sachs is buying Innovator Capital Management for $2 billion. The deal will combine the bank with an issuer of a relatively new type of ETF known as defined outcome funds that seek to limit downside risk. Stay tuned to Bloomberg TV for an exclusive interview with GSAM's co-head of third-party wealth, Byron Lake. That's at 3 p.m. Eastern. The man suspected of killing United Healthcare CEO Brian Thompson will be back in court today for a pre-trial hearing. Luigi Mangione's attorneys argue key evidence should be tossed because it was obtained illegally. Mangione has pleaded not guilty to 9 state counts and 4 federal charges. Crypto is seeing a sharp risk-off start to December. Bitcoin plunging more than 6% this morning, while Ethereum dropped more than 7%. The deep sell-off puts the entire crypto market on shaky ground, with traders bracing for more moves lower. And that is your Bloomberg Brief. Lisa.
Thank you so much, Vani. Up next, AI keeping markets on edge.
We are expecting earnings to increase double digits, around 11%. The fulcrum of this market has been big tech. You do need tech to deliver.
Mark Lehman of Citizens Commercial Bank joining us next. This is Bloomberg Surveillance.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
A softer start to the last month of the year. We are seeing both the S&P and NASDAQ and Russell 2000 all falling across the board, deepening losses as the session grows older. Futures down 0.7% on the S&P. Yields just marginally higher with yield curve steepening. At the 10-year denomination, 4.04%, up about 3 basis points. And crude higher, with OPEC Plus potentially pausing some of their output increases after a vote over the weekend. Under surveillance this morning, AI keeping markets on edge.
We are expecting earnings to increase double digits, around 11%. The fulcrum of this market has been big tech. When we dig into it deeper and recognize that the AI trade is far beyond the hyperscalers, and hyperscalers are in actually pretty good shape, what we think is the earnings risk is limited, but the valuation risk is higher. So in a scenario in which the AI narrative shifts away, then we can see a 10 to 15% correction in the equity market. You do need tech to deliver.
Here's the latest. Equities under pressure following the longest string of monthly gains on the S&P going back to 2021. Still, concerns about the AI narrative are weighing on the indices and have kept the NASDAQ 100 underperforming. Mark Lehman of Citizens Commercial Bank remaining optimistic, writing, quote, AI investment will be a powerful economic driver and deflationary force for the the foreseeable future. We expect a strong start to the new year, and the market should continue to broaden. Mark joins us now. Mark, thank you so much for being with us, and happy post-Thanksgiving. It seems like the divide between San Francisco and New York is one of vibes, where San Francisco feels really good and positive about AI. New York is feeling less so, increasingly, as the weeks grind on. Can you just explain this division in sentiment when it comes to what we're seeing in Silicon Valley versus on Wall Street?
Well, it's pretty early out here in San Francisco, but I would agree with your sentiment. It's true that the AI story is largely playing out around San Francisco. 40% of the investment dollars are here, and it's part of the resurrection of the economy and resurrection of the city. All you got to do is drive from SFO into the city and see what the billboards say, and every single one of them is AI. You could be a cynic and say, boy, that reminds me a lot of 1999, and you'd be right. But also 1999 portended the next 25 years of innovation and growth of the NASDAQ and growth of technology. And I see a remarkable parallel between the two. It will be bumpy. Market cap's going to move around a lot during those periods, but it is going to be the story of the next decade and beyond.
Which is the reason why people are celebrating ChatGPT's third birthday, which I believe occurred yesterday. Happy birthday, ChatGPT. And it's raised this question of, are we already seeing the dominance of some of the initial first movers really wane, and whether you're seeing the likes of Gemini take over? I mean, how much you already seeing some of these cycles, the winners and the losers, shaking out in a way that could potentially be pretty disruptive, even if AI is the elixir that so many people think it is?
Lisa, that's exactly the right point, and we've seen it in the last month. If you saw what happened with Google and other stocks in the last month, how rapidly the ascent of market cap and some of the losers, if you will, in even small periods of time. And those moves are so substantial and so historic that's the story going forward. And you're going to have to be really careful. But I think the theme is the same theme going into the internet boom. If you're not exposed, you're really going to miss out. And this is the revolution. I keep calling it the second coming. I've said it on your show. It's going to happen, and it is happening. The real question is, how do you play it as an investor? And also, what is it, the ramifications for society and for our employment and for our economy? And that's the second story. And I think you talked about a little of that with the senator, and you hit a lot of the right points, because it is going to be a massive disruption. And we saw it in the have and have-nots technologically going into the internet, with education, with job training, with economic. This is going to be the same ramifications. And again, we've seen these microbursts in stock both ways.
When you look at the ramifications on society, we had Ian Hartnett on the last hour as well, talking about he thinks the CapEx endgame is approaching when it comes to AI. But when it comes to society, is it about the inflationary impulse, what that means for energy prices, or actually is it about concern that AI might just take away jobs in the labor market?
I think it's both. I mean, you're seeing the president really focused on the price of oil, right? It's breaking $60 a barrel, et cetera. And then you're seeing some of the home heating bills and some of the home electric bills skyrocket for some parts of the country. If you see it for the job training, if you see it for other parts of employment, it's going to have huge ramifications. I like the senator, am an optimist. And I said it 25 years ago when you had the dawning of spreadsheets and everything. We didn't not need accountants anymore. Jobs changed. Jobs are going to change. And the information economy is obviously going to change a lot of what those jobs are. We talked 5-6 years ago about running out of workers because everybody's going to demographically shift out and we're not seeing enough young workers. So these changes happen so rapidly and the tonal changes are so big. But I do think there's going to be government I wouldn't say intervention, but they have to play a part in what this means for education and what this means for the future and the cost of education. And all these things are so large, but technology doesn't slow down. Healthcare innovation with AI is going to drive cost lower. And the kind of drug discovery we've seen will start to accelerate. You're seeing it with some of the buyouts that you're seeing big biotech happen with big pharma. Those ramifications are happening real time. Healthcare deflation is going to happen as well. AI is deflationary. What it does to the rest of the economy is much more massive than that because, again, technology is the biggest deflator we have.
You are so bullish on AI. Is there anything about what is going on that gives you pause? Circular financing, vendor financing, any of this concern you?
I think, listen, I'm optimistic because of the ramifications for it and what it's going to mean for society. Do I think every part of this is not perfect? Of course I don't. I think there are bubbles being created everywhere. There's investment dollars being thrown at AI because the people who are late are throwing dollars at it. The market obviously is very optimistic about it, just like I was 25 years ago. Did that mean that the market was going to go straight up? Absolutely not. And I can't predict what's going to happen to the market. But I think the technology revolution is here. You have to be invested in it. You have to be consistent. You have to pay a lot of attention. But sitting around worrying about what will go wrong, I think is important, but I think it should not change your investment horizon and should change your investment patterns.
But it might change how you invest. I'm looking right now at a chart that Deutsche Bank put out showing the 300% gain in the Magnificent Seven going back to the launch of ChatGPT 3 years ago. We have seen this incredible outperformance of a select few number of names. We've seen debt start to come into the picture. If this is a deflationary kind of phenomenon, at what point does the debt become, I don't want to say toxic, but a depreciating asset in a very real sense, especially at a time of rapidly shifting technology?
Lisa, it is such the right point. And I think what we see as a bank is where we're putting our own investment dollars, where we're putting our own capital, what kind of companies we want to take public. It's a story that plays out in every sector over time, which is where do you want to spend your dollars? Who are the right technology leaders? Who are the right companies? Who are the right leaders for those companies? And where do you get a little worried? And there large gains in those kind of stocks get a lot of people worried. But we've sat on this program a year ago, 3 years ago, 5 years ago, and looked at that list and said, boy, are these stocks overvalued? In a lot of respects, that would have been a big mistake. But again, look what happened over the last 6-8 weeks. Look at the moves in NVIDIA and in Google, and look at the amount of market cap that gets created and destroyed in a very short time. If you're not paying attention, that's a problem. And if you're not invested, that's also a problem.
We're paying attention, Mark. Thank you so much for being with us, and thank you for waking up so early in San Francisco. Mark Lehman of Citizens Commercial Bank. Always wonderful to get your insights, and I'm sure we will again. It really has been this incredible divide between Silicon Valley that sees the potential and Wall Street that's getting increasingly worried, not about the potential of AI, but about the valuations.
But as Mark said, he's not looking at it as an investor. He's looking at the societal impacts and what AI is going to mean technologically for our future. I loved what he said about he thinks the Trump administration is going to be interventionist. Thinks they already are. Look at Intel, look at MP Materials, Lithium Americas, everything has to do with the supply chain for AI, they want to stake in.
Yeah, how are you interventionist? Is it in the physical world, or is it in some of the job trading or the potential other societal ramifications? Coming up, we're going to be talking about the ramifications for the Federal Reserve with Claudio Irigoyen of Bank of America Securities. He has a revised Fed rate cut call. Plus, Yahira Anand with their morning movers, Moderna shares falling after a legal setback. This is Bloomberg Surveillance.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Caroline Connon in Paris, and this is Bloomberg.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Well, it's a slow start to the last month of the year, but we will maybe get a Santa Claus rally just yet. We did get one heading into the end of November, at least for the S&P 500, leading to the 7th straight monthly gain for the first time going back to 2021. This morning, you're seeing losses continue to mount in pre-session trading, down 0.7% on the S&P futures. NASDAQ underperforming yet again, down 0.9%. And the Russell 2000 doing poorly, down 1%, even though A, we don't get non-farm payrolls, and B, there is more than a 100% chance of a Fed rate cut this month, now priced into Fed funds futures. What you could see priced into the bond space is it isn't necessarily an all clear. You are seeing yields inflecting higher, pretty much flat on the 2-year, but that yield curve steepening has been mounting throughout the morning. 30-year yields up 4 basis points. And a real question here about how much near-term rate cuts will prevent longer-term rate cuts over the 2026 and 2027 periods. We'll get into that discussion in just a moment. 2 hours away from the cash open, here are your morning movers with Yahaira Anand. Yahaira.
Hi, Lisa. We start over in Europe with Airbus. Shares are falling 8.6% in the pre-market on a Reuters report that the playmaker has run into quality issues with fuselage panels on several dozen of its A320 jets. This is coming as the company races to meet ambitious delivery targets by the end of this year. And the sell-off deepened after its A320 jets suffered a software glitch just days ago that affected about 6,000 A320 jets. And though that problem has now mostly been fixed. Meanwhile, moving on to crypto, we are seeing crypto-linked stocks falling this morning. Amid this risk-off tone that we're seeing in markets, just moments ago, I checked, Bitcoin was down more than 5%, trading just above $86,000. And most of that has to do with the risk aversion we're seeing in markets, but also China's central bank saying that it plans to clamp down on crypto. And we end on Moderna. Those shares are also falling 4.2% in the pre-market on a major legal blow by a judge who rejected most of its attempt to avoid a patent lawsuit filed by Northwestern University. The company now faces claims that it misused the school's technology in order to develop its blockbuster COVID-19 vaccine. This is coming as the pharmaceutical company continues to struggle amid the decline of its COVID business. Lisa?
Thank you so much, Yahaira. On our radar this morning, President Trump downplaying concerns over escalations with Venezuela, saying people shouldn't read much into a post where he said the country's airspace should be considered closed. U.S. forces continuing to amass in the region. Can you explain what happened over the weekend, Emery?
There's a widening campaign, of course, in this administration when it comes to Venezuela, when it comes to the Caribbean. The president of the weekend had this truth social telling everyone to avoid the airspace. People felt like there was going to be a strike, something happened imminently in the country. Then the president on Sunday said, don't read too much into that post. So he's moving forward and then taking a step back, which is why everyone is in this precarious position on where the administration stands right now and what they want in terms of, is it regime change when it comes to Venezuela? The president said he did speak to Maduro, but we have no readout or understanding what the two leaders actually discussed.
How much is this an issue of trying to secure U.S. influence in Latin America? How much is this an issue of immigration? How much is this an issue of drugs? How can we understand this in the broader discussion, as we were having earlier this morning, of the U.S. seeking to plant its influence more significantly in Latin America?
Well, this is the conversation we had the last hour when it comes to narco-terrorism, when it comes to immigration to the United States, but also when it comes from influence from the likes of Russia and China in Latin America, and the United States really trying to claw that back into what they would assume is their own sphere of influence. We haven't just seen it in Venezuela. We've seen it in other countries as well, particularly in Argentina.
Yeah, and this raises questions about rare earth minerals and others, which we will continue to parse through. Meanwhile, Airbus facing new quality control issues. Reuters reporting the plane maker discovered problems with fuselage panels on several dozen A320 jets. This after the company was already repairing thousands of aircraft following flight control software issues. And President Trump saying he has decided on his pick to replace Fed Chair Jay Powell, and he is expecting his nominee to cut rates.
Are you Fed Chair? Are you any closer on that right now?
I know who I'm going to pick. Yeah.
Oh, tell us.
Kevin Hassett.
I'm not telling you.
Trump's chief economic advisor, Kevin Hassett, is seen as the front runner. I love the, ooh, tell me, in the background in terms of the reporter.
And then is it Kevin Hassett? He just smiled, and then he said, okay, that's enough for now, because he didn't want to get drawn into maybe adding more of what he thinks. Whether or not he actually knows who it is or not, he clearly has a front runner's mind, and is likely Kevin Hassett, who said, I think the market reaction to the rumors of him was quite positive. So didn't actually endorse that he should be the next Fed chair, but sort of did in a backwards way.
So we'll get drawn in by the Fed discussion. Bank of America Securities revising its Fed call and now expecting another 25 basis point cut at next week's meeting. Claudio Irigoyen of Bank of America Securities joining us now for more. Claudio, wonderful to have you. Thank you so much. What solidified it for you, the idea that next month really was going to be a lock, or this month, I suppose I should say, for the Fed rate cut?
I think there is a lot of focus on December or not. Now the market priced more than 100% probability of December. But to me, the underlying question is what the market expects the Fed to do versus what the Fed should do. And this is important coming into next year because we're going to have a new chairman, probably with a mandate to cut interest rates. And when you take a look at the economy, financial conditions are not tight. The economy is doing well. We actually revised our forecast for next year to 2.4% growth. And by the way, the call that we have for December comes with another 2 cuts in June and July. So we're still sticking to 3 to 3.25 as a terminal rate, which we already think it's quite accommodative in nature, really. So to me, the question is, okay, if they cut 2, 3, 4 times between now and mid next year, what's going to happen to the economy? What's going to happen to inflation expectations? Because to be honest, there is zero chance that we're going to have inflation, core PCE coming close to the target before the end of next year. In fact, with the exception of China and Europe, most of the central banks in the world will have inflation above their targets. So most of the central banks are coming to the end of the easing cycle.
Why then are we seeing inflation expectations so contained in market probabilities? Maybe not necessarily in the University of Michigan sentiment survey, but certainly in terms of market pricing. Why have we not seen markets sort of clamor to revive their bond vigilante spirits?
I think there are a combination of things, probably some technical issues also playing in the market. Markets focus a lot on long-term inflation expectations. Companies cannot care less about 10-year inflation expectations. They don't make decisions based on that. They focus more on 1-2 years inflation expectations. And those numbers, as you said, as you mentioned, they're not 2%, not nearly close to that. So I think there is still an underlying issue. Let's see what happens with tariffs. Let's see what happens with the Supreme Court ruling on AIPA. That can change things in the short term. But there is an underlying issue with inflation that has nothing to do with tariffs that indicates that inflation will be persistently high and above the target.
So if the Fed cuts in December, which, as you said, it's more than 100% chance, what happens for 2026? How do they continuously cut interest rates if you think inflation is going to be this underlying problem?
Well, it's the debate between what they are going to do and what they should do. Let's not forget that between the December meeting and the January meeting, you're going to have 3 employment numbers, 2 CPI numbers, 2 unemployment rate numbers. You're going to have a lot of information. It wouldn't have been a bad idea to say, listen, we remain on hold in December. There is a lot of data that we need to revise. And if conditions are guaranteed, we're going to cut again, because the last 2 cuts were insurance cuts, which means that the Fed didn't have sufficient information to say this is the right thing to do. This is just in case we are wrong. Another insurance cut, 3 insurance cuts, I mean, probably too much.
You think financial conditions aren't tight right now?
They are not.
But aren't they tight for the lower end consumer?
Not necessarily. I mean, with consumption, there is a tricky thing. This is what we call K-shaped consumption. And we have very good credit card data at Bank of America, and you can see that consumption is driven by middle and higher income brackets. Lower income brackets is no more than 15–20% of aggregate consumption, so it's not that important. That's where you're seeing some delinquencies, some issues, but aggregate consumption is fine. There is the linking between the labor market and aggregate consumption, and the question is 6 months from now, are we going to see much weaker consumption or much stronger labor market because companies will revise their hiring plans because much lower uncertainty about tariffs, etc. And probably it's going to be the second, the labor market recovering to continue supporting consumption. So if that is the case, you're going to see 6 months from now a very strong economy that might make you think that these cuts were probably too much. So 3 months from now, not even 6, 3 months from now, it's going to be interesting before the new chairman of the Fed. Probably want to know who's going to be by then, but before the new chairman of the Fed takes over the Fed, where the economy is. Because the first half of the year, you're going to have a significant fiscal impulse. It's an electoral year. Probably Trump will de-escalate on trade tensions and focus more on deregulation. So absent a spike in inflation that tighten financial conditions or a correction in the stock market because of AI-driven story, the economy will look strong.
The picture they're painting is really interesting, especially given that you're head of global economics for Bank of America, because this isn't just a U.S. story. This really is a global story with respect to huge debt loads in a lot of developed markets, persistently high inflation above that 2% target, and a feeling that politically people cannot pull the strings and actually cut those deficits. So how much are you looking at maybe a good global growth backdrop next year, but potentially a really bad backdrop for debt going into a potential year where every economy has an incentive to run their society hot?
Yeah, I mean, 2025 was about 5 themes. Trump, policies and the associated uncertainty, AI boom, the idea that productivity will boom in the future, China overcapacity, important because China is exporting deflation and goods to the rest of the world, fiscal deficits, and excess global liquidity. So what's going to change into 2026? Probably Trump is going to focus more on deregulation and less on trade escalation, but the rest of the things will be relevant. And excess global liquidity, I think it's key because people focus on the labor market the stock market making new high here, but stock markets are making new highs everywhere, in Japan, in China, in Latin America, you name it. And emerging markets are rallying, the spreads are making new tights every day, and gold is also rallying, and private credit is also rallying. So when everything is rallying across all asset classes, across all the regions, has to be something else, has to be a common factor, and I think that common factor is excess global liquidity. So and those imbalances are important because any shock that hits those imbalances and tighten global financial conditions, for instance, higher inflation in the US that forced the Fed to review their policies, can contaminate the global backdrop very quickly.
Do you think the US is still going to be the brightest shirt in a dirty laundry bin or whatever cliche you want to use?
Well, I mean, fiscal problems are not the US problem only, right? You have fiscal problems in Japan, you have fiscal problems in the UK. Actually, there is a convergence between developed and emerging markets for the wrong reasons, right? In the sense that some of the problems in developed are similar to the historical emerging market problems in terms of the dynamics. But if you take a look at growth projections, we expect 1% growth for Europe and 2.5% growth for the US, and less than 1% growth for Japan. So within developed economies, the US story seems to be the brightest story still there.
Claudio Irigoyen, thank you so much for being with us. Claudio Irigoyen, head of global economics for Bank of America Securities. Right now, let's get you an update on stories elsewhere. Here is your Bloomberg brief with Vonnie Quinn. Vonnie.
Lisa, thank you. Indonesia's National Disaster Agency says heavy rain and flooding has killed more than 300 people. Another 279 are listed as missing, while more than 126,000 have been displaced. Authorities are relying on helicopters and light aircraft to deliver aid, with major roads and bridges cut in some districts. U.S. Special Envoy Steve Witkoff heading to Moscow as U.S. and Ukrainian negotiators say they had productive discussions about a framework for a peace deal. The two sides discussed potential parameters for a ceasefire as they pored over a 19-point proposal that emerged in Geneva last week. Disney's Zootopia 2 won the holiday weekend box office. The movie brought in $156 million at the US and Canadian box office over the Thanksgiving weekend. The film achieved the highest global opening for any animated picture in Disney's history, with a haul of $556 million worldwide. And that is your Bloomberg brief. Lisa.
Thank you so much, Vonnie. Up next, credit skepticism.
That skepticism is predicated on concerns about your AI, about private credit, and obviously what's going to happen with the Fed at their December meeting. We actually see going into 2026 a very optimistic scenario playing out.
Amanda Lydham of BlackRock joins us next. This is Bloomberg Surveillance.
Climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
A bit of softer tone to start the last month of the year after a 7th straight monthly gain for the S&P 500, down 0.7% now on the S&P futures. You are seeing that decline continue to grind further at session lows right now. Your 10-year yields just up less than 3 basis points as people game out Fed strategy. Under surveillance this morning, credit skepticism.
That skepticism is predicated on concerns about AI, about private credit, and obviously what's going to happen with the Fed at their December meeting. So those three things are kind of weighing on investors' minds, but we actually see going into 2026 a very optimistic scenario playing out.
Here's the latest. Private credit concerns continuing to weigh on investors, even as losses from defaults are staying low. Amanda Lynham of BlackRock writing this: "We believe the peak in defaults in the public credit market is behind us." Amanda joins us now. Amanda, thank you so much for being with us.
Thank you for having me.
This is the big question, right? How much are people pricing to perfection credit at a time when potentially defaults are going to inflect upward? There's been a lot of debt issuance in the tech space, and there's a feeling that private credit has gotten a little bit heady.
Okay, so I think there are a couple things to note. One is we often get asked in the corporate default market or corporate credit market when the peak in defaults is actually going to arrive. And what we point investors to is the data that actually shows in the leveraged loan market, for example, defaults peaked in November of 2024 at 7.7%, which is actually a fairly high number. That's using Moody's data, issuer-weighted trailing 12 months. But the point is that we think the peak in trade policy uncertainty is likely behind us. We think the peak in growth concerns is behind us, and we think the peak in debt service cost headwinds from higher interest rates is behind us. So when you put those three things together, coupled with a good enough growth backdrop in 2026, it's hard for us to envision a new peak in corporate credit defaults. And again, keeping in mind that we've already had kind of this flush in 2024 because of the high borrowing costs. I think coupled with that, our view for corporate credit, both liquid and private, is one of dispersion but not widespread market disruption. And I think that's really the key point to keep in mind.
So a positive outlook, a constructive outlook, as long as you're careful and you don't get some of the bad stuff. A real question, though, about just the spreads are pretty tight.
Yes.
But you have had a pretty loose market.
Right.
And there is a feeling that maybe the appetite is waning for some of the tech-related debt, in a sense that maybe things have gone a little bit too far too fast.
It's a great point. Our view on credit is that if you're owning credit, you should be owning credit for income and yield, not necessarily because there's room for spreads to move materially tighter, and actually not because we think intermediate or long end rates are going lower. So that's really the view. That's a different way of thinking about credit versus past regimes when you had kind of a total return boost from tighter spreads and lower rates. It's really that income component. I would say to your second part of your question, we're not really seeing on the ground that appetite is waning to a large degree in credit. In fact, a lot of these episodes of widening, and by the way, we think episodic volatility is a feature, not a bug of this market, but those periods of episodic widening, they're getting bought. And so where high yield spreads are actually back below 275 using your Bloomberg index. So it's really, to us, I think, pretty evident that there is a fair amount of capital on the sidelines. It's income and yield based. There is demand. And I think while spreads are tight, our view is that the bar for a sustained sell-off in credit spreads is also quite high. To get that, you would really need a severe deterioration in the growth backdrop, and we're really not seeing that, which goes back to this point of there's a lot of dispersion. There will be winners and losers. Not every part of the credit market is keeping pace with this tightening, but we don't see an environment of widespread market disruption.
When you look at the uncertainty, though, you named policy like tariffs uncertainty being one of them that you feel like you are past. Does it bother you that we still don't have a decision from the Supreme Court on IEEPA?
I think our view is that if the Supreme Court does strike down the IEEPA tariffs, that the administration has been pretty clear that they have other tools in their toolkit, such as sector-specific tariffs. So our view is basically that tariffs in this regime are likely to remain in place in some form. The key question is, are corporates adapting to that? And actually what we see in the margin perspective is that actually margins are holding in relatively well, and corporates have been forced to find other ways to protect their bottom line, whether that's through operational efficiencies that were originally supposed to take place over a couple of years, maybe they're front-loaded, changing product mix, eliminating some SKUs. So it's really a bet on the management teams to figure this out, just like during the pandemic. The trend of corporate resilience was actually much more pronounced than I think many market participants feared.
There's
So there's the fiscal side of this and the administration side of this, and then there's the monetary side of this. And we've been talking about the expected rate cuts coming this month as well as potentially next year. And you said that you do think that some of the peak rates and peak uncertainty around that has faded. At what point is that sort of a necessary ingredient for your constructive outlook on credit next year?
Sure. So I think our view on the monetary policy path from here is that there's probably 1 or 2 more rate cuts in the pipeline. But as we get closer to neutral, and Chair Powell has said we're probably already at the high end of some estimates of neutral, that will become a more delicate balance between their dual mandate. And so really what we've been emphasizing is the depth and the drivers of this rate cutting cycle are far more important than the timing of this. And if the drivers of the rate cutting cycle are driven by a significant deterioration in the labor market, that's not a great outcome for credit. By contrast, if the drivers of the rate cutting cycle are ongoing improvement in inflation, then that's a more benign outcome for credit. That said, it's hard for us to see rates going below neutral. We're expecting a normalization of monetary policy, not a sharp easing. So I think that income play on credit remains intact to a certain degree. It's moderated, of course, from the peak as rates have come down. But again, that's a double-edged sword. The yield backdrop for investors has moderated, but so too, there's been some relief in debt servicing costs for corporate borrowers, which is important.
You were talking about being selective, and I do wonder, happy birthday, ChatGPT, 3rd birthday. We should just touch on how much debt has been issued from the tech giants. We have seen $100 billion of debt tied to OpenAI and data centers that do provide services to them over the past number of months. I just wonder, does that make you nervous? Does that make you want to stay away from that debt as a potential pothole in an otherwise pretty bright backdrop?
So I think we view this as a bit of a regime shift in terms of the leadership of issuance at the sector level. As you noted, technology issuance actually months ago outpaced all other full years on record in the US IG market. So it's been kind of a real paradigm shift in the way that the market is absorbing tech issuance. We think there's a lot more room for this to play out. Actually, if you just look at a very modest estimate of increasing gross leverage by half a turn for the Mag 7 ex Tesla, so excluding autos, there's hundreds of billions of debt capacity that could be added. So that's a large amount of debt, actually upwards of $400 billion. And again, a modest tweak in leverage. We don't expect all of that to be used immediately. We think more likely it will be gradual over time. But I think the market is adapting to a realization that tech will be a larger contributor to issuance. But again, the demand for this has been very robust. And I think just like in sectors like biotech, where there are drug discoveries that happen years after bonds mature, it's almost a similar bet on the management teams.
So you'd be patient. You'd be buying.
I think from our perspective, we think that this is actually a regime shift that has been met with a significant amount of investor demand.
Amanda, awesome to see you. Thank you so much for being here. Amanda Lynham of BlackRock here with us in New York. We are talking about the debt backdrop because that has been what's gotten people nervous over the past couple of weeks and months. This idea that this is a new segment of this story, which is it is including a little bit more leverage.
Right. And to Amanda's point, though, the appetite has been insatiable. And you mentioned it, $100 billion these tech companies are tapping the debt markets for. And people are just buying it up consistently. The appetite has been robust and healthy. At the same time, a lot of people are saying, where are we actually going to see the shovels in the ground, the data centers being built? Remains to be seen. Maybe 2026 story.
Well, 2026 will be a story of a question around the debt, but also a question around the evolution of AI. Coming up, we'll talk about that with Seema Shah of Principal Asset Management, Leo Feller of Numerator, Abigail Watt of UBS, and Oksana Aronov of JP Morgan Asset Management. You're watching Bloomberg Surveillance. Good morning.
So I know from owning a sports team that owning one team takes a lot of energy and time.
Tell me about it, yeah.
So you decided after you bought the Washington Spirits to buy some other soccer teams. So you bought stakes in a team in England, is that right?
Yes. I bought a team called London City Lionesses, and that is the only one of the 2 teams in the entire, potentially Great Britain, that are independent. 99% of the teams in Europe are part of the men's team. But this is one of the only 2 teams that was independent.
So now you have 2 soccer teams, one in England and one in the United States. So I would think for most people that might be enough, but you decide to buy a team in France as well?
Yes. Olympique Lyonnais Feminine is actually the best women's team in the history of women's football. In terms of how many trophies the team has won, they are the 8 times champions of the Pan-European League. And I can't even count how many times they won the French domestic league, the most successful team. I want to professionalize women's sports, right? I don't want people to think that somehow women's sports is a charity or a corporate DEI project. This is a legitimate entertainment product, and it is a business.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
The fulcrum of this market has been big tech.
We are still in the early stage of this AI investment or AI arms race.
We actually see going into 2026 a very optimistic scenario playing out.
The air is coming out of the bubble rather than the bubble bursting.
To call this a bubble, it's wrong.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. Questions swirling about the resilience of big tech on ChatGPT's third birthday, with the forgotten 493 continuing a streak of outperformance. All eyes on who President Trump has picked to be the next Fed chair, with growing bets of a December rate cut bolstering last month's risk-on flavor, and a focus on the little bits of data we get this week to determine whether the economy is speeding up or slowing down. It was supposed to be non-farm payrolls on Friday. It is not. It is now ISM Manufacturing Monday. Anne-Marie?
It doesn't feel like the first week of a new month, and by the way, the last month of the year. Where has this year gone? Without the jobs report on Friday. But if we were going to get it, all this data we're getting, at least a lot of it, is going to be really stale, like the PCE on Friday. So I'm looking at actually what happened in terms of real money being spent when it comes to Black Friday. Potentially we'll get a readout end of evening when it comes to Cyber Monday. And even though you made a really good point about hasn't been adjusted for inflation, the consumer is still holding up. We're talking about billions and billions of dollars the American consumers decided to go out or online and spend on Friday, and that's continuing into the weekend, potentially into this week as well.
This is the reason why people are kind of at a crossroads. You're seeing a more than 100% chance of a Fed rate cut being priced into Fed funds futures right now for the meeting that happens next week from the Federal Reserve. You have this idea that going forward, they will have space to continue cutting rates going forward. At the same time that you've got a resilient consumer, and you have Claudio Irigoyen of Bank of America saying he thinks that inflation is going to remain persistently higher and really test the hands of a lot of central bankers. It kind of raises raises this question: how data dependent is this Federal Reserve within the absence of data and at a time of changing personnel?
Right, but the current Fed chair, Jay Powell, has made it clear you can pretty much look through the inflation prints because we're not going to see the potential pass on from tariffs all at once. You can look through all the hot inflation prints at the same time. They have been concerned about what's going on in the labor market. All of this is happening while we get a changing of the guard. And the president said yesterday on Air Force One, flying back to Washington, D.C., that in his mind, he knows who he's going to pick, and it comes on the heels of our colleagues reporting at Bloomberg that in the prime position is his chief economist, Kevin Hassett.
So will he cut rates? Will it be Kevin Hassett? Will ISM Manufacturing show something? Here's what we've got coming up for the day ahead. At 10 a.m. Eastern, we do get that ISM Manufacturing. Watch out for new orders, employment, and prices paid. The components are all going to have a greater degree of importance. President Trump will be signing bills. Jerome Powell will be speaking tonight at 8 p.m. Eastern at an event in Stanford. It is, of course, the quiet period for the Federal Reserve, but it is a memorial event, and we're going to be watching it as well. And then, of course, we do have Steve Witkoff heading to Russia, the whole question, the backdrop of Russia-U.S.-Ukraine discussions. Right now, we are seeing bonds and stocks continuing just to sell off a touch to start the new month, down 0.7% in S&P futures, yields higher by about 2 basis points on the 10-year. Coming up this hour, Seema Shah of Principal Asset Management with stocks edging lower. Leo Feeler of Numerator providing a consumer check-in as the holiday shopping season rolls on, and Abigail Watt of UBS previewing a crucial week, potentially, of economic data, or economic data light. We begin this hour with stocks sliding to the kickoff, the final trading month of 2025. Seema Shah of Principal Asset Management writing, AI will remain the dominant force in the year ahead, although mounting concerns over a potential bubble may limit its ability to propel equity markets and household wealth. Seema joins us now. Seema, thank you so much for being here. Great to see you.
Great to be here.
So start with this conundrum. On one hand, you can believe that AI is a transformative technology that will have a huge impact on the world as we know it, but there still are questions about valuations. How are you sort of parsing that conundrum, or as you call it, paradox in 2026?
Yeah, I think what we're seeing, at least this has really taken off over the last 2 or 3 months, is that narrative has shifted. So there's still optimism about what AI can potentially deliver in the long term, but there are concerns that we don't really know. And how can we continue to invest in such a huge amount in something that we don't know exactly when it's going to start to deliver their return on interest on investment? So we think it's still going to drive markets. We think it's still going to be really key. But in terms of how much it really propels equity markets, how important it is for household wealth, that starts to diminish. Now, that doesn't need to be a really negative story, but it does mean that we need to start thinking about where else we're going to be getting this growth from.
Yeah, especially given the fact that a big question is the state of the consumer, the state of the rest of the economy. A lot of people have been coming on the show looking into their crystal ball, saying 2026 is going to be the year of the rest of the 493, that's going to be the adoption, that's going to be a real question of a broadening out in a trade in equities. Do you agree with that?
I think there is definitely room for the other 493 to do fairly well. I mean, we've seen signs of that already this year. And when we're looking forward to 2026, we have a fairly constructive macro outlook. It's not accelerating growth, it's not incredibly strong growth, but it's fairly mundane, benign. And in that kind of backdrop, you can see other sectors performing fairly well. We still like financials. We think consumer discretionary can actually do pretty well in the first quarter of the year. So there are areas, but I do think at the same time, it is very difficult to completely separate AI from any of the narratives out there, particularly within the macro space. I mean, when we talk to clients, we talk about inflation, unemployment rates, growth, wherever you talk now, AI is a really key component of it all.
Going into the end of the year, what are clients most nervous about?
They're still very worried about the AI bubble. I mean, that's their key concern. They want to make sure.
Even more than the Fed?
Even more than the Fed, actually. And it's been an interesting shift in the last couple of weeks where there was real concern about what the Fed was going to do. Now there's the almost full pricing of a rate cut in December. And there's also this belief that the Fed will continue to deliver as necessary. So this feeling that policymakers are still going to be there to prop up the economy, prop up the market if necessary. And I think that's a real reassurance.
You talked about the forces that define 2025, inflationary pressures, the policy uncertainty out of Washington. Some of that has been quite acute. And you said it's going to shape the contours of 2026. When you look at policy, what exactly do you think is going to shape from 2025 into 2026?
So I think, these are real anchors for the economy. They always have been. This year, everything has been a little bit more heightened with the change in administration, the tariffs, et cetera. Now, for 2026, we think that tariffs is still a story. It's just that companies
know a little bit more about the way that the administration is behaving. I think companies have decided are able to adapt. So that's key. Inflation is also still there, lingering in the background, still worries about how companies are going to pass it on to consumers, what happens to their margins, but it's less of a concern. So a lot of these things are still there, they're shaping the contours, but we have found that companies and consumers are able to think beyond that, so that increasingly there are other narratives that we need to be thinking of.
So you have a very global investor base that you talk to, a very global client base. And I would love to understand if the story of AI optimism with the backdrop potentially of worries of valuation, is that a US story or is that an international story that kind of weighs the same way in, say, Asia and, say, Europe?
So it's a theme that all investors, wherever we're talking to, are still thinking about, but thinking about it in slightly different ways. So if you're in Europe, the fact that there are concerns about AI valuations does mean that Europe is a little bit more attractive. Nobody's expecting it to be a complete outperformer, but its stability and the fact that it has less exposure to technology within the main indices is a key winning point. So that is a kind of a focus of, we want to diversify, Europe may be a point of stability. And within Asia, a lot of people, of course, believe in the AI narrative still, but they're looking at the valuations which are a little bit more attractive than what you're getting in the US. So actually for 2026, people believe in AI still, there are concerns, but what it means is that they are trying to shift their global exposure to focusing a little bit more on Europe, focusing a little bit more in Asia. You still have some exposure to the US, of course, but it's more of a global diversification story than I think it was at the beginning of 2025.
How much does this play out both in bond markets and currencies? Because people have been looking for an excuse, or they were at least earlier this year, to diversify away from the United States. How much are they going to take this opportunity to do so on a non-currency hedged basis, meaning that there will be that sort of dollar depreciation that a lot of people were expecting to continue into the second half of this year?
It's funny, that doesn't seem to come up that much in conversations at the moment. I mean, when we're talking about the dollar as well, the growing belief is that, look, the dollar has essentially stabilized from here. We're not going to expect to see very significant movements. So that is a slightly different, tone to the talks that we were having about 6 months ago. So the focus, again, on Europe, on Asia, on parts of emerging markets, still very, very key without necessarily having to worry about the currency aspect.
We were talking to Claudia Irigoyen of Bank of America. It really stuck with me, this idea that you could see inflation pick up around the world and accommodative policies from developed markets around the world, because there isn't the political will to push back against this, which means that inflation is going to remain high. And it just sounds like a really bad backdrop for bonds. I mean, at this point, why not just invest in real assets, in stocks, and avoid the bond market altogether, particularly from the developed market, unless you're really just looking to lock in and sort of immunize any kind of schedule of payments that you have?
Yeah, I think we are expecting inflation to be somewhat elevated, right? So still above central bank targets, but it's not very volatile. We're not expecting inflation to be creeping higher, or at least to moving significantly higher over the coming months. So that's still a constructive backdrop for bonds. Having said that, though, we do think that there are other opportunities beyond the bond space. You mentioned private markets, real estate, infrastructure. Those are all really interesting stories in this backdrop where you have persistent inflation, but it doesn't necessarily detract very, very significantly from bonds.
What else do you like? Are you still interested in gold? It was a story of 2025. Think it persists in 2026?
I think that gold has had a lot of its heyday. That doesn't mean that it's going to come dropping back down again, but so much of the reason that people were excited about gold this year was about political instability. And I think going into 2026, that concern is fading a little bit. In terms of, from a long-term structural perspective, worries about what happens over the long-term credibility of your institutions, I don't think that's disappearing entirely. But having faded a little bit from the general narrative, it means that the shine on gold is fading a little bit. And so we start to think about where the other opportunities are.
You're visiting us from London. I'd love to get your perspective on what's going on in Europe right now, because they seem to be caught in the middle between what is going on with China and the United States.
Yeah, they are. And I think, whereas once it was a lot about which part of the world we're going to lean into, I think increasingly the biggest concern is that as China navigates this tariff environment with the US, they try to double down on where can they export to. Europe is really sitting in the crosshairs of that. So, in the last few years, we've seen all these concerns from the US saying that China's industrial policy has really hurt the US. It could be that the narrative starts to shift where for Europe, it does become a real concern. And so for Europe, it becomes increasingly important that governments really do invest in the infrastructure. What are the other industries that can really do well to take over the baton from the manufacturing sector? So I think that is key, especially from the deflationary side. What is the ECB and how are they going to be responding to some of these risks.
Seema Shah, thank you so much for being with us, and great to see you in person. Seema Shah of Principal Asset Management. Right now, let's get you an update on stories elsewhere this morning. Here is a Bloomberg Brief with Vonnie Quinn. Vonnie.
Lisa, thank you. President Donald Trump is downplaying his social media post that called on airlines to consider Venezuelan airspace closed. U.S. forces have been massing in the region as Trump weighs military action that would go beyond strikes on suspected drug boats. Venezuela's government called Trump's remarks hostile and demanded unrestricted respect for its airspace. Eli Lilly is once again cutting the prices of introductory doses for its popular weight loss drug, Zepbound. Starting today, the lowest dose vial for cash-paying customers drops to $299 a month. It's the latest move in a price war with Novo Nordisk, which is making it significantly less expensive for people to start on the medicines. In sports, the Buffalo Bills dominated the Pittsburgh Steelers 26-7, while the Seattle Seahawks pitched a shutout, blanking the Vikings 26-0. Elsewhere, the Texans held on, beating the Colts as the Jaguars took down the Titans to jump into first place of the AFC South. Finally, the Denver Broncos narrowly escaped in overtime against the Commanders, winning a Sunday night thriller 27-26. And that is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. I never thought I would see Anne-Marie get excited about
Everyone
football.
knows. I'm not
You
a big...
actually said, you're like, don't ask me to talk about this.
No, usually. But my dad was so excited yesterday, and so was Mohamed El-Arian, because the Jets finally won. They never win, and they won yesterday, 27-24 against the Atlanta Falcons. And it wasn't in our brief.
Okay, well, you just did.
I bet,
so thank you.
I bet that's a Giants fan.
Oh, yeah, writing that brief. It's a conspiracy theory. We'll dig into that. Up next, the morning calls, plus Leo Feller of Numerator with a consumer check-in as the holiday shopping season rolls on. That's coming up next. This is Bloomberg Surveillance.
Politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
We're coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can't be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech innovation.
Is it better to pay down our nation's debt? And as you pay down our nation's debt, then it makes it easier to lower interest rates, for the Fed to lower interest rates, which then lowers a mortgage payment, which then maybe lower other credit forms of credit. As you do that, you make life more affordable that way. The other thing you have to worry about is if you give everybody a $2,000 check, does that bump up inflation, and therefore the Fed is inhibited on lowering their rates?
That was Louisiana Senator Bill Cassidy taking on the issue of affordability, which has so dominated Washington, D.C., very much front and focus as we get a smattering of data, not the official stuff this week in terms of non-farm payrolls, but still we do get ISM manufacturing later today, ISM services on Wednesday, and of course jobless claims on Thursday. Right now we are seeing those declines, but the outperformance has been from the equal weight. The S&P futures down less than everything else, which is really interesting given the continued underperformance of big tech, down 0.7% in the S&P futures. NASDAQ futures down almost a full percentage point, building on losses from last month, even though we did see some potential optimism springing, at least from the guests that we have here. Also, the Russell 2000 down 1%. Time now for the morning calls. First up, Bernstein cutting Zscaler to market perform with a $264 price target, saying recent results have, quote, added narrative issues, feeding into worries about increased competition. Those shares down 0.8%. Next up, Stifel cutting its price target in Home Depot to $350, citing third quarter results that point to a weaker underlying category, not captured by expectations, down about 0.5%. And finally, JP Morgan raising its price target in Ulta Beauty to $606. The firm believing Ulta optimized promotions during the third quarter. It expects upward estimate revisions after its earnings print. Do they really have good promotions, Emery? Do you shop at Ulta or you don't shop at Ulta?
No, I do. I do shop
Okay.
at Ulta. Yeah,
All
why
right.
not?
All
I do a mix of Sephora and Ulta Beauty, but Ulta Beauty has been on an absolute tear with the younger generation that does all these skincare regimes for their social media, and you have to go out and replenish. So I might go check out Ulta Beauty today for Cyber
All right,
Monday.
there you go. All right, there's your pitch.
The emails
There's
are coming in
yeah,
hot.
well, now they're not going to stop after that. Sticking with retail, U.S. shoppers demonstrating their resilience, including Anne-Marie, to kick off the holiday season. As Black Friday sales increased to over 4%, Leo Feller is the chief economist at Numerator, which tracks consumer and economic data. He writes, we keep seeing retail spending increasing, even for lower income consumers. So consumers saying they'll cut back doesn't necessarily mean they'll cut back. Watch what they do, not what they say. Leah joins us now. Leo, can you start there and talk about what you're seeing so far in this shopping season?
Yeah, thanks so much for having me. So it's definitely the case that consumers say that they are very pessimistic about current economic conditions. And yet this entire year, we've really seen consumers from lower end to higher income consumers increasing the amount that they are spending. And this just suggests that consumers are being very resilient. Although we are seeing them being very selective. And so they're saying they're going to try to take advantage more of promotions, more of Black Friday sales. And this might mean that we saw some of this increase that you saw right now in Black Friday sales is consumers pulling forward some of their holiday spending to take advantage of sales and promotions.
Leo, Lisa mentioned it earlier on the program. It's a record amount of spending, $11.8 billion online on Friday alone, 9.1% jump from last year, according to Adobe Analytics. But when you start to include inflation in that number, is it basically flat where we were in 2024?
Yeah, that's the right way to think about it. I mean, even in inflation-adjusted terms, the amount that people are buying has gone up, but the spend has gone up a lot more simply because we're seeing higher consumer prices. So with some work that I did at colleagues at the Federal Reserve, we saw that for products coming in from China, they are about 10% more expensive now than they were a year ago. So things like apparel, toys, home goods are all going to be more expensive this year than last year, and that means that consumers are, spending more, but not necessarily getting that much more.
When you see the consumer go out and spend in this K-shaped economy, where's the higher end spending and where's the lower end spending?
This is a great question. So we've seen kind of this bifurcation where club stores like Costco are doing extremely well with higher income consumers. And then you have your TJ Maxx's, your dollar stores, your Aldi's doing a lot better with lower income consumers. And so people really are trying to find better value, but that might mean buying in larger quantities, buying in bulk at a Costco, or just getting lower prices, more private label items at stores like Aldi.
What's your sense, Leo, of whether people are being more choiceful? I know that John, who is off this month, has talked about his dislike of that word, but this idea that people are being more deliberate about going out and shopping during times of promotion and looking for those deals. And that indicates really some discretion on the part of consumers, not necessarily, no holds barred, this idea of going out and spend the bank.
Oh, absolutely. This is very different than 2022 when consumers were flush with cash. Coming out of the pandemic, they had record levels of savings. They were spending down that savings. We had gotten stimulus checks. That was a consumer that was not being choiceful, right? People were upgrading towards brand name items, willing to splurge. This time around, we really are seeing consumers being more selective, both in terms of the retailers where they are shopping, in terms of taking advantage of sales and promotions. And this is why when we look at Black Friday sales, we have to be careful about what signal that gives about how the economy is doing overall, because if people are purposely trying to take advantage of sales and promotions, that might mean that they're going to be spending less in other parts of this holiday season and overall not really increasing their spending all that much, right? This is the kind of selectivity that we have to be watchful for, because consumers that are watching a buck are the ones that are going to be trying to make sure that they're taking the best advantage possible of all these, Black Friday, Cyber Monday type sales.
Which really goes to the conundrum right now, not only for the Federal Reserve, but for markets. And you said this at the beginning, or the comments that you said, that, essentially watch what they do, not what they say. They're saying they feel bad, but they keep spending. Is it possible for both to be true, for people to feel bad and for them to be cutting back, but continuing to spend anyway, at least in overall numbers? What's the read-through for the Federal Reserve, for the forward look of the economy?
Well, overall, this suggests that the economy is still doing okay. The labor market at 4.4% unemployment, that's a historically, not a bad level. And so, the Federal Reserve is in this conundrum where, the labor market is weakening, but it's still doing okay. Inflation has been stuck at around 3%. And we're actually seeing inflation ticking up in core consumer goods. These are products that are normally deflationary or disinflationary. And so this just means that the Fed is really stuck in its difficult position where they are trying to perhaps stimulate the labor market a little bit more, but in a situation where inflation remains high. So I expect a lot of dissent at this upcoming Federal Reserve meeting, given this very difficult situation they're in.
The market has the Fed cutting interest rates. They are more than 100%. They believe that they're going to cut, and you think there's going to be dissents. Do you think that maybe this next week's meeting is a pause from the Federal Reserve?
I think there was so much Fed speak coming into this Federal Reserve meeting where roughly half the members on the FOMC were saying, look, maybe we just wait for more data. We haven't gotten a lot of good data given the government shutdown to be able to make a firm decision at this point in time. And at the same time, we do have this labor market weakness. I really do think this should be a mixed decision right now. And they might err on the side of cutting, but, we have another meeting coming up in January, so it wouldn't be, that inconceivable that they might just skip a cut this meeting, wait for more data, and then make a decision in January about how to proceed.
Leo Feller of Numerator, thank you so much. Maybe the good news is that we don't have any more Fed speak, at least not official Fed speak, although Jay Powell is speaking later today at an memorial event over in Stanford.
You brought up a good point, though, and we talked about this before the show. There will be Q&A. Likely someone is going to ask a question about the meeting next week. And yes, they are in a blackout period, but maybe there's a wink, wink, nod, a sway.
Oh yeah, body language. We're going to be analyzing the body language in the absence
of other Fed
speak. Yeah, we're going to be looking at actually the data that does come out, albeit not maybe the gold standard. Still, some information coming out from the consumer. Coming up, we'll parse through that with Abigail Watt of UBS. Looking ahead to some of those trickles from what the consumer is feeling and doing. Plus, your higher on end with your morning movers. Mag 7 futures lower to kick off the final trading month of 2025, led lower by the Magnificent 7. From New York, this is Bloomberg Surveillance.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Vonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
We are starting the beginning of the last month of the year with a little bit of a softer tone pretty much across the board, a feeling that maybe this can't last, although there are people hoping for that Santa Claus rally. Down about 0.7 on S&P, looking at 10-year yields that actually are up almost 4 basis points now, 4.05%. What you are seeing on the euro is a bit of strength, dollar weakness, 116, the euro climbing by about 0.4%, and crude higher. Watch this space given the fact that OPEC Plus is putting a pause on some of the output increases that they had been engaging with to end the year. 1 hour away from the cash open, here are your morning movers with Yahira Anand. Yahira.
Hi, Lisa. It is the tech sector dragging us lower with the Mag 7 all in the red this morning as investors continue to question the investments surrounding AI and whether they will get a return. It's a concern that Deutsche Bank flagged in a note this morning remains prominent, with the Mag 7 losing ground in November for the first time since March. NVIDIA, I will also note, just announced it invested $2 billion in Synopsys stock. This is a company part of the chip supply chain, so just raising questions over the circular nature of these investments. Meanwhile, we are seeing Barrick Mining shares rising 3.8% on news that it is exploring an IPO of its North American gold assets. A lot has been happening with this company because amid record-breaking gold prices, it was not able to capitalize due to cost overruns and operational issues. So Elliott Management stepped in back in November, and it has a new CEO also shaking things up. And we end on Airbus, shares still in the red, though paring its losses down 5.3% over in Europe after it confirmed an earlier report that it found a quality issue on some fuselage panels on its A320 jets. This just compounds issues over its most popular aircraft, since just days ago it flagged a software glitch on about 6,000 of those jets. And this is all coming as Airbus rushes to meet ambitious targets for this year. Lisa.
Thank you so much, Yahira. Turning to the economy, we're not getting non-farm payrolls Friday. We would be getting a whole slew of data that we're not getting because of the backlog from the government shutdown. We are, however, getting ISM manufacturing, ISM services, ADP employment, and of course, that core PCE data from September on Friday. Bloomberg's Enda Curran joins us now. And what are we looking for, and why is this week particularly important, even though we don't get that sort of gold standard non-farm payrolls report?
As you say, mostly second-tier data, but Lisa, today we do get ISM manufacturing numbers at least. It's expected to tip upwards to around 49, which is a slight improvement, but if that's the case, it's still in contractionary territory and will mean that it's a 9th month of contractionary territory for that reading on the manufacturing sector. We know there's been a lot of pressure there from the uncertainty around tariffs and on trade policy, but also there will be a lot of focus on what those numbers today tell us about labour demand and broader demand for the manufacturing sector. So several clues that may come out of that. I think the bigger piece for this week, though, as you say, will be the core PCE reading on Friday. This is the Fed's preferred gauge of inflation. It's expected to tick up 0.2% on month, which would mean it's around 3% for the year. That would suggest that inflation is at least stable, even though, of course, it remains sticky and above the Fed's inflation target. But if you get a higher reading than that, of course, it might complicate further the already complicated Fed debate for next week. It's quite dated data. Of course, it's from September, but it's good as we have for, it's all we have for now, I should say.
Well, that's what I was going to say, and does it matter at all? Because ultimately it's so dated, and there's a real question around the integrity, the relevance, given the fact that we're in December right now, that will it really factor in at all to the potential Fed rate cut next week?
All very valid questions. They are so dated, these numbers at this stage, Lisa. We know the economy continues to evolve in real time, but it is literally all we have, because we're not going to get either any more jobs or employment data from the BLS before the Fed meeting, or of course the CPI data before the Fed meeting next week. So I think we're probably at a space now with the Fed officials whereby they've probably made up their mind on where they're at. You either are more worried about the labour market and what's happening there and what potentially might be happening in the months ahead, or you remain more worried about inflation. It's hard to think those views will change dramatically over the coming week. It's clearly going to be a close decision by the Fed. All we can go on were those most recent comments before blackout, which were leaning towards something of a dovish outcome, but by all accounts, it's clearly going to be a very live meeting.
And Curran, thank you so much for being with us. Right now, there is a 99% chance of a Fed rate cut next week. It has gone down from 102% earlier this morning based on Fed funds futures, but up from some 25% based on just a couple of weeks ago. So clearly, very much the base case.
And Enda is talking about the fact that, though, it's going to be a live meeting. And Leo was talking about earlier in the hour that there's going to be those individuals that dissent at this meeting. So maybe the market is getting ahead of its skis on what we think the Federal Reserve is going to do.
Well, let's get the view from UBS. Abigail Watt of UBS writing this: we still expect a cut in December. We expect there is very vocal disagreement to the point that we were just making, but we also expect a large majority of the committee will support the decision. Abigail joins us now. Abigail, I love that we've gone from a data-dependent Fed to a data non-existent Fed, the idea that we don't even have the inputs. What are you watching to really gauge the vocal disagreement and the outcome of next week's meeting?
Yeah, so look, I mean, it's totally fair to say we don't have the official statistics from the BLS. We should have got that non-farm payrolls report this Friday. We won't be getting that. And the data that we think, would be important for that decision will actually be released week after, right? December 16th, we should get the October-November data from the BLS. Now, we do have other data, though. The committee can see that you've seen initial claims running around a similar rate to before the kind of government shutdown. You can see that when we look across a range of other indicators, you're seeing a labour market that doesn't necessarily look like it's significantly improved since they had those kind of official numbers. And I think for the committee, there's a case of risk management here. If you don't have those official statistics, it feels like the risk is skewed towards removing that excess restrictiveness now in the case of the likelihood that you potentially do see weaker numbers the week after, right? So I think that's the decision in front of the committee as they go into the meeting.
Abigail, then it basically begs the question, how much harder is 2026 if they do end up cutting next week?
So I think 2026 will continue to see this tension for the FOMC. I think you're going to continue to see this issue of inflation pushing away from their target, but simultaneously a relatively soft labour market. And I think that ultimately means that you see the FOMC potentially leaning on that kind of risk management. How do we remove excess restrictiveness? So, I mean, in our expectations, we think they will cut at the meeting next week. And our sense is that they could cut again in January. But then I think that tension potentially becomes a little bit more challenging for them. Our sense would be that you could see a little bit of an improvement in the labour market as you go into the second quarter of next year. And alongside that, we think you should be seeing more tariff-related price pass-through. And that combination, we think, leaves them on hold for a little while through 2026.
Even with a Chair Hassett at the helm?
I think it's an important point to note. Obviously, there's potential for personnel change next year, a new Fed chair. Our sense is that you could see potentially another cut in September. If I think about our kind of meeting-by-meeting profile, we think that by that September meeting, you'll have a new Fed chair in, a bit of a shift in the committee, and alongside that, we think that you potentially see them removing a little bit more restrictiveness from that policy rate. But ultimately, we think that they get down to 3.25 by the end of 2026. We're not necessarily expecting that they deliver a significant easing in policy at this junction, but I do think that, some of the kind of changes in personnel and the sense that you'll be getting past the peak inflation impulse from tariffs, I think that potentially leads to leaning towards a kind of lower federal funds rate in terms of the distribution.
Let's say I'm not getting any of the gold standard data. And I'm saying, you know what? I'm going to look for my own. Not only are we going to get ADP, which I know we've got very excited about, and ISM manufacturing and services, but I can go to the shopping mall parking lots and see how many people are there. I can see the numbers from Adobe that came out in a positive way versus last year in terms of the total increase and say, actually, the consumer's doing pretty well. How valid is it to sort of look at anecdotes based on the corporate world and spending habits during peak promotional seasons and sort of extrapolate out a trend about the overall U.S. economy?
Yeah, so I think you're right to think about the period you're in and whether that's, I guess, a typical period for kind of the level of spending that you would see in the economy, right? I think we are in a period where you tend to see kind of that seasonal shopping coming out and you potentially see support from discounting, right? So I think when we think about the kind of consumer and the look forward from the patterns we see around holiday spending season, I think it does tell us something about the willingness of consumers to spend, but it doesn't necessarily mean that we would expect that that is a trend that can be persist and kind of pull forward. I think, you know, when we think about the end of the year and into early next year, when we get past this holiday spending season, our sense would be that you see more of a kind of inflation hit for consumers. And I think when you start to see that, we could see a little bit more retrenchment, we think, from the consumer through this period.
I just think about how every time I go upstate and I see the car lots being full in terms of car dealerships, I think, uh-oh, bad economy, bad economic season. Or if I see fewer of them, I think, wow, okay, they're flying off the shelves. Anne-Marie was talking about how she puts in her shopping cart a number of things, doesn't buy them, and then she gets the promotional email saying, why not continue to shop for these items? I wonder if things like that are actually signals about what the different retailers are doing in order to juice sales, right? I mean, is this a signal or is that noise?
I mean, I think it's a sign that the consumer is becoming more kind of selective and careful in terms of where they're choosing to spend. I think that's something that we've been seeing kind of actually through most of the year. You know, I think you've seen a consumer that is kind of choosing very carefully when they choose to come out and spend. This is something that our analysts have talked about at UBS. The kind of retail analysts have referenced this idea of coming out for holidays, but not necessarily maintaining that pace of spending. And I think that's the kind of key point here is I think when we look at the consumer, I think you can see that there is a group of consumers who are still flush with cash and kind of sitting on relatively healthy balance sheets. But I think, you know, there is an increasing portion of the consumer that looks like they're under pressure. And that pressure, we think, could potentially increase, you know, as we go through the end of the year and into next year. So I do think we're in this period potentially of adjustment for the consumer. But when we get into next year, you know, that big, beautiful Bill Act fiscal stimulus, we think could potentially help around tax season. So we're not outright pessimistic here. You know, I do think there is some optimism to come as we go into next year, though.
Abigail Watt, thank you so much for being with us. Abigail Watt of UBS. I do wonder, Anne-Marie, this idea of that shopping cart, and I know that that was just one anecdote, but we're all seeing that, right?
I've done that this morning already.
I mean, how much? But also they'll track
your
your moves, and I wonder, is this AI at work, right? Are these sort of like little algorithmic spies out there that are looking for you?
True. It's something that could be done now when you online shop that you just can't track if you are brick and mortar waiting for individuals to come in. You're not going to follow them around the store and see them pick something up and put it down, but you can track them all day long and potentially remind them you only have 24 hours, 12 hours, 6 hours, and you're like, yeah, I do kind of need that. Maybe I do buy it now.
Although there are those people that do follow you around at the stores. Are you sure you don't need any help? And then you sort of wonder, well, I can't ignore them the same way I can ignore an email. You have to sort of engage. Anyway, I'm digressing. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Vonnie Quinn. Vonnie.
Lisa, thank you. U.S. Special Envoy Steve Witkoff is heading to Moscow as U.S. and Ukrainian negotiators say they had productive discussions about a framework for a peace deal. The two sides discussed potential parameters for a ceasefire as they pored over a 19-point proposal that emerged in Geneva last weekend. Airbus facing new issues affecting fuselage panels of several dozen A320 family aircraft. The suspected production flaw is delaying some deliveries. This after the company was close to completing repairs on thousands of the same jets following flight control software issues linked to solar flares. Disney's Zootopia 2 won the holiday weekend box office. The movie brought in $156 million at the US and Canadian box office over the Thanksgiving weekend. The film achieved the highest global opening for any animated picture in Disney's history, with a haul of $556 million worldwide. And that is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. Up next, setting you up for the day ahead, plus Oksana Aronoff of JP Morgan Asset Management, as President Donald Trump says he has made his decision on the next Fed chair. This is Bloomberg Surveillance.
Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
To me, the underlying question is what the market expects the Fed to do versus what the Fed should do. And this is important coming into next year. What's going to happen to the economy? What's going to happen to inflation expectations? Because, to be honest, there is zero chance that we're going to have inflation, core PCE coming close to the target before the end of next year.
That was Claudio Irigoyen of Bank of America talking about, yes, the Fed may cut rates next week, but don't look for them to aggressively cut in the following year. And inflation is not going to hit those targets this morning. You're seeing equities futures just a bit softer to start the last week, the last month of the year. What we are seeing is the NASDAQ underperforming, down 0.9% following the loss last month. What we are seeing in the bond space is, yes, maybe the Fed will cut rates next week, and maybe next year there will be an additional couple of rate cuts. Nonetheless, that yield curve steepening has reasserted itself. So 2-year yields up 2 basis points, 3.5% on the long end. 30-year yields up now 6 basis points to 4.72%, raising a question about just what this means going forward about inflation expectations as well as the Fed path forward. Counting down to the opening bell, here's a trading diary for the week ahead. At 10 a.m. Eastern, we get ISM manufacturing data. At 4 p.m., President Trump signing congressional bills. And at 8 p.m., it is the blackout period, but Fed Chair Jay Powell is speaking at a memorial event. Tuesday, earnings from CrowdStrike. Wednesday, ISM services. And on Friday, core PCE, which sounds great, but it's for September, so don't get too excited. Turning back to the Federal Reserve, President Donald Trump saying he's decided on his pick to replace Chair Jay Powell. Sources telling us here at Bloomberg that Trump's chief economic advisor, Kevin Hassett, is the frontrunner. Oksana Aronov of JP Morgan Asset Management joins us now. Oksana, wonderful to see you. Thank you so much for being here.
Great being here, as always.
So I'd love to start there. This idea that the Fed is likely to cut next week, that is currently what's being fully priced into markets. And there's a sense that the economy is unclear, that there could be actually a reacceleration earlier next year. How much do you think that those inflation expectations are underpriced right now, akin to what we heard earlier from Claudio?
Can I just make a parallel between the Fed and that overly eager store associate following you around the department store?
Please, go for it.
Incessantly offering help, even though their actions are just like confusing you. And I think that's what the Fed has done. They're trying to be overly transparent. There's a lot of dissent within the Fed is what we're seeing. And we also know the Fed has had a history of just frankly not being agile enough, right? Staying low too long. Now they don't have the data. So frankly, their actions, as the kids say these days, are sus. And when we look at the lack of data and the data that we have had over the past, couple of weeks here and there, it has been, on balance, at least okay, right? Initial jobless claims came in lowest this year. The consumer is spending, even though consumer confidence seems to be declining, consumer spending seems to be okay. So what problem are we really trying to solve with this Fed cut? Because if the problem we're trying to solve is the one that's most talked about, which is affordability, that certainly hasn't happened since the Fed began this cutting cycle, because both long rates and mortgage rates are actually higher today than they were when the Fed began this cutting cycle in September of 2024. So I don't really see any reason for them to not stand pat here and just kind of see how the data develops. But of course, they are going to cut because of all of this turmoil that they're in. They're under a lot of pressure, politically and otherwise. And I think this cut is going to happen, and we'll see whether it's the right one. I think the data will prove them wrong as we head into 2026.
If they were to just stand pat and wait for the data to come in and then make a decision, basically a pause, with where the market is lining up for a decision, what is it, 99% now? Lisa's been tracking it all morning.
So widely as well.
Right, but right now, with the market basically saying that they are definitely going to cut, what kind of reaction would we see if they decided we were going to pause?
The market would not like it. I mean, equities wouldn't like it, bonds wouldn't like it in the short term, but in the long term, perhaps it would give the Fed some more credibility, which I think it is sorely lacking, frankly, and it would provide a real kind of a North Star that, look, the Fed is data-driven, and we don't have really decisive data, and so based on that and the data that they do have, the little bit that they do have, they're choosing to kind of abstain here.
When you say the Fed is lacking credibility, is it because basically they said they were going to get inflation down and they accepted 3%?
Well, yes, I mean, that's part of it, certainly. They are essentially trying to now create some sort of a dampener for their fiscal dominance that, we are living through the age of fiscal dominance. And so Fed's, not just credibility, but their really meaningfulness, impactfulness is just less. And again, we're seeing that in the fact that no matter what they do at the front end, the long end, which determines everything, right, in terms of costs, is just not budging. And so I think it's really the fiscal side of the house that has to get its game in order. And on that side, of course, everyone knows what they have to do. They just don't know how to get elected after they do it. So, and that's the story as old as time. So the Fed is in a really tough place here. And I think the new incoming chair has not only, the policy, the dual mandate, but also the necessity to kind of rethink perhaps even Fed modeling and how do they think about making these decisions so that there really is transparency and not just, this Fed member said this, and so the market odds sway this way, and then someone else says something else, and the market odds go the other way.
So somebody could take a look at all this and say, well, I'd rather just invest in Apple, or I'd rather just invest in Microsoft, or maybe just OpenAI, right? So there's this question of how much we're looking at the credit space as a haven from some of these discussions.
Because I think that the spattering of headlines that we've seen related to, defaults or write-downs, I think that's just the tip of the iceberg. I think there's a lot of news that are going to continue to break, which is not to say there's not a lot of fantastic private credit deals that are out there that probably were originated earlier on, but particularly the deals from 21, 22, perhaps not the most robust vintage. And also you've now had this trend of, private wealth space adopting a lot of these. And so the question becomes how much investment tourism, as I like to call it, is there? How well is the due diligence that's being done on these? And so I think there's going to be a lot more news when you look at defaults on the public side, on to the extent that we have any visibility into the private side, they are rising, but also distressed activity is picking up every year. So far this year, you've had $50 billion worth of distressed activity, and it's higher every year for the past several years. What does that mean? That means that this entire private credit ecosystem has created a way for companies that cannot refinance themselves to be taken out via private credit loan. Pay-in-kind activity is rising as well. So when you add all those up, you actually have a credit backdrop that's not nearly as robust as your sort of official default rate suggests. And one last point I'll make on that BDCs, which are the daily valued vehicles consisting of private loans, which are perhaps our, one of the few ways for us to gauge what's happening on the private loan side, which is so opaque, they've completely disconnected from the high yield and the leveraged loan markets, which are, presumably the building blocks in terms of credit quality, and are off, double digits versus high yield markets that have done well so far this year.
So the whole idea of still standing in the kitchen with the lights off, you don't know what kind of creepy crawlies are going around until you turn the lights on. It's sort of the akin to Warren Buffett with the tide rolling out, and you can see who's swimming naked. And I just wonder, well, how do you range your portfolio with this? If you see potential downside risk for treasuries, you see potential downside risk for credit, and we're heading into a year where people are feeling uncertain about the AI story. I mean, what are you overweight?
So we very much like protection on credit here. Not because we see sort of any kind of imminent risk, but we do know that it's not a question of if, it's a question of when, right? I always say that everyone is obsessed with identifying the top of the equity market, which is pretty much impossible to do because equities move on sentiment and bonds move on math. And when you look at investment grade spreads and see that they have been wider 95% of the time in history, or 97% of the time in history, when you look at high yield spreads and they've been wider 95% time throughout their 50, 45-year history, this is the top, and it's just a question of when, not if. So we do like credit protection here, something that is incredibly inexpensive because most people are not thinking about it. Most people are thinking about how do I maximize yield here? How do I, get a little bit more yield into my portfolio? Which, several years ago, getting what we're getting at the front end of the curve, which is still more than what you're getting at the long end of the curve, was fantastic. So we are staying defensive, not because we're not constructive on the economy, because we are. And we do think the economy will prove to be more resilient than is currently being priced in. But we realize that that's probably not a great thing for duration or interest rate risk. And also credit has some real issues underneath, and we want to be protected to take advantage of that.
Oksana, wonderful to see you. Thank you so much for being here. Oksana Aronov of JP Morgan Asset Management. Coming up tomorrow, Cameron Dawson of New Edge Wealth, Apollo Global Management President Jim Zelter, Katie Kaminsky of Alpha Simplex, and Lindsay Piegza of Stifel. This was Bloomberg Surveillance, the first day of the last month of the year. Good morning.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
I met him in 1988 after my first restaurant opened. He asked me to come to open the restaurant in New York. And beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know. What he doing? Because I never watched the movies, I was traveling the business. But of course, after, people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's, for me, and a great partner. He understands to my concept. He supports me 100%. But he's a very smart people. Sometimes, strange idea, but it's good idea. So, example, Nobu Hotels, idea come from him. He said, hey, Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
The key issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. Botswana, the government of the Republic of Botswana holds 15%. We are resolute now, and we've communicated a firm intention to increase our stake in DBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Good Monday morning, 30 minutes until the first trading day of December. I'm Matt Miller. Danny Berger is off today. Bloomberg Open Interest starts right now. Coming up, the buzz is building around Kevin Hassett as President Trump says he knows his choice to lead the Fed. And Black Friday shoppers showed up and spent. Retail sales jumped over 4%, signaling surprising consumer resilience, plus a risk-off start to December trading as Bitcoin sinks below 86,000 and traders brace for deeper drops in stocks as well. Stocks to watch today include Eli Lilly cutting costs for the first time. Buyers of its Zepbound weight loss drug when paying cash, the latest in a price war with Novo Nordisk. That hasn't helped the shares in the pre-market. Lilly is down. Bitcoin, its drop also sending down shares of companies like MicroStrategy. The crypto sell-off resumes, and MicroStrategy down almost 5%. Plus, NVIDIA and Mag 7 stocks are lower to start the month. NVIDIA says it's invested $2 billion in Synopsys common stock. That's a company that makes software to help design chips. Let's talk about that with Bloomberg Tech co-host Caroline Hyde. She joins us here on set to kick off the week. And Caroline, another deal here from NVIDIA investing this time in chip designing software maker.
And a public one at this. And it's done it before, remember, invested in Intel, but largely we've seen it go into companies that help fuel the purchase of its GPUs, whether it's a neocloud like CoreWeave, whether it's OpenAI that needs the chips for designing its large language model. But we understand that this is all about the design, the CUDA offering. Remember, NVIDIA is so dominant because it's sort of a full stack. You get the hardware, you get the chips, you also get the software with which to be training your large language models. CUDA, CUDA as it's known. This is chip design and software company Synopsys that publicly trades, has not done well on the public markets. And now we see NVIDIA coming in and snapping up $2 billion worth. But they say this is a partnership. This is about expanding time to, ultimately the offering, but also speed to market. So it's meant to be a win-win on both sides thus far. It's a win for Synopsys shares, maybe not so much for NVIDIA.
Not so much for NVIDIA, although sentiment is obviously down today because in part of the drop in Bitcoin, which is, I was thinking this morning, if someone had told us 10 years ago that moves in Bitcoin could lead the entire market, we wouldn't have believed it. But that looks like what's happening.
It does, and whether or not it's a macro issue, what's happening with Japan, what's happening with ultimately the cost of government debt in Japan and what that means for the carry trade, that's a macro headwind. But there's a lot of specifics that are going on in the crypto world that's got us anxious. Largely, one of the biggest buyers of Bitcoin, MicroStrategy, or Strategy, artist formerly known as MicroStrategy, has actually seen its CEO go on a podcast, because remember, Michael Saylor is the chair. The CEO is saying, we could sell Bitcoin. What happened to the hodl mentality? So people are worrying that they're going to, basically because of the net asset value, the overall enterprise value of MicroStrategy falling below the actual amount that its Bitcoin is worth, could that force it to sell because it's got to pay off dividends? Then you've got to look at what's happening with Tether, stable coins. It's interesting, S&P give ratings to stablecoin issuers. They are worried about Tether. Tether's fighting back, saying, you just don't understand our complexity, and of course it's because we're sort of a new world of financial instrument. But more broadly, they're saying, you don't have enough buffers, safe buffers, to be able to pay back a Tether one for one. Remember, they've gone more into the world of Bitcoin ownership and into other corporate loans and the like, not just treasuries, not just cash. That's the key worry. And then you just got China as well worrying a little bit about stablecoins and crypto.
Yeah, so Noor Ali at the MLive blog points out that the Bitcoin fear and greed indicator has fallen faster than the price itself. And hearing these things from people like, what's his name, Fong Li at Strategy. I know they changed their name to Strategy, simply Strategy, which is like so generic that it can't really be the name for a company, but okay. if they sell off, like that just seems like it would snowball into a bigger sell-off in crypto.
And Matt, you're so right. I think the issue here is, who is the buyer? Why are we not seeing people piling back into the ETFs at the moment? They have been a key buyer. Where's the institutional buyer? Where is the dip buyer? I think that's what many people are wondering at this moment. $80,000 is kind of the level everyone's now looking at. Remember, we've been here when we're looking at the $86,000 level, but a few weeks ago. I feel it's sentiment, right? We need a sentiment shift, and many are wondering about how they're booking their losses going into the end of the year.
I remember being at $86. So this is
It's still somewhere in your
a long way
on
from,
some hardware that you can access.
from there. Yeah, Caroline Hyde, thanks so much for joining us, reminding me of my lost Bitcoin. Turning our attention now to Big Pharma. Eli Lilly announcing it will cut the prices for introductory doses of Zepbound if you pay cash. This is just the latest move in the price war with Novo Nordisk that's getting more and more confusing in terms of pricing for these weight loss drugs. Joining us now to talk about it is someone who understands everything, at least in regards to this industry, Bloomberg Health reporter Madison Muller. So what do we know about Zepbound? Now it's what, the 5 milligram doses, the starter doses are going to be even cheaper.
Exactly. So the beginning doses, the starter doses, which, like you said, people sort of stay on for a month, maybe 2 months. This is, you know, because these drugs cause nausea and some GI side effects, people have to step up. So they can't start at the highest dose. They have to start lower and go up. So what Lilly and Novo are doing is offering some discounts on those starting doses. So Lilly's discounting the price of the first starter dose by $50 and shaving even more off of that second starter dose. And they're keeping the same prices for the higher doses. And this is sort of what we're seeing for Novo as well, which is discounting the first 2 months of treatment even further. A couple of weeks ago, they did that. But for patients, once they get to those actual therapeutic doses that you're supposed to stay on, those prices aren't really changing much.
Right, that's the key word, right? Therapeutic doses. That's the dose at which these things are proven in trials medically functioning, and not the starter dose of 5 milligrams, the transitioning dose of 7.5 milligrams for Zepbound, for Wegovy and Ozempic. It's different, 0.25 and 0.5. But what they're trying to do, I guess, is get you in, give you a taste of the weight loss, and get you kind of stuck in it before you have to pay full dollar for the therapeutic doses.
Right, and it's really hard for patients because I think even though these discounts are good for patients at the end of the day, there's a lot of confusion. I mean, I'm talking to people who are still paying the $500 for Wegovy and Ozempic when they should be paying a lot less at this point. And so hopefully the price will start to come down across the board and these discounts will be more uniform. I mean, Lilly and Novo both also struck deals with the Trump administration last month to bring down the price of these drugs starting next year. And so hopefully some of these discounts will start to be a little bit more universal. But the hard thing is that insurance coverage is still pretty patchy. And so there are a lot of insurers that don't cover these medications at the moment. And that's why Lilly and Novo are having to discount the drugs the way that they are.
Also, do they want to get rid of some of the stock before someone comes out with a pill that's more popular, or a shot that you only take once every 3 months instead of once a week?
Right, I mean, that's the other thing, is that pills are coming, and that's going to put additional pricing pressure on this whole category. I mean, we're expecting pills probably next year. Lilly and Novo are both working on their own versions, and the starting doses of those are expected to be even lower, around $150 a month, and that's part of the Trump administration deal as well. But that's, you know, another expectation is that those will be really widely available to patients. It'll be interesting, though, because obviously the demand for these shots is really, really high. So whether or not people will switch over to the pills or whether that will open sort of a whole new market of patients sort of remains to be seen.
Madison, thanks so much for joining us on this. Really one of the two big themes of these markets over the last 3 years, AI and these weight loss drugs. Now let's get to, it is, of course, Cyber Monday. So despite all the concern around higher prices, a weaker job market, a falling consumer confidence, Black Friday sales actually rose from a year ago. Sales increased 4% as Americans flex their spending power. Bloomberg Markets correspondent Nora Melinda joins us now to tell us what drove the gains and what kind of deals were out there.
Well, there were clearly a lot of deals, and everyone's really been looking for a deal in this environment. I mean, Walmart called it the fact that a lot of consumers were actually going for Vizio TVs and Oura Rings, and everyone's really looking for some way to save money, and they're really trying to get out there right now. As they're looking ahead to the holiday season, you're seeing people really just trying to find any way to save money. A lot of the conversation heading into this Black Friday season has been analysts really looking to see how much of the consumer is spending on buy now, pay later, because of course we know that credit card debt is at record high levels right now, especially especially given the economy that we're dealing with. We've been talking about this K-shaped economy, which of course is a bifurcation of the upper class still being able to spend while the lower income consumer is still struggling during this economic recovery. So it'll be interesting to parse through and see what we get in terms of the metrics from the buy now, pay later spending. But clearly people were coming out and they were willing to spend. The National Retail Federation saying that they expected 187 million consumers for a record year. So we'll have to see. Today's Cyber Monday, of course.
I'll tell you that we just got headlines from Klarna, one of the big buy now, pay later companies, saying that it had, I guess, volume up 45% year over year for November 1st through Black Friday, November 28th. So at least in terms of that metric, and it's relatively new, so that kind of growth isn't surprising, but more and more people are using this stuff. What earnings are we going to get this week? It feels like earnings season is over, but we still get retail earnings coming out, right?
Yes, we still have more retail earnings to come. Of course, what we've been parsing really through right now is what TJ Maxx we got Walmart. There's a few others that are coming, but what we're really looking at right now is a very mixed landscape here. If you just parse through the earnings that we've been seeing thus far, we're really seeing a split. We're seeing Home Depot calling out the fact that they're struggling. People are not spending on big ticket items, but then you've got the likes of TJ Maxx doing well. So we're really looking at the discount names in this environment, seeing performance, really outperformance there from their competitors.
All right, it'll be interesting to see what the dollar stores show us this week. Nora, thanks very much. Nora Melinda covers stocks for us here on Bloomberg Television. Next hour, we're going to talk retail spending with Mark Rosen of Catalyst Brands. That company owns JCPenney as well as Brooks Brothers. Check here on futures as we head into the first cash session of December. You can see that we are down 0.6% on S&P futures. NASDAQ futures down about 0.8%. The small caps moving even lower. I will say typically, well, over the last 30 years, December is a good month, up about 1%, a little less than that. But if you look over the last decade, it's not a good month, off about 0.1%. We were down 2.5%. December last year. Let's get a look at some of the individual stories that we're following this morning. Canadian miner Barrick is climbing as it weighs an IPO of its North American gold assets. You can see the 3.8% gain in the pre-market there. Airbus is dealing with two new problems on its top-selling A320, the most flown jet in the world. The company found quality issues on some fuselage panels that need inspection just days after revealing a software glitch that affects 6,000 aircraft. These are the ADRs in the pre-market. And Moderna is down after William Blair flagged an FDA memo linking COVID vaccines in younger people to deaths associated with myocarditis, something that we already know way too much about from the pandemic. Coming up, President Trump claims he's picked his next Fed chair, but won't spill the name as buzz builds around Kevin Hassett and the promise of sweeping rate cuts. This is Bloomberg Open Interest.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
My
a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Let's get to high interest. Look at what's making headlines around the world. U.S. and Ukrainian negotiators called their Florida meeting, quote, productive, despite the lack of a breakthrough. U.S. envoy Steve Witkoff now travels to Moscow with a 19-point ceasefire plan. Kiev insists any deal must protect its sovereignty, while President Trump says there's a good chance an agreement can be reached. Goldman Sachs is buying Innovator Capital for $2 billion. The deal instantly expands Goldman's footprint in the booming buffer ETF market. Innovator runs $28 billion in defined outcome funds designed to limit losses. The deal lifts Goldman's ETF assets to about $79 billion, and that deal is expected to close next year. Meanwhile, in Washington, D.C., President Trump says he's chosen his next Federal Reserve chair, but he won't name his pick.
Chair, are you any closer on that right now?
I know who I'm going to pick. Yeah.
Oh, tell me, Kevin Hassett.
I'm not telling you.
Advisors say Kevin Hassett is a leading contender as Trump pushes for aggressive rate cuts. Hassett calls the rumors premature, but signals he'd support cheaper borrowing costs. An announcement is expected before Christmas. And joining us now with more insight from Washington is Bloomberg's Fed and economy reporter Enda Curran. So Enda, all signs, I guess, point to Kevin Hassett. Certainly in the betting markets, the odds of Kevin Hassett winning the Fed chair have risen dramatically and others have fallen. What does this mean for the bond market?
Well, clearly the president has said, Matt, that he has a choice made. He hasn't announced who it is, but he's clearly decided that, and it suggests that the process is more or less completed, even though we're told some of those interviews carried on last week and a short list was expected to go to the president. Nonetheless, we do expect an announcement this side of Christmas. That's what the guidance from Treasury Secretary Besson has been. Whoever does come out of it, and as we say, our colleagues have reported that Mr. Hassett is leading the pack, is obviously expected to be a dove, Matt. Like you say, I mean, President Trump wants lower borrowing costs. He wants lower interest rates. He's been explicitly critical of the Fed since he came back to office in January about where policy is, very critical of his institution, very critical of Chair Powell. So whoever comes in will probably have to be delivering on at least some of President Trump's political agenda. But they'll have to do that while, of course, maintaining confidence of the market, of confidence of investors, that the Fed does remain independent, that it is pulling the levers in the interest of the economy, not of the political cycle, and that they will remain independent of ultimately what, not at the beck and call of the White House, so to speak. So clearly, it's going to be a very tricky balancing act if it's Mr. Hassett or anyone else when they do come in as Fed chair next May.
What has to happen for Kevin Hassett to take this job, if indeed he gets picked? Does he need to go in front of the Senate for confirmation, for example?
Yeah, there are some mechanics involved in all of this. Number one, whoever gets picked, Mr. Hassett or otherwise, will need confirmation from Congress. They will have to go through that process. That could be quite a long and bruising process, depending who the candidate is. The Democrats, of course, will have question marks around Fed independence and whether or not this new person will just be an extension of the White House. Of course, the Republican side will have to see how they weigh up and scrutinize their own concerns when it comes to the Fed. And then once you get beyond that, Matt, there's a technicality of making sure that there's a vacancy on the board for this Fed chair. And if it was Mr. Hassett, for example, in that case, our current Governor Myron would probably have to step off the board when his current term wraps up at some point early in the new year to allow Mr. Hassett a space if existing chair, Powell, decides he's going to stay on. So there's some mechanics there and chess pieces in terms of the composition of the board itself. But ultimately, whoever the president picks will be expected to sail through that process.
We have the next Fed meeting on, or decision released on December 10th, right? And we get the change in non-farm payrolls that was delayed on December 16th. Is there any chance that they'll move their meeting until after they get that information in order to make a more informed decision?
There hasn't been any public commentary or signaling on that point from the Fed, Matt. Clearly, it's a very unusual situation coming out of a government lockdown. We're not going to have official inflation data or official jobs data before the meeting next week, like you say. That said, though, you could also argue that plenty of Fed officials have said they've had all the data that they need from private sector sources and from state level. And it seems like the policy committees is at a point now where you're either more worried about inflation or you're more worried about the labour market. And we certainly had plenty of dovish comments towards the end of as we headed into the Thanksgiving break and as we headed into the current quiet period for the Fed, indicating that the doves perhaps were winning out in terms of that debate. So I think there's a view among Fed officials. They've made up their mind. It's not clear whether or not the official data between now and next week would really change that for them.
Yeah, it looks like futures pricing in right now a 96% chance of a cut. Enda, thanks so much for joining us. Bloomberg's Enda Curran covers the Fed and the economy for us out of Washington, D.C. Coming up, Citi's Stuart Kaiser sees a tug of war between negative short-term momentum and positive seasonality for stocks. He joins us next here on Set. This is Bloomberg Open Interest.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
RBC strategists see the S&P 500 rising more than 10% for a 4th straight year. The team led by Lori Calvasina sees the benchmark hitting 77.50 by this time next year. They say earnings growth and Fed rate cuts will offset doubts around inflation. Joining us now is Citi's head of U.S. equity trading, Stuart Kaiser, here on set. So I guess it's not a tough call to make if you figure whoever is the next Fed chair is going to cut rates pretty drastically.
Yeah, I mean, I think the question, though, there is why are they cutting rates, right? If you look at market pricing, you're pricing less than about a 33% chance of cuts in all the meetings until June, right? You know, to get the odds of those cuts up, what has to happen? And I think that's the big question. Is simply naming a new Fed chair enough, or are we going to have to see weakness in the labor market and the growth side of the economy? And if that's the case, you know, then that becomes a little bit of headwind for equity markets. So I do think we're getting to the point now where the Fed is basically data dependent. And now you have to sort of, you know, game theory your way through of what data am I getting to justify those cuts, and what does that mean for equity markets?
I mean, Masayoshi Son, the head of SoftBank, said whoever thinks there's an AI bubble is not smart enough. And he points out that, you know, if AI just becomes 10% of GDP, it will be huge returns. But that's a giant leap from here, right? Does that continue to drive the market next year?
I mean, I think it almost has to continue to drive the market next year to some degree. Look, I think if you're being bullish on the market outside of AI, I think you have to be of the view that you have some stimulus hitting the economy early next year from the new tax and spending policy, and then that's going to sort of stimulate consumer spending and support stuff. If you don't get that sort of stimulus into the economy, ex-AI, then yeah, I think you're kind of reliant on the AI trade here, especially with the Fed kind of now fully priced, right? The tighter credit spreads and lower rates have really helped small cap, you know, kind of rally, you know, underneath the surface. If you take away those rate cuts, you either need a broadening of U.S. economic growth, or again, yeah, you're sort of tethered to that.
Do you see, just 30 seconds till we have to take a break, but do you see a broadening of gains in this stock market? Because I noted the S&P equal weight index has moved up for 5 days in a row, so they're starting to come back a little bit.
Yeah, I do think clients are of the belief that the big beautiful bill is going to stimulate the economy early next year, and that should support broadening. Whether that happens, I don't know. Whether investors will try to trade it, I think that is the case, and I think you're seeing early signs of that as we get late into the calendar year.
All right, Stuart, you're going to stick with us through the opening bell. You'll be with us for the first opening bell of December. It's an historic moment with Stuart Kaiser. In terms of the futures here, we do see losses across the board, and we're going to get into the seasonality. I may pull up the SEAG chart on the S&P 500, because if you look over the last 29 years, December is a good month, up 0.9%, but last year was a bad December. And if you look over the last decade, we're actually showing just slight losses for the month. So what happens now after 7 months in a row of gains for the S&P 500? Can we continue to climb? We'll find out. This is Bloomberg.
Such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety, and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks happening everywhere, and that's what AI is most helpful in improving.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Moments away from the start of trading on this first day of December. This is Bloomberg Open Interest. I'm Matt Miller. We are looking at kind of a dour start to the month with futures down 0.7% on the S&P. NASDAQ futures down a little bit more, about 0.9%. But to lift your spirits, we have the Partnership for New York City ringing the opening bell at the New York Stock Exchange. Catherine Wild, who leads that think tank, I believe she is stepping down after decades of leadership. They're ringing the opening bell. Down at the NASDAQ, you've got a bank holding corporation banner ringing the opening bell, celebrating its 30 years, 3 decades of listings. And if I look at that stock over the last 5 years, it's up about 75%, so doing fairly well, not as good as the S&P. In terms of stocks right now, we have NVIDIA kind of weighing on sentiment, weighing on the indexes. It's obviously very heavily weighted, the biggest company in the entire world, and it's down 1.4% in the cash trade. It's made a $2 billion investment in Synopsys, buying those publicly traded shares. That's boosted Synopsys 5.33% this morning. And then MicroStrategy right now down more than 6% because Bitcoin continues to fall. It's, I think, below 86,000. At one point this morning was below 85,000. And the CEO of Strategy saying if their MNAV falls below 1, that they would sell Bitcoin. That's a little bit technical, but essentially the value of their company compared to their almost $60 billion in Bitcoin holdings. Let's head back over to Citi's head of U.S. equity trading strategy, Stuart Kaiser, at the desk. And, you know, I was saying earlier, Stuart, it's so strange to read the Bloomberg stocks story and see that Bitcoin is seen as leading this market. I mean, is this asset really big enough to be the tail that wags the dog?
I mean, I don't know if the asset's big enough. I think the sentiment around it is viewed as important. You've also seen a significant pullback in retail trading activity within the equity markets. So I think equity investors are seeing Bitcoin lower. They're seeing retail participating a little less in equity markets, and are maybe a little bit concerned that that sentiment's been dented on that side of thing, and maybe that sort of bid below the market is not as sort of evident as it has been for most of the year. So I think Bitcoin's being viewed more as a sentiment indicator than specifically kind of a pass-through from an asset perspective.
Why would sentiment be bad, since, you know, we have these companies investing trillions of dollars in CapEx? We have double-digit earnings growth that's expected to continue at least in the low single digits, or in the high single digits, I should say, next year. We just talked about RBC raising their outlook, and they're not alone, right? Isn't everything looking pretty rosy as the Fed is going to cut rates? We're getting stimulus from the big, beautiful bill. We may get $2,000 checks in the mail.
Yeah, I think if you pointed to 2 things, one would be consumer earnings this earnings seasons were a little bit messy, and management certainly talked very cautiously about sort of sentiment and the health of the consumer spending. And the second would be on the AI side of things. The reaction function has definitely softened, right? You know, you had NVIDIA traded down on earnings, Palantir traded down on earnings, Meta traded down on earnings. We've all seen what's happened to Oracle's share price. So, you know, I think the sentiment and the valuation on the AI side is getting kind of an audit, so to speak, from the investment community, and more importantly to me will be that retail side of things. Seeing retail participation pull back at the same time that consumer earnings are showing some weakness. I think those are the two things, if you're getting a little bit more cautious, you probably point to.
I wonder what you think about NVIDIA. I mean, if you get chips from Google or maybe chips from AMD that start to be as good as Blackwell, or at least better at other things, if you get a shift in that leadership, is that bad for the market, or is it good that we have more players?
It's tough. I mean, it's definitely a headwind for NVIDIA and some of the leading semiconductor stocks. Same as we saw from DeepSeek back earlier in the year. And you could argue, yeah, that's bad for the semiconductor stock, but cheaper, faster, and more access to AI is actually better for everybody else.
Yeah.
The problem is, as you mentioned, NVIDIA is the largest weighting in the S&P 500, so it can negatively impact the index. At the same time, that big picture, it's probably a healthy thing, for the global economy. And I think people are looking at it just that way. It's tactically, it's a risk. But structurally, it's probably a net benefit if it plays out that way.
Wow, NVIDIA, by the way, currently at $4.25 trillion. So it's actually lost $750 billion in market cap over the past couple of weeks.
It's all rounding error.
Is the retail sentiment, I mean, is it that important right now? Are retail investors really big enough to drive this whole market?
I don't know if they're big enough. I think it's a little bit the same as Bitcoin. It's really a sentiment issue. And even your institutional investors are aware of retail participation. They're aware of the stocks they hold. And when they see a change in behavior, that kind of implies a change in the supply demand of the market. And I just think it makes people a little bit more cautious until they're confident that things have settled down. I mean, we estimate retail was about 15% of the market from a volumes perspective late in October. That's down to 10. It's a significant pullback. So again, it's the flows is part of it, but it's also the knock-on impact it has on sentiment and risk management on the institutional side, I think.
If you have a big client, if you have a whale calling the city trading desk and says, I have new money to put to work, what do you do with it?
I wait till year end. Look, I think into year end, we do expect the markets to rally, and we think what's worked in the first 11 months of the year.
By the way, wait till year end is a fine answer. I mean, that's okay. It's only 1 month away. So
unfortunately, people will push back if I give that answer. Look, so into year end, we think seasonality will take hold. We think your year-to-date winners are going to lead you. As you get into early next year, there's a lot of interesting, you mentioned S&P equal weight. There's a lot of interesting rotation, I think, opportunities. Healthcare has caught a bid recently, whereas we're seeing supply of financials, for instance. Financials have been an overweight, healthcare have been an underweight. So I think as you get into early next year, you do want to look at some of these rotations and leader laggards trades. But from now until year end, I think you want to play straight down the middle, be long equities and be long the winners, because we think that's what's going to drive you into year end.
We finally have a $1 trillion healthcare company, right? Eli Lilly eclipsing $1 trillion in market cap with its weight loss drugs, Zepbound and Mounjaro. This isn't a theme that it seems like investors are playing as much as, it affects the consumer economy. What do you think about these healthcare companies and these weight loss drugs?
Look, I think healthcare has faced two pretty big headwinds the last couple of years. Number one was you had a regulatory environment that did not allow M&A, right? So that took the valuation premium away from smaller biotech companies, et cetera. And secondly, that meant your large cap companies, other than the obesity drugs, were kind of starving for growth because they would normally buy the growth from those smaller companies. So I think what you're seeing now is the valuation's gotten pretty low. People are viewing it as a more positive regulatory environment. Lower interest rates have helped. And all of that has gotten people saying, you know what, maybe this has underperformed too much and maybe we want to step into it. We've been pretty bullish on healthcare for, I would say, the last 4 to 6 weeks around the obesity week. We kind of thought that would be a little bit of a catalyst, and it has been. But look, big picture, the question
this week is obesity week?
Well, obesity week was a couple weeks ago. They did it before Thanksgiving.
I see, because it feels like it was obesity weekend.
It does feel that
to me. But I mean, Lilly's up 47% in the last 3 months. I mean, it's really, the slope has changed.
Yeah, no, it has. And I do think, the M&A story, the laggardship of the market, lower interest rates, and people really getting behind the idea that the government may be willing to sponsor purchases of those drugs in a more substantial way has been really positive for the space.
Oh, you know what? Joe in the control room prepared the seasonality chart. We might as well look at it since he put it together. We have this great function on the Bloomberg terminal, SEAG. You can use it with any index, maybe individual stocks as well. And here is a look at the last 10 years. It's a little bit confusing, but the top line is the average, right? So even though December is traditionally a good month over decades, over this decade, it's turned down. You're still confident in a Santa Claus rally?
Yeah, we're still pretty confident. I mean, December 2018 was obviously a pretty tough one, but big picture, if you go back 30 years, 40 years, 100 years, you know, December's always been pretty positive, and we ultimately think that'll happen.
Yeah.
I think last week was a good test case. We didn't have much news. It was a very quiet week, and we kind of started to drift higher. So that kind of shows you that no news is good news in this case. The Fed's now kind of fully priced. So I think that December 16th date, when we get the dual payrolls prints, is probably the most important day for the rest of the year. But yeah, we do expect seasonality to kind of kick in again.
All right, Stuart, great having you here. Thanks so much for joining us. Stuart Kaiser there from Citi is the head of equity trading strategy at the bank. Let's get a check on the stock market right now. On a broader sense, you see the S&P 500 is down just about 32 points, so a drop of about 0.5%. This is the move screen, so you not only see the breadth here, 116 stocks up, 385 down, but you can see a breakdown of who's helping and who's hurting. So on the upside, Amazon is adding 2.5 points. Then you've got Lilly adding almost 1 point, well, 0.6 of a point here. Synopsys also notably adding about a third of a point, and a much smaller company, of course. On the downside of the ledger, you've got these AI plays, right? Broadcom dragging the index down by about 7 points, 6.5. Microsoft by 4.5 points. NVIDIA dragging the index down by 2.5 points. And then you've got Facebook, Apple, and Google, as well as Palantir and Oracle. So the AI trade is really what's hurting us. Let's take a look at the GRR. This is group ranked returns on the SPX L1 index. And energy, as the spike in oil continues this morning, in that trading, you can see that pushing up energy producers and consumer discretionary, as well as consumer staple stocks. So consumer doing well on this Black Monday, or sorry, not Black Monday, Cyber Monday. Black Monday would be far worse than a 0.5% drop. The utilities index is the biggest loser here, but you can see IT is also a loser, down 1%, and communication services, which these are the hyperscalers right now, just off about 0.75%. Coming up, stocks and crypto start December on the back foot. A closer look at tech sentiment with Mandeep Singh of Bloomberg Intelligence next. This is Open Interest.
The key issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
To time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Time now for top calls, some of the analysts' action and focus this morning. First up, UBS initiates Carvana with a buy rating, saying its online platform is attracting more used car shoppers. The firm's highlights, the firm highlights, I should say, UBS highlights Carvana's strong customer experience and technology advantage, saying that this edge should help it capture share in a fragmented market. Next up, JP Morgan names ASML as its top semiconductor pick, saying the company is best positioned as chip makers prepare for a new long stretch of investment sparked by improving memory prices. I believe ASML actually designs the chips, doesn't really actually make them. And finally, Guggenheim is boosting its outlook on Alphabet, arguing that Wall Street is still underestimating how much revenue Google Cloud can deliver over the next few years. The firm points to strong backlog growth as evidence of a plausible bull case that could generate $40 billion more in revenue than the consensus expects. That's interesting, and let's talk about that. Get the general tech outlook with Bloomberg Intelligence Global Head of Tech Research. Mandeep Singh joins us here on set. ASML makes the lithography machines, right? Mm-hmm. So they don't make the chips or really design them. They make the gear that makes them.
Yeah.
Just wanted to get that straight.
Yeah.
All right. What do you think about this Google call? I mean, it does look like they could generate significantly more revenue than the street expects, especially now that we know about the TPUs.
Yeah, and look, I think everyone is thinking about the total data center capacity that'll get added in 26, 27. And so from that perspective, what has changed is previously OpenAI told us they're going to be adding 26 gigawatts, 20 gigawatts on their own, 6 with AMD. Now I think everyone is realizing, one, they may not have the ability to pay for those 26 gigawatts. Second, because Google is so much more efficient with their CapEx, they may have an advantage in terms of adding more capacity that gets translated into cloud revenue. So really, everyone is still excited about GenAI build-out. It's just who builds what. And Google certainly has an advantage with the vertical stack they have.
I also wonder, you know, the wealthiest consumers in the world probably overwhelmingly use an iPhone. And when you buy the phone, it comes with some software, some apps already on it. I figured it would come with ChatGPT preloaded in the coming years, but it may come with Gemini 3 preloaded, or 5 or 8 or whatever generation we're on. Do you know anything about what's coming on that?
I mean, especially with Apple, it wouldn't surprise anyone if Gemini is preloaded, because Apple has been using Google for the past 10 years for a lot of the defaults, which is why Google pays those $20 to $25 billion to Apple. And look, a thing like large language model, which we know Apple hasn't invested in building their own large language model, it makes sense for them to rely on an existing partner like Gemini, where they don't have to pay as much to a default LLM as they may have to pay for OpenAI. So from that perspective also, there is a very high chance that Apple ends up using a Gemini. I don't know if it's going to be preloaded, but it will be one of the default apps that'll be running on your phone.
What's the expectation for an Apple? Because it has underperformed, for example, Google significantly, and obviously NVIDIA and others in the AI space as well. But you note that investors are starting to reward companies that are efficient with CapEx.
Yeah.
So not getting involved in this dogfight is pretty efficient to begin with, isn't it?
And look, right now, 3 or 4 companies are trying to train the same most powerful LLM. So think about what the Gemini 3 did was to release a set of features that OpenAI will try to replicate. Is it really very efficient for investors to pay these companies to invest in training their LLMs when the functionality converges to a point where all 4 LLMs will have similar features? And that's where the market will be more discerning in terms of figuring out who they want to spend versus who they don't want to spend. And I think we may be close to reaching that moment in 2026, because you just want to, I mean, these companies are talking about billion-dollar training runs where you're spending $1 billion in training a model, and guess what? The output will be similar to an existing model.
Right,
it's just not very efficient.
By the way, to be fair to Apple, it hasn't underperformed everybody. I always look at a 5-year snapshot because the comp function defaults to that. Amazon is a huge loser compared to the rest of the Mag 7. And they have such an incredible cloud business, right? They must have a capable LLM in training. Are they not going to cash in on that?
Actually, they don't. So even though they have their own Nova LLM, it is still way behind the frontier LLMs, and they have a partnership with Anthropic. So from that perspective, being that incumbent public cloud market share leader with over 50% share, when I look at all the other cloud providers like Microsoft and Google, AI is almost adding 20 percentage points to the growth. So Microsoft grew 40% this quarter. 20 percentage points came from AI workloads. That's not the case with Amazon. Amazon grew 20%. AI contribution could be maybe 2-3%, maybe 5% at best. So from that perspective, Google and Microsoft are getting a much bigger contribution of AI infrastructure workloads than Amazon is, and that probably explains why they haven't benefited as much.
Yet. Because Nova is a star that increases in brightness at a sudden and rapid pace, up to 14 magnitudes. So maybe. Mandeep, thanks so much for joining us. Mandeep Singh there runs our tech coverage for us at Bloomberg Intelligence. Coming up, Barrick shares rise on news of a potential IPO of its North American assets. We'll take a deep dive into the gold miner next. This is Bloomberg Open Interest.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Vonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Caroline Connon in Paris, and this is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. A quick check on what stocks are doing to kick off the week and the month. S&P 500 down 0.4%. So looking a little bit better than futures, looking a little bit better than it did the very first few minutes of the cash trade. And I'm over the corner of, over my shoulder here, out of the corner of my eye, you can see that NVIDIA is rising. So that could change things. I do want to look at, not the big indexes, but NVIDIA up right now 0.4%. So a turnaround there that could help to lift things. Alphabet shares, Google down 1.3%. This was the story of last week, right? The rivalry here in terms of GPUs and TPUs. Disney had, I guess, a good weekend because Zootopia 2 came out, and it was okay. I don't think it was as good as Zootopia 1, but my 5-year-old daughter loved it. Warner Brothers, the deadline for the new bids that they're seeking is today, so there's a little movement there, but not much. Gold, even less movement, but we're showing you that because we're going to talk about Barrick right now. Maybe on its way to an IPO for its North American assets. It's mulling that. It's considering. It's probing the possibility there. For more on this story, we're joined by Bloomberg senior markets reporter Bailey Lipschultz. Bailey, I'm going to walk off set here and over into yours.
I'll wait and see you. Yeah. Over here.
So, what do we know about the Barrick story? As you know, this underlying asset doing nothing today, but over the past year has just rallied so far so fast.
Yeah, rallied very strongly, just given kind of overall sentiment. The big news is that the board approved management to consider IPOing their North America assets primarily. It's going to be partnered potentially with a larger mine in the Dominican Republic. But the big news from that is when you look at this Nevada mine, it's really been undervalued according to analysts. Bloomberg Intelligence saying that the North American assets could be worth nearly $62 billion by themselves. Why does that matter? Overall, right now, the stock, at least on the U.S. trading, valued at $72 billion. So when you look at this potential unlocking a lot of opportunities, the big pitch from analysts and kind of the management team is that this can kind of narrow the gap relative to rivals, which has been something that has been weighing on the company.
Right, and the reason that we invite you on the show to talk about this story is not because you know so much about gold or Barrick, but because you know so much about IPOs, because you cover that part of the market. How are the animal spirits? How are IPOs looking in 2025?
So far this year, it's been relatively mixed. The pullback that we've seen in the last month really did dent some of that appetite. We saw mid-November before that pullback, the average stock was up 22%. That at one point was essentially flat. Now we are still seeing a rebound. We do see investors wanting to put money to work. Mining companies and things in the gold and more defensive space are going to be interesting just because a lot of investors do want these growthy assets. They want to chase the crypto names. But when you really look at the companies that end up being some of the biggest winners, they are in the defensive space. We're looking at potentially seeing a Medline filing, which will be a huge healthcare company in the next few weeks, trying to get out before the year-end holidays. So when you look at overall appetite, we are up year over year for the third consecutive year, not quite back to the pre-pandemic norms, but we do see pretty good demand so far in 25 and a lot of excitement for next year.
I will say I had forgotten we have a function IPO Go, and you can click on the time series tab in IPO Go, and you can see the value which has shot up, the deal count which has dropped significantly, and it's just a fun function to play around with on the Bloomberg terminal. I'm not advertising it any further than that. I'm just telling you.
It is a good tool, but it does take a little bit of effort to know what you're looking for.
Here's the value picture of the time series. Check it out. Play with it on your own terminal. Bailey, thanks so much for joining us. Bailey Lipschultz there. Coming up in the next hour, Liz Ann Saunders joins us as we kick off December.
Game here is understanding. These digital assets have the ability to change the payment landscape of the world, and we need to be ready. We, the regulators, the world needs to be ready for a new wave of technology.
Stablecoins are almost entirely used in the mechanisms of trading cryptocurrencies. What we saw is the opportunity for digital assets broadly, stablecoins in particular, to be used as a medium of exchange outside of the crypto world, what is today the fiat currency world. At some point, I think these digital asset wallets will be big enough and people will be comfortable enough using them. I think we'll have a flip from conventional payment mechanisms into stablecoin-based mechanisms.
Does that mean banks such as yourselves issuing stablecoins?
We could. We are issuing Hong Kong dollar stablecoins today. We're in a sandbox for tokenized bank deposits in Hong Kong. We're effectively issuing tokens related to trade finance in Singapore. So it's all on the table, but we're always going to tie it back to what our clients want and need. Because if we don't get that one right, the rest doesn't matter.
The market capitalization of both type of instruments, crypto and digital assets, are both very low. Stablecoins today have $20 billion of flows a day. It's less than 1% of the flows of the payment system in the world. But because they have the ability to be very helpful in use cases, particularly in retail to begin with, but then potentially on the wholesale side, I think we will see a lot more of them.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. We begin at the White House, where President Trump is backing his defense secretary, Pete Hegseth, who's under increasing pressure over claims he ordered a second strike on a suspected drug boat off South America to kill 2 survivors. Correspondent Nancy Cordes.
Both the House and Senate Armed Services Committees have announced they are going to look into this, which is notable because both committees are led by Republicans who tend to give this administration a lot of leeway.
President Trump strikes out at federal court in his bid to keep his former personal lawyer as New Jersey's top federal prosecutor. This morning, a panel of judges sided with a lower court and disqualified Alina Habba, citing maneuvers contrary to federal law governing appointments after her interim stint expired. First snowstorms in the Midwest. Now it's a nor'easter that could bear down on post-Thanksgiving travelers. Among them, this woman at the airport in Orlando.
My flight is delayed today because flying north, it's getting a little snowy up there.
Meteorologist Craig Allen takes a closer look.
This second storm is going to be picking up plenty of Gulf moisture combined with unusually cold air across the eastern half of the nation. And this is going to cause major travel impacts once again, especially from the Tennessee Valley into the Mid-Atlantic and New England states as we get on into Tuesday.
There are almost 2,000 flight cancellations and delays in the U.S. so far today. Prime Minister Benjamin Netanyahu has asked Israel's president to pardon him.
In a video, Netanyahu continued to deny wrongdoing in all 3 cases against him and said a pardon would advance national reconciliation.
Israel, he said, faced great challenges and great opportunities, and in order to fend off the threats and seize the opportunities, national unity was required.
Israel's opposition leaders urged President Isaac Herzog not to issue a pardon unless Netanyahu agrees to step down as prime minister. Linda Gradstein for CBS News, Jerusalem.
In Lebanon today, church bells welcomed Pope Leo as he prayed at the tomb of Saint Charbel, and speaking in French, urged Christians not to abandon the Middle East. Thousands turned out in the rain to line the Pope's motorcade. And President Trump says he will release the results of an MRI he underwent in October, telling reporters on Air Force One.
It's like my phone call.
I got it peached. It's absolutely perfect.
The White House hasn't said why he had the MRI at Walter Reed or on what part of his body. This is CBS News. A lot of people will be multitasking at work today.
Cyber Monday sales are expected to be strong, while retail analysts say Black Friday sales were up more than 4% from the same day a year ago. Craig Foreman is an executive with the shipping company DHL.
We're seeing order sizes coming in about the same as last year, but the value of those orders are up as high as 10% year on year.
Foreman says, among other things, apparel sales are doing well this early holiday shopping period. Jim Crisula, CBS News.
Eli Lilly has just made its weight loss injectable more affordable. The drug maker has announced it's lowering the cash price of single lower dose vials of Zepbound from $349 a month to $299 online. The list price is more than $1,000. Decrease comes just weeks after President Trump signed deals with both Eli Lilly and Novo Nordisk to make their drugs more affordable. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, good Monday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we are streaming live on YouTube as well, so you can head over to YouTube, search Bloomberg Podcast, and that's where you'll find Scarlett Fu out today on assignment through Thursday, I believe. But not to worry, Alex Semenova sits in for Scarlett today, so we are in good hands for the next couple of hours. ISM data coming out here today, a little bit weaker than expected. We'll get to that in just a moment. We're also going to check in with Jay Pulaski, Chief Investment Officer, co-founder TPW Investment. Get his thoughts on the markets here. Vivek Pandya, Director, Digital Insights at Adobe, give us his thoughts on Cyber Monday and preview, see what are people doing on this Cyber Monday in terms of buying stuff. As I mentioned, ISM prices came out here, manufacturing, 48.2 was the headline number. The consensus was 49. And that's also down from 48.7 last period. So let's break that down. Susan Spence, chair for the ISM manufacturing PMIs at the Institute for Supply Management, joins us. Susan, what do you make of some of this manufacturing data we got today?
Good morning, Paul and Alex. Thanks for having me on. You know, the pullback is not a surprise to us. Understood we were under the estimate. But the losing the half a point really primarily driven by the drop in new orders, employment, supplier deliveries. So we've been talking for a few months about these bubbles of increases in certain indices and how they move through the supply chain. We're still seeing that happening. So one index will improve and then it'll follow with the others. So if you think about new orders back in August, those strengthened, then production improved in September, and then backlog improved in October. And so the production index is up this month, right, by 3.2. But because we don't see sustained new orders continue to come in month after month, we're seeing this blip in this bubble. And so it is not sustainable. And again, our panelists are telling us that it's all about the tariffs. They continue to manage workforce versus hire, about 67% of the panelists. And we still have a softened demand situation. And in general, positive to negative comments are about 1 to 3.6. So it's a continued story. And my feeling is, while we wait for the Supreme Court to rule, which I understand may be months and months away, we still have uncertainty. And that is what is driving this, continued, blip here and there in certain indices, but not sustained production, increase employment, new orders.
Susan, I can't help but wonder about the state of the labor market. We haven't really gotten any good data, so I'm wondering what the employment sub-index is telling us about the jobs picture here. What are you seeing from that data point?
So again, as I said earlier, it seems it's still contracting, right? It's been contracting. It's faster contraction this month. It's 10 months in a row. We're in December. Okay, so if you do the math, right around the time the tariff chaos started, as our panelists like to call it, we might have once in a while a blip up. But in the manufacturing sector, which we feel we see a bellwether to the rest of the economy, people just aren't hiring because of such uncertainty with the cost of goods sold, their landed costs, really driven by the uncertainty around tariffs.
Susan, thank you so much. Appreciate that. Susan Spence, Chair for ISM Manufacturing PMIs at the Institute for Supply Management. I always look at the new orders. New orders came in at 47.4. That's down 2 full points from last period at 49.4. So some manufacturing, the folks are still feeling some challenges there for sure. All right, let's get to these markets here. Lisa Mateo's got a Bloomberg Business Flash for us.
You got in this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. Well, the start of a historically strong month on Wall Street, seeing stocks sliding comes during a sell-off of cryptocurrencies. Right now, we look at Bitcoin. It's down more than 5.5% at just above 85,000. We have the NASDAQ falling 0.4%, 115 points. The Dow off 0.3%, 184 points. And the S&P 500 falling 0.4% or 27 points. Commodities on the rise. We have oil, gold, silver, copper, all climbing. To currencies, the Bloomberg Dollar Spot Index weakening by about 0.2%. That's after 4 days of losses. The yen strengthening after some hawkish comments from the Bank of Japan. It's strengthening by about 0.7% at 155.08 against the dollar. Eco data, now you guys mentioned U.S. factory activity shrinking November by the most in 4 months. We also had S&P Global U.S. Manufacturing PMI came in a tick higher than expected at 52.2. Some company news. NVIDIA investing $2 billion into the stock of chip design software maker Synopsys. It's part of an engineering and design partnership. We look at Synopsys shares. They're up nearly 5%. NVIDIA shares right now up more than 1%. And Airbus shares taking a hit after announcing new quality problems on dozens of its jets. Its shares are now down about 5% in Paris. And Nikkei reporting Micron will invest $9.6 billion to build a plant in Western Japan to make memory chips for AI applications. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash. Alex and Paul.
All right, Lisa Mateo, thank you so much. We appreciate that. Alex Semenova sitting in for Scarlett Fu. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker studio, streaming live on YouTube as well. Market drivers today brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn more. Red on the screen for sure. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Alex Semenova, and we're joined by Bloomberg's Denitsa Sokova. Denitsa, what are you looking at?
New day, new NVIDIA deal. NVIDIA is investing $2 billion into chip-to-design software maker Synopsys. Synopsys is up on the news. It's about 5%. The ticker is SMPC. NVIDIA is holding on some small gain, but we actually in earlier trading, the stock was down. So the NVIDIA stake represents about 2.6% of Synopsys outstanding shares. Synopsys is one of the largest providers of software and services used to design electronic components. The new partnership involved integrating NVIDIA 2 into Synopsys chip design applications. NVIDIA has been striking so many deals, and some of them are with data center providers like CoreWeave. Some of them are even with competitors like Intel. They invested $5 billion recently, and investors have been a little bit more jittery about it. The stock reached its high in October, and since then it's been a pretty volatile time for NVIDIA. The stock is still obviously up 30% year to date, but we saw earlier trading that investors weren't necessarily very excited about this initially. Now, obviously, we're seeing some gains, but everyone is worried about those deals and the price tags.
And Denise and Paul, I feel like every other day we're getting a new OpenAI partnership. I know there's another deal on your radar. Denise, what is that all about?
Yeah, more deals. Accenture shares are climbing more than 2%. They're announcing a collaboration with OpenAI. It's very interesting. That's an old school consultancy, but I also want to be part of the AI craze. They're equipping tens of thousands of its professionals with ChatGPT Enterprise. So it's an interesting thing. They've been rebranding. They started calling its 800,000 employees reinventors.
Reinventors?
Reinventors,
Nice.
yeah. So there has been a big reorganization in June, you know, it's coming off not too great of a time. The company is down 27% year to date, so perhaps they're looking for a new branding. And the whole ChatGPT AI push is really big part of it. They've warned that more staff would be asked to leave if they could not be retrained for the age of AI.
You know, I mean, I've been told that some of these technology consultants really under pressure because the budgets, the tech budgets are going more toward the hardware,
for sure,
the AI,
they don't
and
have
away from some of the software or just other types of spend, including paying for an Accenture consultant to tell you what to do.
Right, and here you have OpenAI just kind of helping that problem out here.
Yeah,
it's expensive. It's
yes,
all AI.
I know.
People pay.
It's always been, when times are tough, the consultants are one of the areas you can definitely pull back on. For sure, as well as advertising. Having been in the advertising business my career, that's another discretionary expenditure that gets, but you can't cut your AI spending on hardware and software.
Not in those times.
No. All right, what else you got?
Cryptocurrency. We're talking about things that are maybe overpriced. Cryptocurrencies are sleeping on Monday. And some of the companies, it's very interesting because this year, a lot of the companies were actually getting bigger gains than crypto. So people were happy to pay premium to get exposure to those companies. Some of those names were Coinbase, Strategy. And those names are actually down a lot today. Coinbase is down about 3%. MicroStrategy is down about 7%. The ticker is MSTR. And of course, the Coinbase ticker is COIN. It's coming off the price of Bitcoin dropping, but we actually see some news from China. The latest drop comes after China's central bank said on Saturday that the risk of speculation and hype surrounding virtual currencies has resurfaced. Obviously, sentiment has been very fragile, but those two companies we're looking at, MicroStrategy and Coinbase. MicroStrategy is down 40% year to date. People were happy to pay crazy premium for that company. Now things are pretty fragile. And actually, their CEO of Bitcoin Treasury Company said on a podcast that the firm could sell Bitcoin. Obviously, they've been buying and buying and buying. But if their NAV starts to decline, at some point they will sell.
Looking at Bitcoin, it's down another 6.2% today. That's like 32%.
Yeah,
off its high just
fully risk off during this seasonally bullish period.
Wow, I mean that is just. I wonder if that's going to call folks to reevaluate here, or is this just a normal kind of pullback type of thing? I don't know the answer to that question. All right, Denitsa, thanks so much for joining us. Denitsa Sukovic does all the markets coverage for Bloomberg News, and for more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts or anywhere you listen. Alec, what are you working on these days, you and your team over there at the equities?
We're just excited about what is supposed to be a historically strong period for equity markets, and so far that isn't really playing out. If you look back at history, going back to 1950, the S&P has averaged a 1.4% gain in December, the second best month of the year after November, higher 73% of the time, but obviously it is not playing out just yet. We didn't see that seasonality play out in November. We did see a nice recovery, but it ended up just 0.1%. So will that strength materialize in December? Will investors get excited again once we get some sort of new catalyst?
And I guess the next catalyst will be next week, December 10th, the Fed. And
That'll
the
be
market has a 99.9% likelihood that the Fed will cut 25 basis points there at the December 10th meeting. The question is, as it usually is what does Fed Chairman Jay Powell say about the future? What kind of body language does he get? And then the other thing as it relates to Fed is who's going to be leading the Fed?
Yeah, that's going to be an important one for markets, given the fact that Fed independence is a big risk that a lot of investors are flagging.
Yep. President Trump says he has his pick in his mind, and he will announce it sometime this month. So that will be another data point for investors. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
I'm Lisa Mateo, and this is your Bloomberg Business Flash. Right now, we have futures lower, Bitcoin falling below 87,000, and this, of course, to start a new month as we start new trading for December. The yield space right now, yields are higher. Commodities on the rise. We have oil, gold, silver, copper, all climbing right now. Also, some other news. New concerns rising that Strategy may soon be forced to sell some of its roughly $56 billion cryptocurrency haul. That's if token prices continue to fall. Strategy shares are down this morning as well. Other crypto-related stocks that are falling: Coinbase, Mara Holdings. The Bloomberg Dollar Spot Index, that is weakening. Canadian mining company Barrick Mining, they say they're exploring an IPO of its North American gold assets. The company has been dealing with operational issues and also some cost blowouts. And sources saying BHP Group offered around $53 billion in its attempt to acquire Anglo American. Anglo American rejected the offer, deciding its acquisition of Teck Resources would generate a little bit more value. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Alex and Paul.
All right, Lisa Mateo, thank you so much. We appreciate that. Alex Semenova sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Red headline crossing the Bloomberg terminal. Steve Cohen's bid for Queens Casino wins approval by New York board. This is big for Queens. This is going to transform in a big way that whole area around Citi Field there. And it's going to be big. There's going to be casino, hotel, retail, all types of things. I've seen some of the plans. Just amazing what he plans to do there. So this is going to be a long-term transformative project for the borough of Queens for sure. So we'll see how that plays out. Let's take a look at these markets here. Sell-off in the market here today, but boy, what a year it's been so far, with the S&P up about 16%, the NASDAQ's up about 21%. Where do we go from here? Jay Pulaski, he's the founder and chief strategist of TPW. I never knew what TPW meant. Now I do. Tripolar World. No idea what that's all about, but Jay does. Jay, thanks so much for joining us here. Again, kind of you look at the equity markets, and year to date, it's been pretty darn solid. Folks in the bond market, they had mid to high single-digit total returns here. Now what do we do as we think about 2026?
Right, Paul, and great to be with you and Alex. And as you noted, Tripolar World is our main thesis that argues that regional integration in Europe, Asia, and the Americas, thus the tripolar, is the way forward for the global operating system. And I think that's what's actually playing out in the markets, is that 2025 is turning out to be year one in what we think will be a multi-year period of non-U.S. equity outperformance. U.S. with the S&P up 16%, I'm not even sure it cracks the top 20 in terms of equity market returns in dollars for 2025. And we expect that underperformance to continue. We're really very keen for next year on emerging markets, both equities and debt. Emerging market debt massively outperforming the Barclays Ag, which you touched on, is up mid-high single digits. And we're also very keen on commodities. We believe that the digital, namely AI, is devouring the physical. So silicon, copper, water, etc. And so we think there are really, frankly, numerous opportunities out there in the global macro multi-asset space.
Jay, in a column that you wrote last quarter, you said something really interesting, that the Mag 7 could be a liability for U.S. equities. Do you see some companies within the cohort that are more of a liability than others? Any of them that you maybe like going into next year?
We really focus, Alex, on ETFs only, so we do no single stock work, and so I don't really have a view on which of the Mag 7 is better than the others. I will say that, Mag 7, again, has been a massive underperformer versus China Tech, for example. KWEB, which is the ETF that covers China Tech, or CQQQ is another ETF ticker. These are massively outperforming the Mag 7. And the issue for next year is that Mag 7 earnings are decelerating. So they've been averaging 30% plus earnings growth the last couple of years. In 2026, the forecast is for mid-teens growth. And so the question is, how are investors going to respond to that deceleration? And as we noted, China Tech has a tremendous upside in trades at roughly a 50% discount to the U.S. tech. And so that's where our action is. We have a significant overweight in China Tech versus U.S. tech.
Talk to us about China there, Jay, because a lot of folks got really spooked by the government's crackdown of the Chinese tech several years ago. Is that something that, obviously, you've gotten comfortable with that, and just tell us how you have gotten comfortable.
Well, I mean, I think China is just a huge story, Paul, to be honest, and we've written about it at length in our Substack, The Tripolar World, and in our model portfolio delivery service, really articulating the view that China has dominated the renewable space from EVs to solar. That dominance has now bled into advanced manufacturing. So they're taking lessons learned from renewable dominance and applying them to advanced manufacturing, and now blending the digital and the physical, so AI and robotics, to really control the commanding heights of the future economy. And so in our view, China is moving forward to the future very fast, becoming the first electro state. So we're very keen on power, cheap electric power through renewables as a competitive advantage in the global manufacturing and AI race. And we think in the next couple of years, it's going to be quite clear that the U.S. may have the advanced semiconductor chips, but does not have the power to fuel and run the data centers that are required. China, on the other hand, is using its dominance and its tremendous expansion of cheap renewable power and electricity to actually erode the U.S. competitive advantage on the chip side with its dominance on the power side. And we think that's only going to continue. And so as we look around the world, we want to be exposed to the commodities that provide the opportunity in the data center and in the power side. And we want to be exposed to those countries that are really leapfrogging the U.S. and the European countries in terms of establishing electric power as their main source of energy going forward.
Jay, we've heard this narrative kind of time and time again that there's somewhat of an end to U.S. exceptionalism, but it hasn't really materialized. What makes this time different? What makes you so optimistic on international equities more than in the past?
Well, I mean, I think the market is saying it's different with the performance in 2025. We think that's going to continue in 2026 and beyond. We know Goldman Sachs, for example, just put out forecast 10-year forward return profiles for the various regions in the world. U.S. comes in last at 6% per annum returns expected over the next 10 years. Emerging markets come in first with 11% expected total returns for equities over the next 10 years. Again, that's Goldman Sachs work. We look at the U.S., it's expensive relative to the rest of the world, relative to its own history, so it's no room for multiple expansion. Its policy making is erratic. The currency is expensive, the dollar is expensive. And so we look around the rest of the world and see that markets are cheaper. Markets have the similar earnings growth expectations versus the U.S. They're completely underowned, and they're making policy decisions, as we just discussed with China, that are much more robust and forward-looking than in the United States, sadly. The U.S. is really kind of stagnating at best, and so, you know, when markets look forward and see the opportunity set elsewhere, and you have the China-U.S. rapprochement, and that's really a key, because that takes away the worry that the U.S. is going to do something to really damage the upside in China. That rapprochement, which we expect to see in 2026 with summit meetings in China and the U.S., is very positive.
All right, Jay, thank you so much for joining us. Jay Pawlowski, founder and chief strategist of TPW Advisory. He's also a proud graduate of Duke University. Yes, the Duke University that's playing for the ACC championship football, that is coming Saturday against Virginia Cavaliers. So how about that? It is Cyber Monday. We had the Black Friday thing, and we want to see how consumers are spending this year. Vivek Pandya joins us. He's a director of digital insights for Adobe. They see what people are clicking on, swiping on, and all that kind of stuff. Vivek, what have we learned from Black Friday and then kind of the beginning hours of Cyber Monday here?
You know, it's been really interesting to see how consumers have returned back to major days like Black Friday. So we found that about $12 billion was spent on Black Friday. And then on Saturday and Sunday, we continue to see momentum. And now that tees us up to see about $14 billion spent on Cyber Monday. So you have consumers who recognize that there are discounts happening all throughout the season, but they really believe and perceive that the best discounts will happen on days like Black Friday, Thanksgiving, and that's why we saw them really scale up the revenue coming during those days.
I'm curious, Vivek, are there any signs of weakness? Say, are shoppers trading down to cheaper items, more private labels, or are they still making those big ticket purchases?
You know, it's interesting because what we're finding is that consumers are recognizing when some of these categories are having the really strong discounts across the board, across the categories, and that actually prompts them to actually trade up a little bit and go a little more premium because they are maybe getting a gift for maybe family or friends, and that these sales events and these sales moments really pushes them to kind of stretch a little further up and get into that threshold where they're getting a little bit more premium so that they can anticipate the discount and really take advantage of it.
So what are we seeing in terms of e-commerce versus bricks and mortar this year? What are the trends?
So when we look at our kind of online data, Adobe Analytics is the data set we're using, and that platform powers online web experiences for businesses across the globe. So we're really preoccupied with how that share looks for online. And what we're finding is 1 out of every $4 will be spent online. And that's really kind of increasing from the 1 out of every 5 to 1 out of every 6. So you're finding consumers viewing the online sector as an area where they can get more value, better deals, and really trying to drive up how far they can push their dollar in terms of spending online in order to manage the broader macroeconomic climate.
Vivek, thanks so much for joining us. Appreciate getting a couple of minutes of your time. Vivek Pandya, Director, Digital Insights over there at Adobe. And again, they see a lot of the data behind the transaction volumes, particularly on the e-commerce side, but also bricks and mortar too. And again, MasterCard out saying they expect the holiday shopping spending to be actually on Black Friday, it was up 4.1%. So
never bet against the U.S. consumer.
Yeah,
it's
pretty
incredible.
solid. You know, it's interesting. Between the hours of 8 p.m. and 10 p.m. today, online spending is expected to peak with $16 million spent every minute. That's according to the folks at Adobe. So that's pretty darn solid.
Are you buying anything, Paul?
I have not. I have no intention to. I'm all about experiences. That's kind of what I'm doing. I'm at the point in my life, I'm getting rid of stuff.
I'm right there with you.
But dude, you're still in the accumulating mode, aren't you?
Yeah, but you want to free yourself of things you no longer need instead of just buying and buying more.
Absolutely. I don't know. We'll see how it goes. S&P 500 off 44 points. That's 0.6%. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, that rally that drove the S&P 500 to its longest streak of monthly gains since 2021, well, it's taken a little bit of a breather. The S&P 500 now down 0.4%, 31 points. We have the Dow falling 0.6%, 324 points, and the Nasdaq down about 0.5%, 124 points. A Bitcoin slump weighing on sentiment too. It's now down about 7.5% at just above 84,000. To the yield space, the 2-year 3.53%. That's up 4 basis points. The yield on the 10-year 4.08%, and that's up 7 basis points. The Bloomberg Dollar Spot Index weakening by about 0.1%. The yen, that's strengthening. That's after the Bank of Japan's governor gave the clearest hint yet of a rate hike this month. It's at 155.18 against the dollar. And repeating one of our top stories, New York Mets owner Steve Cohen won approval to operate a casino next to Citi Field in Queens. He submitted an $8 billion casino proposal. That's with partner Hard Rock International. Was also picked alongside Resorts World and also Bally's. In consumer news, well, assigned U.S. shoppers, they're continuing to spend despite economic concerns. MasterCard says that Black Friday sales climbed 4.1%, surpassing last year's growth. And Bloomberg reporting teen brands like Addicted, Kendra Scott, and Bath & Body Works, they lured in shoppers with discounts. Even teen brands that did not offer big sales like Alo Yoga, Brandy Melville, they attracted shoppers as well. And as far as today, Adobe Analytics expects growth in Cyber Monday sales to ease from last year. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Alex and Paul.
All right, Lisa Mateo, thank you so much. We appreciate that. Alex Semenova sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube as well. Tom from the Upper East Side writes in and says he needs a Bitcoin quote. It is down 7.7% right now. That's $7,000, 84,000 and change there. Grim. What does that mean for all the folks that piled into this thing through ETFs and all that other kind of stuff? Mike McGlone joins us here from the self-proclaimed crypto capital of the world, Miami Beach. He's the senior commodity strategist for Bloomberg Intelligence. Mike, I tell you what I learned very, very, very early in my trading career, that I'm really bad at catching falling knives here. I don't want to be anywhere near this thing when it's trading like this. What do you make of it?
Exactly. It's a falling knife. It's a broken chart, Paul. It's a bear market. It's a consistent bear market. It barely can get up to near its 200-day moving average, which is rolled over. It's following the leaders. MicroStrategy led the way down, and now it's kind of getting a little cheap. But it's a clear bear market, and the whole space is going downward. It's not just Bitcoin. It's all the alts. One good example is Ethereum. Ethereum is probably heading towards 2,000. Its higher is around 4,000. It's number 2. But the whole space, I think, had a good reason to peak. It got a pretty good high above 100,000. It has massive supply coming on. And now we all know the Trump administration is, as to quote my colleague, is we have a billionaire crypto person in the office. And a lot of the OGs don't like that. But overall, as a leading indicator, the key thing I take away from it is Bitcoin might be the Grinch that steals Christmas from the stock market.
Just has been so abrupt. What is the main driver of this downside action? Is it liquidity? Is it ETF flows? Is it positioning? What is causing this?
I think, Alex, it's classic peak stuff. It's stuff I really wrote about last year. We had a perfect storm for a peak. We had the record-setting stock market, the halving, the ETFs launch, and massive pile-in this year into poor performance. And the number one thing was the election of President Donald Trump. So that pumped up all prices. Now they're heading downward. And the key thing I like to point out, there was one cryptocurrency in 2009. It was Bitcoin. Now there's 27 million listed on CoinMarketCap.com. So there's an unlimited supply of these things. And a lot of them are worth billions, so track nothing. Then I like to point out on the other side, there's only 4 major precious metals, and they're up about 70% this year. I have a fear that that trend might continue. Precious metals going higher, most notably gold, and risk assets like cryptos heading lower.
Mike, what is, you mentioned it in the past, I'm not sure I fully get it. What is the relationship between Bitcoin and the U.S. stock market?
Very closely correlated, particularly now, some of the highest correlations ever, and a very negative correlation between Bitcoin, cryptos, and volatility. So the key thing I want to point out is right now, 120-day volatility, S&P 500 is about 11%. If we end the year there, it'll be the lowest year end for stock market volatility or highest complacency since 2017. Typically, cryptos, when volatility bottoms, cryptos go down. And looks like volatility is just starting to bottom. They're front running. So overall, they're all leading. And key thing is Bitcoin's a good leading indicator for the stock market. It's all pointing lower now.
Also, Mike, we've seen gold move in tandem with risk assets, making new highs this year, but now that's started to diverge. Do you expect that gap to continue to widen? Will gold keep pushing higher as these other risk assets fall?
I'm really concerned about gold, Alex, because it actually grab baited. Got sick of watching the stock market and cryptos having beta, and it took beta this year. It's not a good sign. When the rock beats everything, it's not a good sign. So the best year since 1979 for gold, the most stretched 6 to 60 versus a 60-month moving average since 2000, like 1980, is very extended. I get the fundamentals, but to me, my risk management hat says be very careful being long this asset that took off. And when it's that expensive, I mean, the whole system might have a problem. So my takeaway from gold taking off and Bitcoin going down and crude oil going down is that we're overdue for a down year for the stock market. Maine, we've only had 2 since 2008. And to me, that's the tilt for next year, particularly if cryptos keep declining. It's that reverse wealth effect that seems to be kicking in.
Oh, boy. All right, how about Dr. Copper here, up 28% year to date? I know that's not necessarily a speculative metal.
Well, that's the key thing. I'm glad you mentioned copper. It's the economic sensitive metal. If the stock market keeps going up, it's fine. If China demand pull is fine. But it's going up for the wrong reasons this year. Major supply constraints, and we've had the U.S. tariffs. So I'm really worried that copper, which is just above $5 a pound, is more likely to go to $4 than stay above $6 next year. And the number one driver, number one prerequisite for copper to stay elevated next year is that stock market can't go down. It has to stay up. And that's my key worry, and that's the kind of signals I'm getting from gold taking off and Bitcoin going down.
What about some of the other commodities you're watching going into 2026? Corn, crude oil, gas. What do you expect the outlook will be for some of those assets?
Perfect analogy, Alex, in the same category. The high elastic commodities, most notably corn and crude oil, are in bear markets because they went up too high to the 2022 peaks. Typically, they have to find a low price cure. For crude oil, I expect that still around $4. For corn, $40. For corn, around $3.50 a bushel. And the key question is what stops it? If we get spikes in prices for supply scares, I think traders are more likely and producers are more likely to sell rallies. Maybe crude oil gets near 70, it should be responsive selling. Maybe corn gets near 5, which is this year's high. There should be more selling. Problem is because we're just bringing on more supply with less every day. It's a bear market in those commodities.
Mike, you grew up on a farm. You know what it's like for those good folks there. Where do they need the big crops to be, like corn and soybeans? How far is the pricing below where they need it to be?
Right now, we're right just above break-even cost. It's just below $4 in corn, and corn's around $4.50. Soybeans have perked up. That was nice because China came in and helped. But we're at that point now where they're just producing as much as they can to break even. And typically, you have to get below the cost of production of corn, which is just below $4 a bushel. Unfortunately, we haven't done that yet. Unfortunately, typically, you have to do that to offset the excesses of supply and demand. And now the trade agreement helped. But before, soybeans were around $10 a bushel. They were about a 20% discount that was in Brazil. Now they're back up, and the supply is coming back on in Brazil.
All right, Mike, we'll do pork bellies next time. Mike McGlone, Senior Commodity Strategist, Bloomberg Intelligence. He's down there in Miami. The snowbirds are coming down. He can't get the restaurant reservation at his favorite spots. This is, the locals, they get a little grumpy.
Good time to be there.
Yeah, exactly. So he'll be there doing that here. But, I love talking to Mike because he can cover everything from soybeans and pork bellies to crypto. Everything.
Exactly. Very versatile.
Yep, he's done it all. So you can go there and BCOM, that's the Bloomberg Commodities dashboard. Everything you want to know about the commodities, Mike's got there on the dashboard. All the research, all the data, that's where you kind of find it there, including crypto as well. Looking at the markets here, we still have red on the screen here for the equity markets. The S&P is off 33 points. That's a 0.5%. The Nasdaq's off 135 points. That's about 0.6%. The Dow Jones Industrial is down 320 points, 0.7%. But again, as a prior guest pointed out, we're still within 2 to 3% of all-time highs here for most of these indexes. The VIX up a stick here, 17.40. Yields popping up a little bit here. The 10-year Treasury is up 7.5 basis points, 4.09%. We'll have more coming up. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Alex Semenova sitting in for Scarlett Fu today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City. Maybe a little snow tomorrow. We'll see. We haven't seen any this year so far. And we're also streaming on YouTube, so check us out there. Sam Fazeli joins us here. He's Bloomberg Intelligence Director of Research for Global Industries. Not sure what that means. Senior pharmaceuticals analyst. I know what that means. He's kind of one of the top guys in the business on big pharma and on the biotechs here. Sam, what do investors think of just the broad healthcare space here, given this administration and its views on maybe just broader healthcare policy issues, whether it's vaccine or other issues? How are investors kind of thinking about that?
Yeah, so I think, Paul, if you look to the share prices of pharma companies, in general, they seem to, you will be able to see that there is a upward momentum in the past few weeks, few months. And that's all because there's been some more clarity, particularly the thing that really worried people was this pharmaceutical tariffs. And in fact, today we heard that the UK and the US have agreed on a framework that doesn't apply any tariffs, although a lot of companies have also done individual deals with the administration where it delays any tariffs by 3 years, and then who knows what happens then. So that's all fine. Share prices have moved according to that. The issues of most favored nation has gone, and or at least it's there, but it seems to be manageable. So what's left here is regulatory worries, and we see some of that, particularly for vaccines. And I'm wondering, we're all wondering whether there's going to be a few situations where standard drugs, biologics or drugs for cancer could end up in those kind of difficult situations. But vaccines seem to be bearing the brunt of the pressure from the health authorities at the moment.
Sam, when I think healthcare, I think GLP-1s. They're the hottest drugs on the market right now. And there's some news today that Eli Lilly is cutting prices again, heating up competition with Novo Nordisk. Does that kind of cement its place as one of the winners in this space?
Yeah, I mean, so the data that the companies have presented so far suggests that the Eli Lilly drug Zepbound is more active or more effective when it comes to weight loss than Novo Nordisk's drug, although these are always trials that are designed by one company trying to show that their drug's better, and I'm sure some other trial will show that somebody else's drug is better. But that is where we are today. Zepbound seems to be more effective based on the data that we have in hand. And so what these companies are now doing is trying to fit with getting more and more people onto their formularies, onto their drug, and these price cuts for the first doses or the starting doses, etc., or a vial versus the pen, are designed to try and get the patients onto the drugs. And then hopefully they lose some weight and they enjoy it and they keep buying and moving up to the next doses, which are more expensive.
So, Sam, where are we just in this whole GLP-1 game? Like, in terms of the addressable market for these medications, what percentage is taking the drug right now? It feels like it's still really early, potentially.
Yeah, we're very, very, very few. I mean, if you look at the numbers, we're in the low percentages still. So you don't need a particularly massive number of a percentage of people who would benefit from these drugs to take them to get into the 100 billion number. 10% of patients would easily get you there, depending on the price, of course. You keep dropping the price, you need to push the volume up to get to that total addressable market number. But the deals that they've been doing, the data that we're getting from the drugs in terms of the other effects that they have, sleep apnea, cardiovascular disease, etc., they all support the idea that these drugs should be used by people who need them. Of course, we all hear stuff about people who don't actually need them. They just want to have it look like they've got a nice six-pack. You know, that's a different conversation to have. But they are very beneficial for people who are genuinely overweight or obese and cannot control their weight with the standard way of most people doing, which is dropping eating and increasing exercise. It's not easy for everybody.
What about finding other use cases for these drugs? We had Novo Nordisk with its Alzheimer's trial. That wasn't successful. Do you expect companies to find other areas of use or continue these trials that are often very costly for them?
They are, but I think the things that are related to obesity, so cardiovascular risk, kidney function, sleep apnea is one of them. I think those are the ones that are clearly working. One could question whether the trial that Novo did it's good enough. The drug that they used was obviously oral semaglutide, and you wonder whether there's enough drug there to have had an effect on Alzheimer's, or whether these drugs just won't help Alzheimer's patients at all. I think there'll be more data coming. I'm pretty sure this is not over in the discussion about GLP-1 function in or role in treating or preventing or reducing the risk of Alzheimer's disease.
Sam, thanks so much for joining us. As always, appreciate it. Sam Fazeli, he is the Director of Research for Global Industries and a Senior Pharmaceuticals Analyst. He is in our London office. That's where he's based, Bloomberg Intelligence here. And when he goes on conferences, they're not fun. When they go to a conference, healthcare people, they go to actually learn stuff. They go sit in a room for like 8 hours straight with this mind-numbing science about the various drugs and therapeutics.
Very wonky sector.
Very wonky sector. But that's okay, because Sam's a wonky guy. He's got a PhD in something crazy that I have no idea about, but so he's one of those wonky, smart people. All right, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Next hour, Bloomberg Intelligence begins in just a moment as we look at the market with S&P down 20 points. That is off the low. For the day, the Dow's off 230 points. That's a 0.5%, and the Nasdaq's off 74 points. That's 0.3%. Yields are higher. 10-year Treasury up 7 basis points, 4.08%. We'll have more coming up. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, Alex Semenova sitting in for Scarlett Fu. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. Check us out there. Poonam Goyal, Senior Retail Analyst for Bloomberg Intelligence. She's going to join us here in just a moment and get her thoughts on Black Friday, Cyber Monday. She was walking the stores all weekend, checking out what people were buying. Stuart Paul is going to join us as well, U.S. economist with Bloomberg Economics, on the potential new Fed chair that President Trump said he has made the decision, and he will tell us at some point this month, so we'll see what that means. We might even talk a little skiing. He's a crazy good skier. Sylvia Jablonski, CEO and CIO of Defiance ETFs, discuss her outlook for the markets. And George Ferguson, Bloomberg Intelligence, he covers all the aerospace stuff, the airlines. We'll talk to him about what's going on at Airbus. Stock down big on some concerns about quality. First it was Boeing over the last few years. Now it seems like Airbus may have some issues. So we got a lot coming up in the next hour, and we will kick it off in style with one, Charlie Pellet.
All right, I thank you very much, and here's what's going on. We are in the red, but we are off session lows. Back to work Monday after a long weekend for a lot of people. If you got Friday off, the Dow, the S&P, NASDAQ right now, all in the red, but the S&P down 19, 68.29 where we stand. We've got the S&P down by about 0.3%. Dow Industrials down 228 right now, down by about 0.5. NASDAQ Composite Index down 0.3%, and the Mag 7 Index down 0.2%. Dow Transports up by 1%. 10-year 4.08%, with the 2-year currently yielding 3.53%. Spot gold, little change, down $5 the ounce, 42.34. West Texas Intermediate crude, 59.35 a barrel, down 1.4%. And Bitcoin, look at that, 84,637 on Bitcoin. It is down now by 7.2%. So again, bears repeating, crypto selling off, Bitcoin down 7.2%. Factory activity shrank in November by the most in 4 months as orders weakened, indicating manufacturers are struggling to break free from an extended period of malaise. The Institute for Supply Management's manufacturing index eased by 0.5 point to 48.2. The measure has been below 50, which indicates contraction for 9 straight months. Susan Spence is chair of the Manufacturing Business Survey Committee at ISM, and she was a guest right here on Bloomberg Intelligence.
Our panelists are telling us that it's all about the tariffs. They continue to manage workforce versus hire, about 67% of the panelists, and we still have a softened demand situation. And in general, positive to negative comments are about 1 to 3.6.
Susan Spence of ISM. By the way, you can hear more of that conversation on the Bloomberg Intelligence podcast. You can download it wherever you get your podcast. NVIDIA investing $2 billion in chip design software maker Synopsys' stock. NVIDIA on a down day for much of the market, including our Mag 7 index. NVIDIA up by 1.3%. Synopsys up by 3.7%. And our Nora Melinda is going to have a whole lot more on that story coming up for you in just a moment. New York Mets owner Steve Cohen has won approval to operate a casino next to Citi Field in Queens, one of 3 projects of the State Gaming Commission tapped for gambling licenses in the New York City area. Recapping stocks lower, S&P right now down by 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that as always. Alex Semenova, she's sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube. So you go to YouTube, search Bloomberg Podcast, and that's where you'll find us. Let's take a look at some of the stocks on the move today. We're joined by Bloomberg's Nora Melinda. Nora, what are you looking at?
Well, let's take a look at what's going on with the vaccine space. I've got my eyes on a lot of the vaccine stocks. That's Moderna, Pfizer, BioNTech, Novavax. All of these stocks are lower right now. This is after William Blair flagged reports of a memo that came from the top FDA official, Vinay Prasad. It said that links to COVID-19 vaccines in younger people are being linked to deaths associated with myocarditis, which is actually something I had to look up. It's inflammation of the heart muscle. It can cause chest pain, fatigue, and shortness of breath. So, of course, you're going to see a lot of the stocks that are related to this vaccine makers really seeing a strong pullback right now.
Okay.
And shifting Nora from healthcare to tech, there's a big AI deal today. What are you watching?
Yeah, we're looking at NVIDIA, always in focus at this point. But of course, this is a deal that we're seeing between NVIDIA and Synopsys. Synopsys is a company that provides electronic design automation solutions to the global electronics market. And so we're seeing shares of Synopsys up as much as 6.9%. That's the best day that we've seen for the stock since September here. But of course, this deal is really showing that NVIDIA is investing $2 billion in the company. This is a really strategic partnership. They're saying that it should hope to revolutionize engineering and design. I mean, I feel like we've just been seeing deal after deal, so much money flowing through all of these AI names.
Curious
And this is
how
just
they'll
another
be
one.
monetized, because we hear these deal announcements. There aren't often clear timelines or spending plans.
Right.
Yep. But the numbers are just huge.
They're
exactly.
Like, $2 billion is like, that's no big deal. I mean, we see
Just casually at this point.
Pocket change at this point for these AI companies.
All right, how about Barrick Mining?
Yes, so this one we've really been keeping an eye on really today. This, of course, is ticker B. This is a Toronto-based mining company. We're seeing it rising. This is after the company said it's exploring an IPO of its North American gold assets. Analysts are really calling out they see the potential spinoff as a positive for shares. They also said that it could create a potential acquisition target for Newmont, which is another company that we've really been keeping an eye on in that space. So we are seeing shares up for Barrick right now, up about 2.8% right now as we speak. NVIDIA shares up more than 1%.
All right, very good. Nora Melinda, thank you so much. We appreciate that. For more conversations like this, talking about the stocks, subscribe to our Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers and in the entire stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Let's check in on what's happening in the world of retail, because we had our Black Friday and MasterCard said pretty darn good, up 4.1%. Folks are feeling pretty good about the Cyber Monday, so the consumer's hanging in there. Somebody who actually walks the stores, goes to the malls just to see what people are actually doing, what they're buying. Are they selling? Are they just looking? Is Poonam Goyal. She's a senior U.S. e-commerce and retail analyst for Bloomberg Intelligence. So Poonam, what are you making of these early days of this holiday shopping season?
You know, I think it's good so far, especially for the retailers that offered great deals through the weekend and continue to today, and also for the ones that are offering value. Consumers really did flock to value this weekend, and we think they're going to continue to do the same today online. Cyber Monday has already started out strong in our view, with deals across the board.
Poonam, we always hear about the strength of the consumer, but also we hear that credit card debt is at highs. So I wonder, are there any signs that consumers are stretching their budgets here when it comes to spending, maybe using more buy now, pay later features, taking on more debt?
They definitely are stretching themselves out. We do see buy now, pay later being used more, and we continue to expect that to happen. That said, you know, these buy now, pay later purchases for the most part are usually purchases that the consumer can afford to make the payments on, so they don't give you more than what they think you can chew on. It's based on previous buying history. So we think they'll be okay, but once again, they're going to where the deals are, right? So where you see deep discounts is where the shopper is going over this weekend. We think we'll continue to for the rest of the holiday season.
What's selling? What are people buying? What's is it apparel? Is it electronics? Is it kind of across the board?
It's across the board. We did see strength in apparel. We saw when we were at the stores on Black Friday, I can tell you, American Eagle, even Lululemon, the stores were crowded. We were in the A mall, so that probably has a better crowd than some of the other low-tier malls. But that said, we saw a lot of younger people in the malls and in stores. Shopping bags were mixed. I saw a lot of people in the store on their phone. So, you know, you don't want to carry the bag around. You're putting the card order in online, but seeing what you want in store. We saw a little bit of that going on again this year. And overall, we do think that people are shopping. Younger generations were out at the mall, whether they were shopping or just to hang out. They were definitely there this weekend.
What Black Friday trends surprised you the most this year? Is there anything in particular that really stood out to you compared to prior years?
I think this year people are stocking up more in addition to just shopping for what they want under the tree. So they're buying essentials because if they can get a deal on something that they know they'll need in a month from now, they're willing to pay for it today, which is probably just another function of what we've been seeing all year, where the consumer is feeling pinched, but they're still comfortable in spending, which has been an interesting take this year that I haven't seen, at least in the past few years.
So what's the expectation here, Poonam, when all is said and done here? Kind of a low single-digit growth in holiday sales? Is that what kind of the street's discounting?
Yeah. So it's for total holiday, it is in that range. Online will be higher. It'll be in the mid to high single-digit range. And we think retailers like Amazon will be at the upper end of that range or higher.
All right, Poonam, thanks so much. Appreciate that. Poonam Goyal, Senior U.S. E-commerce and Retail Analyst for Bloomberg Intelligence. I don't know, when I was a kid, we'd go hang out at the mall, but I mean, like McDonald's and stuff like that. When my kids went to the mall, they went to like Cheesecake Factory and sat down and all that kind of stuff.
Some of them have movie theaters too.
I know.
Your parents would drop you off there and you'd go hang out.
Yeah, there you go. I don't know, the mall. And I tell you where I raised our family in Summit, New Jersey, the Short Hills Mall. Crazy. I mean, people are lined up in this, Route 24 to get into the parking lots there. So the retail environment, I think, is still pretty darn good. All right, let's talk to, we got Fed. We're going to get a new Fed chairman here. And what does that mean for the market? Stuart Paul joins us, U.S. economist with Bloomberg Economics. President Trump, Stuart, says he has made his decision, and I guess he'll announce it sometime this month. It's an important decision, isn't it?
It is an important decision. The Fed chairman sets the agenda for the FOMC and for the Board of Governors of the Federal Reserve. So he manages both the monetary policy decision-making process and he sets the regulatory environment for the Fed. Even just this morning, we're seeing the bank supervision regulation report out of the Fed. Things like that actually matter a lot when it comes to the amount of credit that's created and how the credit cycle and the business cycle evolve. Most importantly for folks, though, is that the Fed chairman sets the tone when it comes to monetary policy and guiding market expectations around the interest rate environment.
When I'm talking to market experts about their year-ahead outlook, they're generally optimistic, but the one risk that they keep flagging over and over again is concern over Fed independence. What does this potential decision mean for that narrative? If it does turn out to be Kevin Hassett, is that kind of worsening it?
Well, it's interesting. So Kevin Hassett was probably the one candidate among the list of finalists, the one candidate on the short list who seemed to have the most baggage when it came to political independence. He's coming from the White House, and as opposed to somebody like current Fed Governor Chris Waller or current Fed Governor Mickey Bowman, he doesn't have the same institutional credibility. He looks like he could be a bit more under Trump's thumb. When they rolled out or floated this test balloon to see how markets would react to somebody like Kevin Hassett taking the chairmanship, look, he passed with flying colors. Equities rallied, rates fell. It's everything that they would have wanted to see. And frankly, I think that's probably what sealed the deal for a potential Hassett nomination. It's not to say the decision has been finalized or announced yet, but odds are heavily in his favor after that trial balloon has been floated and after markets responded as they did.
Remind us what happens to Jerome Powell and what time frame?
So it's interesting. When you're on the Board of Governors and when you're in a leadership role, you have two different job titles that are running on parallel tracks. So Chairman Powell is both a chairman of the Federal Reserve, and his chairmanship expires in May of 2026. He also has a governorship. He is also a governor of the Board of Governors of the Federal Reserve, and his governorship expires in 2028. So coming up, we're going to see somebody appointed to fill the chairmanship role. And if Chairman Powell, upon the expiration of his chairmanship, also resigns his governorship, that creates another opportunity for President Trump to appoint another governor to the Fed board. Okay. So what we're expecting to see before Christmas is an announcement of the next Fed chairman who would take Powell's seat as chairman starting in May, and then in May we'll find out whether Chairman Powell wants to leave the institution completely, and if he does, Trump has another opportunity.
His intentions?
He hasn't. He has not said anything yet. He's preserving a bit of optionality because if he were to stay on, he would be an extremely powerful governor on the board. And he could, as Alex was saying, as Alex was alluding to, he could help to mitigate any sort of the potential politicization of the Fed if Powell were to stay on the board. If he were to stay on the board, it would be almost unprecedented. I can only think of 2 instances in Federal Reserve history where a former chairman has stayed on as a governor after the end of their chairmanship because it creates some confusion about who's actually leading and setting the agenda. And so I would expect that when the next person is nominated to take Powell's role as chairman, he will ultimately resign his governorship, but we're going to have to wait until May to find out.
Stuart, markets are back to pricing a Fed cut next week when they meet, but we were talking about that disconnect at the Fed, a lot of disagreement going on there. What do you think that that means for the path forward for rates?
It's interesting. When you look at Fed pricing today, there's an 102% market implied probability of a Fed cut next week. What is interesting, though, is that the path forward is actually a bit shallower looking out into 2026. Beyond what we get next week, as I look into 2026, the thing that matters is the composition of the voting FOMC members. Yes, we are likely going to see a more dovish Fed chairman starting in May, but we are also going to see materially more hawkish regional Federal Reserve branch presidents that become voters. And those are people like Lori Logan from Dallas, Beth Hammock from Cleveland, Neil Kashkari from Minneapolis. Those are all materially more hawkish Fed branch presidents who get to cast a vote next year. So we're going to see a seriously divided Fed. I think that as we get into early 2026, there's going to be a lot of messaging around resetting expectations for the pace of rate cuts. I think if we get something like a quarterly cadence of cuts, 25 basis points a quarter, that would actually be reasonably fast considering just how hawkish some of the voters are. Even if we do get a dovish chairman, somebody like Hassett, I think that it's going to be difficult for them to fully deliver, let's say, 100 basis points of cuts next year without losing control of the rest of the committee.
Interesting. All right. Alex, Stuart is a crazy good skier here. What's the outlook for East Coast skiing this year?
It looks pretty good right now. I've been a ski patroller at Window Mountain for, this will be 19 or 20 years.
Wow.
And you can see it's aged me materially, the stress of that side gig, that volunteer gig. We're going to be opening up on Friday.
Nice.
So reasonably early for East Coast skiing. I am keeping track of weather patterns, out in the Pacific to see just how hard hit we'll get. And it actually looks like it's, shaping up to be pretty good, even pretty early into January. It looks like it'll be pretty snowy.
All right, so if you're Wyndham Mountain, behave yourself. Otherwise, this guy, Stuart Paul, is going to come.
That's right.
Pull your ticket and stuff like that. He's the guy that skis like trees and stuff like that. I'm a gentleman. I ski the Blue Cruisers. That's how I roll these days. Those days of skiing through the trees and the big bumps, they're over. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks lower, Bitcoin down 7.2%. This Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses, Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Stocks are sliding as traders shun riskier corners of the market amid a sell-off in cryptocurrencies. The Dow, the S&P, NASDAQ all in the red right now, with the S&P at 6823, down 25 points, down 0.4%. The Dow down 232. Dow Industrials down 0.5. NASDAQ is lower by 0.5%. Our Mag 7 index also down 0.5%. The 10-year 4.09%. We've got the 2-year 3.53%. Gold down 0.1%. West Texas Intermediate crude up 1.2%, 59.28 the barrel. But the real focus right now for markets, Bitcoin down 7.6%, 84,279 on Bitcoin. Eli Lilly is cutting the price for introductory doses of its weight loss drug Zepbound, with the lowest dose vial costing $299 a month for those who pay cash. Lilly shares down now by 0.9%. And Mets owner Steve Cohen has won approval to operate a casino next to Citi Field in Queens, one of 3 projects that the State Gaming Commission tapped for gambling licenses in the New York City area. Cohen submitted an $8 billion casino proposal with partner Hard Rock International. He was picked alongside Genting Group's Resorts World and Bally's Corp. Recapping stocks lower, S&P down 0.4%. Bitcoin right now down 7.6%, 84,225 on Bitcoin. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie Pell, thank you so much. We appreciate that. Alex Semenova sitting in for Scarlet Food today. I'm Paul Sweeney, Bloomberg International. We're sitting here in New York City. And we are also on YouTube, so you can check us out there. So we got audio, we got the video, we got the whole thing going forward. AI has been the story. It's been one of the key drivers for this equity market performance, really for the last 3 years, I would say, 2.5, 3 years. Some crosswinds coming into that discussion these days. Maybe want to see some return on some of that investment. Some of these circular investment deals maybe have some people a little bit concerned here, but a lot of folks are still staying with the trade and the thesis. Sylvia Jablonski joins us here, Chief Executive Officer and Chief Investment Officer of Defiance ETFs. Sylvia, again, where do you stand on this AI trade? It's been so good for so many investors for such a long period of time. Are you still on board?
Yeah, good morning, Paul. I am very much on board. You know, I still think we're in the early innings of AI, and I say that because we obviously got the hype out of AI right out of the gates. Right, there was a lot of investment that went into the pure darlings of AI, like the NVIDIAs of the world. And I think, a lot of it is now starting to come to fruition. It's going to start seeping down into other sectors. So what we need to see now is, I think, news around how is AI changing healthcare? How is AI changing cryptography, aerospace and defense, banks? We got little glimpses of that with the quantum news around HSBC bond pricing and things like this. So I think as AI now becomes, tangible and affects the balance sheet and bottom line of different corporations, we'll get some more momentum around that.
Sylvia, when I look back on 2025, one interesting trend has been the demand for levered ETFs. Even amid all the uncertainty, we have all these new products, the 3 times, 5 times single stock ETFs. Where do we go from here when it comes to these products and this insatiable appetite for risk?
Well, it's a great question, and I think where we go from here will depend a little bit on regulatory forces and the powers that be in that sense. But to your point, there have been a lot of 3x, 4x, 5x ETFs filed for by various issuers, and the reason that issuers file for those products is because the demand is there, right? You have a lot of day traders, short-term, tactical traders that, are looking for the short-term positioning opportunities. They're looking to access leverage outside of a margin account. Levered ETFs have always kind of democratized hedge fund-like products for savvy retail investors that don't have access to the same structures. And so I think, the market has evolved, and you do have these, again, very efficient tactical traders that are looking for more exposure to some of the names that they're looking to trade. And what we always had was 3x ETFs on indices. And what we haven't had so far of an ETN structure is really a broad-based access to leverage, higher leverage than two on single names. And so I think, depending on, again, whether they're approved things like this, if they come to market, I think that there could be some great demand from these products in the future.
So, Sylvia, one of the great stories and developments in global Wall Street over the last, 30, 40 years has just been ETFs in general. Where do you see kind of the next year or two going for the ETF business? Presumably continued inflows, but where do you think that money goes?
Yeah, I think continued inflows for sure. And Paul, I think I've been talking to you for many, many years around ETFs, and we were saying things like, ETFs are catching up with mutual funds. I wonder what'll happen, right? And here they are. They're just like taking over the world, and trillions of dollars are coming in. And so I think that, the puck is going to active structures. I think that ETF issuers have become quite clever in terms of the different products they offer. Whether it's a single name equity that generates income, like a Bitminer ETF that pays a yield, right? Or whether it's a levered ETF, or whether it's a buffer type of fund, or thematic ETFs that give you access to, we were talking about AI before, like AI power, AI warfare, Jedi types of stuff. Like there's just so many good ideas that have come into the market, and I think a lot of the assets are going to flow into those good ideas. We're in a real sweet spot, I think, for innovation and investor friendly products right now.
Sylvia, a buzzword that I haven't really heard in a while amid this risk-off mood is quantum. That is a sector within AI that I know you've liked in the past. Where do you see it going in 2026?
Yeah, so I think quantum, like anything else, these pullbacks tend to be good for things like AI, AI power, quantum computing. Those are the names. Obviously, they're high growth. They have higher levels of risk. They're high beta, so they tend to fall first. And I think that they end up being places where savvy investors with long-term views end up looking to kind of cherry pick and dollar cost average in. But I think quantum, again, is if AI is in its infancy, quantum is surely in its infancy. Although we're seeing some great proof points from quantum computing. Again, we mentioned the HSBC, the bond pricing. We've talked about IBM and some of the enhancements and innovations that they've had in quantum computing. We've heard about D-Wave, we've heard about Rigetti, we've heard about IonQ. Some of these companies some of these companies are just really in their infancy. And I think that as they get to a point of profitability, stronger balance sheets, and actually, start showing returns and strong earnings, I think they'll capture the interest of investors. But quantum computing, I think, is the next, 5 to 10 year thing.
Sylvia, thanks so much for joining us. We always appreciate getting a few minutes of your time. Sylvia Jablonski, she's a Chief Executive Officer and Chief Investment Officer, which means I think she's the boss, at Defiance ETFs. Appreciate getting some of her thoughts. Airbus, I'm taking a look at Airbus here, trading on the Paris Exchange, down about 5.6% today on some continued reports about some quality issues at their A320 plane, which is kind of their backbone plane. So let's see what's happening with that stuff. We kind of became used to that type of news as it relates to Boeing and their 737 MAXs over the last several years, but now it seems like Airbus may be having some headwinds, to say the least here. George Ferguson, Senior Aerospace, Defense, and Airlines Analyst for Bloomberg Intelligence, joins us here. George, what's going on at Airbus? They've been able to kind of fly under the radar quality concern issue-wise until just recently.
Yeah, I think they've also had their challenges in the supply chain along the way. Just Boeing's challenges were so much greater that they stole the spotlight, if you will. But look, the aerospace supply chain is a bit thin, right? It doesn't have the same redundancy as like you'd get in an auto supply chain. And so when you just have some little problem at one of your suppliers, it can really interrupt your ability to deliver airplanes. And I think right now, what you're seeing is that Airbus already has a really tall order to meet the something like 820 airplane guidance or delivery guidance they've got for this year. We don't think they're going to make it. I think they need 70 plus A320s in the last 2 months of the year, November, December. We haven't seen November's numbers yet, but we'll see them soon. We think that's pretty hard given they've kind of delivered 55-ish most months in the last couple, sort of months. And so I think a quality problem here probably really places in doubt their ability to make that guidance, and that's going to hurt their profitability for the year. So I think you've seen the market react to that.
George, you mentioned that really ambitious target for 820 aircraft deliveries by the end of this year. How disappointed could investors get if it fails to meet that target on top of the, headwinds that this company is already facing?
Well, I mean, so I think you're starting to see, the disappointment here. Again, I'd be surprised if most investors weren't already concerned that the target was too high. I think Airbus has really put out a bunch of very ambitious build rate targets, right? I think our latest number in A320 is that we would be going to something like 75 a month, and that's consistently throughout the entire year, right, by the end of 2026, which to us just seems far too high. And I feel like Airbus keeps trying to lead the supplier base by pushing these higher numbers out and trying to pull the supplier base along, and then over time lowers some of these expectations. So look, I think anything they miss now isn't going away. It gets pushed into the next year and the next year. And again, I think the bigger challenge here is investors have to ask themselves, are a lot of these Airbus targets for delivery rates, are they just too ambitious, and don't we have to sort of knock them down when we build our consensus for what we think the company's going to be able to do?
Because, George, I mean, a number like 70 seems really high to me, because when we talk about Boeing, it's like, gee, I hope they can get to 40, maybe to 50. Does Boeing typically run that far behind on a production schedule than an Airbus?
So I would say that if you would consider normal the end of the last decade when both were building and Boeing wasn't having the problems with MCAS, Airbus was up in the higher 60s and Boeing was in the higher 50s. And so we have traditionally seen Airbus be able to put out more airplanes than Boeing. I think their supply base may be a little bit more robust, and I think they have sort of multiple final assembly areas around the world. I think those are some of the reasons why Airbus just has the infrastructure to put out more airplanes, more narrow-body airplanes per month.
All right, George, thanks so much for joining us there. George Ferguson, Senior Aerospace, Defense, and Airlines Analyst for Bloomberg Intelligence. I consider myself a Boeing guy. 737 gets me where I need to go, but I like Airbus just as well. The A320s are great planes, too. It's like my Coke and Pepsi thing. I'm a Coke person.
I will admit, though, when I do see that 737 MAX logo when I'm on a plane, I do get a little bit nervous.
See, I don't. I feel the exact opposite way, because there's no plane in the world that's been tested more than the 737 MAX. I would argue it's the safest plane in the air. That's what I tell myself anyway. But anyway, I've been flying those things for years. They're awesome. Red headline crossing the Bloomberg terminal. UK OBR chief resigns after probe into early budget release. He knew somebody was going to pay the price for that one. Coming up, Randall Williams, Bloomberg Business sports reporter, Stevie Cohen, Bally's. I guess they got the green light to build their casino and that whole neighborhood there in Queens adjacent to Citi Field. That could be big for them. Queens. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
On Wall Street, we do check markets all day long here at Bloomberg. We are looking at a rout in cryptocurrencies. Stocks lower across the board. Back to work Monday with the Dow, the S&P, NASDAQ. They're all in the red right now, looking at a 22-point drop on the S&P at 68.26, down now by 0.3%. The Dow is down 244, down 0.5%. NASDAQ Composite Index tumbling 90 points, down 0.4%. Our Mag 7 Index down 0.3%. The Dow Transports, however, up 0.9%. 10 years currently yielding 4.09% with a 2-year 3.53%. Gold is down 0.1%, 42.34 the ounce. West Texas Intermediate crude up 1.1%, 69.22 a barrel. And you cannot ignore the move in Bitcoin, certainly affecting sentiment as well today. Risk off with Bitcoin right now, lower by just about down 6.4%. Right now, Bitcoin 85,322 on Bitcoin. As for the broader market backdrop, AI certainly a major theme. Sylvia Jablonski is the CEO and CIO at Defiance ETFs. Moments ago here on Bloomberg Intelligence, she told us she is waiting for the AI use case to widen.
What we need to see now is, I think, news around how is AI changing healthcare? How is AI changing cryptography, aerospace and defense, banks? You know, we got little glimpses of that with the quantum news around HSBC bond pricing and things like this. So I think as AI now becomes, tangible and affects the balance sheet and bottom line of different corporations, we'll get some more momentum around that.
And you can hear more of the conversation with Sylvia Jablonski of Defiance ETFs on the Bloomberg Intelligence podcast. You can download it wherever you get your podcasts. And as crypto continues its slide, concerns are rising that Strategy may soon be forced to sell some of its roughly $56 billion in cryptocurrency if token prices continue to fall. Right now, Strategy, MSTR, the old MicroStrategy, down now by 10.5%. So again, recapping, stocks are sliding as traders shun riskier corners of the market amid that sell-off in crypto. Again, Bitcoin down now by 6.5%, S&P down by 0.2%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Alex Semenova sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube as well. 3 casinos are coming to the New York City market. One of them includes Steve Cohen, the New York Mets owner. He was won approval to operate a casino next to Citi Field. Remember, Steve Cohen, again, owns the Mets, the stadium. And so that is big for Queens. Randall Williams joins us here as a U.S. sports business reporter for Bloomberg News, joining us from Indianapolis via that Zoom thing. So this is a big deal for that part of Queens, Randall, because, again, it looks like Steve Cohen wants to build a big multi-use kind of area there, hotels, gaming, the Mets. Oh yeah, the U.S. Tennis Center's there as well. What do we know?
It's going to be, if he's able to fulfill his vision, it's going to probably be magnificent. And the reason I say that is because this is a sports owner's dream. If you have a team there, you have hotels, you have a casino there, then of course this becomes similar to a resort life. You can go and catch a Mets game in the summertime, then you can go and gamble, then you can go to the hotels, at the pools and things like that. So if he's able to do everything that he wants to do and he has more than enough money to do it, then I'm sure that there's going to be a lot of people that are going to enjoy this.
Randall, can you please walk us through the timeline here? When is this going to be fulfilled? And what do you see in terms of perhaps the job creation that this might cause?
I think there's going to be a lot of job creation just because of the sheer construction, all of the, the tech stuff that's going to have to happen with the gambling machines that he's going to be buying, as well as, you think about the pools, you think about all of the potential things that he's going to be building. In terms of the time frame, I think it's to be determined. And the reason I say that is because a lot of these hotels, a lot of these different facilities that are often they put up, they say, oh, we're going to be done by 2030, and then it's 2032. Rarely ever do these things get done on time.
And again, this is just one of 3 projects that were approved. The other 2 projects are the Genting Group's Resorts World, which proposes to expand a casino next to the Aqueduct racetrack in Queens, so another good day for Queens, and Bally's, which plans to operate a gaming facility at the site of a Bronx golf course. So again, more gambling coming to the city of New York. What's the, are there any financial contingencies here? We know Steve Cohen's got a lot of money, but for what he wants to build here, it's going to be really expensive. Do we know if he has partners here, or how's it, do we know anything about that yet?
Not just yet. I think that, like you said, Steve Cohen is almost the perfect person to do this. And there are several other bids that came in hoping to do similar things. There was a bid that included Jay-Z in Times Square. And so with that in mind, I think Cohen, like you said, has a lot of money. I think that, you know, when people have a lot of money, that it can potentially leap some guardrails and some hurdles that are in front of most people. But when you can have money move people out of the way, then I think that Steve Cohen could very easily make this look a lot easier than it could be with someone else.
Randall, you touched on this already, but Steve Cohen, hedge fund manager, Mets owner, what's in it for him to build this casino now too? What does this add for him?
It's a dream come true. I mean, everyone that I've talked to about sports gambling and marrying that with the sports business, if you can own a sports team and a sports gambling in the exact same environment, then it does create a playground of sorts. You know, I hear you, but you know, from the business angle, there's going to be a lot of people who are looking at this and say, you just spend all day at the Mets and at the U.S. Open and all of these different things. If you can walk from one thing to the next, to the next, to the next, and have a fabulous time, then there are going to be plenty of people that want to do that. So for him, it's huge.
And Randall, I kind of joked a little bit there, tongue in cheek, about what could go wrong, but there was not a time very long ago, measured in just a couple, 3-4 years, when professional sports leagues would not want to get within 1,000 feet of anything related to gambling. Boy, times have changed, haven't they?
Yeah, they have. And I think, you know, we just saw a baseball investigation with the feds and revolving 2 Cleveland Guardians pitchers. I think that this sort of thing is something that sports owners are going to seek, where they can marry their sports business with the casino and the hotels and all of those things. We see some of that in Dallas without the casinos and the gambling. You know, Jerry World down with the Cowboys, he has several real estate properties around there. And in Minnesota, they have something similar, several other properties as well. But this one is going to be probably bigger and grander than anything that we've seen yet.
Do we know anything at this point about the tax picture here? How much will he be paying in taxes to build this out?
I don't off the top of my head.
But it'll be a big, big number, because have you ever looked at your bill from a room in Vegas? There's like 10 lines of taxes.
Really?
Yes. So, I mean, they quote you at $229 a night. Crazy. You come out and it's $400, and it's all, and same thing in Florida. You wonder why they don't have a income tax in Florida? Go look at your bill the next time you check out of a hotel in Florida, all the taxes there. All right, Randall, thanks so much for joining us. Appreciate it. Randall Williams, U.S. sports business reporter for Bloomberg News, joining us there. Again, New York Mets owner Steve Cohen winning approval to operate a casino next to Citi Field in Queens as part of 3 projects tapped for gambling licenses in New York City. The other 2 projects are Genting Group's Resorts World, which proposes to expand a casino next to the Aqueduct Racetrack in Queens, and Bally's Corp, which plans to operate a gaming facility at the site of the Bronx golf course. The 3 projects, according to Bloomberg News reporting, are expected to create thousands of jobs, generate billions of dollars in revenue, and provide a robust source of tax revenue for New York, with the Gaming Commission expected to award the licenses by year-end. And then, as Randall said, then you got to put the shovel in the ground and get all that stuff going. But they've got the plans. Presumably, they've got most, if not all, of the money. Now it's just a question of getting it done.
Yeah, and just such a versatile set of endeavors for Steve Cohen now. Money management, sports,
exactly
gambling
right.
now.
Yeah, this is the next step. This is going to be really interesting. And again, I had firsthand kind of experience with some of these mixed-use facilities centered around a ballpark down in Atlanta. They did a great job down there with the Atlanta Braves. They've got, you know, hotels and meeting spaces and outdoor spaces and restaurants, and it's become a little bit of a destination down in that market, and they did a great job. And I think a lot of other folks have said, gee, we want to try to do that too. And if we can incorporate a casino, even better.
Yeah.
So there you go, Stevie Cohen, bringing it to Queens. So we'll see how that goes. And it was kind of interesting that Randall Williams, our reporter, was wearing a New York Yankees hat on while we were doing that interview. So for those of you on the radio talking about the Mets owner. S&P 500 down 13 points. We're clawing back some of those earlier losses from this morning. The Dow's off 200 points. That's 0.4%. The NASDAQ's down 47 points. That's 0.2%. We'll have more coming up. This is Bloomberg. Good morning.
is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Alex Semenova sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube as well. Check it out there. I tell you, one of the more competitive businesses that I've seen out there is the telecom business, particularly the wireless business. You think about the three big carriers that we all have a choice from, and then there's some other carriers out there, but boy, it is just price competitive like you wouldn't believe, and the churn of customers is a big issue for all the carriers. So we want to get a sense of what's going on in the world of telecoms, satellites, all that kind of stuff. John Butler's our go-to person there, senior telecom analyst from Bloomberg Intelligence. John, I know you Bloomberg Intelligence analysts, this is the time of year where you guys publish your 2026 outlooks. What's key in your space of telecoms and satellites?
So I think the big thing to keep in mind here, Paul, is as we roll into 2026, I think we're going to see price promotion take a modest step up. The bullets are really flying in wireless right now, as you suggested. I think part of it is AT&T and Verizon both have new CEOs. Both CEOs are going to want to make their mark. I think the one to watch is Dan Schulman at Verizon. He is very focused on volume. He wants to get Verizon back to subscriber growth. And I think the only way to do it is going to be by promoting a little bit more aggressively than they have in the past.
John, where do you see the strongest incremental demand coming from? Is it going to be mobile data? Is it going to be broadband?
I think two areas, Alex. One, as you touched on, is broadband. That's a real growth vector for the telecoms. If you look at fixed wireless access, which is delivering broadband over a wireless link into the home, that has proven to be exceptionally popular with people. So I think all three telcos are going to lean into broadband in order to supplement the slowdown in wireless growth. But the one area I'm watching as we move into next year is satellite. Starlink is partnered with T-Mobile. The two of them are already offering limited texting service on a nationwide basis. It's sort of early stages there, early innings, if you will, for them. Verizon and AT&T are partnered with AST Space Mobile, which is in the process of launching its constellation now. They actually have more better satellites than Starlink, and so the space race is on, as I like to say. It's going to be really interesting to see once Verizon and AT&T are able to launch services early next year, how that market segment unfolds.
So the wireless operators, the Verizons of the world, the AT&Ts, John, they're partnering with some of these space satellite services?
Yeah, I mean, I think the way to think about it, Paul, is it's almost like cell sites in space at this point.
Yep.
So the major carriers have partnered with Starlink and AST to provide that infrastructure and the transmission capability up in space to be able to provide coverage outside the range of terrestrial networks now. So essentially that concept of coverage everywhere is going to become a reality as we move through next year.
I will say I was getting a new iPhone in T-Mobile. I'm still grandfathered into my father's plan. They're very lucky, still paying for my cell phone, but they immediately offered me to get Wi-Fi with them, with T-Mobile. So it's really interesting and a new offering from them, as you mentioned, cool. John.
So what's next, John?
Right.
John,
sorry, Paul, go ahead.
Is there a 6G out there? Because I think I've grown up and we've had 3G, 4G, 5G. Is there a 6G out there?
Not yet. I think 6G is going to move onto the horizon probably as we move through next year. It's a development process by the industry. And so that standard, if you will, is getting developed now by industry committees. It will then move into test probably in 2028 and become a reality for us by 2030. Right now, we're mid-cycle with 5G. So if you think back to when 4G was originally launched, it was much lower speed than it is today. So that standard, those generations of mobile evolve over what are typically 10-year cycles. So we're mid-cycle with 5G. expect better speeds and better performance there as we move through the next 5 years. And then ultimately 6G will appear probably again in the 2030 timeframe.
All right, there you go. It just gets better and faster, and hopefully that continues. John Butler, Senior Telecom Analyst for Bloomberg Intelligence, joining us via Zoom from our Princeton office. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121, access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment here. Get you a quick data check in here. S&P 500 off 17 points. That's 0.25%. The Dow's off 217 points. That's about 0.4%. And the Nasdaq's off 61 points. That's about 0.25%. The VIX jumps up, but still below 17 here. So that's quiescent, as Mr. Tom Keene would say. The dollar's a little bit weaker here today against some of the major currencies out there. 10-year Treasury yields, they're 8 basis points higher, 4.09%. In the commodity space, WTI crude oil is up 60 cents, but still below $60 per barrel. And gold steady here, 4,222. And the story out there in the commodity space is Bitcoin. Let's be honest, down another 7.3% here today. That's $6,600. And we're now sitting at 84,500. And again, remember, just about a month and a half ago, this thing topped out about $126,000 per token, so a 30% plus sell-off. Alex Semenova sitting in for Scarlet Food today. We appreciate your help. That does it for us here at the Bloomberg Intelligence Program. Your top stories and global business headlines are coming up right now.
Thank you. Sorry about that, Paul.
This is CBS News on the Hour, sponsored by Steel.
I'm Steve Kathan. More meetings as efforts intensify to end the war in Ukraine. U.S. and Ukrainian officials met over the weekend, and a top American envoy is looking to build momentum in Russia. CBS's Holly Williams.
President Trump's special envoy, Steve Witkoff, is headed to Russia today and will meet with Vladimir Putin tomorrow, according to the Kremlin. There are peace negotiations, but here in Ukraine, there is no peace because nowhere is safe from Russia's relentless bombing.
Ukraine's President Zelensky met in Paris today with French President Macron. CBS's Stacey Lynn tells us Venezuela is on President Trump's agenda, with lawmakers demanding more information about American military strikes on suspected drug boats.
President Trump is expected to convene with key members of his cabinet and national security team in the Oval Office around 5, presumably to discuss the increased pressure campaign on Venezuela. The meeting comes after the president issued a warning on social media this weekend, essentially telling airlines to avoid Venezuelan airspace. Trump also confirmed he had spoken with President Maduro over the phone, but didn't elaborate on what they discussed.
Luigi Mangione has appeared in a New York court looking to bar evidence from his state trial over the killing of United Healthcare CEO Brian Thompson. Investigators say the suspect in last week's shooting of 2 National Guard troops in Washington, D.C. may have been radicalized after moving from Afghanistan to the U.S. CBS's Nicole Skenga.
As a bi-coastal investigation intensifies, intelligence analysts are scrubbing through the devices seized from accused gunman Rahnemullah Lochinwell's home in Washington state. Sources tell CBS News investigators sat down with his brother in San Diego, who appeared stunned.
The TSA says it will roll out a $45 fee for travelers who don't use Real ID at airports come the 1st of February. Officials say they are seeing 94% Real ID compliance. Meteorologist Craig Allen tracking bad weather that's contributed to hundreds of flight cancellations and delays today.
The biggest mess for today is coming out of the Rockies and moving into the Central Plains, the Mississippi Valley, and will affect the upper Midwest all the way into the Tennessee Valley.
On this World AIDS Day, word of a new treatment designed to prevent HIV infection, reported by the BBC's John Shea.
A new HIV prevention injection is being rolled out in southern Africa, the region with the world's highest HIV burden. Researchers say the injection is groundbreaking. Clinical trials show that lenacapavir is almost 100% effective at preventing HIV infection.
Wall Street, the Dow is down 200 points. This is CBS News. something online ever make you so angry or frustrated you couldn't help but let it out? There's a term for that.
Maybe you've been the victim of rage bait. The term is the Oxford English Dictionary's 2025 Word of the Year. The official definition, online content deliberately designed to elicit anger or outrage by being frustrating, provocative, or offensive. Over the past year, usage of the term spiked threefold. Past Word of the Year winners include brain rot, Riz, short for charisma, vax, selfie, and toxic. Deborah Rodriguez, CBS News.
Blockbuster is the word for Zootopia 2, which broke box office records over the Thanksgiving weekend. Since its Wednesday release, it's made $556 million globally, making it the highest international opening for an animated film. I'm Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
President Trump says Hegseth never made the order. Welcome to the Monday edition as the administration pushes back on a report that the Secretary of Defense issued a kill-them-all order on an alleged drug boat coming out of Venezuela, prompting multiple investigations now on Capitol Hill. We're going to get to the bottom of this as Steve Witkoff heads to Russia now to talk Ukraine this week when we sit down with Bloomberg's Ian Marlowe with analysis as well from our political panel. Rick Davis and Jeannie Shanzano are back together today off the holiday weekend. That means Congress is back in town as well. And guess what? No plan to deal with rising health care costs. We'll get into that with Nathan Dean at Bloomberg Intelligence. As crypto struggles again, we'll find out what kind of calls he's getting at the BI desk. With that in mind, we start, as always, with the markets. And look who's back from Thanksgiving. We missed Charlie Pellet last week. He's at World Headquarters in New York. Charlie, how's it going?
It's going very well indeed for me. Glad to be back. I love being here. Here's what's going on. We've got the Dow, the S&P, NASDAQ, all declining. You mentioned crypto. Let's begin with what's going on with Bitcoin right now because I'm looking at a 7% plunge, 84,821. Keep it locked into Bloomberg for the latest on what is happening with crypto. The Dow, the S&P, NASDAQ, they're all in the red. Traders are shunning riskier corners of the market amid that sell-off in crypto. Right now, we have got the S&P lower by 12, down there, down 0.2%. The Dow lower by 203 points, down 0.4. NASDAQ is down 35. For NASDAQ, a decline of 0.1%. The Mag 7 index, little change, down under 0.1%, with the 10-year right now 4.09%, the 2-year 3.53%. Gold down $12 the ounce, 42.27, down 0.3. West Texas Intermediate crude up now by 1.2%, 59.27 a barrel, and Bitcoin down 6.9%, below 84,875 right now on Bitcoin. Investors are looking ahead to next week's Fed decision. Oksana Aronoff is head of market strategy at JP Morgan Investment Management, and she was a guest this morning on Bloomberg Surveillance.
I don't really see any reason for them to not stand pat here and just kind of see how the data develops. But of course, they are going to cut because of all of this turmoil that they're in. They're under a lot of pressure, politically and otherwise. And I think this cut is going to happen, and we'll see whether it's the right one. I think the data will prove them wrong as we head into 2026.
Oksana Aronoff of JP Morgan Investment Management. We're keeping an eye on Moderna shares. They are plunging now by 6%. The FDA said in a memo late last week it will place new restrictions on which vaccines hit the market. Other vaccine stocks are lower as well. Novavax down 3.8%, and BioNTech lower now by 4.5%. Recapping, S&P down 0.2%, Bitcoin down 6.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington, Balance of Power, the Monday edition. Brand new week, first trading day of December. Once again, your host, here he is, Joe Matthew.
Time to start pushing that rock, Charlie. Great to see you. Welcome back to the fold. Charlie Pellet will have more on, yes, the Monday trade coming up in just about 15 minutes here on Balance of Power. Happy Monday to you. If it's your re-entry day, I see you. Although I'll be honest, in Washington, even with lawmakers coming back into town, not a lot of traffic still this morning. We'll kind of get up to cruising speed here with about a dozen legislative days left in the calendar year, if you can imagine that. And I have
really no news to bring you on that front. A lot of days have gone by, still no plan when it comes to healthcare. We'll talk to Nathan Dean about that coming up. As the phrase war crime enters the conversation here in Washington, D.C., at least that's the term that Tim Kaine is using, the Democrat from Virginia, no stranger to military affairs. War crime, not a term being used by some Republicans on Capitol Hill, but what we heard from Mike Turner and Don Bacon yesterday suggested that the kill everyone order, if it was real, would in fact be illegal. Now, if you're hiding over the weekend or sleeping off your turkey, this was a big splash in the Washington Post, that the Secretary of Defense issued a verbal order to, quote, kill everybody, unquote, to U.S. commanders monitoring an alleged drug smuggling vessel in the Caribbean. You know, they've blown more than 20 of these out of the water. In this case, it was one of the first. 2 guys end up in the drink. They're still alive after. Hegseth said, no, go back and kill them. And so there was reportedly a second missile strike that did just that. President Trump was asked about this on Air Force One. Of course, reporters wanted to get to the bottom of it after it being a huge conversation on Sunday morning television. Here's what he said.
We'll look into it. But no, I wouldn't have wanted that, not a second strike. The first strike was very lethal. It was fine. And if there were 2 people around, but Pete said that didn't happen.
He said it didn't happen. That's the line from Donald Trump as the term war crime is thrown around. Now, apparently they're going to get together in the Oval Office at 5 o'clock this afternoon to talk about exactly what went on. The president will sit down with his war planners, including the Secretary of Defense, who is tweeting something by Franklin the Turtle. I actually had to Google this. Was Franklin on your radar growing up, James? This was yeah, okay. Canadian children's book. As the son of a children's book illustrator, I guess I should know this. But I was drawn toward it all the same. If you're watching us on YouTube, you see old Franklin the Turtle there shooting a shoulder-fired missile out of a helicopter at, well, I guess those are drug boats. Pete Hegseth writing, for your Christmas wish list. I learn a lot of things from James. You know, did you hear the word of the year is rage bait? This is the Oxford word of the year. Rage bait is 2 words. But that apparently is what this is, because, yes, it got everybody upset. And now you've even got, as I mentioned, Republicans talking about this in 2 separate Republican-led committees, one in the Senate, one in the House, set to investigate this. We'll see if the administration can get ahead of it. See, I know. He said this is a peaceful turtle, typically not carrying a missile launcher. Nor is Ian Marlowe. He joins us now, covering the State Department, national security, and diplomacy. I'm guessing Ian Marlowe has never seen anything quite like this. It's good to see you. Hope you had a great Thanksgiving. The turtle aside, would such an order be a war crime?
I think so. I mean, under international law, yeah. Then there's been a lot of concern, a lot of questions raised about these strikes in Venezuela, even before we heard about this, the latest, this kill order. You know, I think people are wondering exactly whether this changes our perspective on this, in the sense of the strikes. Everyone kind of already thought a lot of these strikes were illegal. You had this declaration from the administration that they were in kind of non-armed combat with these international cartels, which seemed to be some kind of legal cover for the sorts of things they were doing, because they're trying to declare these people enemy combatants, so you can shoot on sight rather than kind of apprehend and investigate them. You know, I think this latest one is very pertinent for whether Hegseth lasts much longer in this role. You know, if this becomes something that keeps rolling on in D.C., you know, accusations of war crimes, that's not particularly a good look. I think they've embraced the controversy over these strikes, over intimidating Venezuela, you know, talking tough about these cartels, and talking about how these strikes and the, you know, the sort of brazen nature of them in general is meant to act as some kind of, you know, message to cartels. You know, this is what we're doing. We're tough, you know, try us, you know? And that's, you know, I don't know whether that holds up in a court of law, but, the question with international law, as always, is what court of law are you talking about? And trying U.S. soldiers, U.S. commanders in some kind of court outside of the U.S. in particular is not something the U.S. generally goes for.
It's also, is it possible for the U.S. to close the airspace over Venezuela? That's what the president said over the weekend. Attention to the airlines. The airspace is closed. That would not be something that another sovereign nation could declare, is it?
I don't think so. I don't think the U.S. can necessarily declare it either. Obviously everyone took this as some kind of, it's kind of like when people talk about airspace over the Middle East, when there's, strikes going on, activity against Iran or Israel and the rest of it. So I think everyone took this as some kind of, are they going to go after Venezuela? That's one of the biggest questions, in
start shooting things down.
Global affairs. Exactly.
I can't imagine. So here's where the diplomacy comes into play, and I'm just curious how you're putting this all together in your head and how you're reading this. Apparently, the president's talking to Maduro, the leader of Venezuela, who would be replaced in a regime change. This also came up on the jet. Listen to this back and forth.
The New York Times reported that you had a phone call with Maduro. Did you?
I don't want to comment on it. The answer is yes.
And can you tell us a little bit about it?
No, I can't do that.
I don't want to comment on it. The answer is yes. Is this some sort of 4D chess here where we're blowing stuff up, we're closing the airspace, all while he's on the line?
It is a very intriguing policy towards Venezuela right now. There were talks, being led by Rick Grinnell. They called those off. The calling them off was meant to be some kind of prelude to war. We're talking again. There's they've mobilized, half of the U.S. military and sent it down to the Caribbean. It's just a very strange thing where I think the administration kind of enjoys the tenterhooks they have everyone on here.
Sure.
Do you know what I mean?
Yeah.
And I think you don't need that kind of military firepower to blow some of these boats out of the water, or two guys hanging onto some flotsam. So it's a very weird situation we find ourselves in, and I think there's a lot of questions now. A lot of the questions were like, first of all, why are they doing this as opposed to apprehending them, investigating them? And this was some of the critique from the Democratic side, right? Like, interrogate them, go up the chain of command, and try and find some of the high-level cartel people. Some of the commentary is even focused on the fact that a lot of the people kind of trafficking and moving these drugs are likely not actually formally members of some of these cartels that the administration is targeting. So who are they? Combatants? Some of them might be some of them have apparently been fishermen off the coast of Trinidad and Tobago and stuff. So it's very unclear. But the overall strategy again is sort of unclear. 4D chess. I think that if it is, there's a lot of us who are missing, the first three dimensions of that, I think.
Understood. Well put. This new press corps at the Pentagon is going to get its first briefing today. Will we learn anything about any of this?
I am not sure, and I am not sure what kind of questions we're going to get from some of these
Laura Loomer?
some of these journalists. Yeah,
maybe Lindell TV. Did Lindell get in there, James? I can't remember if they're part of that. Yeah, we'll have much more on this as we make our way through the program. And big thanks to Ian Marlowe for getting us started. It's always a pleasure. Find Ian's work on the terminal and online. I'm Joe Matthew in Washington. Lawmakers are back in town as well. We're going to look at the agenda coming up next with Nathan Dean, Senior Policy Analyst at Bloomberg Intelligence.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. Back to work Monday with the Dow, the S&P, NASDAQ all selling off. Stocks are falling as traders shun riskier corners of the market amid a sell-off in cryptocurrencies. S&P right now down 18 at 68.31. That is a drop of 0.3%. Dow Industrials down 255, down 0.5%. NASDAQ down 51, drop there of 0.2%. Again, to underscore we are off session lows. We've got our Mag 7 index down 0.1% with a 10-year that's currently yielding 4.09%, the 2-year 3.53%. Gold is down 0.2%, $42.28 the ounce. West Texas Intermediate crude up 1.3%, $59.31 a barrel. And Bitcoin now down 6.9%, 84,850 on a Bitcoin. Eli Lilly is cutting the price for introductory doses of its weight loss drug Zepbound, with the lowest dose vial costing $299 a month for those who pay cash. Right now, Lilly is down by 1%. And a headline from the Bloomberg Professional Service: Ukraine launching an exchange offer for GDP-linked securities. S&P down 17, drop now of 0.2%. Balance of power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, good to see you. Welcome back, and we'll have more on the markets with Charlie Pellet from New York in about 20 minutes' time. As we try to get the rocket off the pad here on a Monday, I will point you to next Wednesday, okay? A week from Wednesday, 10 days out. That's when we're supposed to have a vote in the United States Senate. Remember? That's why the government's open right now. The whole thing hinged on a promise by John Thune that he had given repeatedly to hold a floor vote on health care. This is the extension, presumably, or maybe a whole different program, of Obamacare subsidies that, if you're tired of hearing me tell you, block your ears, will expire at the end of the year. Government funding, by the way, expires at the end of January, and these two things are pretty closely related. If we don't figure out the health care, well, we just might shut down again. The problem is no one did anything while they were home, right? No homework was turned in, nor will it be later, and the dog didn't eat it. It just didn't happen. Last week, the White House was talking about putting up a health care proposal beyond concepts of a plan. When the news hit the Hill, everyone freaked out. The White House pulled it back. Democrats, for their role in this, don't actually have a plan either. They had proposed extending Obamacare subsidies by a year at one point. That got shot down. There was a permanent extension in the air. That got shot down. And so we have no idea what will be voted on next week, if anything at all. But it's a problem if you happen to require health insurance, with premiums going up anywhere from 150 to 400% in pockets of the nation, in many cases in red states. And that's why we're talking still about this today, even though the government's been open and a lot of people forgot about all the pain that was inflicted. Enter Bill Cassidy, the Republican senator from Louisiana, a physician, has been the face of reform, at least outside of President Trump, who says just send all the money directly to people. They'll call a health insurance and work it out between them and, United Healthcare. Cassidy has a slightly more nuanced plan that also would essentially replace Obamacare by putting these health savings accounts together for people, HSAs. He showed up on Bloomberg Surveillance earlier today to talk about it. Here's what Senator Cassidy said.
If you got this amount of money, and currently under the current plan, you give 100% to insurance companies and they take 20% for overhead and profit. Instead, you give 100% to patients in terms of deposits within a health savings account. First, you're lowering their deductible, and because you have lowered their deductible, they can take a cheaper bronze plan. Now, normally you don't because your deductible is higher. We just lowered their deductible. They're getting a cheaper bronze plan. By the way, when you give power to the patient, she gets the health care she chooses to have that she knows she needs, as opposed to the health care the insurance company permits her to have. A lot of wins in here for the patient, who would not be for that, whether you're a Republican or a Democrat.
But Cassidy is very good at this. Here's the problem. We're down to a dozen days. 12 legislative days on the calendar in the Senate, 13 days in the House before everybody goes home for the holidays once again. And if you've been watching this movie for the last couple of years, you probably know that that's not going to be enough time.
This is why we have Nathan Dean. Having survived Thanksgiving and the flag football season, America's dad is with us right now at the table. Senior U.S. policy analyst at Bloomberg Intelligence. Great to see you. Thanksgiving go well?
It went well.
Did you carve the turkey?
Did not, but I beat the fourth graders in the turkey trot, so
yes.
I was excited about that.
All right, good job. Fantastic. So now it's back to reality here, and boy, it feels a lot like last week when it's the healthcare story. Who's waiting for whom, or is that the problem? Everyone's waiting for the White House, which is waiting for Congress to do something.
Yeah, so every Monday I come in and I have a chat with the team, and our healthcare policy analyst Dwayne Wright. I was like, "Where's the plan?" And really the thought here is everybody's waiting for the White House because we, like you mentioned, we have 12 legislative days, and deals don't get done until the last minute. Think of this as a shutdown fight.
Okay.
Neither side is really going to give up what they want to give at the moment because there's nothing pushing them against the political back wall. Now, we think that ultimately, if there is a deal, it has to come from the White House, and it has to come from President Trump, because President Trump will be able to use political capital to tell congressional Republicans, this is what I want. And most likely it could be an extension, but it's not going to be what Senator Cassie wants to do, because that is a broad discussion that can't be resolved in 12 days.
System, yeah.
Save that for reconciliation debate for 2026. For right now, it's extension or not. And, Dwayne's note that he just put on the terminal says words like long odds, skeptical.
Really?
I mean, look, it can happen, but, right now.
So there may not be a vote, is what you're saying.
Well, it doesn't cost much to have a vote on the Senate side.
Yeah.
The challenge is on the Republican side in the House, because Speaker Johnson has never guaranteed a vote.
That's right.
And I think that a lot of that congressional pushback that went back to the White House last week was from the House side. Now, will Speaker Johnson do something to overcome the Hassert rule, where you can't bring anything to the floor unless the majority of your party, is in support of that? The only person that can really tell Speaker Johnson to overcome the Hassert rule is President Trump. So this comes down to the president.
Boy, okay. If you're somebody looking at your health care premiums going up at the end of the year, though, you'll be a victim of this conversation until a deal is had, because there's no paper on this, right? Nobody's got a bill to vote on.
No, I mean, this is just ideas. And, but I would also say is that this also fits a Democratic talking point going to 2026. And we've talked about this before, about why did Democrats agree to shut down or agree to reopen the government without having a deal in place? Because now, if those subsidies go up, you can spend 2026 and say, look, we've tried, but you don't like your increased health care costs?
Yeah.
We've tried to talk to the Republicans. It's a Republican idea here. And so the challenge for the Republican piece is going to be, can we get something within 12 legislative days that we can agree upon? And if not, how quickly do we move towards reconciliation 2.0 in 2026?
I thought before you get that farther, you're going to say, and if not, we're going to have another shutdown. Can they put a CR together to keep the government open for all of this other activity?
I think you can, because, we only have 9 of the 12 appropriation bills, and Bloomberg News reported over the weekend that they're somewhat close on 5 of those.
Yeah.
And that we're talking about the bulk of discretionary spending.
Okay.
So let's presume that Senate can come together and they can get an agreement by early January on those 5 appropriation bills. They jam the House. They get the House to get on board with it. I think you can avoid a shutdown, because shutdowns in midterm years aren't good politics either way. And the Democrats already have their talking point. And so I would just say is that, we're at a 30% chance of a shutdown. And I don't think this Obamacare premium subsidy issue is going to change that all that much.
Boy, all right, interesting. So with all of that said, we come flying out of the holidays with no deal, right? This would be expiring on December 31st. Is there a CR? Is there a short-term solution? Maybe you could extend the subsidies for weeks while this is debated, or does it not work that way?
I think you can do it. I mean, look, the WNBA just went 40 days to get their talks continuing going before their shutdown. And so nothing says Congress can't just say, hey, let's come up with a legislative fix to this.
Yes, right.
So there are ways to kick the can. And look, let's remember, Congress loves kicking the can on things. Whether it's to March, whether it's to January, whether it's an entire year, Congress loves doing that. But again, that decision isn't made until the last single moment when people are going out to Dulles and Reagan to get on that airplane to go home for the holidays. So I'd say let's see what happens next week. But again, this is going to be a big challenge because there are a lot of Republicans up on Capitol Hill right now who are not in favor of any extension whatsoever. Right. And it's President Trump that's going to have to be the one to decide to, use that political capital against that.
Producer James reminds us next Wednesday is also Fed Day. So we could be in a world where we've got the healthcare vote, we've got a Fed meeting, and a president who might not be very happy about either of these.
Yeah, and Bloomberg News reported over the weekend that that Kevin Hassett, the director of the National Economic Council, is a front runner here.
Says he's made up his mind.
Exactly, and so that's an interesting point though, because as we get into 2026, our story to clients has always been it's not about legislation, it's about regulation and executive orders, because the power of the presidency is more powerful when it comes to executive orders and to things like naming a new Fed chair. And so I think Congress is really going to have to struggle a little bit as we get into 2026 to continue with impactful legislation, because as they get more focused on the elections, we in the market space are going to have to look more closely at regulation, including what President Trump decides at the Fed chair role.
Been watching Bitcoin today, and I'm sure that you are as well. I don't remember what Charlie had us near 85. We're south of 85,000 now, down $6,400, 7%, 84,750 per coin. What is the most common question you get about Bitcoin when the phone rings at the policy desk?
So you hit it, policy desk. And the question is there anything coming from Washington that will support Bitcoin or support crypto? And the answer is yes, but not now and not anytime soon. Because if you look at it legislatively, we've talked about this, but potentially this crypto market structure bill passing in the first half of next year. But that's not going to be like passing in, let's just say it passes in March. Yeah. It just gives regulatory clarity for regulators to go write rules. That's going to take another year. Whether it's a strategic Bitcoin reserve, President Trump has already dealt with that. It's not like the United States is going to go out there and start purchasing Bitcoin, whether it's appropriations or not. They're reallocating Bitcoin that they've held from other accounts into this idea of a reserve. So if you look at the SEC and the CFTC in terms of Project Crypto, there's some interesting stuff that the regulators are doing over there to allow institutional adoption of Bitcoin, but none of it's coming today, and none of it's coming in the first quarter of next year. So our answer to our clients is that there's a lot of optimism from a policy perspective towards crypto, just not coming today.
No action. Our man, Mike McGlone, of course, from Bloomberg Intelligence, sat in that seat last week and said yes when I asked him if we were about to start a new crypto winter. Technicals are broken, and I don't know what the fundamentals are.
I usually ask Mike that, and Mike gives me the same answer.
That's the issue, though, right? Exactly. But you said something interesting in our final moment. Are we populating a crypto reserve right now? Has that begun?
No. Essentially, what's happened here is that the United States owns around 212,000 Bitcoin from enforcement actions.
Aren't we going to roll those into a reserve?
Well, I mean, you can essentially just move a bunch of accounts and call it a reserve.
So we have a reserve. Okay.
But what the crypto advocates want is they want additional appropriations purchases by the government, whether it's reallocating gold or buying it, and none of that's happening.
Wow. Did they ever inspect the gold at Fort Knox? Wasn't that going to happen on day one? Remember that?
I'd have to ask producer James. I don't know.
Do you know, James, did they ever get down there? Just watch the movie Goldfinger, and we'll get back to you on that. Great to see you. Hope you had a great holiday. Many thanks. Nathan Dean. He won in the turkey trot. I'm Joe Matthew in Washington. We'll assemble our panel next. We've got a lot to talk about with Rick and Jeannie after a long weekend. This is Bloomberg.
1240 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all very much in the red. We're off session lows, but still looking at declines on this back-to-work Monday. Traders are shunning riskier corners of the market amid a sell-off in cryptocurrencies. Right now, the S&P is down 16. That is a drop of 0.2%, with the Dow down 245, a decline of 0.5. NASDAQ down 35. For NASDAQ, a drop of 0.1%. The Bloomberg Mag 7 Index, little changed on the day. We'll call it flat right now, with the 10-year 4.09%, the 2-year 3.53%. Gold is little changed as well, $42.38 the ounce, down $1 right now. West Texas Intermediate crude 59.34 a barrel, up 1.3%, and Bitcoin is down 6.7%, 85,040 on a Bitcoin. President Trump says he has decided on his pick for the next Fed chair and does expect his nominee to deliver interest rate cuts. Now, sources tell Bloomberg Trump's chief economic advisor, Kevin Hassett, is seen as the likely choice to succeed current Fed chair Jay Powell. Cameron Dawson is chief investment officer at New Edge Wealth, and on Daybreak this morning, she was asked about the Hassett Fed chair speculation.
It is very interesting that he says he got his pick, and then we heard from Hassett over the weekend on the Sunday shows, and he effectively said, hey, look, equities rallied, the bond market rallied, and there was a great treasury auction, so maybe markets are giving me a green light to be able to be Fed chair.
Cameron Dawson of New Edge Wealth. You can hear more on the Surveillance Podcast. Download it wherever you get your podcasts. Right now, we are looking at a down day for the Dow, the S&P, and NASDAQ. Shares of Strategy, formerly known as MicroStrategy, down now by 10.2%. As crypto continues its slide, concerns are rising that Strategy may be forced to sell some of its roughly $56 billion haul in cryptocurrency if token prices continue to fall. Again, Strategy shares down now by 10.2%. Recapping, stocks lower with the S&P down 0.2%, Bitcoin down 0.8%. Balance of Power continues right now. Back we go to Washington once again. Your host, here he is, Joe Matthew.
All right, Charlie, good to see you back. Charlie Pellet off the Thanksgiving break and with you here on Balance of Power. Live from New York, we'll get another update on the markets. Coming up at the top of the hour, 1 p.m. Eastern Time, the situation with Bitcoin not looking a lot better as we make our way through the day here. Having just discussed that with Nathan Dean, it could be a much bigger story, of course, than crypto, with implications that are market-wide. Just retook 85,000 for one Bitcoin. They're preparing investigations on Capitol Hill. The story has nothing to do with Jeffrey Epstein. The Senate Armed Services Committee announcing it will be, quote, conducting vigorous oversight to determine the facts, unquote. We had a similar statement from the House Armed Services Committee. Of course, they are both Republican-led with a Republican-controlled Congress. We heard over the weekend from the likes of Mike Turner of Ohio, Don Bacon of Nebraska, suggesting that this kill-em-all order, if real, would be illegal. Tim Kaine, the Democrat from Virginia, takes it a step further to actually use the phrase war crime. This does not appear to be an administration terribly worried about it, and we're talking about the destruction of these drug boats, these alleged drug smuggling boats coming out of Venezuela. Washington Post reporting over the weekend that Hegseth gave a spoken order to kill all crew members on one of these boats that saw a couple of them survive. They're hanging onto the side of this thing, and we went back in and struck them twice. Now, President Trump, who says he still has great confidence in the defense secretary, says he never said that, and he believes him 100%. But he's going to look into it. And around 5 o'clock today in the White House, apparently the president will get a briefing on all of this. That's separate and unrelated to the investigations that are taking place on Capitol Hill, or will, as lawmakers get back to town today. It's where we start with our political panel. Also back together for the first time in more than a week, Rick Davis, Republican strategist and partner at Stone Court Capital, alongside Jeannie Shanzano, democracy visiting fellow at Harvard Kennedy School's Ash Center, our Democratic analysts, both Bloomberg Politics contributors. It's great to see both of you, and I hope you both had a great holiday with your families and friends. Rick, you're no stranger to the Pentagon, and of course, you spent a lot of time with a Navy man in the United States Senate. We don't need to go through all of that right now. When you start hearing terms like illegal order, like war crime, how should we be preparing for the next stage of this story? Because the president's going to try to get out in front of this later on today. He says he believes Pete Hegseth. How about you?
Yeah, you know, normally you wouldn't walk the president out ahead of this. You just follow the fact pattern. If there was indeed a second attack on the survivors of the initial attack, somebody gave the order to attack. And chain of command is very, very important in a combat situation. And so it's not that hard to follow the chain of command back to who gave the order. I'm a little surprised that if it's not Pete Hegseth, it's true what he was saying, then somebody did, and they have to account for that. So you can run, but you can't hide on this one. This is what makes the U.S. military so unique and different, is their discipline, the importance of chain of command, the importance of law in combat situation. And when you have, you know, Representatives Turner and others saying, you know, that these things would be a violation of international and U.S. law, these are the most sober experts within the Republican Party around these kinds of issues and defense, national security, and intelligence. And you've got to have this answer quick. If by week end we're still talking about this, it's going to be a huge bruise on the Trump administration's inability to answer simple questions about these combat situations.
Well, it's not like Pete Hegseth is openly worried about this. We did hear from the president on Air Force One, Jeannie, and I mentioned what he said. I wouldn't have wanted that, he said. Not a second strike. The first strike was very lethal. But says he also believes, Pete Hegseth, 100%, that he never gave that order. Hegseth, on the other hand, on X, out there with Franklin the Turtle, apparently this was a children's book that he was writing in his head at the time. You've got the turtle hanging on the side of a Huey helicopter, shooting a shoulder-fired missile down at drug boats in the water. Franklin targets narco-terrorists is the name of the bedtime story. If you're with us on YouTube or on Bloomberg TV, you see what I'm talking about. What do you make of the communications effort here, Jeannie?
You know, Franklin is a beloved children's character, and Hegseth, I think, you know, it speaks volumes that that is what he put out. This twisted replication of Franklin shooting down missiles when he is being accused of, let's be real now, a war crime. Even if you believe the White House that these are enemy combatants, which very few of us do, when they are rendered unable to defend themselves, hanging on rafts in water, and you shoot and kill them, that is a war crime. That is what the accusation is. If they're not enemy combatants, it is murder. So there is no good explanation for this. And the Secretary of Defense's answer is a turtle shooting down narco-terrorists, so he claims. I think it speaks volumes about the lack of seriousness. And it is critically important that the Senate and the House, led by Republicans, engage in serious oversight to see what has happened. And I also want to point out, Joe, all of this came out in the Washington Post amidst Pete Hegseth's best efforts to keep all of the press out of the Pentagon. It didn't help, as we discussed before, and some of the best reporting we've seen on the Pentagon has come since. So 3 cheers for the press in the United States for not being cowed by Pete Hegseth's best attempts to keep them from investigating what he is doing there.
Well, it's not lost on us that Franklin is a Canadian turtle. It was a Canadian children's book series, so just for context there. But to Jeannie's point, Rick, not a lot of journalists left inside the Pentagon unless you consider the Gateway Pundit, Post-Millennial, Human Events, National Pulse, Laura Loomer to be such. The Defense Department is actually going to be briefing them for the first time today. Now that they kicked out Tony and everybody else from the briefing room because they didn't sign this pledge to not report unsolicited information or to even solicit information. Press Secretary Kingsley Wilson, a name I've never said on the air before because she has never held a news briefing, is scheduled to conduct one today. There'll be a meet and greet press gaggle with the aforementioned Defense Secretary, Pete Hegseth, who last spoke publicly, I think when he went to Quantico in a formal address. Rick, do we suspect that we'll get a briefing on these drug boats today?
Well, if there's going to be a briefing, it's got to address the number one issue in the news these days, and that would be the double tap on the drug boat. The reality is, be careful what you ask for. Sure, it's stacked. These are all the friends of the administration who are now occupying space in the once vaulted Pentagon press room. But look what happened in the White House last week. I mean, like Mandani, the mayor-elect from New York, shows up, and they all attack him. I mean, it was not exactly what I think the president had in mind on the love fest that he was promoting. And so we know the right has been very suspicious of the administration's efforts in Venezuela, questioning whether or not this is an American first policy. And I wouldn't be surprised to get a bunch of negative feedback from this crowd to whoever winds up in the Pentagon briefing today. And so don't assume anything until you see the results of this one, because I think this could be interesting.
Wow. It's going to be very interesting, I guess, as will the results of President Trump's MRI. Jeannie, this is something that came up on Air Force One over the weekend. It came up with Governor Tim Walz, who responded to a very disparaging tweet by the president, or Truth or something, by asking him, how about the results for the MRI? We know that he had one, Jeannie. We don't know what it was for. And with all the questions, we talked about the New York Times hit piece on the president's health last week, with all the questions about his age, health, cognitive ability, this has come back to the fore. And so reporters asked the president at the back of the jet what the MRI was for. Listen to this back and forth with the president.
If you want to have it released, I'll release it.
Please, can you tell us what they were looking at?
For what, releasing?
No. What part of your body was the MRI looking at?
I have no idea. It was just an MRI. What part of the body? It wasn't the brain, because I took a cognitive test and I aced it. I got a perfect mark, which you would be incapable of doing.
He's always got the zinger in there, Jeannie. But I just want to go back. What part of your body was the MRI looking at? He said, I have no idea. It was just an MRI. What part of the body? He said it wasn't the brain because I took a cognitive test and aced it. Jeannie, I'll just speak for myself. Anytime I've ever had an MRI, I've had a couple of them. First of all, I was very scared to go into this weird dark thing, the claustrophobia, but I was very sure what part of the body they were looking at. What do you make of this answer?
I'm trying to think, Joe. Was it person, woman, man, camera, TV? That was the cognitive test that he aced. Yes, I'm with you, Joe. Every time I've had an MRI, and I am claustrophobic, so I don't like them, you know why you're there. So it's odd the president doesn't know why he's there. Also odd is the fact that this is for a supposedly annual checkup. And then they said, wait, it's going to be semi-annual in October. Nobody explained why. He is the president of the United States. And he was cowed into this essentially by the governor, because what was the president doing midnight on Thanksgiving when the rest of us were celebrating with friends, family, sleeping, drinking, whatever you were doing? He was on Truth Social posting horrific words that even kindergartners know not to say, that are incredibly detrimental about the governor of Minnesota, who came back and said, maybe you're not feeling well and should release the results of your MRI. So I hope we get these results. Of course, in true Trump style, he followed it by telling the reporter, a female reporter as usual, you wouldn't have been able to ace the cognitive test. So there you go. A typical day.
Rick, have you ever had an MRI but didn't know why?
No, I'm not sure I've actually had an MRI, and if I did, I'm pretty confident I knew why I was in there doing it. I try to avoid hospitals as much as possible, but obviously,
I'm so with you on that.
The president has a way of just forgetting what happens inside them, so maybe he's found a better way to deal with it.
They give you headphones, they'll play music for you when you're in there because it's loud and scary. Maybe they just had some great music. Lee Greenwood was playing or something like that. But
If we get some details on the MRI, he said he'd release it. We'll have it for you here. Jeannie and Rick will talk about it. We'll put our panel together. Really glad to have these two back together after Thanksgiving. I'm thankful for our panel, even the Monday after. They'll be back in hour 2, Rick Davis and Jeannie Shanzano, as we take a look at what Congress is up to with lawmakers coming back to town as well today. 12 legislative days until we go home for Christmas, everybody. This is Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew.
Congress prepares probes into the drug boats. Welcome to the Monday edition as Republican-led committees in both the House and Senate investigate a report that the Secretary of Defense issued a kill everybody order on alleged drug smugglers coming out of Venezuela. We're going to have a lot more on this when we sit down with Bloomberg's Wendy Benjaminson here in Washington with insights today from retired four-star General Wesley Clark, who was commander of U.S. Southern Command. We'll have analysis from our political panel back together off the holiday with Congress back in town and No plan yet to tackle healthcare costs. We'll have Rick Davis and Jeannie Shanzano weigh in, all after a look at Wall Street. Charlie Pellet has that for us from World Headquarters in New York. Charlie, Monday trade getting better.
Indeed. We're off session lows, Joe Matthew, but still looking at losses for the Dow, the S&P, NASDAQ, kicking off the first trading day of the new month with declines. S&P right now down 14, drop there of 0.2%, as traders shun riskier corners of the market amid a sell-off in crypto. Right now, the Dow is down 209, down 0.4. The S&P, keeping it all in context, down 0.2. NASDAQ also down by 0.2%. 10-year at 4.09%, with the 2-year that's currently yielding 3.53%. Gold is down $6 the ounce, 42.33, down 0.1%. And West Texas Intermediate crude advancing now by 1.2%, 59.24 a barrel. Cannot ignore silver, by the way, 58.42 the ounce, silver up 3.4%. Bitcoin, though, the big story, it is plunging 6.7%, just above $85,000, $85,025 right now on Bitcoin. Moderna shares down 5.7% after the FDA said in a memo late last week it will place new restrictions on which vaccines hit the market. Other vaccine makers lower as well. Novavax down 3.5%, BioNTech down by 4.6%. Recapping, stocks lower. S&P right now down 0.2%. The S&P at 68.37. Bitcoin down now by 6.7%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. And back we go to Washington once again. Your host, Joe Matthew.
All right, Charlie. Great to see Charlie Pellet back in the chair today. He'll have more on Wall Street coming up in just about 20 minutes' time here on Balance of Power on Bloomberg TV and radio. Welcome to the Monday edition. We've got a lot to talk about, and I hope you had a great Thanksgiving and a very long weekend. It was actually a very busy weekend on the news front, and we're just now able to pick up the pieces, try to start figuring out where we're going. And we're going to be talking in just a moment about that with retired four-star General Wesley Clark, with a very busy weekend involving Venezuela, not to mention Russia and Ukraine. We do want to start, though, with the prospect of two investigations on Capitol Hill, one in the House, one in the Senate, to find out exactly what was behind this order, if in fact there was a second order to fire a second missile at one of the alleged drug smuggling boats coming out of Venezuela. In a story that emerged over the weekend in the Washington Post, a kill everybody order to U.S. commanders came from Defense Secretary Pete Hegseth, which was very bad news for two alleged smugglers who did not die in the initial strike and were clinging to wreckage as Americans looked at them on live satellite imagery. The secretary either making the order in that period of time or someone responding to it from earlier, striking that boat once again and killing those two people. Many Republicans have been outraged by this. As I mentioned, the Senate Armed Services Committee announcing it will conduct vigorous oversight to determine the facts. The House Armed Services Committee doing the same. We saw on Sunday morning television, Republicans like Representative Mike Turner, Representative Don Bacon suggesting this would be illegal if true. Tim Kaine, the Democrat from Virginia, the senator, using the phrase war crime on Sunday morning television. Not so much when President Trump was asked on Air Force One, standing by his defense secretary, to suggest this order was never made. Listen.
We'll look into it. But no, I wouldn't have wanted that, not a second strike. The first strike was very lethal. It was fine. And if there were two people around, but Pete said that didn't happen.
Pete said that didn't happen, says the president, but also adding he wouldn't have wanted that second strike. And around 5 o'clock today, a few hours from now, the president will be sitting down with his war commanders in the White House to reportedly get to the bottom of this. Pete Hegseth, not terribly worried. The man who refers to himself, and President Trump refers to him as the Secretary of War, on social media with a fake children's book cover starring Franklin the Turtle. The title, Franklin Targets Narco-Terrorists. And there we see the little turtle wearing a helmet and firing a shoulder-launched missile at those so-called narco-terrorists in the water below. Hegseth writing on the X post for your Christmas wish list. Somebody's going to be wrong here, and this will be a big story when it happens. With us in Washington, before we talk to the general, is
Bloomberg's Wendy Benjaminson, who spent the weekend watching these stories unfold, our senior editor with us here in the nation's capital. Wendy, it's great to see you. Welcome back. I don't know if we expect news out of this Oval Office event today, or the Pentagon is apparently for the first time going to be briefing a new cadre of reporters, having shown the door to a number of them, including our own.
Absolutely. Well, if that briefing, we will only hear afterwards, probably the party line, the MAGA line on this, because as you said, the Pentagon had put up new rules for reporting at the Pentagon that basically is saying that if Pete Hegseth doesn't like what you're going to write, you can't work in the building. Yeah. So what you have now is a bunch of right-wing, MAGA-friendly reporters who will get this briefing and then dutifully report what the defense secretary said without question. But kudos to the Washington Post for breaking the story that Hegseth, apparently did order these. The second strike that would kill the two people clinging to boats who we don't even know were narco-terrorists. And there might have just been low-level guys who were asked to take a package and don't even know what's in it. That's what has upset these Republican senators so much. And this is really the latest and most stunning so far break that we're seeing with Republicans against the president and the president's policies. I mean, to have the chairman of Senate Armed Services and House Armed Services using the kind of language they did and vowing an investigation, and probably will want and saying that, by the way, that Hegseth, they had asked for information from Hegseth, and he hasn't provided it in a timely fashion, which that's the one thing that really ticks off Congress. When they ask for stuff, you got to get it to them by the deadline. And so now they're launching a full investigation. So I think we will get to the bottom of whether this happened or not. But and that line from Trump that if that's what happened, I wouldn't like it.
Yes.
That actually could cost Hegseth his job.
That's what I want to ask you about. We've tried to parse the president's words before. It's usually not a very successful endeavor. But if you listen to what he said, I'll just read the words. We'll look into it. That in itself is important. He could have said, there's nothing to see here. It's fake news. We'll look into it.
Right.
But no, I would not have wanted that. Not a second strike. The first strike was very little. It was fine, he said. Almost as if the world is second-guessing what they were doing there to begin with. Does he allow enough room for himself to separate himself? Is there sunlight here between the president and the defense secretary?
Yeah, I think it does, Joe, because his pattern has been to say, first, that's fake news, it didn't happen. Yeah. That's a Democrat hoax, it didn't happen. I love Pete Hegseth, he's doing a great job.
Yes.
You didn't read any of those words. The words that he was saying were, we'll look into it. And if the president really didn't know about a lethal order like that, I might be surprised. That seems in a top-down management structure that Trump has instilled on the White House, one would think he would know whether those orders had been given. If it were a surprise to him, I think that would irritate him tremendously to be caught like that, not knowing. And then, he does like Hegseth, but I don't know really how much he likes Hegseth, enough to keep him on in the face of a revolt from Congress.
Well, this is pretty remarkable, Wendy. We thank you for helping us walk through it here. Bloomberg senior editor Wendy Benjaminson with us live in Washington as we add the voice of the general, and deeply curious to hear what Wesley Clark thinks at this moment, because he was actually the boss in Southcom, commander of U.S. Southern Command, retired 4-star general in the U.S. Army, now, of course, at Wesley Clark and Associates. General, welcome back to Bloomberg TV and radio. I don't know if we're even asking the right questions here, which is why I'm very glad to have you with us as part of our conversation. So I'll start with the investigations. These two committees in the House and the Senate, how important are these investigations going to be, and will that be the official word on what happened?
They are important. Thanks for having me on. They are important, and they will get to the bottom of it. I'm confident, and that will be the official word unless, the Secretary of Defense suddenly comes out and throws everything out into the public.
Does this conversation worry you when you hear senators using the term war crimes?
I think it's the tip of the iceberg, really, because there's been concern about the Venezuela operation from the beginning. First of all, it represents, at this time, a distraction from what's going on with Ukraine, where Ukraine is fighting for what Americans believe we have. The majority of the American people want to support Ukraine. and this seems to be a distraction to enable the rug to be pulled out from under Ukraine in what was a 28-point peace plan. Now, that may not be going forward, but that's the first thing. Then the second thing is, what's the objective in Venezuela? Why are we going against Maduro? Sure, maybe we don't like him, but are you going to put 25% of the U.S. Navy down there indefinitely? What's the point? What's the objective? What's the strategy? And what about the rest of our global responsibilities? That's the second thing. And then there's the business of striking these boats. And then there's, and this is like the cherry on top, that's the allegation that maybe there was a war crime committed here on the order of the Secretary of Defense. So there's a lot to unpack here at this time, to be honest with you.
Wow. Well, that's why we're glad to have you with us. If this, in fact, turned out to be true, as was described by the report, the first strike, 2 men survive. We went back and hit them again without taking them captive, without boarding the vessel, without trying to investigate where they were from. And maybe they had imagery of these men getting on that boat. Even with that said, would that equal a war crime?
Well, I'm not a lawyer, so these things are always under law. But all of us in the armed forces were told there are obvious crimes that you don't do. No matter who says to do it, you don't shoot a prisoner. You don't kill unarmed civilians. And so these people were basically no threat to the United States. Their mission was finished with the destruction of the boat. So they sort of fall in the category of people who were no threat, and they shouldn't have been killed. Yeah, it looks like a war crime, prima facie.
Wow. Generally, Alvin Halsey, the admiral, who is retiring as the head of U.S. Southern Command, may well be called to testify before these committees. How important would that be, knowing that he can't play with the truth on this, and he was, of course, at odds with Hegseth over the operation? That's why he's stepping down. Will Admiral Halsey be the key to this case?
Not necessarily. We don't know where the reports came from. And looks like it was under the SOCOM rather than SOUTHCOM. So it might be the Special Operations Command commander who has to testify. Now, what we don't know is why Admiral Halsey was unhappy and why he's stepping down early. So maybe he'll be a peripheral witness in this. But it doesn't sound like he was under the chain of command. Maybe he was uncomfortable with the whole operation, or maybe they just had it out for him for some reason. You know, there have been over 20 general and flag officers fired by this or forced to resign by this administration. And there's never really been an explanation for most of it. It is unusual. Normally it's not done. And it does worry people in Congress that the military is being politicized. The whole idea of the United States Armed Forces, like the civil service, is you work for whoever the people elect. You're not partisan. And that's been a really important principle in the U.S. Armed Forces.
What did you make of President Trump's post over the weekend addressed to airlines, pilots, drug dealers, and human traffickers? He said, please consider the airspace above and surrounding Venezuela to be closed in its entirety. Does the United States have the right to close Venezuelan airspace, General? How would that work?
I don't know, but if I were a pilot, I would stay out of Venezuelan airspace. And I would imagine the international civil aviation authorities are coming back to the United States, and there's discussion about this right now.
Boy. Well, we know that we've got quite the armada set up in that area, General. We've talked about that. It remains, including the Jerry Ford Carrier Strike Group. President Trump said on Air Force One last evening that he had a phone call with Nicolas Maduro, the very leader here we're considering replacing in a regime change operation. If you put your diplomat hat on, what do you make of these dual tracks that the administration is taking?
Well, I think it should be dual tracked. You know, before the invasion of Iraq in 2003, we were trying to persuade Saddam Hussein to leave. Apparently, we had offered him $2 billion if he'd just get out of town. And we were told, basically, he was afraid that even if he took the money, he'd never live to use it because someone would knock him off. So he was, he elected to stay and tough it out. I don't know whether President Trump offered Maduro any money or not. But the desirable way to settle this at this point is for Maduro to leave. And that's the signal that he's been given. Now, is it wise U.S. policy? Is it the right strategy? Is this where our national priorities are? Those are different matters. But just in terms of the operation, the easiest resolution, the cleanest resolution, is for President Trump to say, look, I got a bunch of stuff out here. A lot of bad things could happen. You don't want that to happen, especially to you personally. Here's a little bit of money. Go somewhere else. But apparently, funds weren't offered, and Maduro has said no. Maybe there's going to be a second phone call at some point.
Boy, this is day to day, hour to hour. General, we know that the president will be meeting around 5 p.m., according to reports, with his war commanders to talk about next steps and what happened with regard to these drug boats, alleged drug boats. And of course, we'll let everyone know as soon as we learn more on this. But I have to ask you about what's taking place in Ukraine now that we see Steve Witkoff pack his bags for another visit to Moscow. There was quite a read in the Wall Street Journal over the weekend, General. Make money, not war, was the headline, to suggest that Steve Witkoff, Jared Kushner, and others are motivated by resuming economic ties and investment opportunities in Russia when it comes to the idea of ending the war in Ukraine. Is that a dangerous approach or one that will actually bring peace?
I think it's unlikely to bring peace in these circumstances because Russia is a very difficult country to deal with. It's not a normal country. And, Putin is prepared to say and do whatever's necessary to get what he wants. He wants Ukraine. He wants all of Ukraine. He wants the Baltic states back under Russian control. And he wants NATO basically to be disassembled, at least as far as it is in Eastern Europe. And of course, he'd like the United States to get out of Europe. So there's a lot more riding on this than financial transactions. On the other hand, if the world runs on finance, there's no doubt about it. And Russia does have certain commodities that could be put on the market if sanctions were lifted. So, but these men should be negotiating on what's in U.S. national interest overall, not in narrow financial terms that could be, swayed
Steve
just to their
Witkoff heads
friends.
from Moscow today. General Wesley Clark, thank you as always, General, on Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We've got stocks in the red, the Dow, the S&P, NASDAQ kicking off the new trading month, the new trading week with losses right now. December, by the way, historically strong, but right now red on the screen. S&P down 11, drop there of 0.2%. Stocks have halted their winning run as the Bitcoin sell-off deepens. Right now, the Dow down 184, down 0.4. S&P down 0.2, keeping it all in context. NASDAQ lower by 0.1%. The Mag 7 index down 0.1%. 10-year at 4.09% with a 2-year 3.53%. Gold flat on the day now at $42.38 the ounce. Silver is surging 3.7%, $58.59 the ounce. West Texas Intermediate crude $59.29 a barrel, up 1.3%. And Bitcoin now down 6.4% off session lows, 85,368 on Bitcoin. Lilly shares down 1.1%. Eli Lilly is cutting the price for introductory doses of its weight loss drug Zepbound, with the lowest dose vial costing $299 a month for those who pay cash. Those discounts available through the company's direct-to-consumer portal, Lilly Direct. Again, recapping here, stocks lower, S&P down 11, down 0.2%, Bitcoin down 6.4%, Bitcoin 85,354. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie. Good to have Charlie Pellet back with us, and he will have more on the Monday trade in about 20 minutes' time when we update the markets. Once again, I'm Joe Matthew in Washington. Thank you for being with us here on Bloomberg TV and radio with only 12 days to go, at least in the Senate, 13 days in the House, if that makes you feel any comfortable. These are working days before everybody heads home once again for the holiday season. Remembering that we've got some pretty major deadlines looming here. December 31st is when Obamacare subsidies expire, the same subsidies they shut the government down over and have still not managed to deal with after reopening. Then, of course, January 30 is when the government runs out of money, and if they don't figure out the health care part, we could be talking about another shutdown. With all the time that has passed, though, there are no new plans to talk about, save Bill Cassidy's plan. And leadership has not coalesced around it. Everyone's waiting for a cue from the White House. Will we give money directly to people? Will we simply extend the Obamacare subsidies? Because premiums are going up anywhere from 150 to 400%, and in many cases, in red states. Bill Cassidy, who I mentioned, the Republican from Louisiana, a physician, is out with his own plan for a replacement of Obamacare. He joined us earlier today on Bloomberg. He was on Bloomberg's surveillance. Listen to how he described.
If you got this amount of money, and currently under the current plan, you give 100% to insurance companies and they take 20% for overhead and profit. Instead, you give 100% to patients in terms of deposits within a health savings account. First, you're lowering their deductible, and because you have lowered their deductible, they can take a cheaper bronze plan. Now, normally you don't because your deductible is higher. We just lowered their deductible. They're getting a cheaper bronze plan. By the way, when you give power to the patient, she gets the health care she chooses to have that she knows she needs, as opposed to the health care the insurance company permits her to have. A lot of wins in here for the patient. Who would not be for that, whether you're a Republican or a Democrat?
Let me throw another date on there. It's the 10th of December, 10 days from now, next Wednesday, Fed Day. That's the day John Thune promised Democrats a vote on a health care plan. The one that they said might never happen in the House. There's no promise there. So will there be an actual piece of legislation to vote on? Is the first question we're asking today as we assemble our political panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us. Jeannie is Democracy Visiting Fellow at Harvard Kennedy School's Ash Center. Rick is our Republican strategist and partner at Stone Court Capital. What do you think, Jeannie? Will there be anything to vote on next Wednesday?
Yeah, hard to believe it's Fed Day and the big expected vote. I'm not sure because we haven't really seen anything on paper yet. And kudos to Senator Cassidy for having more than just a theory or a concept of a plan. That has been few and far between on the Republican side. So kudos for him. The problem is what you said at the top, Joe, which is, 12 to 13 legislative days left. I don't think we could see anything beyond some kind of kicking the can, whether it is an extension for a year or some kind of extension. Something like Cassidy is talking about is an important idea. It's good to consider, but it's going to take a lot more time, not just in the Senate, but when we look at the House where the real challenge is. So I think the best we can see this month is going to be something of a kicking the can.
Kick the can, Rick. What if we don't have anything to vote on next week? What happens then?
Well, if we don't have anything to vote on, it probably means that the Democrats are having trouble finding their own plan to put forward. Remember, the onus is really on them to present a plan to be voted on. And I would be shocked if they don't show up with a 2-year extension to the Obamacare subsidies for insurance, 1-year plan with some tweaks on eligibility. I mean, it's really not hard. This thing has been really, really extensively debated and discussed, and including finding some support amongst Republicans for, sort of extending the plan for a year and not letting these subsidies drop off and the insurance prices go up so high. So I really honestly can't see why it's such a big deal in the Senate to have a vote on a plan that we know the Democrats are all uniformly in support of. And find, 5 or 6 or 7 Republicans to go along with that. That's kind of how we got to where we are. But I agree with Jeannie. I mean, like, how that plan gets through the House of Representatives, good luck. I would say the one thing that's building is there's a lot of fear amongst the Republicans around the fact that we don't have a plan in healthcare. We've just gone through the government shutdown related to this. We had nothing really to say about it. Cassidy does have a partial plan that a lot of Republicans may be willing to walk the plank on, but it doesn't really solve the major problem, and that is, does the voters who go to the ballot box in November for the midterm elections look at their House member who's a Republican and say, yeah, you helped me reduce the price of my groceries, you helped me reduce the price of my healthcare, and you did it all without increasing government spending. Boy, I think 3 strikes and you're out. I mean, so we'll see, but I do think that there's a lot of concern.
Wow. Well, Jeannie, there was a plan. I think there have been a couple of them here on the Democratic side, as Rick alludes. Chuck Schumer, toward the tail end of the shutdown, showed up, remember, with a 1-year extension. That was going to buy enough time to negotiate something larger. There are also proposals for permanent extensions. Why not just send that over to John Thune's office?
I think that's what Democrats will try to do. I don't know if it will get through. I doubt a permanent extension at this point would have any chance, maybe a 1-year. I think of that as a real lifeline from the Democrats to the Republicans who are getting killed in the polling on this. But does it get through? Based on the reaction to Donald Trump's floating an idea of a plan for a 2-year extension, I think it was before Thanksgiving, the visceral negative reaction from Republicans in the House, particularly on that, very, very tough to see that happening. And I think this all speaks to the fact that the president is finding himself on the wrong side of an issue that is quickly becoming paramount in the minds of most Americans, whether 60, 70, 80% in some polls of Americans saying we cannot afford to live. Healthcare is a part of that. And the president is doing everything else from designing ballrooms to planning attacks on Venezuela for unknown reasons. What he's not doing is getting out with the American public and saying, I've got a plan to address this, maybe because he knows his own Republicans in Congress are not willing to pass it. So he's really going to have to use his capital in the House if he has any hopes of pushing something through. But it is going to be an uphill battle for the president and the GOP at this point.
Well, that is for sure. So if we have a vote next week, we'll see, Rick, How concerned are you about that other deadline at the end of January when it comes to government funding? Because it does seem that we could actually see a real budget with some minibuses come together here with maybe a little bit of time, maybe not required. Could we actually have an old-fashioned budget passed, or am I starting to lose my mind here?
You know, I think within what you just described, Joe, there are some appropriations bills that are ready to go. Maybe you combine them, as you said, into a minibus like they did at the end of the last spending bill, and do get some of that funding through. So some of the funding is permanent now for the fiscal year 25, and so yeah, I think there'll be probably enough momentum, especially before the holidays before the Christmas holiday to get something done. And has always been remarked on this show, of course, there's never a deal until your back is up against the wall in Congress on timing, and you can smell those jet fumes and getting ready to go home. So my guess is that's going to happen. There is an interesting battle going on in the House right now, you know, where a lot of the more right-wing anti-debt, anti-deficit Republicans are saying, let's just pass this bill. Let's just pass a permanent CR. It's not going to raise spending. It's, you know, who cares at this stage? We've only got, you know, 8 months to go before the fiscal year is over. And we can at least go home and say we held the line on new spending, which is going to be one of the three stools of the leg, I think, that are going to, you know, sort of force these guys to make some decisions when it comes to what's in it for the taxpayer. So I think there are a lot of hard decisions to make, but it's set up pretty well for getting a deal done before the end of the year.
Jeannie, we've got our eyes on Tennessee's 7th congressional district, where there's going to be a special election tomorrow, and I wonder if you think all of this plays into the outcome. This is a Trump plus 22 district, but Donald Trump is actually going to hold a tele-rally this evening. The Speaker of the House is going to be on the line to support Republican Matt Van Epps. President was also on Truth Social over the weekend talking about Van Epps' Democratic challenger, Democratic State Rep Afton Ben. I'm asking you to get out and vote for Matt Van Epps. He says he will be a great congressman. Unlike his opponent, he cherishes Christianity and country music. She hates them both. I don't know if that's true, Jeannie, but in our remaining moment, can you win Nashville if you hate country music?
Apparently, she's a state senator there. She was, I believe it was CNN, maybe one of the other stations on Sunday. They asked her about this clip. She did say it, but she said it was before, Joe, she was an elected official. And when people are interrupting her, getting in and out of her house with weddings and all these things, she gets annoyed. You know, I do think the Republican will pull it through. The fact that we're even talking about it is enormously telling. It's a 22 district for Trump, as you mentioned.
Yeah. Yeah, get ready to hear a lot about moral victories tomorrow, maybe on both sides. Great conversation. Great to see you both together again. That's Jeannie Shanzano and Rick Davis, Bloomberg Politics contributors, the best in the business. We just confirmed we've got another show tomorrow. Caroline Leavitt says the president will be holding a cabinet meeting. We'll bring it to you here on Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Bitcoin is tumbling. Stocks are stumbling. The Dow, the S&P, NASDAQ, all in the red, kicking off the brand new trading month right now. Looking at a 7-point drop on the S&P. We're well off session lows. That is a decline of 0.1%. The Dow down 152, decline of 0.3%. NASDAQ Composite Index down 27, a drop there of 0.1%. The Mag 7 Index, we'll call that flat on the day. The 10-year, 4.09%, with a 2-year currently yielding 3.53%. Gold also flat on the day at $42.38 the ounce. Texas, right now, West Texas Intermediate crude, $59.39 a barrel, up 1.4%. Bitcoin, though, selling off. Right now, we're looking at Bitcoin down 6.9%. Bitcoin at 84,837. Stocks are falling as traders shun riskier corners of the market amid that sell-off in crypto. NVIDIA is investing $2 billion in chip design software maker Synopsys' stock as part of a broader engineering and design tie-up, the latest massive investment by the chip maker into one of its own suppliers. Shares of both companies are advancing, NVIDIA up by 1.4%, Synopsys up by just about 4.5%. Coming up after the close of trading, we will be hearing from MongoDB and another tech name scheduled to report, Credo Technology Group. Recapping stocks, Laura, S&P down 9, drop there of 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, hope you had a happy Thanksgiving. Great to have Charlie Pellet back with us today on Balance of Power, and great to have you as well on Bloomberg TV and radio. The Monday edition underway with some big questions that we're asking about the congressional agenda, as we just explored with our political panel, but also when it comes to war and peace. Steve Witkoff is getting on an airplane today, probably packing his bags right now. The man who has not been to Ukraine yet this year is making his 6th trip to Moscow, where he will be sitting down with Vladimir Putin. And he's not the only one talking about this. President Zelensky in France today to speak with Emmanuel Macron, who we understand just as well spoke with President Trump about Ukraine. That headline just crossed the terminal a short time ago, with hopes that we're on the precipice of some sort of breakthrough here, knowing that Witkoff, Jared Kushner, and the Secretary of State Marco Rubio have helped to hammer out something in the area of what is now, we understand, a 19-point peace plan, having had a 5-hour meeting over the weekend here outside of Miami, focused on exactly where the border will be drawn in Ukraine, according to the latest from Axios. Witkoff hosting the company at his Shell Bay Golf Club near Miami before he heads to Moscow in hopes of presenting something to Vladimir Putin when he gets there this week. This could be a pivotal week in the future trajectory of this war. The president was asked about motivations when it comes to seeking peace on the flight home last evening. Here he is talking with reporters on Air Force One. Listen.
I think Russia would like to see it end, and I think I know Ukraine would like to see it end.
You just said that Ukraine has a little bit of problems.
Well, we have a corruption situation going on, which is not helpful.
And is that impeding the peace talks?
I said it was going on for 3 years, right? Didn't I say it? For 3 years I said it, so I was way ahead of schedule. But I think that there's a good chance we can make a deal.
Indeed, 3 years. The president who said he would have this war ended on day one. We are now rounding out year one, and joined in studio, I'm glad to say, by Ben Jensen, who comes to us from CSIS, director of the Futures Lab, senior fellow for the Defense and Security Department at the Center for Strategic and International Studies. Ben, it's great to see you. Welcome back to Bloomberg TV and radio, as always. We can talk to you about military strategy and about diplomacy, and I'd like to get to both here. Why don't we start with the obvious, and that's the diplomatic track that Steve Witkoff and others are on. The president seems to be dispatching different voices here. Kushner and Witkoff, you go to one. Secretary of State Rubio, you go to the other. At some point, we need everybody at the same table, don't we?
We do, but this is how modern peace negotiations work. So despite some of the strangeness that surrounds this, despite that it's a very tight personalistic network that the president is using to negotiate, which is different than standard diplomatic practice, at least in the United States, everything you're seeing playing out is actually not that uncommon in some senses. So if you look at the actual statistics of how peace negotiations and wars end, sadly, in the modern world, wars either peter out or you come to an uneasy ceasefire that fails. So only 31% of conflicts end in some type of negotiated settlement. And even of those, 40%, even during negotiations, relapse into conflict within 5 years. So I think that's why you've accurately seen Secretary Rubio characterize this phase as the start of a negotiation. He called it, I think, a living document. That's right. And so that's why you have everyone going out, trusted person-to-person conversations. And we're trying to work out, we've gone from 28, the U.S. initial kind of Witkoff deal, I guess we can call it, down to 24, the European. Now we're down to a 19-point proposal. And so what you're seeing is each side engage in a bargaining activity that allows them to look at where the most intractable issues are, what's mutually acceptable, although painful to both sides. So I'm still mildly optimistic, but I think the best case is that this all results in a ceasefire, and I'd rate that as less than even chances.
Fascinating. I've never heard those stats before. That's fascinating for the backdrop to these talks. There's a lot that Ukraine has to potentially lose here. What would Russia be giving up in the plans that you've heard about?
Well, I'm curious about that too, and apparently only Special Envoy Witkoff knows that, and it doesn't look like a lot. So we've actually been studying this pretty in depth at the Futures Lab for a year. So about a year ago, I traveled to Ukraine about every 6 months to try to do my best to help out with that side of the conflict, not the Russian side. And what I noticed in that process is I had a sense the war is coming to a critical point, and you're going to have to end at some point. No war can last forever. This has been brutal for Ukrainian society. These are people fighting for their freedom against all odds. And so we started to write over the last year of what would the negotiations look like. In fact, we actually surveyed experts. We scraped prominent news sources. And then we actually trained using an API into ChatGPT 4.0. We actually ran 1,000 different simulations of different peace negotiations to use kind of modern technology to analyze the distribution. And so your viewers can check that out at Strategic Headwinds, but that's a lot of our research on this is shown. That's all public. That's all public. We built this because we want Ukrainian negotiators, European negotiators, American negotiators, first and foremost, to have access to objective, nonpartisan data they can use to help find a negotiation. What do you find in that? Number one, good news about the Macron meeting, because whenever we look at human experts or the AI model replicating them, security guarantees are the most important thing. So the 28-point plan was dead on arrival because it didn't really have anything for credible security guarantees. It kind of threatened diplomatic démarches and some economic punishment. So security guarantees are by far the most important thing. Where we saw humans and AI diverge is what comes next. And so humans seem to think there's really a room for freeing up these Russian frozen assets, giving it back to Moscow, reducing sanctions, so kind of using economics to induce Moscow in. When we ran the AI simulations, and that included loading over 300 past peace agreements in, they were less optimistic about the economic component. Now, I still personally think economic statecraft is the fulcrum here. That's the only way you can get Russia to agree. And I think the good news, if there is any out of the Witkoff trips, is that he seems to have the right people in Russia talking about some type of investment scheme. The bad news is that doesn't seem to direct the money to rebuild Ukraine that Russia has spent years now destroying.
I am blown away by this. Did you know, James, we were going to get into this? So AI is the platform, though. Yes. Economic diplomacy might be the fulcrum, but AI is the platform that you're talking about to find peace. Is this the future of war and peace?
Well, we think so. I mean, in my lab, we believe that AI agents can help humans digest larger volumes of information. So you still need expert human users. And I'm sure your audience in Bloomberg has been using technology like this for a long time, right? It's still a trader's intuition, but the more data they can analyze, the more they can apply statistical reasoning to it, the more they can find past patterns, look for those strange signals, the more likely they are to seize an opportunity. So what we've done is use use that initial analytics to then look at where we needed to go deep. And that's why most of the pieces your viewers will find on there deal with the details of security guarantees and then some of the economic aspects. Now, one of the most important things to highlight, and that all parties agree, is that even if it seems like this deal comes to an end, it doesn't. That 40% relapsing in 5 years is really important. And one of the major things to really watch for is usually the reason it relapses is because each political party has a backlash, a spoiler domestically. So Zelensky, if that line is drawn wrong, and in the middle of a corruption scandal, Zelensky's all of a sudden voted or chased out of office, and you have hardline factions come up in Ukraine. I'd love to see Putin replaced, but we ought to really think what comes after Putin, and if even Russia would stay a actual sovereign state or dissolve into a series of regions. So one of the things you have to watch for carefully as you spread this out, and this is why it's important to build that RAG model with AI to analyze historic peace agreements, is that domestic political spoiler, how domestic politics matter when you're ending an international war.
This has been a real eye-opener for me. Before you leave us, with all of that said, do you expect this week to bring a breakthrough, or are we way over our skis on this?
I hope and pray are different than reasoned estimates. And so I would say I think Secretary Rubio is right. This is a living document. I think Putin is going to prolong this as much as possible, and he's still going to try to bomb Ukraine into submission. Our firepower strike data showed that the month of October saw a threefold increase over 1 year. So October 2024 versus 2025, 3 times as many Shaheeds, ballistic missiles, and cruise missiles were used to target Ukrainian cities with a special focus on power infrastructure. He wants the Ukrainian people to freeze while he protracts negotiations so that he can get more territory and get more of that oligarch loot back in his pocket and not investing in a dynamic Ukrainian free economy.
Cold as a weapon. I learn something every time I talk to you. Ben Jensen, CSIS, thank you so much. We all learn from Ben when he's here. Back it up on YouTube or on TV or subscribe to the podcast, because I haven't heard that anywhere. Center for Strategic and International Studies, Ben Jensen. I'm Joe Matthew in Washington as we round out Balance of Power here for this Monday, the early edition. We want to just keep tabs on what's happening on Wall Street because we saw a real run at a recovery a short time ago. We're back in the red here, but well off our lows of the session. And Nora Melinda, Bloomberg markets correspondent, is with us now from World Headquarters in New York. We just can't help ourselves from buying the dip here, Nora.
We clearly cannot. But I mean, we are seeing a lot of dip buyers out in the market, as you mentioned here. This is really encouraging to a lot of the sources that I've been speaking with, especially as we think about the momentum headed into year end. I mean, if you think about the fact that we've been seeing a rally, the longest streak of monthly gains since 2021. But as we sit here today, of course, we are seeing a bit of a breather from that rally as we are seeing stocks here falling into the red. And it's a little bit of risk-off sentiment that we're seeing percolating right now, especially as we see a lot of traders looking ahead to the Fed meeting. There's still a lot of unrest right now, a lot of questions right now about the strength of the consumer. But I mean, of course, we did get that retail picture here from Black Friday here that really did show us that we are seeing strength in the consumer, despite the fact that there were a lot of concerns about resiliency there.
Bitcoin remains a problem here. I guess crypto across the board. We're back below 85,000, Nora. A lot of the narrative last week and the week earlier when things started to fall out of bed was that crypto was the culprit here in leading stocks lower, that it was forcing people to raise money in stocks like NVIDIA and the Mag 7, and it's still going down, Nora. How should we be reading into this market-wide?
Well, analysts are really looking at 80,000 as the new key support level here. And this is really a big difference from what we saw when we saw a rally of Bitcoin above 100,000. So we really are seeing some pressure here on this asset class. And it's no surprise when you did see a lot of people pulling out of Bitcoin when there is some sort of risk off sentiment in the market. But we did get that news from Strategy, of course, also seeing a sell off after they said that they were creating a $1.4 billion reserve to pay for future dividend and interest payments. But a lot of investors are really saying that this isn't really quelling concerns more broadly, that a lot of these companies like Bitcoin treasury firms are actually going to be able to be forced to sell their Bitcoin holdings here, especially if we continue to see a downward trend.
Yeah, well, we'll keep tabs on the rest of the session with your help, Nora. Thank you so much. Nora Melinda back with us on Balance of Power. I'm Joe Matthew in Washington, where we now have breaking news coming from the White House. In our remaining moment, I do want to let you know, and Caroline Levitt is talking about this with reporters in the briefing room. We have a document here about President Trump's MRI. He was asked about this on the plane last evening and could not detail what body part was being looked at. Apparently, according to Caroline Levitt, again, the White House press secretary, this was preventative. The MRI, preventative imaging, cardiovascular imaging, the president's cardiovascular system showing excellent health, abdominal imaging, perfectly normal. As I read from the letter, President Trump's cardiovascular imaging, perfectly normal. There is no evidence of arterial narrowing, impairing blood flow, or abnormalities in the heart or major vessels. The heart chambers are normal in size, it reads. The vessel walls appear smooth and healthy, and there are no signs of inflammation or clotting. Overall, cardiovascular system showing excellent health. The president made clear it was not likely his brain they were looking at. Now we know it was his heart, and we will have more on this on the late edition of Balance of Power. I hope you'll join me starting at 5 p.m. Eastern Time as we get back to reality in Washington, lawmakers back on the Hill, and the president in the White House. We'll see you back here at 5 p.m. on the fastest show in politics on Bloomberg.
Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Whoa ho. Ho ho.
All right, is that what we do now that it's December? Ho ho ho.
Ho ho ho. Or will it be? I mean, I can't even believe we're at December already.
Are you saying you don't know if there's going to be a Santa Claus rally or not? Is that what you're saying?
I just can't believe that we're in December of 2025 after the year that's been. I mean, we're not quite there. We have another Fed meeting. That's next week. Yeah, I just feel like all the stuff that's come out of investors, like where do we go from here?
Well, we're off our worst levels of the day on the S&P 500 right now, but still in the red, down 0.1%. The NASDAQ composite down fractionally. The Dow Jones Industrial Average down 0.4%. Charlie Pellet's going to have more in just a minute, but off the worst levels of the day, Carol.
Yeah, pretty wild, right? All right, so we've got just some slight losses, but as you said, off our worst levels. U.S. Treasury is falling thanks in part to a slide overnight in Japanese debt. This has been a big global bond story on this Monday. The reason we saw that slide, expectations there in Japan of a rate increase later on this month. And then, as I said, we've got a Fed meeting and decision next week. It's practically all but certain as 100% or 99.9999% that we're going to get a rate cut next week.
Okay, stuff can happen between now and then.
Like what?
I don't know.
Like what?
We don't know what could happen.
Like a crisis?
Maybe.
All
I
right.
don't know.
No, we're not saying that. Hey, so anyway, this hour, well, this is kind of what we're doing the next 60 minutes. Is the glass half empty or half full when it comes to things like stocks and the market right now? And what are the catalysts out there for the upside or downside moves? So we're going to get into that.
Also, an update on how consumers are faring in this economy from Black Friday to Cyber Monday in the next few weeks. Dana Telsey is going to be with us of Telsey Advisory Group. She tracks it all and those big retail names too.
Glass half empty, glass half full.
I think it's going to be half full. That's what my prediction is.
Also, Jay Chaudhry, he's the founder, chairman, and CEO of Zscaler on stock outperformance and on earnings disappointment because the stock did take a hit on that. But nonetheless, some growth concerns, but we're going to hear what the CEO has to say.
All that and more coming up over the next 60 minutes right here on Bloomberg Business Week Daily. First up, though, he is back. A check on the trade and top business stories. Here he is, Charlie Pellet.
Half empty, half full. Let us begin with the NASDAQ 100 index, because moments ago it turned positive, barely. Right now back in the red, down under 0.1%. Little change, but the key theme here, we are seeing some sort of recovery in the market today after earlier losses. S&P right now down 12. 68.36 where we stand again, off session lows down 0.2%. Dow Industrials down 211, drop there of 0.4%. NASDAQ Composite Index down 29. For NASDAQ, a decline of 0.1%. And to be clear, NASDAQ 100 index now down 0.1%. 10-year 4.09% with a 2-year that's currently yielding 3.53%. Gold flat on the day, 42.38 the ounce. Silver, though, surging 3.3%, 58.38 the ounce. West Texas Intermediate crude up 1.3%, 59.33 a barrel. And Bitcoin, major story today as the selling continues and intensifies. Bitcoin down 6.6%, 85,111 right now on Bitcoin. Moderna shares down 5.9% after the FDA said in a memo late last week it will place new restrictions on which vaccines hit the market. Other vaccine makers lower as well. Case in point, Novavax down 3.8%, and BioNTech, it is down now by just about 4.6%. Again, recapping here, the Dow, the S&P, NASDAQ, all in the red. We're off session lows with the S&P down 0.2%, and Bitcoin keeping a close eye on that move, down 6.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Great stuff as always. Charlie Pellet, thank you so much. We'll be back to Charlie a little bit later on. All right, as Charlie mentioned, stocks down off their lows, though, of the session. You've got U.S. Treasury yield. They are backing higher. And so the start of a historically strong month on Wall Street did see stocks falling as traders shunned riskier corners of the market amid a sell-off in cryptocurrencies. Nearly $1 billion of leveraged crypto positions were liquidated during a sharp drop in prices today. So that fall off and kind of backing away from crypto, Bitcoin continues to.
There's also that rout in Japanese debt rippling through global bonds. Great to have back with us Bloomberg opinion columnist Nir Kaysar. He's founder of the asset management firm Unison Advisors. He joins us from Providence this afternoon. Nir, I don't usually start with cryptocurrency, but it does seem like this is worth talking about in terms of, okay, not just that Bitcoin's down another 8% or 6% right now as we speak, but any sort of signal that sends about the wider risk appetite in markets right now. Is there one?
Hi, Tim. I don't read crypto in this moment as sending broader messages. It is highly correlated with risk assets generally, and we tend to look at it alongside stocks naturally because of that relationship. But when I look at what's happening in the crypto world and then I look at the stock market, I'm struck by the difference in the sentiment. I mean, stocks, the fundamentals look good. The market is relatively healthy. We've had some bumpiness recently, but for reasons we can get into, I don't think that's cause for concern. Crypto, on the other hand, looks like there's some real demand issues there. And, I have my own theories. I mean, the problem with cryptocurrencies, as everybody knows, is there's no fundamentals to look at. So it's really a supply and demand story. And once ETFs came to market and a lot of people started piling into crypto, there was tons of demand. I think this may be just a natural breather. The people who wanted to own crypto did, and now are taking some profits, and that might be creating a new supply and demand balance than we're used to the last couple of years.
I mean, what do you make of, I just want to stay with crypto Nir for a moment if I can, Strategy creating a $1.4 billion reserve to fund future dividend and interest payments, which will cover at least 21 months of dividend payments. The share price, though, under a lot of pressure in today's session. And so, I don't know. And then they're saying they'll sell Bitcoin as a last resort if needed to fund dividend payments below. I think, Tim, you mentioned... without crypto, what are they?
Yeah, without Bitcoin, what is Strategy?
Without Bitcoin,
this is, that's what they are. I mean, there's a software business, but that software business doesn't actually put out enough cash to pay the dividends. So how does it do it?
Yeah.
Well, I think, Carol, the problem there is that, if you wanted to just own Bitcoin, you would own Bitcoin. So these companies that are effectively, Bitcoin strategy, they have to have another reason for being. And I think one of the cases that they can make is because we are a corporate entity, we can sort of shield investors from some of the trauma that's involved with owning cryptocurrencies, including Bitcoin. We can have regular liquidity and distributions, et cetera. And I think now they're thinking about what happens on the longer march. To the extent that there's going to be big ups and downs from Bitcoin, and there will be, without a doubt, there will be. It's in the volatility numbers. Can they add value on top of it? And I think they're in the process of trying to answer that question. That's going to be very difficult to do, I think, to manage that volatility in a way that allows them to pay regular dividends and behave like a stock rather than a one sort of cryptocurrency, say, pot. But we'll see. I think that's what they're trying to accomplish.
Neil, well, go ahead.
No, please.
Nir, I was just going to say, before we move on to broader indices and broader markets, I'm just wondering, remind us, do you see any value in Bitcoin?
I don't know the answer to that, Tim. I'll be honest with you. I mean, I think as time has gone on, when we were having this conversation 10 years ago, there were a lot of hypothetical use cases for Bitcoin. And I think as time has gone by, many of those have eroded. It's not really a medium of exchange. I don't think anyone thinks of it in that way. It's not really a store of value in the sense that, it could be, I guess, long term, but it's very difficult to define something as a store of value when it's so volatile. An alternative to gold, I think that's coming under fire because gold has done so well this year and Bitcoin has not. So I'm just not sure ultimately where this is going to go, except to say that, if you don't like traditional markets or traditional financial instruments, to the extent that you're not buying Bitcoin through the regular channels like Strategy or like ETFs or whatever, there is still an argument for playing in effectively an asset that can live outside of the traditional financial system to some extent, a lesser extent all the time, but to some extent. That's about the last use case that I can think of. And I just ultimately don't know how sustainable that is. So I don't have a lot of confidence in the long-term viability, Tim, I'll be honest.
Sometimes I think about crypto and it's like, that person you date, and they're like, they're nice, their family's nice, we go to a movie, we have fun. When you have to make the case so hard for something, it makes me wonder, okay, maybe it ain't happening.
Yeah, I mean, I think there's some of that, but there's also, I think it's useful to separate the Bitcoin specifically from the technology underneath it, from blockchain. Let's just say we've stopped talking about that. I feel like 5 years ago we talked about blockchain as a technology or whatever. I mean, I think ultimately there is a technology story still here.
Yeah.
And I could imagine a world. I always think back to the internet, say 1995. I hate to age myself. But in those days, everyone talked about Netscape, and no one knows what Netscape is. The survivors of that era were not even born in 1995, And so I can imagine a world, I think it's still early in the crypto world, and I can imagine a world where ultimately what survives 10 or 20 years from now, or not even survives, what is the main story is something we're not even, is a new entrance that we're not even aware of at the moment.
Yeah, I feel like I get blockchain more for like some use cases, if you will. Hey, just quickly, 30, 40 seconds near before we go, catalysts for good or bad, if you will, when it comes to equities going forward or financial markets overall. What do you see?
I'm going half full on the glass on this one. I mean, as I look around at the macro environment, I just don't see anything to dislike. I mean, I look at, the 2-year is very near to the Fed funds rate. The inflation expectations are well anchored. If you look at break-evens, no bond vigilantes in sight. Credit spreads are normal. I mean, on the low side, but no sign of distress. Financial conditions are good. GDP is growing pretty well. According to the Atlanta Fed, unemployment continues to be relatively low, even though it's ticked up. And perhaps most importantly, when you look at the profitability of the S&P 500, I'm looking at free cash flow because I want to take into account spend on AI and other spend. When you look at free cash flow margins, the median for S&P 500 companies is 15%. That is very strong. Yes, bricks can fall out of blue skies. But when I look around, I just don't see anything to be happy about. So I say, Happy New Year.
It's a little early, but we'll take it, Nir. Happy New Year. Happy New Year to you too, good sir.
I like optimism. I'm an optimistic kind of girl. All right, Nir, thank you so much. Nir Kaser, he is Bloomberg Opinion columnist. All right, that's your market view. Let's get now to developments in AI and big tech. As the king of AI bellwethers, we're talking about NVIDIA, invested $2 billion in chip design software maker Synopsys as part of a broader engineering and design tie-up aiming, Tim, to infuse its AI computing technology into more industries.
With the tech roundup, we head to the Bloomberg News Studio and Bureau in San Francisco, where we find the co-host of Bloomberg Tech, Ed Ludlow. Ed, why is NVIDIA doing this? Why now?
Yeah, I guess there's a question of why is NVIDIA doing this, and then what does Synopsys get out of it? It's like Synopsys makes the software by which chips are designed but also validated. So before you send a chip through the fab to be manufactured, you want to know that that design works, and that's a big part of what Synopsys does with all kinds of tech companies. And so part of the interpretation of why is NVIDIA doing this is it's a sales channel, because Synopsys is basically saying, imagine how good our software would be if it was underpinned by NVIDIA's GPUs and NVIDIA's catalog of software, which largely it's called CUDA-X. It's basically a library of building blocks for AI that just make existing software platforms better. And so the next thing you're going to ask me about is probably circular financing. But from NVIDIA's perspective, it gives them entry to a tool or a platform that lots of people are using.
So, circular financing? I mean, come on. Like,
Carol did it.
Is it just getting crazy? Or is it real? I don't know.
The parties on this specific deal, NVIDIA and Synopsys, would say this is not circular financing in the same way that the graphic you're showing to our video audience illustrates. There is no requirement that Synopsys purchases from NVIDIA's GPUs. Additionally, and this is all according to NVIDIA's CEO, Jensen Huang, who was speaking this morning. Additionally, as I said, Synopsys does business with all kinds of chip makers. And NVIDIA also does business with other makers of chip design software. Siemens is one, for example. And none of that's going to change. Everyone is free to carry on as they want. And it goes back to the why is NVIDIA doing this? this is an area of the technology world we call electronic design automation, EDA software. And a lot of people feel that those systems which have historically been run on CPUs, old engineering platforms, could be a lot better if they were run on GPUs or AI accelerators. They're just better pieces of software as a result. But there are loads of players. Now everyone's free to have better software, is how NVIDIA would put it.
But why? I mean, Synopsys wants to have NVIDIA as a customer, right? Like,
Yeah.
so why did they need
Correct.
to, like, what does that $2 billion investment do? Right? Like,
So this is like highly analogous with the Intel situation, and it's highly analogous with the Nokia situation. And so this year, I've had two specific opportunities to ask Jensen Huang, what's the rationale behind taking a stake? Like, why do you need to own between 2 and 3% of these companies? And his answer is always, I thought it would be a great investment and that in the future that investment will pay off. So NVIDIA got these Synopsys shares at $414.79 a piece. The stock's now higher than that. I can't see it on the screen. $440 a piece. But I remember back in October when we were in DC, I asked the same question of Jensen, why did you have to take almost 3% of Nokia? And he was like, well, it looks like a pretty genius move now, doesn't it? Because Nokia shares are up 20%. And I just, like, in the moment, I couldn't believe that was his answer. But he genuinely believes that it's going to be a great investment because he sees those engineering partnerships changing the respective fields that they're going into.
Okay, Ed, we only have 3 minutes left, but there's two more stories we want to hit with you. One is DeepSeek, because China's DeepSeek unveiled 2 new versions of an experimental AI model that it released weeks ago. It adds fresh capabilities the startup said would help with combining reasoning and executing certain actions autonomously. I'm old enough to remember earlier this year when a DeepSeek update comes out and tank shares of NVIDIA. We don't see that, and we haven't seen that. Where is DeepSeek when it comes to competition?
Okay, so DeepSeek v3.2 has been out for a number of weeks now in the form of DeepSeek v3.2 EXP, experimental. They just dropped the EXP bit. And it's an open source model that against benchmarking performs very well against GPT-5, OpenAI's latest model. Where they've made a difference in this open source world is that, like OpenAI, DeepSeek wants to make the tool more useful. So they have the human reasoning element. It parrots the behavior of a human, but it applies the tool in a more useful way. Markets reacted in January through April the way they did because they didn't understand how DeepSeek had achieved that performance for a model at the low cost point that it did.
Does the world need to be worried? Or I guess, like, how does this fit in? How competitive is it, real quickly?
It's competitive.
Okay.
Models at this scale have tens of billions of parameters or more. And what DeepSeek did is called mixture of experts, or MOD designs, where if you have a 100 billion parameter model, when you run the inference, you actually run it. You don't need to access all 100 billion parameters. They found a way of just accessing, say, 10 billion parameters or 60 billion parameters, which makes the cost of running it and the compute much more efficient.
Yeah.
So the model is as performant, it's just easier to run.
I do feel like everything's now about efficiency in terms of power use and just getting things done. Hey, what do we need to know about Masayoshi Son, the SoftBank founder, who said he wouldn't have sold off NVIDIA shares of his company, had unlimited money to bankroll its next investments in artificial intelligence? Is there something important here that we should acknowledge?
All you need to know is that he wishes he hadn't sold it, but he didn't have enough money. He needed more money. So he sold the thing that could get him money, NVIDIA shares, and then he used it to invest in the thing he thinks will make him more money in the future, OpenAI. And it's as simple as that.
All right. I love when
Even
things
he
are
needs more money.
What does that say? How about buy now, pay later?
It's just society. It's just the world we live in, Carol.
Everybody needs more money. All right, going to leave it there. Ed, always glad we can go around the world of technology with you. Ed Ludlow, of course, he is co-host of Bloomberg Tech at Bloomberg Television. Catch Ed and Caroline Hyde, 11 a.m. Wall Street time every Monday through Friday on Bloomberg TV.
Rich Go on the Bloomberg terminal shows that Masayoshi Son is the 68th wealthiest person in the world with a net worth of $32.1 billion.
But even he needs more money. Hey, coming up, we're going to get into what's going on with Zscaler. The stock has been outperforming. We talk earnings and more with the company's CEO. That's next.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. First trading day of the week, first trading day of the new month, a historically strong month for U.S. equities. But today we got stocks wavering, in fact, lower across the board right now with the Dow, the S&P, NASDAQ all declining. Also looking at a rout in Bitcoin. S&P right now down 22, drop there of 0.3%. The Dow is down 291 points, a decline of 0.6%. The NASDAQ Composite Index right now lower by 0.3%. 10-year at 4.09% with a 2-year currently yielding 3.53%. Spot gold is little changed on the day, down $1 the ounce, 42.38. West Texas Intermediate crude up 1.2%, 59.28 a barrel. Bitcoin, though, the major story, selling off right now by 7%. Bitcoin at 84,833. Japan's largest steel producer, Nippon Steel, will shortlist 2 or 3 states for construction of a major new plant in the U.S. and make a final decision on its location in early 2027. Nippon Steel says its U.S. Steel subsidiary is seeking a site capable of supporting a steel plant with 3 million tons of annual capacity. Today, we're looking at ADRs of Nippon Steel up by 0.2%. Again, recapping, stocks lower. S&P down 0.3%. Bitcoin right now down by 7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, shares of the more than $39 billion cloud security and software company Zscaler are easily outperforming both the S&P 500 and NASDAQ 100 today. The stock is up nearly 40% year to date, and yet we did see shares under pressure today, dropping nearly 4% after Bernstein downgraded the software company to market perform from outperform on growth concerns. Bernstein, by the way, setting its price target on the stock to $264 a share. That's a 5% increase from the Friday close. I should point out that initially Bernstein, when the company reported earnings last week, they initially maintained their outperform rating. So there's been a lot of movement. Analysts in general, Tim, a flurry of them weighing in, some raising their price targets on the stock, others lowering them. And we should point out the stock did drop about 13% last week. That was on Wednesday following their earnings.
Yeah, the forecast was annual revenue that was only slightly above estimates. For more on the company, we're joined by Jay Chaudhry, founder, chairman, and CEO of Zscaler. He joins us from San Diego. San Jose, excuse me. Also with us is somebody who knows this company very well, Bloomberg Intelligence's global head of tech research, Mandeep Singh. He joins us here in the studio. Jay, I just want to start with you. The growth concerns, the disappointment over the annual revenue forecast that was only slightly above estimates. Is growth slowing?
Not at all. We had an outstanding quarter. Our ARR growth, 26%. Revenue growth, 26%. Free cash flow margin, 52%. Operating margin, 22%. We beat all the metrics that Wall Street was looking for. In fact, if you take our free cash flow margin and add it to our revenue growth, that's 78%. That beats the rule of 40 that many investors look for very, very well. And this is at scale of $3 billion or higher. There are only about 5 pure-play enterprise SaaS companies that are in that unique class. So we've done extremely well. We are very proud of what we delivered, and we passed a meaningful beat we did and raised our annual target. So I think we're very pleased with it. I think investors get it wrong from time to time. This is one of those times.
That's what I was going to ask. You know, what you think investors just got it wrong? Because, I mean, 13% is a pretty big hit. So you think, I mean, that's not like them wavering at all. They really wanted more from you guys. I mean, the expectations were certainly high.
Look, markets do what they do. I have one focus: keep on innovating and serving our customers. And those innovations started with Zero Trust architecture, which has changed the world of old school firewalls and VPNs. And now as AI security is coming, AI security is becoming a big concern. And Zero Trust that we pioneered is the foundation of it. So we have amazing interest from our customers. That's why we're able to deliver these strong numbers. Over 45% of Fortune 500 companies trust us, depend upon us. So I'm very bullish about our future. So, Jay, talking about AI security, I mean, you have a business model that's reliant on companies hiring more people, and you have a seat-based model. How does that change with AI security? Because AI, what we are seeing out there is more consumption-based. So how does that impact you and your business? It's a good question. So we started out with bringing zero trust for users, so users can access applications without being on the company network. And natural pricing for that is user-based. Then we moved the model to the architecture of the next thing. How about zero trust communication for workloads, cloud workloads? That's actually based on number of workloads and actually amount of traffic. So it's not just user-based. If you think about AI security, there are many facets of AI security. What one of the biggest thing our customers look for is, as every company starts using a lot of agents, these agents are somewhat like people. They need to access certain applications. They need to talk to other agents. So we are extending our zero trust exchange that are designed for users and workloads and branches now to agentic exchange, so that right agent can talk to right agent and right application. So obviously, there's an opportunity for us to secure that communication. Yes, the number of users may not grow significantly, but I believe every company will have scores of agents for every single employee, and they need to be secured, and we are extremely well positioned to handle that. And talking about agents, it sounds like one of your biggest competitors is doubling down on observability and identity, especially on the browser side, as an area of focus for agentic AI. Is that something you feel is very important to roll out the agents? So some companies try to go and buy many companies to create a collection of things. We are very focused on what we want. We were focused on zero trust, and then we focused on AI. Regarding observability, we actually do observability for the areas that matter to our customers. We sit between the user and the application. So today we have a sizable business, hundreds of millions of dollar business, with a product we call Zscaler Digital Experience, where we can tell our customers if any user is having any performance issues as they try to access those applications. It's integrated with the platform. While many companies have many point products and they're separate, we like to have integrated platform that serves our customers, so we not only provide secure and reliable experience, we make sure that it is fast and you can troubleshoot those things. But I'm not going into broad observability, which has become a broad area. We are focused on the areas that are relevant to our customers. And identity, is that something you care about, the identity on the browser? Identity is important. Think about identity for users. We have been working from day one with all leading ID provider for users, whether it's Microsoft and Okta and others. Now, when it comes to identity of agents, I believe there'll be many contenders. Microsoft, Google, AWS, Oktas of the world. Our philosophy is to federate those identity providers, use that identity, and we are the zero trust exchange, the switchboard, to make sure the right AI agent talks to right agent. In this world, I do not need to own everything. I need to do some of the things I do the best and integrate with partners with proper API integration so our customers get the biggest benefit. We believe in doing a few things, but do them extremely well and partner with others.
So I do feel like we're all learning as we go. And of course, Mandeep and Jay, you guys are ahead of us in a big way. But when they talk, Mandeep, about zero trust, this never trust, always verify, I think about digital touch points, thinking that there are threats within an organization and outside, and you've got to make sure there's security everywhere.
Yeah, no matter where you are, and that's where, SASE is a term that gets thrown a lot, and Zscaler is in the leading position in that magic quadrant. So I have one other question, Jay, for you. So given the amount of data in the world of security and, you guys generate trillions of data points,
Will the security world have its own LLM?
Yes, the answer is yes. We are actually working on building our security-focused LLM. And I do not need to have the large language model. Security is very focused set of high-quality data. With over 8,000 customers and 45% of Fortune 500 companies, we generate over 500 billion transaction logs a day. Those logs are anonymized, but they can give us an idea of where the threats are coming from. We can find a needle in a haystack and help all of our customers. So AI is only as good as the data that powers it, and we have the best data, and we believe we can help identify some of these threats in almost near real time and provide a closed loop system so that the threats can't really exploit our customers and provide them benefit at a much faster ways. That's why we are focused on AI-powered security operations. And our acquisition of Red Canary is part of that strategy because they built some very, very good agentic AI technology that we're integrating with our platform.
The use of AI to make the system more robust certainly makes sense, but I got to tell you, Mandeep and I are actually moderating some panels next week at a Bloomberg Live event that's focused on cybersecurity. And in the prep that we're doing for that, what I keep hearing from these chief security officers, from these chief information security officers, is the concern about how AI has made the attackers just more robust and the attacks more robust. Can you point to specific instances where hackers have actually used AI to enhance their attacks, and did it work?
Yes, there are many, many examples. Let me give you a few simple ones. Every attack starts by finding your attack surface, where you are. And public IP address is the starting point. Every firewall, every VPN, every application portal is an attack surface. In the past, a hacker may have taken weeks to identify it. Now you can go to ChatGPT and say, tell me all the firewalls and VPNs that have vulnerabilities, and give it to me in a nice tabular format. Under 60 seconds, you can get that. Now, the second part hackers would do is these phishing emails. Now they can ask AI to say, write an email that looks like a CFO's writing style. No typos, make it very targeted. That's number two. Third, hackers are using automation that AI provides. Once they are on the network, automation can find the key applications and try to encrypt that data. A lot of that is happening. What does Zscaler do in this case? Number one, we hide your attack surface. Your applications are hidden behind our cloud. Bad guys can't even find you. They can't find you, they can attack you. And the second is own the network. The biggest problem with firewalls and VPNs is they're trying to protect the castle, and we actually make it zero trust.
Jay, we've got to run. This was so informative and so enlightening in terms of AI security. We so appreciate it. Jay Chaudhry, he's founder, chairman, CEO of Zscaler, and of course our own Mandeep Singh of BI.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at a down day for the Dow, the S&P, and NASDAQ. First trading day of the new week, first trading day of the new month, a historically strong month, but stocks are lower across the board. Traders are shunning riskier corners of the market amid a sell-off in cryptocurrencies. The S&P right now at 6822, lower by 0.4%. S&P down 26. The Dow now lower by 320 points, down 0.7. The NASDAQ Composite Index down 76, drop there of 0.3%. Your 10-year 4.09%, with the 2-year 3.53%. Gold flat on the day, 42.41 the ounce. West Texas Intermediate crude up 1.5%, 59.45 a barrel. The big story though, the sell-off in Bitcoin. Right now we have got Bitcoin plunging by 6.9%. As crypto continues its slide, there are concerns that Strategy may soon be forced to sell some of its roughly 56 billion cryptocurrency haul if token prices continue to fall. Strategy, formerly known as MicroStrategy, still uses the MSTR ticker. Strategy down now by 6.8%. Again, Bitcoin is also down 6.8%. S&P down 27, a decline of 0.4%. Coming up after the close of trading, we'll be hearing from MongoDB and Credo Technology. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So our Bloomberg Intelligence team writing earlier today that holiday retail sales appear to be off to a good start despite mixed store traffic. There's a bunch of metrics coming at us. You have Retail Next coming out saying visits to malls were soft, down 3.6%. MasterCard saying Black Friday's online and in-store sales rose 4.1%. Salesforce says global online spending will increase 8% to reach $53.7 billion, while U.S. spending will rise by 4% to $13.4 billion. And then there's Adobe Analytics, Tim.
They noted a sharp 9.1% acceleration in digital sales as consumers leaned into the ease and convenience of buying online. Well, someone who knows how to read through all of these numbers, she does her own in-depth research too. She understands the retail industry. Dana Telsey is back with us, founder, CEO, and chief research officer of Telsey Advisory Group. She's been joining us here at Bloomberg quite a bit, Carol, going back to Black Friday.
She was here Wednesday,
She was here Wednesday.
Today.
She's here on Cyber Monday.
Thank you.
She joins us here in the studio today.
Thank you for having me. There's a
We
lot
love
to talk
having you.
about.
I think you have a desk with your name on it somewhere here.
It's easy. Thank you. And convenient to my office.
We love. There are so many different metrics that come at us. Is there a metric that catches your attention more than most, or is it that you rely just on kind of the work you guys do?
I rely on what we do, but I also look at all the metrics to tell a story. And frankly, what you're seeing the metrics tell the story of, essentially it was solidly optimistic for this upcoming holiday season. They're good metrics. A lot of the metrics surpassed their expectations. The other thing, when you look at online versus in-store is always going to be lower than online because online is a smaller part of the business. But one of the differences this year is online sales, the rate of growth slowed. It's going off a bigger base. While you're looking at in-store, the rate of in-store sales increased for some. Traffic is holding steady with what it's been year to date. And I think, for whatever you want to say, the Gen Zers, the teens, they like that experience of being in stores. That's what I saw on Friday when I traveled all the stores.
What do you mean by that? Like, this is like the same people who watch Friends, ironically, because they, didn't watch it the first time around, are now going to the mall? Like,
the teens are going to the mall
Yeah, that's
also.
what I mean.
Everyone wants the experience. I think what everyone missed from COVID, talking to each other, saying this looks nice on you, or look at this deal, that communication matters.
So what's old is new again, Carol? They're going back to the mall just like we did when we were kids.
Well, I know. Who doesn't love a mall? I don't love a mall anymore. Having said that, though, Dana, like my daughter, 22, there was something she was going to buy online, but we went to Bloomingdale's to try it on, and she ended up like, okay, this doesn't work, and not buying it. So it's like interesting, kind of this mix of how we're figuring it out of how to shop.
And it's always the surprise, because when you buy something you've had before, maybe you do get the same size or you know what it is. When you're buying something new, and one of the things this year is there's newness to wardrobing. You're looking at shoes where people are going back to whether it's brown suede boots like Steve Madden is selling, whether it's wide leg denim jeans. It's not just the same old, and partially because events are taking place.
So we look at retail sales as this monolith, but we know that's not the way that they're actually sliced. What would you say characterizes the companies that are doing a good job at actually bringing consumers through the door versus the ones that are not?
Newness. I think the newness and product innovation really matter, something that they don't have in their closets. You think about the newness even in consumer electronics, whether it's Nintendo, whether it's Aura rings, there's new things out there. Same old, you're going to watch for the deals and what the value you're getting. But today, when you have, whether it's Coach adding new items to their Tabby collection, whether it's Macy's, who now has 40% newness, 20 new cosmetics brands in their stores, whether it happens to be Steve Madden, which I mentioned with the brown suede boots, the closed-toed shoes at Birkenstock, or you look at Levi's, which frankly has new collaborations that's driving demand. So what are you showing me this year that you didn't show me last year?
What about promotions? Because I have to say, leading up to it, I saw some big promotions, 50, 60, and they built through kind of the weekend.
So we do a tracker, 85 retailers that we track every holiday. We've been doing it for over 10 years. We did see promotions build, particularly in some of the specialty apparel retailers, but not everyone.
Yeah.
I mean, we saw some promotional increases, whether it's the Bath and Body Works we saw it in, and you've seen a wider range of promotions instead of maybe last year 40 to 50, maybe it's 40 to 60%. You're going to watch that. At the same time, you know who had fewer promotions or less promotion? Ralph Lauren. 30% off instead of 40% off last year.
So what's the picture that all of this paints of the consumer?
I think it paints a consumer who's a bifurcated consumer, higher income continuing to spend, lower income basically being very discerning in what they're spending on their, particularly on essentials. But it's also showing consumers want to celebrate the holiday season, and they'll think about January and they'll spend for holiday.
How much, though? I think about this a lot. I mean, how are they buying? We saw some information about the buy now, pay later, continuing to be an important payment option for consumers. Adobe forecasting $20.2 billion will be spent through the payment method this holiday, 11% growth over 2024.
I think on the buy now, pay later, look who it's going after. It's going after those consumers who have more limited spending power, and it's picking up interest. You are seeing companies who've had buy now, pay later for a long time. It's still important.
It's everywhere now.
It is everywhere. So it's not as differentiated as it had been in the past.
It's not a sign of anything in your view?
No, I'm watching credit card delinquencies a lot. We're looking to see what that looks like. We're watching certainly what consumer spending looks like. And if anything, you're still seeing some pretty solid results. Take a look at the retailers' earnings the past few weeks. Well, they've been mixed. Some of the outliers, I mean, who would have thought Kohl's basically showed some improvement. And we've seen some good results. More to come this week, because this week everyone from Macy's, Victoria's Secret, Ulta, Signet are all reporting, and we'll get some more color on discretionary.
So it feels pretty good.
It feels okay. Tariff-driven price increases. I mean, the demand elasticity is something to be watching carefully.
So that's definitely there. Like, does it feel like a season where folks were like, holidays are important, and so I'm budgeting so that I can spend here, and maybe I won't do something else?
I think there's some of that, but I think they're also spending, saying, I'll pay it back later. I think they want to celebrate, given it's been a tough year with a lot going at consumers all at the same time.
So you said that Nintendo has done a good job this year of bringing consumers through the door.
Yep.
Companies including Steve Madden, Levi's,
Ralph Lauren.
What are the hot products as we look to December?
You have to say Labubu.
Oh, Labubu is the hot
Still?
product.
Labubu
Oh,
still?
yes.
Okay.
It is.
I don't even know what a Labubu. It's like a little.
It's a collectible.
Troll thing on a backpack.
Collectible. Yep. It could be on handbags, backpacks. Guys and girls wear Labubu or have Labubus, and it is the hot thing now.
Do you have a Labubu?
No, I don't.
Okay,
Do you?
just checking. No, I don't. No, but it's just kind of.
Well, now I know what I'm getting each of you for the holidays.
Thank you.
Is there like an it thing? Is that
is the it thing? The Labubu is the it thing. I mean, there's other things out there that are certainly trending. Legos are always trending and are very popular. So who can't take that away?
Yeah.
When it's gotten colder out, so you're definitely seeing sweaters and outerwear take center stage.
Love it. You're not going to go anywhere because we're going to dig a little bit deeper into some of the stocks that you've mentioned a few, but we'll dig a little bit deeper. Dana's going to stay with us. Dana Telsey, founder, CEO, and Chief Research Officer of Telsey Advisory Group. We will have a check on trading and get a special edition of Stocks on the Move.
Hey, well, speaking of stocks on the move, off our best levels of the day, and in fact, off our worst levels of the day, we're seeing the S&P 500 down about 0.5 percentage point right now. The NASDAQ Composite down just about 0.5 percentage point as well. The Dow down 0.8%. Coming up next on Bloomberg Business Week Daily, Dana Telsey staying with us for Stocks on the Move, a special retail edition. That's next.